up or down. And everything is based off of levels. Why do you think you see price reacting at the same area? For example, say you have market going in an uptrend, okay? And market found an area of resistance, okay? So an area of resistance is going to be an area where people decide to sell at, okay? So you're going to have sellers here. If price decides to come back up, price has a good chance to short at that same area, okay, of resistance. Since people sold there the first time, has a good chance to sell there the second time, okay? And then you're going to have areas of support. And these are going to indicate buying zones, okay? And even if it doesn't congruently happen like this, a setup can commonly look like this. I call it the support mirror, resistance mirror, or the stack mode mirrors, okay? So you might see a setup that looks similar to price might come up, it might rally past the resistance, you know, come back down, and then mirror the resistance, you know? Very common. You have setups like this for a downtrend type of setup. And then for an uptrend type of setup, could definitely look like this. Price might bounce here. And then price might come back up and then validate it again. So even though it invalidated at this area here, it decided to come back up over here and then go in an upwards direction. Okay. So we have to understand the market is a vertical chart. You're looking at a vertical chart. That's why I do not want you guys to fall into the indicators traps. Okay. Now, there are going to be some pretty good indicators. Okay. Volume. Okay. A lot of people don't even know what volume is. What is volume? Volume is going to be the amount of orders placed at a specific area or time. So volume is the amount of orders placed at a specific area or time. That's going to be volume. So that's the term you always hear. So you want to be buying at key areas of support, okay, because it's going to have most of the volume there. You want to be selling at key areas of resistance because most of the volume is going to be there. Now, let me go ahead and give you guys some secret sauce here. Way more powerful than indicators. Okay, understand that sometimes in the market, resistance can be broken and turned into support. Okay, resistance can be broken and turned into support, and then price can bounce in an upwards direction. Just the same way, support can be broken and turned into resistance. Okay, so resistance can be broken and turned into support, and support can be broken and turned into resistance. Even if it doesn't happen this cleanly, it can happen something like this. And price might run through there, come back up, turn this resistance here into the support later on. Okay, go to the support area, support, say price decides to run under here, come above it, and then come up again, boom. This area of support made this area of resistance created here, okay? So I make it simple for you guys, man. I do not want you guys to be struggling, okay? There's going to be times, life is going to be hard, the charts are going to be hard, people are going to be doubting you, people are going to be hating you, and there's going to be times you might not even believe in yourself. And all that doubt has to be killed, okay? And indicators equal doubt, If you have to rely on indicators to trade, then you can't be a profitable trader. Okay, if you can't just look at the chart and be like, okay, I see why price bounced here, 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 and here, then you cannot be a profitable or successful trader. You will continue to struggle. You will continue to go through hard times. Okay, and it's going to be very, very hard for you to elevate. And the indicators are what's holding you back. So I want you guys to do this. Okay, for a year, no indicators. Okay, no indicators. Just read the candlestick chart clearly. Read it raw. Read it raw. Okay, that's what I need you guys to do. So for a year, no indicators. And I want you guys to just go hard, man. Go hard. Put in 16, 20-hour study sessions. Live on these charts. Understand every single micro reaction. Understand why price bounced at every single area that it did. Understand why price sold off at every area that it did. We have to get the full congruent picture. We want to get to the next level, and we're pushing harder than ever. We're not stopping for nothing. Okay, this is real therapy for me, guys. Just sitting here teaching you guys these charts. I'm so passionate about this. You know, I live for God, and I live to just get people out of financial poverty. I don't want to see anyone struggling. I don't want to see you guys blowing up your accounts or committing suicide over the markets or just going through any financial hardships. I want you guys to be successful. I want you to get to the next level. And I want you to win. Okay? And I want you to win. And best way to win on the charts, okay, is you have to have your setup. Okay? Follow your heart. Okay? If God put it in you to trade, trade. Don't let anyone stop you. Don't let anyone stop you. You have to trade. Okay? Whatever's inside of your heart, you got to go with that. You got to do that. It's going to be times you're going to be feeling doubt. It's going to be times you're going to feel like, oh, it's not for me. I don't know. But God put it inside of you for a reason. So go hard. Okay? Follow your heart and follow your setup. Okay? If you tell yourself, I'm only going to play break and retest. Okay? If you're a break and retest trader, why are you trading anything else other than break and retest? Why? If you're a mirror trader, okay, someone who trades resistance or support mirrors, okay, why are you playing anything else other than mirrors? You need to, if you're a trend line trader, okay, why are you playing anything else other than the trend lines? Okay, that's the things. You have to follow your heart and follow your setup, and most importantly, follow God. Okay, you can get successful. Investing, it's important in this world. Okay, the more shares that we buy, the more companies that we can help, the more that we can help each other on this earth. Okay, faster healthcare products, more communication so we can communicate with our parents, grandparents around the world, etc. Okay, investing in the stock market is crucial. It's important, and don't let anyone else stop you guys from doing it. Very, very passionate about teaching this, and if you want to learn more about it, and if you want to get a free stock watch list, should see you at stackmode.net. Stay prayed up to God, keep grinding. Catch you in the next one. Peace. I'm going to be teaching you guys how we can use support and resistance in order to catch some profitable setups. Let's jump straight into it. The downward areas here where price decides to make a V and bounce in the upwards direction, that's going to indicate an area of support. And opposite to the area of support, we're going to have resistance. All right, resistance is going to be an area like this one, for example, where price decides to fall within a downwards direction. Okay, so that's it. So let's talk about logistics. Let's talk about why each of them occur. Let's talk about what support and resistance is on the charts. So one, support occurs on the charts because price isn't going to continuously dip down to zero for the most part. So even if the price dump happens, a lot of the times stocks, they have something called a short sale restriction, and cryptocurrencies most of the time, especially if it's not a meme coin, they're not about to dump down to zero like a good chunk of the time. So price will go ahead and try to find itself a certain low, okay? And people would like to go ahead and buy at a certain discount and go ahead and sell from there. And we also have to put it in perspective too. This is the left to right chart. So price started way back over here, okay? Even further from that. So people have shares from way over here. Of course, they're gonna sell and take profit. So whenever selling occurs, whenever take profit occurs, then resistance is gonna get put into place, okay? All it is people selling, okay? If people got in way over here, of course they're gonna take profit, okay? They're gonna go buy their boat, they're gonna go put a down payment on their house, do what they need to do, okay? So whenever you see market correcting, making sharp tops and falling in a downwards direction, that's gonna legitimately mean that there's too much supply. There's too much supply and there's not enough demand, causing the price to go in a downwards direction, okay? But then you're gonna see price make a certain bottom, just like here, for example. So whenever we see price make a bottom and bounce in an upwards direction, that's gonna go ahead and classify as support, okay? And support is gonna be important because that's gonna be where demand is gonna be put into place. That's gonna be like, hold on, prices, it's done selling off. It's been selling off way too much. People are starting to find out that price might want to buy it at a certain area, create a certain low at an area, and then once everyone agrees that price wants to make the low there, price will go ahead and start sweeping back up in an upwards direction, okay? Causing it as a verified level of support. So chatting about it again, resistance is going to be areas where sellers step in, okay? It's a left to right chart. So the goal of the stock market, cryptocurrency market, etc., is to go in an upwards direction. There's coders behind it, people with jobs in it, heavy investors in it, millions of dollars invested into these cryptocurrency tokens and companies. So of course, people are trying to make some money by having their stock go up in an upwards direction too, especially when it comes to stocks. People are definitely wanting their share price of their stocks to go in an upwards direction because that's more money in their hands. Once again, say billionaires, for example, right? It's not $1 billion in fiat currency laying in their account. Okay, it's not a lot of bank accounts in the world that can even hold more than like 50 million, for example. Okay, so a lot of the core value is going to be in assets. So what makes billionaires for the most part is going to be their assets. Okay, so and a lot of the times it's going to be shares. Okay, because most of the time it's business owners. So if Tesla is valued at 500 billion, okay, then Elon Musk being the company owner and he holds most of the shares or a large majority of shares, he would then be a billionaire too. So this is what makes stocks so important. So the proof is in the pudding right in your face. So billionaires are billionaires not by certain amounts of revenue made, but how much the company is valued on the stock market based on their shares. Okay, or take an artist, for example. There's an artist and he painted something for Facebook. Okay, he painted something for Facebook in 2006, 2007 or something like that. And instead of Facebook giving him actual money, Facebook gave him shares. Okay, he was then able to retire a multimillionaire based off of just doing one mural or doing one painting for the company. Okay, so shares are going to be an important part to just becoming rich. Okay, so a lot of the times shares or even getting paid in cryptocurrency is going to be a longer term, smarter option to get paid. Okay, so he was able to go in there, paint what he needed to paint, and Facebook paid him in shares, and he was able to get wealthy and retire for the rest of his life based off of that. Okay, so that's the legitimate reasons between the two. So we have to understand that, okay, that's why resistance occurs and that's why support occurs. So now that we understand them legitimately, let's put everything in perspective. So let's talk about the two things that market will try to do before market can go in an upwards direction. So if I'm trading cryptocurrency and if I'm trading stocks, a majority of the time, I'm going to be looking to play to the upside direction. Okay, I'm not interested in shorting for the most part. I rather personally buy a dip. Okay, but shorting is going to come for something more like Forex, but we'll talk about shorting as well too. Okay, so the stock chart for the most part, as you can see, if I check out Microsoft, it does nothing but go up in a straight line. If you dollar cost average into Microsoft, you can see you're almost guaranteed to make some money. Okay, so year after year after year after year, the stock does nothing but go up in a straight place. Okay, so while people are spending money on anything on the block, okay, you can go ahead and be investing, keep dollar cost averaging, and he's going to infinitely make you more money. You'll retire quicker than everyone. You won't be stressing about bills as much as everybody. And you'll also be getting paid some dividends too. depending on how many shares you have. So it's a lot of advantages to being invested in the stock market. And dividends are going to go ahead and be quarterly money that the stock owners give you, because they're like, hey, thank you for making us money by investing into us. We're going to give you some money back. So it's infinite money to be made as long as you know what you're doing. That's why education is going to be extremely imperative. And you could just see your portfolio year after year after year on the max long-term gain. You know, forget certain small, just day trade gains. Okay, we want to see our portfolio all time when we pass away be positive. Okay, substantially. That's the goal here. Okay, so don't think so short term. Too many people are thinking short term, thinking now, thinking too quick, and that's really going to ruin your long-term perspective. Okay, so even when you are putting these support and resistance setups into play, okay, we need to be trying to make sure that we're holding trades for at least some time. We don't want to be closing like instantly. We don't want to be trading like that. We want to be making sure that we're sitting on our trades, making sure we're really having our money make us money. Okay, so let's go and let's talk about support and resistance setups and how we can put all this information into finding profitable setups. So, one, we always know that cryptocurrencies and stock market companies are trying to go in an upwards direction. Why? Because there's benefits to them. Okay, the higher the cryptocurrency, whoever coded the cryptocurrency, whoever runs it, whoever created the whole idea, signed the white paper, etc., is going to benefit from them. So they definitely want it to go in an upward direction. They want people to be investing in their token. Okay, what pros does it bring? Okay, Bitcoin lets you send money, or cryptocurrency in general lets you send money to anywhere across the world instantaneously. So it already has some baked in value. And then it might do some other cool stuff as well too, like, you know, throw in Solana. It lets you trade meme coins, create your own cryptocurrency coin. Okay, so bringing more power back to the people, making people feel even more involved. So certain cryptocurrencies expand on the fact that it just lets you send currency from one person to another at a quick rate, but it actually lets you put some power back into the economy. So this is why charts are going up and down. They're not just going up and down for no reason. I'm not going to give you guys fake mentorship, fake courses, just fake information. Like, it's not just about wicks. It's not just about candlesticks, and it's not just about logistical formations. We have to understand the true logical fundamentals of why the whole chart is even going up and down in the first place, because then we can understand things from a really big long-term perspective, and it's really going to help your anxiety too. Okay, if you're feeling emotional, like, man, I don't know if this is going to go up, you have to understand that the goal of it is to go up. No matter how low something dips down, the goal of it is to go up. Check out this Amazon example here. Okay, Amazon, it was at $188 a share in 2021. Okay, dipped all the way down to $82 a share. I'm sure people thought, oh man, that's it, Amazon's going to zero. But guess what, guys? As you can see here, and we'll jump into the technical basis of it here, all it did was bounce at the same area of support to the left. All it did was retest. Okay, all it did was retest. So instead of trying to predict the exact tops and bottoms, just understand that the goal and the basis of the market, okay, even Forex, for example, okay, the goal of the basis of the market, every single market, is to go in an upwards direction. I don't care if you're trading gold, stocks, crypto, understand that it's the basis of it is to go in an upwards direction. Now, that doesn't mean that you can't short when the opportunities arise, but understand that the whole reason price is dipping down is to find a new low and go back in an upwards direction. Okay, especially when it comes to stocks and cryptocurrency. So you can see here, and we'll jump into the technical understanding of this here. All market did was bounce at this area of support and then come over here and do it again at the same place. Market is not difficult. Okay, the real reason people make money is because they sell too early. They're playing with too tight of stop loss. Okay, so that brings me back to the point again too. If you're trying to be perfect within the market, you're going to struggle. Okay, don't be perfect within the market. Only God is perfect. Just get your money, understand how your levels operate and work, and make the best play that you can. Okay, now when it comes to something like options, futures, and Forex, you do have to be a lot more precise, but understand what type of directional bias that you're playing when you're getting into a trade in the first place. Okay, so if I'm trading Amazon here, right? Let's say I didn't catch this ultimate low, right? So price decided to bounce up this area of support once here in 2020, came down a whole 3 years later, bounced up the same place. All right, cool. let's say I didn't even catch that certain low. You're fine. There's still going to be plenty of opportunity you can catch, okay? Because one, you know, price is always going to try and chase the resistances above current price, okay? Because they're trying to break into all-time highs. Investors are trying to make some money. Company holders aren't just slaving, busting tail for no reason. They want their company to be the biggest, the most profitable, okay? So share price is trying to increase for an incentivization. Okay, there's a reason why it's trying to increase. So say I didn't catch this ultimate support low here. Okay, and speaking of this, market will try and do one of two things. A, market's going to try and bounce at an area of support. Okay, or it's going to try and bounce at an area of resistance. Okay, just simply cleanly. Okay, so market will duplicate itself. Either just like this example here, you'll see two areas of support being bounced upon on the same exact line, same exact tick, same exact level. It's extremely simple once you start realizing what you're looking at. Okay, so market will either bounce at the same areas of support or bounce at the same area of resistance. I personally call that a mirror. So in the Stackmode community, this is what I call the mirror. Okay, so I'm either going to see a support mirror or I'm going to see a resistance mirror. Okay, this is going to be a really, really clean way to look at the market. Very, very simple. And the market's going to do this over and over again a lot of the times. Okay, so that's criteria number A. Let's talk about criteria number B. So A, say resistance can be broken and turn into support. Okay, so these two examples here, a support mirror and resistance being broken and turn into support, those are going to be examples that you take in order to long. So if you think or you speculate whatever you're trading is going to go in an upwards direction, these are the only two setups you should ever take. You shouldn't be taking anything else. Either you're looking for two areas of support to mirror each other, just like the blue line right here, or you're going to be waiting for an area of resistance to be broken and turn into support. Okay, and that's going to let you know that, inshallah, for the most part, price wants to make a structural continuation. Okay, and if you're going to take a downside trade, okay, so let's say you think price is going to go in a downwards direction. You're either going to take this setup where you're looking for two areas of resistances to mirror each other and then fall down, or you're going to be waiting for support to be broken and turn into resistance. Okay. So the opposite of resistance being broken and turn into support, you'd be waiting for support to be broken and turn into resistance. Okay. And this is going to let me know if I'm going to take a short setup. Okay, so these setups over here, two areas of support bouncing on each other at the same line, okay, and then bouncing in an upwards direction. Okay, boom. That's going to give me a support mirror. That's going to let me know that price wants to go in an upwards direction. Or I can wait for support to be formed after an area of resistance is broken. And that's going to be break and retest. And if I'm going to take a short setup, which means I'm speculating that market's going to go in a downwards direction, I'm going to wait for two areas of resistances to mirror each other and fall in a downwards direction. Or I'm going to wait for an area of support to be broken and turn into resistance and wait for price to fall in a downwards direction. Okay, giving me a downward staircase. Or if I'm looking for an uptrend play, I'm looking for an upward staircase. So I'm going to go ahead and show you some examples here. So we're going to go ahead and scan the stock market, cryptocurrency market. And let's go and let's talk about how we can analyze plays. Okay, so first thing I like to go ahead and do, start off on my higher time frames. We're going to always start off on our daily. Okay, we're going to be on our daily time frame due to the fact that we see everything. Okay, we got to see the whole chart from left to right. We're not about to be tunnel vision on the smaller time frames. That can be really frustrating, misleading. Okay, and it could really just make you look at something that you don't even need to be looking at in the first place. Okay, it's telling you a whole different story. It's something that's just not true. So we're going to be looking at the daily. Okay, zoom out, see everything, and get the bigger picture of everything. And after the daily time frame, you can go down to your 4-hour, especially on the stock market too, since it's not 24/7. You got to go down to your 4-hour time frame to see certain wicks, since extending trading hours is going to be a thing. So on whatever broker you're on, make sure you have your extended trading hours. If you're on TradingView, go to the bottom right, turn on ETH, extended trading hours. Go. So your daily time frame is going to help you see everything. So one, don't trade anything that's going to be at all-time highs. Okay. Don't short at all-time highs because that's gambling, in my opinion. Wait for support to be broken and turn into resistance. Okay. Or if price goes below and gives you a resistance mirror, then you could take a short. But even if price is at all-time highs, don't just short because it could really keep going in an upwards direction. But that's the thing. You don't really know how high it's going to keep going because there's no resistance above current price that's made appear or appear or appear. Okay. So something's at all-time highs. A lot of the times I like to wait for a pull back. Okay. I'm not going to trade it way up here. I'm going to wait for something that's either below, okay, and then catch a sweep in an upwards direction, okay, or I'm just not going to trade it at all. So I'm not going to force myself to trade something at all-time highs. I'm going to go to the big, giant, mighty stock list that I have, okay, and I'm going to be able to choose something else, okay. So one, I want resistances above current price. So I can see here on Amazon. Amazon will be a great investment in my opinion. One, I got resistances above current price here, okay. Tons of resistances above current price. So that's letting me know that one, price has somewhere to lead to, okay? Price has space to fill. When I can see space that needs to be filled, okay, this is just money I'm looking at. All I'm looking at here is money, okay? I know the stock market's trying to continuously break areas of resistance because price needs to keep making new all-time highs. So after price decides to make its own little base, make its own little low, like here, for example, okay, you can clearly see this is the most easy setup of all time. God is good. Okay. So when you just study, you have the eyeballs, okay, of just a warrior trader, things become easy. Okay. So check it out. You got support being created right here. And then you got an area of resistance being created over here. Okay. I'm going to go to my 4-hour time frame. Okay. I'm just super duper excited about this. Okay. Because check it out. I'm excited right here. So I'm going to let me know resistance being created right here. Okay, I can see the breakout happen. I'm not a breakout trader, okay, so I'm gonna let them have that. They can take the breakout. I'm cool off that, okay? What I'm gonna wait for is the area of resistance to come back down and turn into support. And I can see price decided to do that. So price decided to turn the resistance over there into support, letting me know that, okay, price wants to continue this staircase, doesn't want to push down any lower. This is gonna be a pretty safe phase for me to go ahead and buy. Not only that, I see price making what's called higher lows. So I can see that. Let's go ahead and let's methodically map this out here. So I can go ahead and see that this low right here, right? This low is higher than this low. And this low up here is higher than this low. So not only do I see break and retest, I see price moving within a staircase direction. So I can go on my daily time frame, put everything into perspective, be like, hold on, okay, cool. So I can go ahead and use these two areas as stop loss if I wanted to, okay? And take profit and catch this whole area up here to the upside. Okay, I still got 15 points of price action I can go ahead and catch. So much money for me to go ahead and make up there. Okay, it's super duper exciting. It's exhilarating once you see the market structure like this. So putting everything in perspective, you can see that, okay, there's so much money for me to be made. Even though I didn't get in at the pixel perfect entry, a lot of the time you don't want to get in at the pixel perfect entry. You don't want to be getting in at the first wick of the blue. Okay, I'd rather get in on the second candle. I'm personally waiting for a candlestick close. Okay, you want to wait for candlesticks to be above this certain entry because you don't want to buy at the wick and then get dumped down on because then you're going to be upset. And then you might just be really in a situation where you're just praying it goes up. Okay, so play logically. I would personally wait for a candlestick close. I can see the area of support got tapped. Okay, price decided to try the zone multiple times. Buyer stepped in multiple times, held the same area, and I can go ahead and take this whole upside and catch the whole remainder of this amount of profit. It's crazy amount of money to be made. Okay, so this is how I'm going to be able to use support and resistance and put that into a logistical setup. Okay, so I'm looking personally for gaps I'm looking for these gaps to be filled. I know that price is trying to chase the resistance. So I can use the whole gap as my profit window. Okay, break it down logically. I'm gonna go ahead and show you another example here. So class, it's about making it simple. Mark your levels, okay? No indicator is gonna help you more than horizontal lines. That's one thing I'm gonna go ahead and tell you. Okay, I don't use any indicators, and most decent traders don't need indicators. Okay, don't rely on something that's late. Okay, your eyeballs and the way that you're reading your technical analysis is going to be a lot safer and a lot more reliable than an indicator that's going to be late. Okay, take this area right here. It's easy. You can see price breaking here. Okay, price decided to break through this area. Okay, and this area seems to be important. And if you don't see everything you need to see on your 4-hour, don't feel afraid to go down to your 30-minute in your 15-minute. Okay, so I can see supports being created at this area right here. All right, the price broke out right here. Let me scale down. Let me see what happened here. Okay, let me scale down a little further. Okay, so it looks like price just wants to hold some support here. Okay, so price wants to just create its own structure. Okay, the support seems to want to hold. It could potentially break down. But we'll go ahead and we'll see. Okay, if it does break down, we can go and prepare though. So just like we talked about certain models, I'm personally looking for resistance below current price to turn into support, or just like you see right here, supports to be mirrored upon each other. All right, so say the support gets broken. I'm cooling. I'm not gonna be tripping. I'm gonna go and put the next entry right here. Okay, I'm gonna try again right there. Okay, you can go ahead and try an entry right there. Okay, try a zone right here. And personally, if I see price come down to these areas of resistance, turn into support, then I know it's going to be a pretty safe place for me to go ahead and continue the staircase. Okay, so even if this area of support gets broken, I can go ahead and re-add or try again at these certain areas right here too. Okay. So putting everything into logical perspective, once again, is really just going to help you understand how the market works. And it's really just about patience too. So patience, 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 patience. So waiting for the setup to happen, reading everything on the higher time frame, and just letting the market do its thing. Okay. And you could really just eyeball certain curls too. Okay. Even if you get on the line chart, for example, and I'm on my daily, if I'm on the line chart here, for example, I could use no candlesticks if I wanted to. Okay. I can just look at this pure line chart, see price curling up in an upwards direction here. Okay. And I can clearly see, okay, if I have a daily curve, like bottom on the line chart, for the most part, I'm good. I'm just going to be honest. Okay. That's just what I'm going to be looking for sometimes too. Okay. So I can clearly see that price wants to try and chase these areas of resistances up here and this area of resistance up here. Okay. So if I got on my line chart here, I can see price decided to create area of support right here. Okay. Look at how simple this is. So you have the area of resistance right here. Okay. Being created. Price broke out. Then price decided to turn this resistance into support. And then price is looking to fill the whole rest of the gap. It's extremely simple. It's over and over and over again. It's every pair. Okay. You can make money every single day. Every single day. Okay. So even if I check it out on the candlestick chart here, it's going to show me a little bit different information, but I can see on my line chart here, everything plays out how I need it to. And it's confirming the fact that the rest of the space does actually want to be filled on the candlestick chart and the line chart, inshallah. Okay. And then from here, I would go ahead and just buy a contract a couple weeks out and just take the whole rest of the gap fill. So let's jump into some crypto. All right. Stocks are easy. All right. Crypto can be a little bit more sideways. Stocks, for the most part, they just go on a straight line. If it's a decent stock, it's going to be really easy to read. Crypto is really easy to read though too. So it's just about trading what you want or trading both. Okay, because take this example right here. So I marked out this all-time highs a couple days ago, and we decided to break it. Looks like today or yesterday. So mark this out here, and looks like price decided to break out. So you can see I had the line there before we even got into the recording. So I know that price is always looking to break areas of resistance. What I tell you guys. So highs, price is looking to break it, and keeping it and over and over and inshallah. Okay, even if we sweep all the way down, it'll still try and come back up one day and go right back up. Okay. We can sweep all the way down there. Okay. If price wanted to, price can sweep all the way down there and then still break all-time highs one day again. Okay. That's just purely how market works. When market decides to go down and find certain lows, all it's doing is collecting ammunition, pretty much collecting more money, okay, from anybody who's trying to long. And all it is people selling who got in from way over here. Okay. Let them sell, let them sell, let them sell. You know, it's going to whipsaw back up, inshallah. So all-time highs getting smashed. So boom, all-time highs got broken today and yesterday. So extremely exciting here. So I had these lines placed a couple days ago and price decided to just meet with them. Okay, so you guys know I'm not lying here. Okay, price is always going to be looking to break all-time highs, certain areas of resistance here. Okay, so let's make it simple. So even if you didn't get in at the super Goku low all the way down here, okay, you can still see market doing its thing. Okay, so market bounced at this area of support here twice. Okay. We had one little area. Okay, if you would have missed it, it just was what it was. Okay, nothing to cry over. Plenty more entries. Okay, plenty of more entries. So we had this entry, for example, here. See, we had this area of resistance. Price decided to break above it. And then turn it into some support. And then price decided to go in a upwards direction. Okay. So very, very simple. Just clean area. And we're looking for a break and retest, waiting for price to go ahead and continue over and over and over again. Okay. Even here too. So just like I told you, support can be broken and turned into resistance. I like to call this support invalidation in the Stackmode community. So you got this area of support here, and you can see resistance got created off of it. So support turned into resistance, and then price invalidated the support, met up with that area, right? And then, yeah, filled in that gap. So support and validation. If you see an area of support above current price, and price just runs through it, all right, then that's going to be a pretty safe area to go ahead and momentum trade as well too. Okay. Because an area of support of current price, if the resistance doesn't hold and price runs through it, then it just wasn't a strong area. Okay. So let me get on my daily time frame here. So I'm going to go ahead and put a line on the top of all-time highs here. Got this area of resistance all the way up here. Very cool. And let me go ahead and go to my 4-hour time frame here. All right, on our 4-hour time frame, and I can see we know where price is heading to break this all-time highs here. Okay, Ethereum's not about to reject here forever. Even if it created resistance on the blue line a million times, inshallah, and dipped all the way down to like 1K, inshallah, one day it was still trying to get broken. Still, it's just how the market works. Okay, because you have to remember there's still investors in from way back to the left. Way back here, people are invested, so they want it to go up too. So price is trying to reach this all-time highs area up here and fill in the rest of this gap here. Okay. So when you close, well, no, I won't say that, but when you close and when you buy are both extremely important. When you buy, I'll say it's less important than when you close, because you could buy at a pretty bad area, but if you close at the right time, like you'll still make money. Or you could just buy pretty late, but if you close at the right place, you'll still make money. Now, if you try and hold past an area where you should be closed, that's where things could get scary. And you bought a bad area, that's where things could get really, really bad. So yeah, it really depends. Like if you were to buy it right here and you just profit at the all-time highs up here, that's fine. But if price hit this all-time highs and then dumps down, okay, you bought up here. So anything less than up here would be negative profit. Okay, so it really just depends how you play it too. So even here too on Ethereum, I could see this area of support got created here. And And that's because this area of support bounced off of this area of resistance over here. Okay, resistance got broken through. As you can see, we even had another tap right here too. And then price decided to go in the upwards direction, and price came back down into the zone. Okay, turn the resistance here into support. Okay, it's really this wick right here. Turn the resistance here into support and bounce in the upwards direction. And as you can see, the whole area decided to stay and fill in. Okay, and then price decided to continue to just break and retest and do its thing. Okay, and it even spammed it again right here too. If I go ahead and put this line here, check out this area of resistance. And you can go ahead and see this area of support being created off of this area here too. And then price decided to go in an upwards direction. And no coincidence as well too, it's also going to be a support mirror. So once again, you can see price deciding to make this area of support over here because there's support over here. Okay, so support decided to mirror itself and bounce in an upwards direction. Okay, you can also see over here, price decided to create resistance here because of the resistance over here. Okay, then price broke that too and continued to go in an upwards direction. Okay, so all price is going to do is just mirror each other. Now, as you can see, whenever it does short, it's not lasting. It's not falling down to zero. That's because it's not time. Okay, it takes a whole market wave in order to have that happen. Okay, it takes a lot of traders, a lot of liquidity, and a lot of money in order to have that happen. Okay. So we'll jump into some Doge here. So this example here I marked out yesterday, and looks like we're getting some positive price action from here. Okay, pretty good trade. Very, very simple. So all I did was mark out this area of resistance here. I have this strong area of resistance right here, and even way to the left over here. And this whole area is just letting me know that, okay, price keeps shorting here, and I can see that price decides to break the area of resistance, turn it into support. Okay, and now price is going in an upwards direction. Okay, so I can go ahead and see price wants to try and fill in this whole gap all the way up here. Okay, so even a Doge gap here would be pretty simple to go ahead and take and play. Okay. So just take your time. Okay, whenever you're analyzing your setups, take your time, and you're looking for support and resistance in just certain key areas. Okay, you want these key areas reacted upon off of, and you want gaps to be filled. So yeah, so you're just looking for gaps to be filled. That's all you're looking for, essentially. That's it. That's it. Okay, you know resistances have to be filled because price is trying to break new highs. Okay, and that's it. You're just taking advantage of knowledge. Okay, so take this example. I can see price wants to go ahead and reach this areas of resistance up here. Okay, so I can go already and see price wants to fill this whole gap right here. Okay, so I can go to my 4-hour time frame. Check out the area of resistance, super duper clean area right here that reacted off of twice, once and then twice. Simple. Okay, and I can see that price wants to at least try and gap this area here. Okay, so how can we catch a setup? One, I already know price decides to create some support over here. Okay, once you see some support created like that with multiple daily closes, a lot of the times, you know, price wants to go ahead and sweep. Okay, so sometimes too, it's just about just buying. Okay, so if you see price starting to curl like that, or if I get on my line chart here and I start seeing a daily curve like that, okay, and I start seeing a sharp bottom with the V formation, and everything looks how it should, then ideally I can be like, okay, you know what, I think price wants to actually go in an upwards direction. Okay, and you can go ahead and you take your chance and you mark out your trade. Okay. So let me go ahead and check this out here. So I can see this area of resistance here on the line chart. And sometimes you can bust out the line chart just to see everything a little bit clearer. You can also see these areas of support over here too on the line chart. So I'm like, okay, is this area of support pretty decent? Okay, it's being reacted off of once, and we had a large area of support being reacted off of over there. Let me go back to my candlestick chart. Can see the support a little cleaner. So if you notice the candlestick chart's a little too jamboree or too much, feel free to turn on your line chart sometimes too. Verify your levels, look for curls, and get your gap fills. Okay. It's going to be really, really simple to make some profitable trades. Okay, so I can see from way to the left over there, the support level. It's not just any level on the block. It's actually a pretty good level. Okay, that price wants to react off of. So let me go ahead and let's do another example here. So let's pull out some BNB. Yeah, BNB is normally always at all-time highs. It's a really good crypto. So it's at all-time highs. How would I play this? So personally, I would wait for a pullback. Okay. If I'm going to short it, okay, let's talk about that for example. If I'm going to short it, I would take this area of support here, wait for it to turn into resistance, and then take it to the downside. And my take profit would either be the area of resistance below it or area of support. And the reason why I'm not too keen on shorting, honestly, is because my take profits are going to be smaller. Okay, you don't know how badly people want to just buy the dips. Okay, people could be fiending and hounding to buy the dips instantly. Okay, as soon as these things dip, people buy the sweep up. Okay, let's check out Bitcoin for example. Okay, that second Bitcoin dips, it recovers instantly. Okay, Bitcoin could have an extremely heavy dip, and it's not people thinking, oh, it's going to zero. No, it's people loading up their pockets in stack mode, ready to unload. Okay, so boom. Price dipped down to 100K. Okay, out. Okay, we dipped down to about 100K, and the dip instantly ripped up and recovered. Okay, instantly decided to just capitulate that whole reversal and just reverse the reversal. Okay, and as you can see, continue to see breaking new all-time highs or making higher lows constantly. And higher lows is always going to be a great sign here. Okay, I can go ahead and see here. Price decided to make this area of support here too, or make it higher lows. Okay, higher lows. It's going to let us know that we're trending. Okay, we're trending in an upwards direction. And that's what we're going to be wanting to just take advantage off of. So just keep dollar cost averaging, looking at the areas of support, be like, okay, you know what, if this area of support gets broken, I can look for the next area of support. Okay, so you can use this for your short or your long end. Okay, or you can wait for price to come down, maybe bounce at this area of resistance here. Okay, and if you see price come down to any of these areas, give you a daily close with a sweep up, feel free to go ahead and buy any of these lows. Okay, they're already verified. So if price wants to retest these lows, all it is confirming that price wants to trend even harder. Okay, could potentially be this low right here from this support. Okay, could either be an area of support below current price or an area of resistance below current price. It's going to choose. Okay, and then from there, we're going to go in which direction. All right, so that's going to be the support and resistance masterclass. Head over to Stackmode.net for all trading education. Stay productive, God. Keep grinding. So if you lost all your money, you're at zero. It's happened to pretty much almost every single trader before. Okay, and I don't want it to happen to you again. Okay, it's going to be important to lower your ego, humble yourself. And this is why it's really important to get with God. Okay, it's really going to help us build consistency, waking up, praying every single day. Okay, let's wake up, let's work out every day. Okay, and let's transmute this pain and let's work harder, whether at work and or your business. Okay, so you should either be having one job and working on your business, or you could have two jobs. Okay, and then on the weekends work on your business. Okay, do what you need to do to grind, run it back up, don't stop, keep pushing. No matter in any situation, you have to keep pushing. You can't stop. You can't let things get to you. You can't let things break you down within your mental. Okay, if you say you want this, if you say you want to be a profitable trader, if you say you want to put your family in a better position, we got to lock in. We can't be getting broken down. We got to bounce back, inshallah, if God wills. Okay, so here's going to be the full guide to financial and psychological recovery. We got to keep pushing forward underneath any circumstance. We can't stop. We can't let our emotions break us down. That's all just the devil. Okay, the devil doesn't want you to progress, but God wants you to progress. Alhamdulillah. Okay, so turn to God. Okay, wake up every day, pray, get yourself right, lower your ego. This is why you're blowing up your account. Why can't you just accept the fact that you're losing? Okay, if you lost a trade, get off the charts. Why are you trading over and over and over and over and over again? There's no point to that. It's time to transmute all of that pain. Okay, put it into more work, put it into your business, set your alerts, at your key levels and go work on your work and your business. Okay, why are you sitting there trading over and over again? Why are you sitting there taking 10 trades in a day, blowing up your account? How do you expect to progress? Okay, take one trade, risk management, and have some long-term investments. Okay, invest in shares. Okay, cryptocurrency, some long-term investments so you don't have to sit there trying to day trade every single day. The reason why you guys are also blowing up your account so quickly is because you're trying to day trade. All the money you've been losing trying to day trade, one, you could have put it into mentorship. Stackmode.net, the first call is even free. Okay, so I give you guys a free first call. And on top of that, there's just no reason to be blowing up your account in the first place, okay? Because all that money you've spent trying to day trade, trying to make profit, you could have been putting in long-term investments, and your profit would most likely still be positive today, and you'd still have a large majority of it. And so you'd be up and you still have your money, okay? So focus on long-term trading too, okay? It's not just all about day trading, zero DTE, futures, etc. Don't let that prop firm mindset destroy you. All right, let's go. So the immediate aftermath, the psychological toll, losing a significant amount of money in trading is more than just a financial event. It's a deep psychological blow, and you may experience a range of emotions, including shock, denial, regret, shame, and even a profound sense of failure. And it's crucial to understand that these feelings are normal and a part of the grieving process for your financial loss. Acknowledging this emotional state is the first critical step towards healing and recovery. So acknowledging the pain. Do not suppress your feelings. Allow yourself to process the loss without judgment. And this is a necessary emotional release that has to happen. And combat cognitive bias. Your mind might trick you into a get it back quick, okay? Get it back quick, okay? So pretty much if you lost some money, let's say you lost $200, okay? You might think, okay, I'm gonna go ahead and risk even more money so this way I can go ahead and get my $200 back and I can go ahead and end up profitable in the day. No, man, you lost. If you lost, you lost. You get off for the day. You plot out an even cleaner setup. You come back with even more logistical analysis and more of a good reason to put on a good trade. And until then, you're gonna wait. I don't care if it takes days, weeks, or months, okay? Wait for a good setup. Don't just come on here and burn your money trying to fiend for money, okay? Wait days, weeks, and months. It takes a long time to get profitable, okay? But it can happen now if you just plant yourself in the right positions, okay? Invest in things that have future value. Invest in things that put smiles on people's faces, okay? Some stocks just go up in a straight line year after year after year after year after year. You just have to do your research, okay? So don't get tricked within the get it back quick mindset, especially day traders. Day traders, you got to control your emotions. You got to think more long-term. Even if you make some profit off a day trade, think about how you're going to reinvest that back into a long-term play. And recognize that this is a cognitive bias, specifically the recency bias and loss aversion. And this resists the urge to jump back in. So conduct a brutally honest financial audit. So before you can rebuild, you must understand the full extent of the damage. This is not about self-blame, but about creating a clear picture of your current financial reality. And these detailed audit will be your map for the road ahead. So identify the full loss. Tally up every dollar lost. And this includes not only the principal, but also any fees, interest borrowed on funds, or opportunity cost. And categorize your remaining assets. List every single asset you still have, from checking account balance to the value of a car or your home, okay? Be meticulous. And document your debts. Don't run from your debt, okay? Don't run from your debt. You know you gotta pay it off, okay? Certain things that you might have piling off. I pray that you guys don't have any debt, but if you do, let's tackle that. Let's pay it off. Let's stay down. Let's get in stack mode. Okay, stay down, stack mode. Okay, get in stack mode for the rest of your life. Okay, only spending 50% of our income, keeping the other 50% in the stash. This way, after we pay taxes, we're still gonna have money left over in the stash, inshallah. So document your debts, create a comprehensive list of all your liabilities, credit card debt, personal loans, mortgages, etc. And after a $50,000 loss, for example, a trader might discover they only have $500 in their checking account and $2,000 in their savings account. They also find they have a 10K credit card debt occur trying to recover the loss. Okay, so while they were just trying to make up for the money lost in cash, they were just spending money on their credit card debt. Okay, something that's happened to me, and I don't want you guys to go through that. It can be extremely daunting, extremely frustrating, and scary when you start seeing your debt pile up like that. So be financially responsible before you start trading, and don't trade with any money that you can't lose. So their audit reveals a negative net worth, but it also provides a clear starting point for a new financial plan. So focus exclusively on earning and saving. Stack mode, okay? Stack mode is about being a God-fearing, righteous individual, okay? And it's about staying down, Okay, saving up your money, because we got people that's protecting and provide for. We can't be spending all of our money on stupid stuff. We're gonna be investing smart, growing our money, and making sure our money is always making us more money. Money is gonna be a tool. Okay, don't use money just to consume. Use money as a tool in order to generate some more money. This way you can work, okay, less. Okay, so as you get older, you're not gonna be able to work the same, but you still gotta be generating some money. Inshallah, still gonna be people that need help. Still might be family that need you. Still might be people to take care of. So your money needs to always be making you money. So use it as a tool and set up your investments. So for now, all trading activity must cease. Okay, if you go broke, if you lose all of your money, trading is stopped. Okay, pause it. Your number one priority is to rebuild your financial foundation with stable, reliable income. And this is a period of accumulation, not speculation. So work on increasing your income. So every avenue that you can explore, whether it's working harder at your business, okay, trying to get monetized on certain things, okay, creating certain programs, lots of things you can do to generate wealth. Especially with AI, it's extremely simple to just choose a niche and jump straight into it and just work hard. Okay, so this can mean working more hours, okay, freelancing, certain businesses. Just do what you need to do to generate some more income. So create a strict budget. So develop no frills budget that prioritizes essential living expenses. So stack mode, right? So when you're in stack mode, you got to really be staying down. When you get older, you can't work 16, 18 hours a day. Okay, you're going to be too old, but you got to be using money as a tool still. You still got to be investing. You still have to be generating income. Okay, so this is why investing is going to be so important, inshallah. So while you're healthy, okay, invest your money so then when you get older and you can't work as long hours, you're still going to be able to survive. You're not going to be down bad. Okay, I don't want you guys to be broke, okay, with no options and just nothing to really just say that you did on this earth. Okay, so please save your money and get in stack mode. It's important. So every dollar should go towards building an emergency fund and paying down high interest debt, and eliminate high interest debt. So use strategies like the debt snowball or debt avalanche to aggressively pay down credit cards and personal loans, and this is a guaranteed return on investment. So a deep dive into education and risk management. So once your foundation is stable, okay, you started clearing your debt, you got your money back on track, it's time to re-educate yourself. Your previous approach failed, so a complete overhaul is necessary, okay? Lower your ego, and you have to completely change everything. Restart your mindset, restart how you think about everything, restart how you approach the charts in life, okay? Completely overhaul your mindset. Quit things that you used to do, okay? Start doing some new things, okay? And this step is about replacing reckless habits with a structured, disciplined methodology. Okay, so here's a market study. So dive into the market history, economic cycles, and different trading philosophies. You can go ahead and read books. I have so many videos too, okay? And you can go ahead and check out how to balance your account, okay? Do your research, okay? I also have an ebook as well too, free course, many free videos. Please just do your research before you hop onto the charts, trying to throw some money at it or trying to make some money, okay? Because you might just end up losing some money. And that's really gonna hurt. So do your research first, please. Master your risk management. This is a non-negotiable. Learn to calculate your position sizing, set your stop losses. That's an area where the price is gonna go ahead and close out your trade automatically if it hits that certain area, okay, causing you to only lose a certain amount of money. And never risk more than 1 to 2%, especially when you're a new trader. But as you get better, you can go ahead and bump that up to 1 to 10% of your account. And a well-defined plan is gonna be your roadmap for everything. It must include your entry and exit criteria, your risk-to-reward ratios, and a detailed list of rules that you're never going to break. So instead of day trading with leverage, for example, a recovered trader decides to focus on a long-term swing trading strategy in a single sector they've studied for months. Their new rule is to never risk more than 1% of their account on a trade, ensuring that a string of losses won't wipe them out again. Okay, you're coming onto the market to make some money. Why are you coming into the market and going back to zero? It's not making sense. So you need to be focusing on the trades that are going to keep your account alive, and not the account or not the trades that's just going to make your account money. Okay, money is not always everything. Focus on what's going to keep your account alive. Focus on the safety, okay, and that inshallah will transpire to profitability. So conquer your emotional demons. Okay, trading is going to be 80% of psychology. I've seen it firsthand. You can give someone the best levels and they don't close that take profit because they think it might go further. Okay, so psychology is going to be extremely important, and your perspective. So your biggest opponent is not the market, but it's going to be your own emotions. Okay, and a lot of times it's going to be the devil trying to attack you. So just pray to God, you know, and just understand that it's just evil trying to decept you. Okay, anything that you guys might want to do to tempt you to do anything bad, it's all just evil. Okay, don't do it, because when you're crying afterward, when you're sad afterward, that just means that the devil got you. Okay, so don't be weak, be strong. Okay, and keep your head on. So you must learn to separate your personal feelings from your trading decisions too. Okay, so even if you take a big loss, even if you just went down to zero, don't treat people bad. Okay, don't treat people bad around you. Don't talk to anyone bad. Don't get emotional. Okay, I know there's some times when you take a loss, you can't even speak to anybody. Okay, I've had those days. I've definitely had those days, but you can't let the trading loss affect your real life. Okay, you have a whole life that God has blessed you with. Okay, there's still grass outside, you know, still fresh air, etc. Okay, so even if you lose all of your money to trading, don't get depressed, don't spiral, and just manage your expectations. And understand that trading is going to involve periods of drawdown. Okay, and especially when you're first starting, if you go down to zero, it's okay. Okay, many people fail with their businesses, have gone down to zero, failed businesses, and I wish you guys just know how much trial and error it takes to actually be successful. Okay, this is why God is important, so you don't go insane. Okay, it takes an extreme amount of trial and error. Okay, so winning every single trade, that's an illusion. Okay, in hindsight, kind of not really. You are gonna lose sometimes, but it depends what you're trading. You can win like 99% of your trades though. I can say that confidently. So focus on long-term probabilities of your edge, not the outcome of a single trade. So start a trading journal. Okay, document your trades on YouTube, Notion, Discord, whatever. Okay, coming out with the app, Stackmode app, where you guys can also track your profits and trades too. Okay, so document every single trade, your profit, your loss, your entry, your thought process, how you felt, and the outcome of it. This is going to help you identify recurring mistakes and any emotional triggers, and practice unwavering discipline. Stick to your plan no matter what, and do not chase trades, do not get greedy, and do not panic. Discipline is the bridge between your goals and your execution. So start with paper trading too. Okay, you can paper trade on TradingView, a lot of brokers too allow it, and don't jump back into the market with large sums of money. Wait. Okay, play with small percentages of your work check, your business check, whatever. Okay, pay your bills first, get some groceries, and then whatever you have left over, start investing with. Okay, let that grow over time. And by this whole time, while you're playing with small amounts of money, you're gaining info. Okay, so say your business or something like that blows up, when it's time for you to get into the big bucks, when it is time for you to throw it into the market, you're going to be well informed and you're going to be all good. Okay, so alhamdulillah. Okay, so it's a lot better being in this position versus being somebody who has a lot of money trying to come into the market with no education and then losing it. Okay, because that can hurt. And even if that has happened, it's fine. Just run it up again, inshallah. So start with the tiny account, scale it up. If you can't grow a small account to a big account, you can't grow a big account to a bigger account. That's just the truth. So increase your position size when your account grows through profitability. Okay, be disciplined and don't just keep adding more capital in your pocket whenever you're making bad decisions. Okay, you have to grow your account. Okay, let it grow through discipline. So losing money can be the most valuable lesson you'll ever learn. It's definitely taught me a whole bunch, got me closer to God, made me realize how unstable I was in certain emotional aspects. I realized I was extremely greedy. Okay, there'd be times I just wouldn't be satisfied with my profit. Okay, and that was leading me to spiral over and over and over and over again. Okay, leading me to take more trades than I need to, trying to chase more dollars, instead of just realizing if I would have just stayed disciplined, been consistent, then I would have gotten to the position of where I wanted to at the same pace anyways. So instead of trying to make $2,000 in one day, if you make $500 4 days separately, that's still the same amount. Okay, so just focus on the long-term vision. Okay, get rich slow, focus on the discipline, and confront your weaknesses. Okay, and rebuild your strength and your wisdom. Okay, God tells us to be reborn, and the journey back is not just about financial recovery, but it's all about personal transformation. And you're no longer the same trader who took on too much risk. You are a new, more disciplined, and more resilient individual. Okay, rebuild yourself back up and become a boss. Every boss has taken a major loss, and it's about bouncing back. Do you have that hustle in you? Okay, it's really gonna determine if you're built for this. Okay, if you have that hustle in you, you'll run it back up. All right, God got you. Don't give up. You got people to provide for. I love you so much. Head over to Stackmode Network for all trading and business education. Catch you in the next one. Peace. Bitcoin mining is the network's backbone, and it's not just about earning crypto, it's how Bitcoin's created in the first place. Miners use powerful computers to solve the puzzles. They secure the blockchain with an immutable new block each time. And this process is the global security system that prevents double spending and fraud. And it verifies all transactions across thousands of independent computers, replacing a central authority. Without miners, Bitcoin wouldn't even exist, and it would collapse. But with them, it's become one of the most secure financial systems on Earth, powering the trust and transparency of decentralized money. let's go and let's talk about how Bitcoins are created and why the government owns it. Inshallah, if God wills. Let's go. So, class, welcome. Let's go and let's talk about how Bitcoin is created in the first place. So Bitcoin is generated by mining it. Okay, Bitcoins don't just spawn out of thin air. And as you know, Bitcoin is also a limited cryptocurrency. So other cryptocurrencies for the most part are going to be infinite, but Bitcoin is actually going to have a limited amount of currency. Okay, there's only 21 million Bitcoins that exist. Okay, and each one of them is created by getting mined. So what happens is a computer, okay, and the computer is obviously powered by resources. Okay, so certain countries take more power than others to create certain Bitcoins. Okay, so if you're in a country that charges a lot for power, then you'd be paying more on your electricity bill in order to mine the cryptocurrency. Okay, and what you would need is a super powerful computer with a graphics card that can handle the Bitcoin mining. Okay, so what a graphics card is, it's a piece of the computer that's external. Not all computers have external graphics cards. Some have inbuilt graphics cards, which is why they're slower than others. But what you need is a really powerful computer. And then from there, you'll be able to load up the Bitcoin mining software and it can go ahead and get created. We're going to talk into the technicals, exactly how everything works. Bitcoin mining is super duper cool. You might even want to do it and see if this is a good way that you guys might want to generate some income, depending on what country you're in as well too. You'll be able to save a lot of money on power, and you could potentially mine yourself or create yourself a Bitcoin for way less than buying it. So let's jump into it, class. So what is mining even in the first place? Mining is not digging dirt. Bitcoin miners aren't digging into the ground with actual pickaxes, digging into the dirt, looking for resources. No. Okay, so what it is computers mining Bitcoin via a software. Okay, and the job is to secure the network and process transactions. Okay, so it secures the network by making everything decentralized. So in a traditional bank system, let's say you wanted to send a wire transfer, for example, right? The bank would be able to decide whether yes or no if the transaction wanted to go ahead and get approved or declined. Within a decentralized network, such as sending Bitcoin, things like that don't occur. Since everything is done by smart contracts, okay, everything is autonomous and automatic, done by computers, okay? And that's what Bitcoin mining comes into place too. Even creating Bitcoin, instead of just clicking print on the dollar like they do with fiat currency, Bitcoin actually has to go through a whole process in order for a Satoshi to be created in the first place, okay? So Bitcoin mining helps keep Bitcoin decentralized. The reason why the US dollar fails is because they just go up to the printer and click print. Okay, there's no real strategical process that goes from start to finish for the most part that keeps its base value cooked in. Yes, you can just print more dollars, but that would inflate the other ones. Since there's a finite amount of cryptocurrency, there has to be a secure process in place in order for it to be created, for it to be fair for everybody. And mining is the way it's done. Let's keep going. So think of the blockchain network as a public notebook. So you might have heard of what the blockchain network is. So the blockchain network is pretty much a public copy of everything that's been done. Every transaction that's been created, every Bitcoin that's been mined, and every transaction that's happened, okay? So the blockchain is pretty much going to be a verifiable place to where you can see if your transactions were even completed as well, okay? So within the blockchain, you'll be able to put in your, let's say, address. Let's say you did a transaction. You could copy that transaction address, put it onto the blockchain or some type of blockchain checker, and you could see if there were any confirmations. Okay. Confirmations are pretty much going to go ahead and let you know when your transaction is ready to be completed. Okay. Either the money has been sent over and it's about to hit somebody's wallet. Okay. Or it's on the way to hit your wallet. Okay. Depending on the situation. So the blockchain is a public notebook that everyone has a copy of. And mining is the process of adding a new page, okay, which is a new block to this notebook. So page one, right? Let's say Alice sent some money to Bob. Okay, let's say they sent 5 Bitcoin. You're going to be able to see that. Okay, you'll be able to see the Bitcoin addresses, etc. And you'll be able to see when the transaction was sent, how much Bitcoin or how much cryptocurrency was sent. And you'll be able to see the miners working on certain things as well too. Okay, you'll be able to see when Bitcoin transactions have been implemented and grounded into the blockchain. Whether a big whale is buying or selling, the blockchain shows us everything. Okay, keeping cryptocurrency really, really safe. So proof of work. So once again, Bitcoin, it's not created like the dollar. You don't just go up to the printer and click on print over and over and over again. is created by POWs, also known as proof of work. So to add a page to the notebook, computers must solve a super hard math puzzle that requires a pretty powerful computer as well too. So make sure you guys have a good graphics card inside of your computer before you think of doing anything like that. Okay. So to add a page to the notebook, you got to have a super powerful computer, and then the computer has to do calculations and try to guess the number. Okay. So imagine guessing a number between 1 and 1 trillion. Okay. You have to guess randomly. So computers then make trillions of guesses per second to find the random number, okay, which is going to be the hash, okay? So that's how the proof of work works. And that's pretty much all the work that the computer is doing. The computer is constantly running calculations, trying to find and guess the correct numbers in order to generate a Bitcoin. Okay, and that takes a lot of power, a lot of resources. So make sure you guys are watching your energy bill before you think about getting into this. So this is exactly what I mean. You need a powerful computer. Okay, your computer has to be good. It can't be a weak computer. Okay, so understand that you cannot mine Bitcoin from your laptop. Okay, you cannot mine Bitcoin on a laptop anymore. Okay, so these with with the screen, little keyboard, not cutting it if you want to mine Bitcoin. Okay, get yourself a real strong desktop with a real graphics card before mining Bitcoin even crosses into your brain. Okay, so you need specialized machines called ASICs. An ASIC stands for an application specific integrated circuit, and they do one thing: guess numbers for Bitcoin. Okay, they're loud, hot, and they use a lot of electricity. Okay, so before you guys think about just putting it into your room, keep all of this into play. Okay, keep all of this into play. Save for Airbnb owners as well too. If you guys have Airbnbs, what people are doing is signing up for Airbnbs and mining Bitcoin at Airbnbs in order to save money on power bills and stuff like that. Or people are also even moving to other countries in order to save on power bills too, so they can mine Bitcoin for a lot cheaper. So keep all of these things into play and understand that the future is really changing a lot. People are starting to get a lot more equipped and doing a lot more strategical moves to mine all the Bitcoin as possible before it goes away. So what's the point of this? Like, why do it in the first place? So the reward, right? The winner who solves the puzzle first gets paid in brand new Bitcoin, okay? A brand new Bitcoin. So Bitcoin is created by whoever has the best computer, right? And is solving the most problems, okay? The more computers you have solving more problems, okay, the more Bitcoin that you're going to accumulate in the first place, okay? So it's going to be either one computer or a whole room full of computers, okay? And what they're doing math, okay? 2 plus 2 equals, okay? And then whichever one of the computers can find the hidden number, okay, goes ahead and generates the Bitcoin, okay? After you find the random number, or one of the computers generates it and finds the right calculations, then a hash is going to go ahead and get created. Okay, then from there, you're going to go ahead and get paid within your Bitcoin. And you keep doing that, keep doing that. Now, the computers do have a high chance, once again, to consume a lot of power, which means that the resources inside of the computer, processor, graphics card, RAM, etc., have a high chance to go out and combust. So before you think about doing this, make sure you guys have some money to the side to pay your bills, maintain everything. So I don't want you guys going broke to do this. But this is how Bitcoin is created by computers solving complex math, looking for a specific number. And once again, the more you have, the more Bitcoin you'll be able to generate. Since the more computers you have, inshallah, if God wills, the quicker you'll be able to look for hash codes, and the quicker those computers will be able to solve different types of calculations. So what's the point of this? Why is it essential for security in the first place? So it's costly to cheat, right? So to fake a transaction, you need more computer power than all other miners combined, making it pretty much obsolete, not even worth it, and not even worth the while. So immutable. So once a block is buried under other blocks, it's mathematically impossible to change it, because the way that Bitcoin works is that the computer is hunting for hidden numbers. Okay, it's hunting for random numbers and it's trying to guess the correct numbers. So the chances of it being faked or created within a false context would pretty much be almost impossible. Okay, since there's so many numbers and it's looking to guess the correct one. And it's decentralized. So no single boss controls the ledger. So no people can just be like, you know what, we're going to decline this transaction. We're going to approve this transaction. Oh, you want to send $10,000 to somebody in another country? You know what, we're going to go ahead and decline this and shut down your bank. Okay, that's happened to people. Okay, and that's not fair. It's not fair. There might be money you might need to send to somebody in another country to help send your family some money, to help pay your employees or whatever. Cryptocurrency is such a beautiful blessing on this earth. God is the greatest, you know? Is being able to send $1 million to somebody the next day, boom, just like that, snap of a finger, and nothing is even remotely concerning. Okay, it's beautiful. We want to be focusing on buying as much cryptocurrency as possible, guys. Focus on it. Okay, focus on it. So no single boss controls the ledger, guys. It's decentralized. We're all in this together as a family, and thousands of miners protect it together. Okay, the cryptocurrency community, it's really a family. They just want people to send money and collect their money freely, without any restraints, without any cringe blockages or anything like that, without any 3 a.m. shutdowns. They just want people to send their money borderless all around the world and spend their money all around the world. God is the greatest. You know, to be able to live in this type of time period where we can have this type of decentralization, it's really a blessing. Okay, take advantage of this time period, guys, and let's keep learning about cryptocurrency. So let's talk about the wall of energy. What is this? Okay, so it's a feature, not a bug. So people complain about energy use, but that energy is a wall protecting the money. So you have to understand that the printers, okay, if they just keep printing the dollars, inflation is going to continue to increase. Okay, which is why the US government, for example, is running to cryptocurrency to kind of save its tail. So energy equals real world cost. Okay, you can't really fake that. When that mean power bill gets sent over to you, you got to pay that. It just is what it is. Okay, it's kind of hard to dodge that because it costs real actual money, electricity to mine, and the actual account too. You can't just be like a fake person. You got to actually go sign up for the power account, put your card on there, etc. So because it costs real money, electricity to mine, you're incentivized to play by the rules, keeping it safe and free though for everybody. Okay, free for everybody to jump in, I'll say. Okay, because some things are going to be gate kept through certain other things, but as far as just the freedom to start, anybody can start. Okay, you might just need the ASICs computer, pay for the energy, but as far as just the freedom to start, anybody can start. So if you cheat, you waste electricity and you lose money. Okay, so it's pretty much not going to be worth it at all, because the point of this is to gain some Bitcoin. So inshallah, you can maybe see some profit. So keep everything stable and keep everything well-rounded. Make sure you have everything planned before you just start trying to do anything. Okay, so let's talk about the life cycle, right? So a broadcast. So if you send one Bitcoin to a friend, the network is going to hear it. Okay, the blockchain is going to see it. You could see if the transactions were completed via what's called confirmations. Okay, so compete. Miners then race to solve the math puzzle, the hash, to box up transactions. Okay, and then verify. The winner shows their proof and everyone checks it instantly. And this keeps it secure. Okay, this page is glued to the notebook forever, also called the blockchain, and then the miner decides to go ahead and get paid. So that is the full 1, 2, 3, 4 cycle of how Bitcoin mining actually occurs. Okay, so the computers are looking to solve the hash puzzle. Okay, after the computer solves the hash puzzle, then the miner will go ahead and get paid in Bitcoin, inshallah, if God wills. So keep it simple. All right, y'all. Happy Bitcoin mining. I pray you guys do well. If you want to go set up a rig or set up your own basement, do it. Okay, be ready to pay that electricity bill, but I believe in you guys. If you're interested in Bitcoin mining, head over to stackmode.net for all trading education, and I'll teach you guys and we can talk about absolutely whatever. Stay prayed up to God, keep grinding, and I'll catch you in the next one. Peace.
Let's talk about DeFi. We'll talk about how decentralized finance changes absolutely everything. No more bank systems, no more getting your transactions declined. It's just a peer-to-peer transaction system where if you send your money, it's going to go ahead and get directly sent to the other person using the blockchain system. We're going to go ahead and talk about what DeFi is, what cryptocurrency covers, and how it works. Let's go and let's get to it. So what is decentralized finance, also known as DeFi? DeFi refers to the financial systems built on the blockchain technology, primarily Ethereum, also known as ETH or ETH. And that operates without intermediaries like banks or brokers, which means that when you send transactions from one person to the next, there's going to be no middleman involved like the banks in order to decline your transactions. So everything is autonomous, which means everything is automatically done on the blockchain system using smart contracts. Okay. So everything is blockchain based, which runs on the decentralized networks, which means no banks are involved or brokers, and it ensures transparency and immutability. And smart contracts, the automatic process used in order to direct cryptocurrency from one person to the other. They're self-executing contracts coded to handle transactions automatically. And they're permissionless. Anyone with internet access can participate with no KYC required. Okay, cryptocurrency can be traded all over the world globally. So if you're trying to run a business and you're trying to get paid in any country, you can transfer currency from one person to the next. And it's open source. The code is publicly audible, fostering trust. And unlike traditional finance, DeFi eliminates middlemen, reducing costs and increasing accessibility. And for example, a farmer in the developing country can borrow funds without a bank account involved. Why DeFi matters. Let's talk about the bigger picture. DeFi is reshaping finance by democratizing access, enhancing efficiency, and fostering innovation. It's a $100 billion plus industry as of 2025, and it's continuously growing, especially as laws get passed, governors and hedge funds start participating in Bitcoin, as well as the companies as well too. Financial inclusion. 1.4 billion unbanked people globally can access services. And speed and cost. Transactions settle in minutes with fees often below $1 versus high bank costs in order to wire transfer, like $25 for example, or something like that for a wire transfer fee. It also gives you full transparency on the DeFi network. All transactions are on-chain, okay, verifiable, and you can go ahead and see if something's been confirmed, which means the transaction has most likely hit the other person's wallet, or it's on its way, or it's going to say unconfirmed, which means it's still on its way, but it's just still in the void. Okay. And innovation. New financial products like yield farming emerge rapidly, where it replaces APY, also known as average or annual percentage yield. Okay. And that's where you pretty much invest your money and you're expecting it to make money year after year by just holding a percentage of your income in there. So certain bank accounts have like a 0.5% API, for example. Okay. So let's just say, for example, I don't know if it's 100% accurate math, but say you have $100 in a 0.5% APY account for 1 year. Next year, you'll have $120. Okay, so you profited $20. Okay, so cryptocurrencies and DeFi involves new financial products like yield farming. Yield farming, so instead of 0.5% APY, they have percentages that go from like 5% to over 100%. So let's say you could potentially invest your money from $100. The next year it's $100,000 or something like that. Okay, or $10,000. Okay, so any type of example, but there's going to be volatility included into it too. Your money can definitely crash down, and sometimes it can crash to zero. So more risk involved, but there's higher ceiling cap in order to make profit quicker. So for example, Uniswap. It's a decentralized exchange that allows users to swap tokens without a central authority. And in 2024, it processed over $2 trillion in trading volume. Okay. And trading volume is pretty much the amount of money and the amount of people that are flowing within the market. So core components of DeFi. DeFi is built on several key pillars that enable its functionality. Understanding these is crucial for grasping its potential. Let's talk about the blockchains. Blockchains is where Ethereum dominates, but Solana, Binance, Smart Chain, and others support DeFi. And wallets. Non-custodial wallets like MetaMask allow users to control their funds extremely quickly as well too. So you're going to be able to transfer your cryptocurrency from one place to another and operate your NFTs, etc. Okay, anything on the DeFi network. Smart contracts automate lending, trading, and more. Okay, so instead of having banks confirm your transactions, smart contracts operate and do everything scientifically. And stablecoins, assets like USDC are pegged to fiat, reducing the volatility. Okay, because a lot of the times, $1 is still going to equal $1. Even if inflation comes, it's still going to pretty much work the same. And decentralized exchange, DEXs, platforms like Curve enable peer-to-peer trading. One person, once again, gets one amount of money sent to the other person without any middleman involved. And these components work together to create a trustless ecosystem. And for instance, a user can deposit USDC into Aave and earn interest via smart contracts and withdraw via MetaMask, all without a bank. And key DeFi applications. DeFi offers a range of financial services, each transforming each forward to traders. So let's transform the most impactful ones. So lending and borrowing. Platforms like Compound allow users to lend crypto to earn interest or borrow against collateral. For example, you can earn 5 to 10% APY on stablecoins. So which means, for example, if you have $100 in a stablecoin with a 10% APY, okay, next year you might make $1,000, okay, something like that, for example. And trading. Dexes like SushiSwap allow token swaps without intermediaries, where you can just go ahead and swap your cryptocurrency from one to another quickly, instantly. You get what you want, whatever products you want to trade, how much bread you want to send. And yield farming. Stake assets to earn rewards, and users provide liquidity to pools and earn tokens. And Uniswap's Uni rewards. And staking. Lock tokens to secure networks like Ethereum 2.0, earning 4.7% annually. Okay. And insurance. Nexus Mutual offers decentralized coverage for smart contract failures. For example, MakerDAO lets users lock ETH to mint DAI. It's a stablecoin, and users control the system via governance tokens, embodying DeFi's ethos. And a lot of times, the people who get a lot of the power is going to be large investors. So it can turn centralized sometimes, depending on who's the biggest investor, but things like that can change. Let's talk about the risk and challenges in DeFi. So while promising, DeFi has significant risks that users must understand to participate safely. There's sometimes some smart contract bugs. Old vulnerabilities can lead to hacks. An example, the 2020 YAM finance bug drained 750,000. And liquidity providers lose value if token prices diverge, and affects yield farmers on Uniswap. And governments may impose rules, impacting DeFi's permissionless nature. And there can be high gas fees involved. Ethereum transactions can cost $10 to $100 during congestion. And scams, rug pulls, and fake projects can be common too. Sometimes social media influencers can go ahead and try and create a meme coin, and they're going to go ahead and be a large holder of it, say like 60%, and they buy in at the bottom. Okay, by the time they start promoting it, the chart goes up. Since they're at the bottom, they hold a lot of the liquidity. By the time they sell, it's for a profit. Once it starts going up, okay, market's going to go ahead and crash since they hold a large percentage of it. Okay, so be careful for rug pulls, anything like that. It's how people just make quick money, and it's not a good way to make money. And getting started with DeFi. So are you ready to dive in? Here's a step-by-step guide to participate in this DeFi safely and effectively. So we'll help set up a wallet. You can go ahead and install your MetaMask or Trust Wallet, Phantom, whatever, secure your seed phrase. That's going to be your like 12-word phrase in order to get back into your account in case you ever lose any password or anything like that. Keep it hidden. Don't give anyone that phrase. Okay. Lock it up and encrypt the password. Do what you need to do. Okay. Make sure you keep it safe. So you can connect to DeFi apps as well. You can visit Aave, Uniswap, or Compound via their D apps. You can go and buy Ethereum as well too on exchanges like Coinbase. And research projects, you can check audits on RugDoc or Community Trust scores. And you can also start small. So start with $100 to learn mechanics before scaling and stuff like that, for example. And for example, to lend on Aave, connect your MetaMask, deposit USDC, and earn interest instantly, all without a bank. In the future of DeFi, DeFi is evolving rapidly with potential to disrupt traditional finance further, since people can send money all across the world easily without getting any holds or anything like that. So what's going to be next? Let me know what you think in the comments below. So some layer 2 scaling, solutions like Optimism reduce fees and boost adoption. Okay. Layer 2 scaling is going to be a big thing that brings a lot of solutions and fixes to a lot of issues like high fees. And there can be cross-chain DeFi bridges like Polkadot, which enable multi-chain ecosystems. And banks explore DeFi for tokenized assets. A lot of banks are starting to get hip. Standard fiat banks, traditional currency banks, they're starting to get some information with crypto. Okay. So compliant DeFi may emerge to satisfy the regulations, and AI integration can also progress how things are too. And it's projected that by 2030, DeFi can manage 1 trillion assets per industry forecast, reshaping global finance. So for example, Aave's flash loans. A flash loans allow borrowing without collateral and are repaid in one transaction. And it's used for arbitrage, and they've enabled 10 billion plus in volume. And Yearns optimizes yield farming automatically, moving funds to high yield pools, saving users time and maximizing returns. And DeFi enables innovative financial strategies impossible in traditional systems. So how does DeFi stack against banks and brokers? What's the point of even using it in the first place? Access. One, access and speed are going to be the big two. Because one, you can send your bread instantly as soon as you want to anybody. It's global, and traditional finance also excludes the unbanked. And DeFi transactions settle in minutes versus days for banks. At certain times, you can go ahead and just wait a couple minutes or hours. Inshallah, you'll get your cryptocurrency. And DeFi fees are lower, though gas fees can spike up, making your profit or whatever you send or receive a little bit higher or lower depending on what you're doing. And trust, DeFi relies on code. Traditional finance relies on institution, which we've seen in the past can crash. Okay, autonomous code, also known as smart contracts, control everything within the cryptocurrency space and the decentralized network. So for example, sending $1,000 internationally via banks takes 3 to 5 days with the $50 fee on some banks, and DeFi does it in minutes for $2. Okay, so it doesn't even matter. So ethical and social implications. DeFi's permissionless nature raises questions about responsibility and impact. So inclusion. It empowers undeserved communities but risks exploitation without education. And decentralization. It reduces reliance on corruptible institutions, but it may enable illicit activity. And Ethereum's proof of stake, POS, reduces energy versus proof of work, which is what Bitcoin uses in order to be created. So it exchanges power in order to create the Bitcoin. Okay, but proof of staking is using autonomous contracts in order to create the cryptocurrency like Ethereum, for example. And DeFi's potential to the bank is huge, but scams highlight the need for user education. So make sure you know what you're doing. Make sure you're not getting scammed out of your seed phrase, wallet code, or anything like that. Once again, do your education before you do any investing or sending a bread. So, what excites you about DeFi? What concerns do you have about it? Are you investing in cryptocurrency? And if you want to learn how to trade cryptocurrency, head over to Stackmode.net. Catch you in the next one. Stay prayed up to God. Keep grinding. Peace. All right, let's talk about what liquidity is in crypto. Let's make it easy. Liquidity refers to the ease to which an asset can be bought or sold in a market without significantly affecting its price. And in crypto, it's critical due to the market's volatility and decentralized nature. Volatility means quick price action. Crypto is always going 24/7, so the market never slows down. There's going to be spikes that can happen in the middle of the night while you might be asleep, stuff like that. And it's also decentralized, meaning that everything is done on the peer-to-peer transaction system. Okay, and there's going to be no middlemen involved, no banks involved, and no one to approve whether or not yes or no the transaction is going to go through. Just as soon as it goes through, everything's automatically done via the smart contracts, and then the cryptocurrency can be sent from one party to the other very, very successfully, inshallah. So trading volume. Higher volume indicates better liquidity, okay, and volume is pretty much going to indicate money. Okay, so the higher volume something has, the more money something has, which is going to equal the more people playing it a lot of the times. And major coins like Bitcoin and Ethereum are more liquid than small cap tokens due to the fact that they have more money involved in them since more people trade them, and there's going to be big companies, governments, and hedge funds putting money into it. Okay, big whales. Whales are going to be people who have large amounts of money, and when you have whales investing into something, something's going to have way more liquidity than other things, depending on how popular it is and how heavily invested something is into. And centralized, it's going to be Binance, and something decentralized is something like Uniswap, and the type of exchanges impact the liquidity. For example, Bitcoin on Binance has a high liquidity due to its large order book, allowing large trades with minimal price impact. So why does liquidity matter in the first place? Liquidity affects trading efficiency, cost, and strategy. Low liquidity can lead to significant price swings and higher cost. Price stability. High liquidity reduces volatility for large trades, meaning that if someone puts on a long, prices are going to burst into oblivion, or if someone puts in a sell, prices are going to dump down into the ground. Okay, and execution speed. Liquid markets allow for faster trade execution. Since there's going to be more people trading, there's going to be more of that asset, whatever you're trying to trade, available. Okay, so the more volume means the quicker you're going to be able to get filled and the faster you're going to be able to trade. And lower cost, tight bid. Okay, a lot of the time the bid is going to be what you sell at and the ask is going to be what you buy at a lot of the times. Tight bid and ask spreads in liquid markets reduce trading fees. Okay, so you want your bid and ask spreads to be as close as possible. Okay, you don't want your bid to be way like lower than your ask and stuff like that, vice versa. Okay, because you don't want to buy something with a high ask and then you try to sell it and then the bid is super duper low because there's not enough liquidity. Okay, and risk management. Liquidity ensures that you can exit your positions quickly. So I'm not too sure if you've entered into something with low liquidity, but if you ever tried to sell and price is just pausing, not selling, not doing what you wanted to do, that's most likely because the liquidity is low. Okay, so when you're trading things with high liquidity, you get to avoid that and you get to really just trade how you want quickly and almost instantaneously. For example, Bitcoin versus a low cap token. Trading 100K of Bitcoin on Coinbase has minimal price impact. Okay, because there's so many people with millions of dollars worth of Bitcoin. While the same trade in a low cap token on a DEX might move the price 10%. Okay, because you're going to be a lot of the liquidity, you're going to be a lot of the volume, you're going to have a lot of the money controlled in it. You're going to be one of the largest investors. So what you do can move the market. Okay, but when you invest in things with high volume, okay, it's not going to have big impact because as it's going to be other whales too. So understanding slippage in the first place. Slippage is the difference between the expected price of a trade and the actual executed price, often due to low liquidity or market volatility. And what impacts slippage? Large orders in low liquidity markets cause significant slippage. Okay, so that means that when you try to sell, there's going to be no one to fill you. Say you buy like 60% of a random coin, who are you going to sell it to? You own majority of it. Okay, so it can be a little difficult sometimes when you own a majority of it. And yeah, timing. Slippage increases during volatile periods like the news events. Okay, and order types. Market orders face more slippage than limit orders. And you could still own, like, it's a little bit different between the stock, okay, because there's going to be a lot of legal processes and stuff in place to have shareholders buy like all the stocks on the back end and stuff like that. I'm going to make sure I detail how stock shares work and stuff like that more in depth again and again. But cryptocurrency, you can pretty much be centralized by owning a large percentage of it and just being a large investor. Okay. And automated market makers, AMMS, like Uniswap, can calculate slippage based on the pool swap. So on Uniswap, swapping $10,000 in a small pool might cause 5% slippage, meaning you get 5% less value than expected in the first place. And how does liquidity affect slippage? Liquidity and slippage are inversely related, and higher liquidity means lower slippage due to the fact that there's more orders. Okay, so when there's more orders, there's going to be less slippage. Okay, liquidity pools in DeFi, larger pools. Okay, USDT, Ethereum, for example, they have lower slippage. Okay, due to the fact that they're very popular. Market participation. More traders increase liquidity, which stabilizes prices. In thin markets, low liquidity tokens can see 20% plus slippage on moderate trades. Okay, due to the fact that there's not enough orders, once again. And a 1 million USDC ETH pool on Uniswap has low slippage, okay, for a $1,000 trade. But a 10K pool for a small token might see 10% slippage, okay? Which means you're gonna go ahead and receive less money when you sell, and yeah, it's pretty much what it's gonna mean. And factors influencing crypto liquidity. Several factors determine liquidity in crypto markets, impacting strategies. So think of slippage kind of like fees. So exchange type. Centralized exchanges often have high liquidity than DEXs, and high market cap coins often attract more traders due to the fact that people know it's going to be a solid value investment, okay, and they can go ahead and get some APY, some annual percentage yield returns on their dollar which means that year after year, they expect their dollar to go ahead and increase by just buying and holding in something with value. And trading volume. Higher volume correlates with better liquidity as well too. And market maker activity. Bots and institutions provide liquidity on major platforms, which help move the market. And 24/7 is how the crypto market moves. And the markets enhance liquidity, but they vary by region. For instance, Binance's Bitcoin USDT pair has a high liquidity due to its global user base and market maker activity. And let's talk about managing slippage in trading. Traders can minimize slippage through strategic approaches and tools. Using limit orders. Limit orders specify your price to unavoid expected limits, and with limit orders, you won't get your price filled until price comes in contact wherever you have your limit order. Check the liquidity. Review order books or pool sizes before trading and check out the volume. Make sure it's decent. Okay, don't be trading small stuff and then you have a large percentage of it you try to sell and then you can't get out. That goes for the same thing with options too. And smaller trades. Break large orders into smaller chunks to reduce the price impact. Okay. And timing. Trade during high volume periods to leverage better liquidity. And on an example, on PancakeSwap, setting a 0.5% slippage tolerance for a $500 trade ensures you don't lose more than $2.50 to slippage. So some tools for assessing liquidity. You can use CoinMarketCap, CoinGecko, okay, to check the trading volume and the market depth. TradingView shows you as well too, whatever you want to use. Check out the order book. Platforms like Binance show you the bid-ask spreads and what whales are doing and stuff like that too. You're going to be able to see some programs where you can check to see how large amounts of money are flowing in whatever token that you're researching. And the DeFi Pulse. It tracks liquidity in DeFi protocols, as well as DEX analytics, like Dune analytics to show pool liquidity. Okay. And we're not going to make that. Forget that. And Dune analytics can reveal a Uniswap's pool liquidity depth, helping you predict slippage for a $10,000 trade, for example. So low liquidity tokens on Uniswap saw 20% slippage during hype-driven trading, costing trader thousands of dollars in fees kind of for no reason. And high liquidity during the 2023 rally allowed $1 million in trade with 0.1% slippage, showcasing centralized exchange efficiency. So things with higher market caps, okay, are going to go ahead and have less slippage a lot of the times since there's enough orders, value, and enough back end, okay? And liquidity in centralized versus decentralized exchanges. Centralized and decentralized exchanges handle liquidity different, impacting slippages. CEX, this is centralized, is high liquidity via order books and market makers, okay? For example, Kraken's BTC / USDT pair, okay, or ETH / USDT, okay, something like that. And a DEX. And liquidity pools vary by size, and they have small pools to increase slippage. And trade-offs. CEXs offer lower slippage, but they require trust, and DEXs are trustless, but riskier for low liquidity tokens. For example, $50,000 on Binance has less slippage than a small Uniswap pool. So monitor the volume, use stop loss limits so you know when it's time to close your trades. Make sure you're doing your research on what you're investing into, okay? Batch your trades, split large orders to minimize price impact, okay? And for instance, splitting a $100,000 trade into 10 $10,000 trades on Uniswap can reduce the slippage from 5% to 1%, for example. So little tools and tricks you can use to go ahead and reduce your slippage fees. And exercises for understanding liquidity and slippage. You can check the BTC USDT liquidity on Binance, okay, for 30 minutes, okay, just study the charts, okay. You can simulate a $1,000 trade on a DEX and calculate the slippage, and you can analyze the low liquidity tokens, order book on CoinGecko as well too. And go ahead and check out the trading forums, Reddit and stuff like that, and just do your research. And comment below, how have liquidity and slippage affected your trades? Did you lose any money to it? Talk to me about it in the comments below. What strategies do you also want me to cover? Head over to Stackmode.net. Catch you guys in the next one. Stay prayed up to God. Keep grounding. Catch you in the next one. Peace. Class, it's time to get in your bag. Crypto's getting regulated A bunch of laws are getting passed, and it's time to start stacking up. It's time to start staying down, putting every single dollar we can back into the market, whether that's shares, some cryptocurrency, some tokens, meme coin you believe in. Let's go and let's jump into what crypto regulation means for the future. So what is crypto regulation in the first place? Crypto regulation refers to the laws, rules, and the guidelines set by governments and financial authorities to oversee the use, trading, and creation of cryptocurrencies and blockchain technologies. And it aims to protect consumers from frauds and scams. So as cryptocurrency gets more regulated, as the time continues on, as the government becomes involved into it, the more people are going to be secure into investing into it, okay? And the more people investing into it equals the more money into the market. More money into the market equals new all-time highs, okay? So crypto regulation, just one. It means that it's making crypto safe, okay? It's making it regulated, and it's making it so market can be stable and prevents any type of money laundering activities going on or any type of illegal activities going on for the most part. And it varies globally, leading to regulatory arbitrage. So for example, in the early days, Bitcoin was unregulated, which led to events like the Mt. Gox hack in 2014, where 850,000 Bitcoin were just lost, highlighting the need for oversight, security, safety, and for laws to be into place. Okay. The Bitcoin white paper as well too goes ahead and breaks down the future of Bitcoin, laws, regulation behind it, as well as the protocols. So some history of the crypto regulations. So cryptocurrency emerged with Bitcoin in 2009, and they originally operated in a regulatory vacuum. And over time, governments responded to risk and opportunities alike. And in 2013, the US FinCEN classifies crypto exchanges as money transmitters. And in 2017, China bans ICOs and crypto exchanges. So initial coin offerings and crypto exchanges. So crypto was not being supported within the China at the time. Okay, and then 2021, El Salvador adopts Bitcoin as a legal tender. Okay, so countries start adopting it, countries start buying it. US has been buying cryptocurrency. Other countries have been buying large amounts of cryptocurrency as well too, as of today's date. And 2023, 2024, 2025, EU enacts MiCA, and US faces SEC lawsuits against major exchanges. Okay, and in 2023, that caused Bitcoin to plummet for a bit, but a lot of the lawsuit stuff ended up getting passed. So God is good, bringing power back to the people's hands, making sure that we can control our money the way that we want to. And this evolution really shows a shift from ignorance to active engagement, balancing innovation with protection. So in 2013, for example, the FBI shut down the dark web's marketplace Silk Road, which primarily used Bitcoin for illegal transactions, spurring AML regulations. Okay, so just made people think that Bitcoin was only used for illegal transactions, stuff like that, which is definitely not the case. Okay, it's used to pay people all across the world for legal services that they've done, and just a good way for us to hold unlimited amounts of currencies without any type of centralized currency being able to shut it out. So the current regulatory landscape in the United States. So as of 2025, the US employs a patchwork of regulations from agencies like the SEC, CFTC, and the IRS. Okay. And the SEC, it treats most cryptos as securities if they pass the Howey test. Okay. So if you guys don't know what the SEC is, the SEC is the United States Security and Exchange Commissions. Okay. Securities and Exchange Commissions. So it's pretty much the independent agency that primarily controls everything regarding exchanges. Okay. So let's talk about the Howey test. Okay. So if you don't know what the Howey test is, the Howey test it's a test that the SEC created, and it was pretty much in a case in the Supreme Court that determines whether or not a transaction qualifies as an investment contract or not. Okay. So if it passes the Howey passes the Howey test, then the currency is going to go ahead and be able to be used as an investment portfolio. So yeah, it's going to be able to be classified as something like gold. Okay. So Bitcoin was able to pass the Howey test, and most cryptocurrencies were, and so they can be classified legitimately as actual investments. Okay. So the FTC, Okay. FTC or CFTC. Let's go and let's talk about what that stands for. So the CFTC, it initially allows spot and crypto assets to be registered and trade as actual commodities. Okay. So the CFTC is something that regulates certain cryptocurrencies, and it oversees Bitcoin and Ethereum as actual legitimate commodities that people can trade with their real money. And the IRS requires tax, so that's why tax is going to be being able to be implemented on these things, because things such as Bitcoin and Ethereum, such as the SFTC regulates Bitcoin and Ethereum as actual commodities, so they have to actually be required as tax. Since they passed the Howey test and they're legitimate actual things, the IRS is going to require tax reporting on crypto transactions via a 1099 form. And the recent approvals of Bitcoin and Ethereum spot ETFs mark progress toward mainstream adoption. So for example, SEC versus Ripple. The 2023 ruling that XRP sales on exchanges aren't securities provided clarity, but left ambiguities on for other tokens. Okay. So upcoming regulations in the US, the Genius Act. So the Genius stablecoin bill is a key proposal for 2025, aiming to regulate stablecoins comprehensively. What a stablecoin is, let's say, for example, if you've heard of the coin USDC, that's going to be a stablecoin. That's going to reflect the US currency and the fiat currency of the United States economy. So the stablecoin is pretty much going to be like the stable dollar version of cryptocurrency that doesn't fluctuate all the time like Bitcoin, Ethereum, and other ones do, Solana, etc. And it requires bank issued stablecoins backed by insurance deposits. Okay, so this way stablecoins can actually be stable. Okay, so nothing can be rug pulled or anything like that because everything is actually insured, just like a stock market would be. So if you don't know how the stock market works before it can actually be listed on the actual market itself, someone has to buy all the shares. A private investor has to pretty much back it up. And it mandates transparency, audits, and one-on-one asset backing. And it prohibits CBDC without congressional approval. So the Genius Act, we're really waiting for it to get passed. And it's really going to go ahead and help cryptocurrency be even more legitimized, especially when people are able to trust things like stable coins and stuff like that. People are going to feel comfortable putting all their money into the stable coin, okay, without it worrying about fluctuation, okay? Or let's say you keep all your money in a traditional bank. If you were to try to get all of it out in cash, it just wouldn't be possible. Or if you try and withdraw a deposit out of it all at once, wouldn't be possible. Cryptocurrency, you could have however much you want of there. You can have however much of it as you want. And you can send however much of it as you want at any time. No limitations. So that's going to be the pros for Bitcoin. And the Genius Act aligns with EU's MiCA for global convergence. So it has to align with every single economy that crypto is allowed in. And this act shifts from enforcement to clear rules, potentially boosting innovation. So let's talk about some USDC compliance. So Circle's USDC already adheres to similar standards, positioning it well under new laws. And the impact of US regulations on users. So new rules like the Genius Act will affect how individuals interact with cryptocurrency. It's going to enhance protections, reduce scam risk, but increase KYC requirements, which are pretty much going to mean that any brokers who are trying to let you trade crypto or crypto futures have to have regulatory laws, jurisdictions passed before they can actually have people trade on their brokerage. So making it very secure, making it really, really scam proof, and just making it extremely, extremely nice. Okay. So if you're wondering what KYC means, okay, KYC is know your customer. Okay. Know your customer requirements. And it simplifies tax reporting with Form 1099, but more transactions can be tracked. And easier access to state ETFs for passive income, and some potential market volatility during transactions. And for everyday users, this means safer investments, but more compliance paperwork. Okay. So as the regulations continue to go, there's going to be more things to enforce when it comes to starting your own broker, trading on certain brokers and stuff, etc. But just know that everything's going to be very, very regulated, enforced, and safe, inshallah. So for example, some tax implications. If a user is selling Bitcoin for profit, they must report it. And new forms automate this, reducing errors but increasing IRS oversight. and the current regulatory landscape in the EU. Okay, MiCA. MiCA stands for Markets in Crypto Assets and is the EU's comprehensive framework, and it's fully operational since December 2024, so fairly new as of this video dropping. So it classifies assets into ARTs, EMTs, and other crypto assets, and requires CASP to obtain authorization and publish white papers. And white papers are pretty much going to mean the law behind the cryptocurrency token, what it does, which is going to state the future of it and exactly how it operates, etc. And it focuses on consumer protection and prevents market abuse. And transitional periods vary for 12 months for Germany and, for example, none in Lithuania. We'll talk about Binance in the Europe region. So Binance obtained MiCA licenses in several countries, allowing continued operations with enhanced compliance. And some upcoming developments in the EU. In 2025, MiCA's transitional phase ends in many countries, with the full enforcement by 2026. And the end of transitions, December 2025 in some nations, and it aligns with global standards like the FSB recommendations, and potential extensions to DeFi and NFT spaces as well too. And the EBA now gains oversight for significant tokens, making everything regulatory, safe, and pretty much not controlled, but controlled in a sense to where scams and bad things can't go down as easily. And this will harmonize rules across the EU, reducing fragmentation. So for some stablecoin caps, EMTs face issuance limits if exceeding certain thresholds, affecting issues like Tether, for example. And the impact of EU regulations on users. MiCA provides legal certainty, but imposes stricter rules, and provides better fund safekeeping and transparency for its users. Higher entry barriers may limit service options, but the brokers that are going to be available, it's going to make it safe to trade on. And stablecoin users can benefit from some reserve requirements, and they're easier cross-border access within the EU. And individuals will enjoy safer ecosystems, but may face increased fees from compliance costs. So, investor protection. If a platform fails, MiCA mandates client asset segregation, protecting user funds, unlike in the FTX collapse, for example. So, some global trends in the crypto regulation space. So, globally, 93% of SFB members plan new frameworks by 2025, focusing on same risk, same regulation. So FATF, 75% jurisdictions are non-compliant with VA standards, okay? So FATF stands for Financial Action Task Force, and it's an intergovernmental organization that's made to combat money laundering and just pretty much scamming in general. So yeah, they need to make sure that it's compliant. Everyone needs to make sure that it's compliant, just so it can't just be used for scams or rug pulls, okay? Because there's also going to be a deceptive side to human beings sometimes, sadly. And, this is why we're trying to be just God-fearing righteous people. So that can be reduced. So thank God that all these regulations are in place. So certain things like scams and stuff like that aren't going to be as common. So some emphasis on the AML, CFT, and travel rule implementation. And stablecoins, regulations, and Singapore, etc., starting to spread across, making it a safe choice for people to keep their money in. Okay. So the US and the UK plans rules for stablecoins and staking in 2025 with the full regimen by 2026. So that's going to be for the UK. I'm not too sure about the US, but for the UK, they're looking into a stablecoin decentralized feature as well too. So stablecoins, they're the focus of new regulations. Stablecoins are seen as bridges to traditional finance, hence heavily regulated. Promises behind it, okay? Because it's going to be the dollar, the stable dollar, unlike other cryptocurrencies, which are in an investing capital gain sense where people are trying to make money when it goes up. Stable coins are meant to do what it says, be stable. And they must maintain one-of-one backing with high quality assets. And regular audits and transparency reports are going to be required. In the US, bank issued and EMT arts classifications and global limits on exposure for banks, 2% tier 1 capital. And this reduces systematic risk, but may limit innovation in algorithmic stablecoins. So for example, let's talk about the Terra USD collapse. So in 2022, UST DPEG led to $40 billion in losses, prompting stricter stablecoin rules worldwide. So after a lot of these crypto losses, crypto crashes, or crypto hacks or exploits, regulations get put into place and the whole system changes. And that's just how we have to learn as human beings. Trial and error. Okay, only God is perfect. Sometimes things out. So AML, DeFi, and privacy concerns. So AML stands for anti-money laundering, and DeFi stands for decentralized finance. So anti-money laundering rules are tightening for crypto. So travel rule: exchanges must share users' data for transfers, and decentralized finance protocols may need to comply with know your customer laws. And the balance between privacy and security is coming into play. And non-compliance leads to bans in some jurisdiction because it can go down. They don't want people getting scammed. They don't want people getting rug pulled on. And they don't want a government that allows things like that. And for users, this means less anonymity, but safer ecosystems. So for example, tornado cash sanctions. The US OFAC sanctioned the mixer in 2022 for laundering, highlighting decentralized finance risk. Okay. So if you guys don't know what the OFAC is, OFAC stands for the Office of Foreign Assets Control. Okay. So all of these are going to be just bodies of people just trying to protect money. Okay. Trying to protect people from getting scammed and trying to protect people from losing money for no reason. So what it means for investors: regulation is going to bring more opportunities and challenges for investors. But more opportunities and the safer things get, more people are going to feel comfortable to invest into it once again, which means that more money is going to be put into the market. Okay. So institutional adoption via ETFs, exchange traded funds, and regulated products. Reduced fraud, increasing confidence, increasing more money flow being put into the markets. And clear tax rules when we're reporting, especially as we see companies buy crypto, government bodies buy crypto. It's going to become more regulated over time. And global convergence minimizes arbitrage risk. And investors should diversify and stay compliant to mitigate volatility. So ETF approvals, exchange traded funds. 2024 Bitcoin ETFs saw $10 billion in inflows, stabilizing process post approval. So what does it mean for everyday users? So for non-investors, regulations affect payments, remittances, and daily uses. So safer stablecoins for transactions. Okay, so people are going to feel more comfortable keeping large, heavy amounts of reserves in their stablecoin or in their wallet as well too. And mandatory know your customer rules are going to be put into place for wallets and exchanges. So faster, cheaper cross-border payments under rules are going to be available. Potential restrictions in high-risk areas could be put into place, and users gain protection but may lose some privacy. And in developing countries, regulated stablecoins could reduce fees from 6% to under 1%. Making it an extremely good option to go ahead and send and exchange currency. So navigating the regulatory wave. So risk: overregulation could really stifle the innovation and cause certain market dips because it's really taken away from the point that people want, is the power back to the people. But sometimes power in the people could be a little too much, and if people don't do right by it, people can be taken advantage of, and that's not what you want. So opportunities: mainstream adoption and new financial products could come into as things get more balanced, safe, and regulatory. And they advocate for fair rules, and you can stay informed via reading the white papers and just looking at reliable sources, checking out the news and stuff like that too, to see what's coming out with the crypto laws. And the future is regulated, but it seems promising, power back in the people's hands, and seems to be a place where we can still make some good income and shalom. So EU leadership, for example, Micro positions EU as a hub that attracts firms like Coinbase expanding there. Okay. So in conclusion, crypto regulations are evolving rapidly in 2025, aiming for safety and growth in a positive direction. Some key takeaways. Okay. Understand that as stuff gets more regulatory, it might be more controlled, but it will definitely be safer. Stay positive to God, keep grinding. Head over to Stackmode.net to learn how to trade cryptocurrency. Peace.
When a company drops its earnings reports, it's like opening the result envelope on award night. Traders, investors, hedge funds, everyone is waiting to see if the company beats expectations, meet them, or completely miss the mark. And depending on that reveal, price action can turn into a calm wave or a full-blown tidal surge. During earnings, companies reveal how much money they made, how much they spent, and what they expect for the future. And here's the twist. Sometimes a company posts great numbers, but the stock still tanks. And here's why. Because Wall Street wasn't impressed, or the expectations could have been higher than reality. And other times the results are just okay, but the stock still shoots up because traders were expecting something a lot worse. In just a few minutes, spreads widen, volume spikes, and algorithms fire off like fireworks. And this is why many traders either love earnings season or avoid it like a thunderstorm. A lot of the times though, in order to avoid gambling, it is better to place your trades after the earnings report has released. So let's go and jump into what earnings is and how it affects the market. Inshallah, God wills. So we're going to go ahead and cover earnings. So what happens when financial earnings release? Okay, so every quarter, okay, every couple of months, financial earnings are going to be a report that determines the amount of money that a company made, okay, and the amount of expectations that they were trying to arise to. So if a company was projected to make $500 million, but they only made $300 million, then in that case, they would go ahead and lose earnings, okay? But if a company was projected to make $500 million and they made $800 million, then that would go ahead and be a positive earnings beat, okay? So earnings are going to go ahead and determine the price action too. Now, just because earnings gets beat or earnings loses doesn't mean that a stock will head up or down, okay? Stocks will do whatever it wants. Do not try and use the earnings releases to try and gamble and make trades, okay? Try and trade after earnings releases if you're going to put down a brand new position, okay? Wait for the price action to kick in, and then after the earnings release comes, then feel comfortable to make your trade. But never trade like a day or a couple of days before earnings. Wait for earnings if you're a couple of days before earnings, okay? Wait for earnings to come out and then take your setup, okay? Because otherwise it could be gambling. Earnings causes stocks to make giant moves quickly, okay? So the moves that happen during earnings are going to be extremely instant, and it's going to be like a flash move based on the report. So let's jump into it. So the quarterly report, right? 10Q. Okay, every 3 months, public companies are required by law to reveal their financial health to the public to let them know how they're doing. Okay, it's going to go ahead and let investors know if they want to keep throwing money into the company or not. If a company is not beating earnings, then that means that they're not making any type of income. Okay, and a lot of the times we don't want to be invested into something that's not even making income in the first place. So every 3 months, public companies are required by law to reveal their financial health to the public. Okay, and let's talk about the revenue. So revenue is going to be how much money came into the door. Okay, how much money did that company make during that quarter? And the net income, it's going to be the bottom line. It's how much profit is left after expenses. So certain companies might have to pay for building power, warehouse cost, employees cost, etc. And the EPS, it's going to stand for earnings per share. And it's the profit divided by the number of shares that are going to go ahead and be available. Okay, so EPS, net income, and revenue, those are going to be the three factors and the three things that are shown on the quarterly reports. Okay, so let's keep jumping into it. So the expectations game, right? The actual numbers don't matter as much as the expectations. Okay, so once again, let's say a company was projected to make 100 million, right? Expected. But then they actually made 170 million. Okay, that would go ahead and give them a beat result. Okay, so whenever you hear the words beat, that means that the results that actually came out were going to be better than what was projected or speculated in the first place. Okay, so priced in. If everyone expects Apple to make $1 billion and then make $1 billion, the stock might drop. Okay, why? Because the good news was already bought weeks ago. Okay, so to see a stock pop, a company usually needs to beat company earnings, okay, and beat the analyst consensus estimates based on the company's averages is how the estimates come out too. So it's not just going to come out with random numbers. If a company is making around like $50 million a year, okay, the earnings might be around like $60 or $40 million expectations. Okay, it'll be around where the company is performing as of recent years. Okay, so don't just expect the numbers to just be some random inflated numbers. These are all numbers that are going to be based in and baked into averages for a reason. Okay, earnings come into play. But once again, don't try and just hop in a contract the day before earnings trying to trade like that. Please don't do that. Okay, Please don't do that. Now, sometimes there's going to be little rumors as well too. You'll see like, oh, this company is going to be earnings. Nobody knows what's going to happen until the earnings report actually comes out. So please do not lose money gambling for no reason. Okay. Wait for the earnings report to come out. Unless you're in a hefty swing already, please wait for the earnings report to come out. Okay. Let's keep going into it. And understand that guidance is going to be king. So stocks trade on the future, not the past. Okay. So guidance. Guidance is going to be the company's prediction for the next quarter, how much money they're going to be making. Okay. It's pretty much going to be giving the company a trail and letting them know how they should be performing in order to get to the next level. So in any scenario, company reported record profits, okay, but let's say next quarter looks slow, okay, then that'll be the future. And results, okay, the stock would go ahead and crash if that's the case. So we're lowering our outlook due to supply chain issues would equal an instant sell-off, since that means they're pretty much letting us know, hey guys, the company can't expand right now because of financial issues. Okay. So guidance in the future of the company is also going to be really, really important too. There might be times where a company might lose or not beat their financial earnings, but then end up making a pretty profitable couple of next quarters. Okay. So one quarter is not going to go ahead and determine a company's entire worth. It's the consistent stream of quarters and reports year after year after year after year. If a company is consistently losing earnings, then that tells you about the company. Okay. Okay, so we'll talk about the implied volatility crush. So IV is going to stand for implied volatility. So before earnings, options prices can get very expensive. This is called high implied volatility. So it's like buying insurance right before a hurricane, okay? Or driving your car and then you just put insurance on it, you know? So before the release. So uncertainty is high, so options get more expensive in this case, okay? So if you are going to buy a contract before earnings come out, okay, make sure you sell it before earnings come out too. Don't gamble and sell your contract after earnings comes out, because then the uncertainty would go ahead and vanish. Okay, unless you're playing for a way bigger take profit that's going to be way further out than you think. Okay, then try and sell your contract before the earnings comes out, because it's going to be worth the most expensive then. Okay, so buying options right before earnings often loses money, even if you guess the direction right. So if you buy a calls contract and the company beats earnings, and even if price goes in an upwards direction, okay, you might notice that your contract didn't even make you that much money. Okay, that's because price has to get rebaked into what it actually is supposed to be. So do not buy earnings before expecting you to catch the right direction. Okay, because even if you do catch the right direction, you're probably not going to make as much money as you would think. Okay, especially depending on the contract that you buy. Okay, the reasons why contracts get expensive like that before earnings is because they don't know what the number is going to go to. Okay, that's why. So implied volatility makes things more expensive. So understanding this really helps us. Let's head over to the next slide. And let's go ahead and let's talk about the gap. So earnings are usually released after the market closes. So it's usually after 4 p.m. Eastern Standard Time. Okay. Or it's going to be before market opens. So it's going to be before 9:30 a.m. Eastern Time. So you cannot trade standard stocks during the release unless you have extended hours access. So a lot of the times, once again, just like I talked about earlier, you're going to see that instantaneous price action. So the stock price will teleport, so it instantly gap up or down. Okay, and stop losses do not work against gaps. If you hold overnight, then you're going to be taking the full risk. So just know that even if you have a stop loss placed during the day, if price decides to run through wherever your stop loss is, then what it's going to go ahead and do is decide to not validate and just ignore all of those orders due to the fact that the price action is happening pre-market and after market. Okay, and you can only maneuver your options contracts. If you have shares, you can close a little before or after. Okay, but if you're on options, you gotta only get what you get when you wake up to the contracts. Okay, so even if you see price going in an upwards direction and you had some calls, don't expect money all the time. It really depends on a lot of things such as implied volatility, etc. Okay. So expectations matter. Okay, so beating estimates are required a lot of the time for a stock to go in an upwards direction. Okay, in order to start seeing a rally, and guidance is going to be critical. So the future outlook is a lot of times going to go ahead and overshadow the past results. And volatility crush. Options lose value instantly after the news. Okay, so you might notice a contract might be $500 before the news. Okay, and then after the news, it might go down to $200, even if the number were to go ahead and hit. Okay, so options lose value instantly after the news, and the gamble between everything. So holding through earnings has a high risk. Okay, just a high risk factor. I'm not even gonna say high reward. Okay, because the reward that you were to get is not even worth it, and you wouldn't even get it as properly as you would. Now, if you're holding a super swing, okay, you're trying to hold a trade for months, weeks, some years, etc. Okay, then I do understand. Okay, do your thing and hold your trade as you need. But a lot of the times, make sure you're closing your trades before earnings come out. Okay, unless you know exactly what type of swing that you're holding. Okay, head over to Stackmode.net to learn more about anything stock related, investing related, or trading related. I'll catch you guys in the next one. Peace.
So a single rate hike doesn't just cool the economy, it changes the math for every crypto asset in your portfolio. And here's the reality. When borrowing money gets expensive, the big whales pull out of risk and run to safety, leaving retail investors holding the bag. And we're talking about a liquidity drain that can wipe out months of gains in minutes. If you want to survive the next FOMC meeting without ever getting wrecked, you need to understand exactly how this mechanism works right now. Let's go and let's talk about rate hikes. Inshallah. So let's understand when the Federal Reserve moves, global markets shake. And we have to understand the mechanisms of how traditional monetary policy dictates the fate of digital assets. And in this case, we're going to be talking about crypto. Let's continue on. So what is a rate hike in the first place? So it's the Fed's primary tool to fight inflation. Okay. And it's pretty much a tightening. And it's when they raise the federal funds rate, which is the baseline interest rate for the economy. And borrowing costs end up rising due to this fact. It becomes more expensive for banks, businesses, and consumers to borrow money. So it's going to be more expensive in order to get loans, certain private equity, and just borrow money in general. And spending slows. Higher loan costs mean fewer mortgages, fewer car loans, and less business investments, which means the economy would slow down. So less people being able to get large sums of money. Okay, it's not a lot of people rocking around with over 5-6 figures. So less loans logically would mean less cars being bought, less mortgages equals less houses being bought, which would then cause the people who own the houses to lower the cost of the houses to try to get rid of it and make some profit. So whenever rate hikes come into place, it really just throws off the whole balance. And the goal of the rate hike is to reduce demand to lower inflation prices. Once again, this often causes pain in asset markets because since people have less money, less free cash, people are going to then have less money to flow into assets. So imagine if the economy is a speeding car, okay? Imagine that as inflation. And a rate hike is going to be the Fed slamming on the brakes. And the goal is to slow down without crashing the car, which causes a recession. Now, there is going to be repercussions for this, upsides and downsides. So keeping everything in mind is going to be extremely, extremely important. But when a rate hike comes into place, it means that banks, businesses, and consumers are going to have a harder time borrowing money. And the seesaw, so the dollar index, the DXY, you might have heard of it. So there's a strong inverse relationship between the strength of the US dollar and the price of Bitcoin. This is also because Bitcoin is used as an inflationary hedge since the US dollar is going to be a infinite currency. Okay, it can continuously just be printed, and owned by everybody. Bitcoin is going to be a finite currency. Okay, so only a certain amount of people will be able to own Bitcoin. Once it's gone, then it's going to be completely gone. So rates up equals the DXY would be up, which is letting us know that this is strong US dollar and that the economy is trying to progress. And crypto down, okay, would be in relative relation to this, okay, equaling weak asset prices. So when the Fed rates hike, global investors buy dollars to access those higher yields. And a stronger dollar makes it more expensive to then buy certain Bitcoin assets, other cryptocurrency assets, and stocks, which suppresses the price. Okay, So while crypto is going down though, gives you a really, really good opportunity in order to save your cash and buy assets at a low. Okay. Try and capitalize and always buy assets at a low. If you analyze that the setup or whatever you're looking at is meant to go up year after year after year after year after year after year, if it's hitting a low point, invest at the low points. Stop buying at all-time highs. Okay, and don't just look at when something is going down as a negative thing. Price has to pull back in order to go up. So if price pulls back, see that as an opportunity. Ask yourself, is that going to be a good buy? And if you're struggling to identify a setup, head over to stackmode.net or just watch my videos. Okay. Take advantage of the economy. Okay. When economy or when assets are down, take advantage of that. I don't care if it's real estate, Bitcoin, stocks, whatever. When assets are down, you have to take advantage of that low, because just like everything else, price, inshallah, will sweep back up. And you don't want to be in a position to where like, oh man, I wish I invested at X, Y, and Z time when you could have. So take your action, do what you need to do, and make your decisions today. Okay. Catch your assets when assets are at a low. When the economy is in shambles and everyone's panicking, that's the time you need to be buying. It's really important to try and have some cash on hand. This way you're going to be able to make some good decisions and invest into these investments when you need. So while rate hikes hurt crypto in the short term, the reason for the hikes might fuel the long-term bull case. Okay, and the long-term counter narrative. If inflation wins, then the Fed raises rates, but inflation could still stay in a high stagflation point, and fiat currency loses purchasing power rapidly. And the hard money hedge, and that's why a lot of people look to and run towards Bitcoin, for example. Okay. Bitcoin, yes, is good for profit, but you can make a lot of money quicker playing options or futures, for example. But just the fact that Bitcoin has a fixed supply, it gives you a sense of asset superiority. So once it's gone and somebody has it, all right, and if you weren't to have it, then they would have an advantage. Okay, so Bitcoin's fixed supply, it's 21 million, and it's designed as an escape valve from failing fiat monetary policy, since we know that over time, the US dollar is meant to cost, or it's meant to give us less and less and less purchasing power year after year after year after year, since more dollars will just be printed. And the pivot hope. So the market's always trying to predict when the Fed will stop hiking and start cutting. And that's going to be the pivot. So the moment they pivot, crypto usually rallies super duper hard, because once they start pivoting, people are going to be like, all right, you know what, economy's safe. And then people are going to go ahead and start taking advantage of the buys. So mix in the economy news with the charts, and you guys are going to be able to make some really, really great decisions and some great choices. Use your higher time frames as well too. So you can check out the FOMC meetings on forexfactory.com. And the days the Fed announces rate decisions are historically the most volatile days of the year for crypto. So FOMC, a lot of times, is when they release a bunch of really important rate decisions and reports. And cash, understand that cash is going to be a position. You don't always got to be in the setup all the time. Cash is a position. So in a high rate environment, holding stable coins, right, the earning yield, is often better than forcing bad trades in a bear market. You just don't need to do that. Don't do that, actually. Okay, don't force trades in a bear market. Just wait for price to pull back, wait for buyers to step in, and then go ahead and catch the low. Catch the low. Once again, if you're struggling with finding the right setup, head over to stackmode.net and look for decoupling. It's the ultimate bullish signal, and it'll let us know when it's time to buy. So when tech stocks drop on Fed news, but Bitcoin holds steady or rises, a lot of things are going to let us know when it's time to buy. Okay, so if you see tech stocks dropping really, really hard, and then the Fed announces some certain news, you start seeing rallying, put that together with your higher time frame analysis and put it together with the charts, and you can start seeing like, okay, price is ready to buy. Or after big events like CPI and stuff like that, etc., a lot of people hold their cash until these big news events come out, and then you'll start seeing market make its move that it needs to be making. And sometimes you'll even see market, let's say, for example, trending in a downwards direction weeks or days before this news event comes out. Then when the news event comes out, price will go ahead and blast in an upwards direction. Okay, so make your decisions patient ones. Okay, make sure they're extremely patient decisions, because the more patient you are, the better setups that you plan, the more money you're going to be able to make, inshallah. All right, I'm gonna catch you guys in the next one. Stay prayed to God. Keep grinding. Head over to stackmode.net for all trading education. Peace. After you've been grinding for years, really busting your tail, you want your money to work harder than you do. And dividend investing might be the easiest way to build passive income. But most beginners overthink it. But dividend investing is really simple. You just buy shares of strong, established companies, and they pay you cash just for holding them. And that's it. So imagine waking up to deposits monthly, weekly, and certain dividends pay out in different ratios and frequencies, and they hit your account while you sleep. That's the power of dividends. Let's go and let's jump into it. Let's understand what dividend investing is and how you guys can start building some passive income for you and your families. Inshallah. Let's talk about dividend investing. Making our money work for us is going to be the most ample way to, one, get our mental health back. Okay, I understand we're grinding hard, working year after year after year after year, but let's at least make our money make us some money. Okay, we're not just grinding. Okay, no more exchanging time for money. Okay, it's time to start exchanging money for money. Okay, this way you guys are going to be a lot mentally healthier. You guys are going to have time to get closer to God, work on your family relationships, work on yourself, work on your business, and understand that when you have your money flowing within that asset river constantly, you're using your cash and buying more assets with it, and it's flowing in the river, flowing in the river, you could pretty much never work again. Okay, so when people talk about passive income retiring, it's about putting your money within that income river. Let's go and let's talk about how to make our money work for us. Inshallah. So what is a dividend in the first place? A dividend is going to pretty much be a thank you payment. Okay, and they pretty much just tell you, hey, you've been investing in us for a long time. You've been believing in us, and I'm going to go ahead and give you some money back because we've been crushing it on the company side. So a dividend is a thank you payment. Okay, so whenever you invest into a company that pays out dividends, or you're invested into an exchange trader fund, okay, which is a compilation of companies just put into one big giant fund, then you could also get dividend payments from there if the fund pays it out. Okay, so let's say, imagine you lend money to a friend, right, to start their lemonade stand. Okay, you believe in them, you think it's going to turn up, and every month they start giving you $10 from the profits as a thank you because he started turning up, started making tons of money. Okay, so that friend who started the lemonade stand decided to give you a portion of the income because since you gave him that initial investment to believe in him, okay, and you funded his company, he did the right thing and gave you some profits back because you had his back and you believed in him. And that's what a dividend payment is. When you believe in these companies, when you believe in these ETFs, then we're able to get some profit back, inshallah. And that's a dividend. It's real cash paid to you just for owning a piece of the company. Okay, and it's passive. Okay, you don't got to do no work for this money. All you got to do is buy. Okay, all you're doing is turning money into more money. Okay, dividends is going to be one of the most extreme forms of passive income, especially after you guys have grinded out 6 to 7 figures. Okay, being able to plant that 6 to 7 figures into some dividends and get paid $5,000 to $25,000 a month just for having your money parked is going to be a really, really good way to just chill in life. Okay, and it could be regularly. Okay, it's usually paid every 3 months. Okay, so quarterly, and it's very, very safe. So usually only strong, profitable companies pay them. Okay, it's not a lot of broke companies paying out dividends because they can't afford it. Okay, a lot of companies paying out dividends are companies that have it all based out. They know that you investing into the stock market, okay, is going to go ahead and give them more income. They're then going to be able to turn that income into bigger buildings, hire better and more employees, okay, which should lead to them making more income, okay, better products, faster products being made, etc. So that way their income can skyrocket, okay, and when that happens, we benefit from it too. And a lot of the times too, dividend payments, okay, have certain dates set to them. Okay, sometimes you get dividend payments monthly, sometimes you get dividend payments quarterly, a few times a year. Okay, and every single company and ETF is going to have its own different dividend payment cycle. So before you invest into something, make sure you're doing your research. So here's an example, okay, just one more time to make sure we understand it. Let's say you own 1 share of Apple, okay. For 1 share of Apple, Apple pays you 24 cents. Okay, you can check your phone, okay, and that money is sitting in your account, chilling. Okay, you didn't have to sell the stock to get it. Okay, all you have to do is just have your money chilling in stocks. So you get paid for turning your assets into more assets. Okay, So after all the day trading is done, after grinding your business hard for years, after grinding corporate hard for years, take that money and you guys can easily park it into some dividends and start getting yourself some monthly cash flow. Okay. Put some mental health back into yourself and take some of your money and let's try and get some passive income from the money we already have and we've been working hard for. Let's go to the next slide. So let's go and let's talk about the dividend yield. So the dividend yield tells you the return on your money right now. Okay. And it's kind of like the interest rate number on your savings account. Okay. So as you know, for APY accounts, okay, interest though, is a reason why God says not to do it. It's not something that'll leave you profitable in the end anyways. Okay. So focus on things outside of interest. But let's say annual percentage yield. Let's say there's an account that would give you like 3% per year. Okay. With inflation and taxes though, that's not anything. Okay. So when you're focusing on dividends though, something like that, okay, then you're going to be able to get a lot better bang for your buck and for your value. Okay. So average yield, right? Around a 2 to 5% average yield is going to be healthy. Okay. And a red flag, if the average yield is over 8%, okay, be careful. Okay. It might be a trap and the company could fall off later, even if they're paying out big dividend payments right now. Okay. You want to try and have your dividend payments be as consistent as possible. Okay, you don't want your dividend payments to go down. Okay, if you're getting 5K a month for the money you have invested, that's how much you want to be getting. Okay, you don't want it to go down to 3K one month and then your bills and calculations are all thrown off. You don't want it to happen. It can be really, really frustrating. Okay, so let's do the math. So let's say the stock price of something is going to be $100. Okay, and then they pay you $4 per year. Okay, so the yield, okay, is 4. Since they're paying you $4 a year, divided by 100, okay, and that's the stock price, and that's going to equal a 4% return, okay, and that's how the dividend yield is going to go ahead and be broken down. Let's go over to the next slide. So, is it safe, right? The payout ratio. So let's talk about the pizza analogy. So think of a company's total profits as a whole pizza, okay, and the payout ratio. It's how many slices they decide to give you, okay, and that's going to go ahead and be exemplary for the shareholders versus how many they keep to grow the business. Okay. So how many slices of pizza are they going to give to you? And then how many slices of pizza are they going to try and hold on to? Okay. And safe. Okay. So under 60%. Okay. If they give you 6 slices and they keep 4, okay, that's safe. Okay. That's safe. Why? Because they were able to pay you a little piece of the pie. Okay. Make sure you eat and make sure they eat too. Okay, because they got to be logical. They can't feed you if they're not feeding themselves. Okay, so they be logical. So, but it can be dangerous if they're giving away over 90% of their pizza. If they're giving away their whole pizza every single time, then they're going to have no food left over for tomorrow. Okay, so you have to watch and look at the payout ratio percentages. Okay, so let's say company A, right? Let's say earn $10. Okay, and then they give you $2. Okay, they would have $8 left. Okay. And that's going to be pretty safe. Now, let's say company B, right? Let's say they also earn $10. Okay. And let's say company B paid you 9.99. Okay. They paid you $9.99. Okay. They would be left with 1 penny left. Okay. What type of investments or growth can they do then? Okay. So focusing on the payout ratio of the dividend you're looking at is going to be extremely, extremely imperative to making sure that you're not making any random decisions unnecessarily. Okay, focus on companies with safe payout ratios because that way you can see that they have their math baked in for consistent scaling year after year after year after year, not just random sporadic payments being sent out and then they have a possibility of going broke and then there's really going to be no more dividend payments. Okay, so in order to avoid all of that, avoid the hardships, try and focus on dividends and companies and ETFs that pay out very safe ratios so that they don't go broke. So then they can continue to pay out dividends. So you can continue to feed your family and yourself. Inshallah. Let's go to the next slide. So let's go and let's break down the snowball effect. Okay. The compounding effect. Stacking dollars. Okay. Get into stack mode. Okay. Stay down. I don't care if you got to wear the same clothes every single day. Okay. Keep driving that old car. Okay. It's not time to get a new car right now. Stack it up. Okay. Set some parameters. Tell yourself, you know what? Until I have 100,000 stacked up, I'm not going to get X, Y, and Z. Till I have 1 million stacked up, I'm not going to get X, Y, and Z. All this just takes a couple months and a couple years. Okay, you guys got it. Go hard. Go hard. Go hard because it's really time to automate your wealth.
Okay, and it's going to be the secret sauce. Instead of spending your dividend cash on coffee or random other things, okay, you can press a button called drip. Okay, so what drip is going to do is take your dividend income. Okay, so say you're making $100 a month from dividend income. Okay, you could take that $100 a month and buy some more dividend shares with that. Okay, so that way that $100 a month will turn into $150 a month. You keep doing that, it'll turn into $200 a month. Okay, and then it keeps stacking up over time. As long as you're in stack mode, your account will be in stack mode right with you. Just know that. Okay, so drip equals dividend reinvestment plan. A lot of brokers have it to where you can automatically just reinvest your dividend income back into more shares. Okay, so the computer or whatever broker you're using uses your dividend cash to buy more shares automatically. Okay, and next time you'll have more shares, so you get a bigger bag, bigger check. Then that bigger check buys even more shares and it spirals upwards. Okay, so trying to have your life together outside of the market. Okay, the more you have your life together outside of the market, the more money you'll be able to generate from the market. Okay, just keep cycling your money back into shares, back into more shares, back into more shares, and keep upping that income. So let's say year one, you own 100 shares. Okay, you invested super duper heavy. Then by year 10, okay, you own 150 shares. Okay, and let's say you didn't even pay for the extra 50 shares. It was just stacking up over time. Okay, so once you start planting that seed of ownership, your tree can do nothing but sprout and grow, inshallah. So plant your seed today so you can start sprouting. You guys can start dropping fruit everywhere. Okay, but you gotta plant your seed. You cannot start dropping fruit everywhere until you plant your seed. Okay, so then from year 30, 20, then from there you're earning a full salary from dividends alone. And then you could chill out. Okay, you still have your money parked away in the dividend and you're getting paid for having your money parked away. It's crazy. Okay, if you make the right financial decisions, you stay focused on God and you don't feed your flesh, you guys can get out of poverty. Okay, you guys can be rich forever. You can never go broke again as long as you maneuver your wealth into that constant asset river. You have to continue to flow your money in that asset river. Otherwise, things can get hard. Okay, so throw your money into the river and start flowing so you guys can grow like the big oak tree. Plant all your seeds today. Let's head over to the next slide. So let's jump into royalty stocks, right? Dividend aristocrats. So these are going to be the MVPs of the stock market. Okay, and to be on the list, a company must have been in the S&P 500, okay, which is accumulation of like the most powerful stocks, okay, put into one index, okay, known as the S&P 500. And two, okay, they must increase their dividend every year for 25 plus years straight. So if a company is paying, right, 20 cents per share, okay, in 2010, okay, and then in 2011, let's say they're paying 25 cents per share. Okay, that's going to be a 5-cent increase. Okay, so if they're increasing their dividend amount every year for 25 years straight, then that's going to be a big MVP. And that means that these companies have survived recessions, wars, bubbles, and still paid their investors more money, which means that a lot of these companies are going to be constant investments due to the fact that it seems like that these companies have become a staple in human lifestyle. Okay, companies such as Coca-Cola, okay, or Johnson & Johnson, the Band-Aid company, for example. Okay, so companies that incorporate into lifestyle, okay, really are going to be the ones that will survive year after year after year. So let's go and let's talk about the risk with everything. Okay, pay attention to that yield trap, just like we talked about on the previous slides. The yield trap is going to be really important to pay attention to. Sometimes you see a stock paying 15%. Okay, you think you're about to be making bands every single month just by investing into a simple dividend. Okay, and they might pay you out for a couple of months. Okay, you might be getting 5K a month payments, for example. Okay, for 3 months, and the next thing you know, they start losing profit. Things start getting shambles, and then boom, and then the high yield decides to stop paying you out what you're used to getting paid out. And if a company runs out of cash, I'm telling you, they're gonna cut that dividend to zero. Okay, so just with the pizza analogy, okay. You can't help anybody in the world if you're not helping yourself first, okay? So if you have a box of pizza, right, there's 10 slices of pizza, okay? If you give away 6 slices of pizza, okay, you'll still have 4 slices of pizza for yourself, okay? You can still eat, you're not gonna be starving, and you're gonna be chilling, okay? But then take person B, okay? If person B
gives away all their pizza, they're going to have no pizza left over. Okay. And that might seem like a good thing instantly. Okay. Because they fed everybody and ignored themselves. But that's not. Okay. That'll turn into later frustration, later hunger on that person, regret on that person. Okay. And they're going to be like, well, you know, people might not have fed me a certain type of ways. Okay. Leading into certain type of mindsets. Okay. So even in dividends, it tells us it's really important. Okay. To keep our bag right. Before we can help anybody else, our bag has to be right. Okay. And dividends show us this. If a company is giving away all their money, they're not going to have enough money to reinvest into more ads, into more workers, into better factories, etc. And they're not going to be able to scale at the way that they would like to, if at all. Okay. So if a company runs out of cash, they're going to cut the dividend to zero. So be wary of new companies, especially paying out big dividends, because it might not be consistently for long. And that's when the crash comes. Okay, and when they cut the dividend, the stock price drops even more because it's going to go ahead and lose value, which means you lose twice. So not only would you lose money on your base, money that's parked in there, your dividend payments are going to go ahead and get cut as well. So a golden rule, right? So a safe 3% return is better than a 15% risky return that has a chance of going to zero. Okay, don't be greedy. Focus on consistency. The name of the game in trading, investing in general, is consistency. Treat yourself like an oak tree, and you got to plant yourself in the ground. You got to give yourself water and sun. Okay. If you're not planting your seeds and you're just trying to hit the big 0 to 100, you're just trying to go buy an oak tree and plant it in the ground, it might not be stable. Okay. It didn't get time to connect to the roots, to the soil, and it might topple over. Okay. But when you're the tree and you grow it day by day, limb by limb, okay, root by root, okay, you're going to know the field. And your money is going to be planted within the soil. It's going to have a lot better baseline to it. Okay. Even if stock prices were to start dipping down, since you have so much baseline planted, okay, stuff isn't really going to affect you. Okay. Your dividend payments are still going to be pretty consistent, and your profit fluctuation isn't going to be as bad because you planted your seeds. So focus on planting your seeds over a quick win. So how do you start today? Okay. I'm going to give you guys a 3-step plan. So the account, open up your broker. Okay, you guys can do Webull, Robinhood, Fidelity, Schwab, Vanguard, so many different options. Okay, open a brokerage account. Okay, then from there, okay, you can buy ETFs. ETF stands for Exchange Traded Fund, and they're pretty much going to be a bunch of companies put into one big giant company, for example. Okay, so you could buy really, really consistent ETFs like SCHD that pay out really, really good dividends, or VIWM, for example. Okay. And it's a basket of 100 plus dividend stocks that give instant safety. Okay. Or you could pick individual stocks as well too. Okay. And then the button. So find settings for your dividend reinvestment and turn it on. This way, all your dividends are going to go back into shares consistently, instead of you guys just having random cash, and then you're going to have to go buy dividends, instead of you just having it all in that DCA consistent flow mode. Okay, so don't forget, diversify. Okay, and a good way to diversify is to really invest into ETFs as well too. Okay, let's head over to the next slide. So dividend investing is really like going to be the ending to everything. Okay, it's the furthest thing from a get rich quick scheme. But after you've run up 5 figures, 6 figures, 7 figures, you've been grinding, you've been putting in the work, you've been praying to God, really staying down. Once you have some money stacked up, dividends is going to be a good place to park your money in, and you guys are still going to get that monthly income and that monthly reward from it. But make sure you guys are choosing to invest into things that pay you out consistently, and be patient, be consistent, and start now. Okay, start now. That's going to be the most important thing. Start generating your business now. Start generating income now. Start doing whatever you need to do now. If you say you want to invest into certain assets, if you have $5 in your account right now, take that $5 and invest. Okay, start planting your seeds today, and that's going to be the most important thing. It's not really about the money. It's about your lifestyle, your consistency, okay, and how disciplined and focused you are when it comes to stacking your assets. All right, if you want help with it, head over to Stackmode.net. Stay prayed to God. Keep grinding. I'm going to catch you guys in the next one. Peace. Keep going hard. Don't ever give up. I'm going to break down calls, puts, and even leaps so you guys can understand stock options in a way that makes sense, no confusion, and no headaches. So use call options when you think a stock is going to rise in an upwards direction, because you want to lock in the cheaper price today and profit from the move up. A put option is going to be the opposite. It gives you the right to sell a stock at a certain price, and if you think the stock might fall, puts lets you profit from that drop or protect your portfolio from taking a hit. You can also do something called hedging, which is the main thing options was created for, in which you could place a bet in both directions. But here's where the beginners miss out. Leaps. These are long-term options, usually lasting 1 to 3 years, and they give you a lot more time, more flexibility, and less stress than those short-term weekly options that wipe people out. Let's go and let's talk about them, and let's jump into it. Inshallah. All right, so let's talk about what an options contract is in the first place. Okay, so we'll talk about the rights versus the obligations. So an option is a financial derivative contract, and it derives its value from an underlying asset like Apple or Tesla stock, okay, or Microsoft stock, or even stocks like Google, okay? And it gives the buyer the right, but not the obligation, to buy or sell that specific asset at a specific price on or before a certain date, okay? So let's say you bought a ticket for $100, okay, right? That's how much the actual options contract costed you, okay? And then let's say now the concert were to sell out. Now tickets are going to be worth $500, okay? If you had a call ticket, okay, because call contracts are going to be used whenever you think price is going to go in an upwards direction, okay? So you would purchase a call contract, okay? So that would give you $400 in profit. So if you bought it, okay, if you bought the tickets for $100 and sold them for $500, okay, that means price went in an upwards direction, okay, which means you would have bought a call contract, okay, and that means you would have made $400 on that, okay. So $400 profit would have been what you yielded without ever attending the concert, just because you were right on the fact that prices would have gotten more expensive over time. So if you believe that prices are going to go in an upwards direction and get higher over time and more expensive, then you're going to go ahead and purchase a calls contract. If you're betting that the price of a stock is going to go in a downwards direction, then what you're going to do is purchase a put contract, okay? So if you think price is going to go in a downwards direction, you're going to buy a put. If you think price is going to go in an upwards direction, you're going to go ahead and buy a calls contract. Okay, let's head over to the next slide. So let's talk about the anatomy of a contract in the first place. Okay, the big three terms. Okay, so every single options trade has these three components. Okay, and you got to choose them wisely. Okay, one, your strike price. Okay, your strike price is going to be the specific price you agree to buy and sell the stock at, okay? Then you're going to have your expiration date, okay? So one of the most important things about options is going to be called the Greeks, okay? And the Greeks are pretty much going to be time deterministic factors that determine how much profit, okay, your options contract is going to make, or how quickly you're going to lose profit. Because remember, on options, you're buying and getting paid for an educated guess, okay? It's not fully ownership like buying 100 shares, okay? You're buying the educated guess and getting paid off of that, okay? So every educated guess is going to have an expiration date to it, okay? There's going to be a date where it's like, okay, if you're not right by this time, then your contract is just going to go ahead and expire, okay? Whether it be in the money or out of the money, okay? In the money means that it'll expire and you would get paid. Okay, and out the money means that you would have lost money on your contract. Okay. And then premium. Premium is going to be the price that you pay for the options contract today. Okay, and to buy the contract, and this is going to be your maximum loss. So the cool thing about options is that your maximum loss is built into it. And on options too, you want to go ahead and try to multiply a lot of the numbers you see by 100. So you might see, let's say you have Apple. Okay, let's say you got Apple here. And let's say an Apple's contract cost 8.70, okay? All options contracts, in order to get the premium price, okay, you need to multiply the number by 100, okay? So 8.70 times 100 would equal $870, okay? If a contract costed you 2.50, okay, is the premium, make sure you multiply that by 100, And a lot of times your broker will tell you how much it's going to cost too. Okay, that's going to mean the contract will cost you $250. Okay, so multiply a lot of the decimal numbers you see in the options world by 100 to get the correct US dollar amount of what you're looking at. Okay, and once again, your expiration dates are going to be really important too. Okay, your contracts don't last forever, so buying as much time on your contracts is going to be ideally the best thing to do and will keep a smile on your face. Okay, make sure you have time on your contracts. Try and stay away from things like 0 date expirations. Okay, 0 date to expire. Okay, if you also hear the term DTE, it stands for date to expire. Okay, so let's head over to the next slide, class. So let's talk about call options. Okay, call options mean that price is headed in a bullish direction. Okay, and a bullish direction means an upward direction. Okay, so that means that you're betting on growth. Okay, you're taking an educated, speculated guess. Okay, that price is going to go in an upwards direction. So buying a call means that you profit when the stock goes in an upwards direction. Okay, so why do it? Okay, leverage. Okay, so leverage on options is the reason why people trade options in the first place. So options contract, one options contract, okay, equals 100 shares worth of power. Okay, so one contract, okay, equals 100 shares worth of buying power. Okay, so to buy 100 shares of a $200 stock, okay, that means it would cost you 20K. Okay, but to buy one call option of those controlling shares, it might cost you only 500 to 1,000. Okay, so this way you're getting the shares power, okay, just jumbled up in a one big contract derivative. And it's cheaper because it's not giving you actual ownership, but what you're getting paid based off of is this directional skill. Okay, so if you think that a company is going to drop one of the best products of all time, okay, and it's not at all-time highs yet, and you think price can go even further, okay, then you can go ahead and look to buying a call option. Okay, so if the stock soars, okay, your $500 could turn to $2,000 overnight, okay, giving you 300% gain. That's also the cool thing about options too. How much you lose is baked in. You know exactly how much you're going to lose maximum at all times. If you bought a contract for 5.00, okay, remember, times 100, okay, and that would go ahead and give us $500. Okay, if you bought a contract for $500, the max you could lose, okay, the max loss would go ahead and be $500. $500 would be the absolute max loss. Okay, but guess what the max profit is? Infinity. Okay, so that's the super duper cool thing about options. You can only lose what you purchased the contract for, but you could make infinite. Okay, so if you bought a contract for $500 and it crashed to zero, the stock, okay, you would still only lose $500. But if the stock soared all the way up to $10,000 a share, okay, you would make infinite profit. So that's why people trade options. Let's head over to the next slide. And the opposite and equal end of it is going to be the put options. Okay, just like things that go up have to come down. Okay, options are going to be the same way. Okay, calls is going to be for price going in the upwards direction. Puts is going to be for price going in the downwards direction. Okay, and that means that you're betting on a crash. Okay, you think that price is going to head in the downwards direction for a bit. Okay, and buying a put means that you profit when the stock price goes in the downwards direction. So let's say a stock price was $40, okay? And you think price is going to go down to $35. Then in this instance, you would go ahead and purchase a put contract, okay? So puts are going to be used for two main reasons. Okay, one, speculation. So if you think a company is failing and you want to profit from the crash or heading in a downwards direction, then a put options contract would go ahead and be your best case scenario for this. Okay. And then hedging. Okay, very, very important too. Okay. So insurance. Let's say you own 100 shares of Apple, okay, but you're scared of a crash. Okay. So you could go ahead and buy a put contract. So if Apple actually does drop, okay, the put contract makes you money, and then you could take that money and buy more shares if you'd want to. Okay.
So options was created so people can speculatively trade, okay, and hedge. And hedging means that you could trade at both directions during the same exact time, just to manage any type of balance or any type of other asset classes you have held. Okay, let's head over to the next slide. All right, so let's talk about the pricing trap. Okay, so the times 100 multiplier. Okay, it's very, very, very easy to understand. Okay, don't make it a trap, just understand it. Okay, just understand when you're looking at options contract, it can be a trap though if you think a contract costs like $2.50. You're like, oh, the options contract only costs $2. Like, no, it actually costs $250. Okay, if you see an options contract cost 10.00, that means that that contract has to be multiplied by 100. Okay, and that would go ahead and give you 1,000. Okay, even if it's a decimal. Okay, if you see a contract for 0.75, you still have to multiply that by 100. Okay, and that's going to go ahead and give you $75. Okay, if you have a contract for 3.35, multiply that times 100, and that's going to go and equal 335. Okay, you guys can either use your calculators or you can just look at the number with the decimal and just remove the decimal. Okay, just remove the decimal from your brain mentally, and that's going to go ahead and give you the actual number. Okay, so if something's 2.50, okay, just remove the decimal, 250. Okay, if something costs 7.40, just remove the decimal, it costs 740. Okay, so don't make the math too hard. Okay, and don't get psyched out. Okay, stay prayed up to God for wisdom and keep going, even when things get difficult. Let's head over to the next slide. So time is going to be the invisible enemy. Okay, so let's understand what's called theta. Okay, so theta is going to be really, really important. Okay, so options are going to be like melting ice cubes over time. Okay, and you got to get paid before the ice cube decides to get melted. Okay, and they're composed of two types of value. One, okay, it's going to be intrinsic value. Intrinsic value is going to be the real value. Okay, it's going to be the stock price. Okay, and then the strike price. And then you're going to have the extrinsic time value, okay, which is going to be the hope value, okay, and this decays every single day due to the fact that we are trading in melting ice cube. Okay, so as you get closer to expiration, the time value accelerates to 0. Okay, so if the stock doesn't move fast enough, you lose money, even if the stock price stays the same. So in order to outplay all of this and get around theta and make sure you guys profit, you want to try and focus on what's called leap contracts. Okay, leap contracts are going to be contracts that expire between 1 to 3 years. Okay, because you want to try and play your options like you're holding shares. Okay, you don't want to try and play your options real quick. No, because a lot of times you're going to lose like that, and it's not going to be worth your initial investment. It'd be worth it to go play futures if you're just going to play that short of expirations. Okay, try to buy 1 to 3 years out and catch big, giant, higher time frame setups. At the end of the video, I'm going to include some chart setups too, so we know when it's time to buy calls or puts. Okay, so trying to buy between 1 to 3 years out is really going to give your trade some time to cook, chef, before it just decides to melt completely and expires. Okay, so now contracts that are expiring later, okay, like 1 to 3 years, will be more expensive, but your theta is going to go ahead and be saved. Okay, because if you have a shorter time frame contract, your theta is going to be getting destroyed by that extrinsic time value that decays every single day a lot quicker. Okay, and that's really just not what you want ideally. So I'm trying to give you guys the easiest time possible. Okay, so try to focus on contracts that expire in about 1 to 3 years, and inshallah you'll have the easiest time trading options. Okay, also another thing with options too, try to buy the contract closest to current price. Okay, so if an options contract is costing, okay, or let's say the current share price, right, is $70 a share. Okay, you want to try, and you think price is going to go in an upwards direction. Okay, let's say you think price is going to go to 80. Okay, even though you think price is going to go to 80, the best contract to buy would go ahead and be a 71 call contract. Okay, a 71 call contract would be the best contract to buy. Okay, you want to try and just buy the number 1 up. Okay, so if the number is going to be current price is at 60, okay, and you think price is going to go down to 55, okay, the best contract to buy would be a 59 put. Okay, that would go ahead and be the best contract to buy. So even though we're going to close at 55, you still want to buy the number one below since you're buying a put, or the number one above if you're buying a call. It's going to give your contract the best value and move the best. So leaps, okay, long-term plays, okay, leaps, long-term equity anticipation securities are options that expire in over a year, okay, or a year, okay. They have less decay on them, making the theta very, very, very low, okay. You don't have to stress about little daily moves going through it for no reason, okay. And stock replacements, it pretty much mimics owning the stock for a fraction of the price, okay. And you guys are still going to be able to hit some great take profits, okay. And tax benefits. So even on crypto and shares as well too, if trades are held for over a year, then you get a lot of favorable tax-free treatment. And there's a reason for this, okay? The markets are made to go in an upwards direction. So the more people they have invested, of course, there's going to go ahead and be tax benefits for that. They want as much money as they can parked into the markets, okay? Because that's how the U.S. economy decides to flow and the U.S. stock market flows in the first place. Let's head over to the next slide. Okay, so calls. That means you're going to purchase them if you think price is going to go in an upwards direction. Puts. That means you would purchase them if you think price is going to go in a downwards direction. Theta. That's going to be the time clock. Okay. And it's going to be a big piece on the melting ice cube. Okay. Treat your options contract like a melting ice cube every day. And you want to get the most deep freezed ice cube that you can. And you do that by purchasing a leap contract. A leap contract is a contract that expires in 1, 2, 3 years. Okay. And your risk is going to be whatever you purchased. Okay. So if you purchase a contract for 5.00, okay, remember, and then we got to multiply that by 100. Okay. Or you could just remove the decimal and that'll give you the number. So 500. So if you purchase a contract for 500, let your contract either hit your take profit or your stop loss is going to be that 500. Okay. And only invest what you can lose. Okay. 100% loss is going to be possible on your contracts. Okay. So try and use your whole contract as the stop loss and give yourself time and play for real take profits. The United States stock market is created to go up. As long as these companies, okay, have more money to hire people, okay, that's going to be more taxes that can be paid to the US government. Okay. The more money that they get from stock market funding means the more properties they can build. The more properties that are built means the more property tax that has to be paid to the US government. Okay. So as long as these companies in the stock market goes in an upwards direction, okay, and that these stocks are even moving, then the richer the US government will get. Let's go and let's jump into the chart. And I'm going to talk to you guys when to know when to buy calls and when to buy puts real quick. Let's go. So when you are on the chart, you want to start doing your higher time frame top down analysis. Okay. So I'm going to go ahead and start on my weekly time frame. And then from there, you want to go ahead and head over to your daily to your 4 hour. Okay. So once again, we put just call contracts if we think price is going to go in an upwards direction. And you're going to purchase put contracts if you think price is going to go in a downwards direction. Okay. So I'm going to start on my weekly here. So if I'm going to purchase a call contract, then that means that price can't be at all-time highs because I'm expecting price to go in an upwards direction. So if I have area of resistance above current price, okay, then that's going to go ahead and give me a window to purchase a calls contract. Okay. So understand that price a lot of the times will try and hunt an area of resistance above current price, especially after falling down. Market's going to work at higher lows in V's. Okay. So we can see market decided to make a low down here and decided to incrementally keep staring up in an upwards direction. Okay. Over time. Okay. And after I like to see market making a heavy area of support on my higher time frames, whether it be in my weekly, my daily, or my 4 hour, okay, I know that price always wants to try to recover where it fell down from originally. So I would go ahead and just take the trade up till there. Okay. I would purchase a call contract since I think price is going to go in an upwards direction. Okay. And I would buy a year or 2 out.
Okay, so I could buy January 2028 if I'm recording this in 2025. Okay, and if I see the current price here is 183.38, I could buy a 185 contract. Since I'm going to be buying a calls contract, I'm going to buy the contract that's going to be one above the current price. Okay, if I was going to buy a puts contract, okay, expecting price to go in a downwards direction, looks like this one hit take profit too. Okay, if I'm expecting price to head in downwards direction, then, you could play, let's say I wanted to short till this area of resistance here. Okay, market's deciding to fall right here. Let's say I'm expecting price to do something like that. Okay, if I want to short down to this area of resistance right here, okay, I would do the same thing. Options buy like 1 to 2 years out. If I think price is going to go in a downwards direction, I'm going to look at current price, look at the number right below it. Okay, so in this case, if current price is 19.39, then I would go ahead and buy the put. Okay, I would buy the put 18, and that would be the best contract to purchase if price is heading in a downward scenario. Okay, so that's it. Make option trading very, very simple. Don't make it too difficult. I have so much free content for you guys. Head over to stackmode.net to learn how to trade options. I'll catch you guys in the next one. Stay prayed up to God and keep grinding.
Yo, back another episode of Coop Talk. Chilling out right now. I pray you guys are doing well. We're going to talk about the trade journal. Make sure you guys get you one. It's important. It's imperative for success. You got to know what type of trade you're even looking for before you even enter in. You got to know where you're going to close. You got to know why and where you're entering. Why and where you're entering is a really key and imperative part to being successful on the market. Okay, you can't just buy to buy. Whether being a technical decision, whether, let's say, price is in an uptrend, right, for an example, and you see price making higher lows, you're going to want to go ahead and close at an area of resistance where price decided to fall downwards from. Okay, and if you see higher lows being made, then you can go ahead and assume an uptrend is in motion. Okay, so if an uptrend is in motion, you would take your uptrend, you would take your long setup. Okay, since you think market's going to go in an upwards direction, breaking it down logically. Okay, breaking down each trade, why you're getting in, how you're going to get in. Okay, whether be it you're on futures, make sure you have enough margin so you don't accidentally blow your account and you owe the broker money and stuff like that. Make sure on options that you have enough capital before you get into the trade, and make sure you know what broker you're going to be using, stuff like that, etc. Don't hop in a rush state like, oh, market just opened, let me go in and hop in, and you're trying to decide if you're going to use one broker today or the other because you got money in both, and making just bad decisions. Okay, please write them down. Write them down. Okay, write down your steps that you take before you enter a trade. Okay, if you're going to take a long setup, you see higher lows forming, write down the setup criteria. 1, on your higher time frames, is market at all-time highs. Okay, if not, okay, ask yourself, is market in a pullback formation? Is market making higher lows? Does market have room and buying pressure to go back in an upwards direction? Write that all down in your journal, especially if you're a beginner trader. Breaking down all of your notes and understanding the perspective of why you're getting into the trade really helps you at first. Okay, it really, really, really helps you at first, and you got to progress in certain ways, and in order to do that, you have to break it down. You have
and writing it down and strategically formulating your plan is what's going to give you the advantage versus other traders. People hear the term trading and forget that you're competing against other people. When you're trading money with another person, which means that when you're winning, somebody else is losing, and when you're losing, somebody else is winning. Okay? So it's really important to be making the correct and right decisions, and your discipline and your structure is what's going to keep you profitable. You gotta wake up, pray to God, work out Monday through Friday, because you can't be having cortisol, anxiety. You can't be going through certain phases of desperation while you're on the charts, because it will hold you back. And these are things that held me back in the past before I was able to conquer it, thank God. So I don't want you guys to go through those hard issues of, oh man, I got to pay for this. Let me go ahead and over leverage just so I can hit this trade. Or I just lost a whole bunch of money. Let me go ahead and double my leverage so I can make it all back. There's no such thing as making it all back in the trading world. Once the money is gone, it's gone. Okay, now if you grow your account to a bigger size, amazing. But don't think, oh, I got to put on a trade to make this back. Don't ever think that way. And write down in your journal your risk management parameters. Write down, okay, I'm going to be risking 1 to 10% of my account per trade. If I'm risking 5% of my account per trade, that's 25 trades before I blow my account. That's a lot of room to work with. Okay, it's a lot of room to work with, and taking your time. Don't get in other people's bag. Just stay focused on your journey. Stay focused on your journey. Write down your profits. Don't look at my profits. Don't look at the next person's profits and try to compare. Stay focused on your portfolio, on your account, and your journal is really going to be like your personal story. Okay, and I promise you, there's really times I look back on my old journals and it's cute. It's in that though far. A lot of the goals that I would write down in the past have been achieved, and I'm really looking forward to filling up a new journal, taking my plans and trades a lot more serious, and just getting some good trades out for you guys, really, especially. That's definitely what I care about for sure. I definitely want to get some good trades out for you guys. You guys can head over to stackmode.net if you want to catch my trades with me. But putting out some good winners as of 2025. So 2026, looking forward for an even better year, inshallah. So definitely trying to push it harder, be more disciplined, be more structured in every single way. I never want you guys to think I'm just yelling at you guys. I'm also talking to myself when I make these videos too, because it's important. Now, the reason why journaling really helps too, especially in the beginning, even if you're extremely advanced, still do it. It doesn't matter if it's a physical journal as well too. It doesn't have to be a physical journal. You could do it on Discord, Notion, tons of other apps and stuff like that too. You guys can use TradeZella, etc. to track your trades, track your progress. A lot of brokers track your progress too, but it really helps when you write your own emotional notes in between your journal, because you're going to be a lot more emotionally attached to your trades, to your portfolio, and that's going to help you not crash out and make decisions that you wouldn't be proud of. You know what I'm saying? So when you write down in your journal, I will not fail. I will not overtrade. I will take my setup, and this is why I'm entering this setup. You're going to be a lot more inclined to take the proper kinds of setups over and over and over and over again. I promise you. Okay? I promise you. Create your own personal story with this. Build yourself. Develop yourself. Level up. Okay? If you play video games, I really recommend you guys quit. Once again, I'm not speaking from a place of perfection. Only God is perfect. I used to play video games. So use your journal and write your own notes. Level up your own character. You got your own stats to work on. Okay? See how disciplined you could be. See how consistent you could be. And use your P&L as an equity curve to see how much improvement that you've been making. All the old stats, forget about them. They're in the past. They're all in the past. All the old stats are now irrelevant. It's time to go hard. Create a whole new, fresh journey. Leave all the old losses in the past. Stop looking back. Okay? Look back, repent to God if you need to, if you made a horrible mistake. But otherwise, if you just lost some money on the charts, don't look back. understand why you lost the money, study even harder, grind even harder, more hours on TradingView, more hours studying the free course on Stackmode.net, watching the free videos, tons of education. I have a free book for you guys too. So just get yourself in order when it comes to these markets. It's so much money to be made, and it's so much money to flow. Once again, I always talk about the asset river, and I always want you guys' money to be flowing within the asset river. I want you guys to be abundant. I want you to be able to protect and provide for your families. And I want you to be able to live a nice, great life, really. I don't want you guys to be struggling when you don't have to. And I want you guys to be able to get to the point where your whole mindset is just focused on God and just being disciplined. And that hunger, it's really, really going to help when you're tracking everything down, whether it be it on a spreadsheet, personal journal, Discord, Notion, whatever. Track it down. It helps a lot. Okay. You guys are amazing. I love you guys so much. Head over to stackmode.net for all trading education. I'm going to catch you guys in the next one. Peace.
You don't got to make trading too difficult. I'm going to show you guys an easy way how to identify trending stocks and how to catch good plays. So identifying higher lows and higher highs aren't going to require any indicators, just straight candlesticks and chart work. Let's jump into it. All right, here's going to be top to bottom how to find an options contract. So first thing I like to go ahead and do is open my trading view. I'm going to look to the very right, and I like to open up the screener. So depending on your certain account budget or size, let's say I'm playing with the $2,000 account, or if I'm playing with the $3,000 account or even $1,000 account, right? I'll stick between like the 10 to 100 range, or even if I want to, I could come up here and edit it, and I could look at stocks that have the share price between 10 to maybe 150. Okay, in this way, you're going to be able to trade contracts that are within that range or within whatever account range that you're playing. If you're trading with 5 figures plus, then you could disable this and you could trade with everything. Okay. So you could come here, manual setup, and mark your parameters depending on your account size. So let's just say for this example here, I'll come manual setup, and we can do 10 to 100. Okay. Once again, if you wanted to change it, you definitely could. Change it here, 150. So I have access to all of these stocks on the list. So these are going to be all the stocks that are going to be relatively pretty good to play for a good budget within like 4 figures, headed into early 5 figures, which I assume most of you are booting up at. Even if you are playing with like 5-6 figure account, these stocks, if you get some good plays, you could stack up some contracts, buy some far out contracts, hit some really good plays. So one, you're trading the United States stock market. So it's pretty much just meant to go in an upwards direction year after year after year due to multiple reasons. One, taxes. If these companies are able to hire more people, the government's able to garnish more wages for taxes. And the more taxes that are being able to be paid to the government, the richer the government will get. Okay. So as long as these companies are going up, the more profitable they're going to go ahead and be, and then the more they're going to be able to do for the United States government. So these companies and these stocks are meant to go in an upwards direction year after year after year. Take Exxon, for example, okay, the gas station. You can go ahead and see here, price heading in an upwards direction year after year after year after year after year. Okay, or this is an energy company. So constantly, price decides to rise due to the fact that it's a valuable company that affects the world. Okay, it's very, very helpful. And one thing you're going to notice about the chart is that it doesn't just go up in a straight line or straight down. Price moves within staircase scenarios. So price is going to move like an upward stairs. So identifying that lets us know that we have to get in at certain times, and it also lets us know that market trends. So let's identify what the trend is and how to see an upward trend versus a downward trend. So when you're trading the United States stock market, a lot of the times you're going to be trading upwards trends, and you're going to be trading what's called pull backs. Okay. If market's meant to go up, then wait for market to come down, buy it, and then wait for it to go back up, and then catch your profit. Okay. Reverse engineer it and really just have your psychology on point. So once again, if market is meant to go in an upwards direction,
you're trading the United States stock market, if you're trading options or shares, whatever, and it's meant to go up, then instead of buying when it's all the way up, wait for market to pull down, buy it then, and then take it back up. So it's that logical. Okay, don't make it difficult. The charts are not mumbo jumbo. You don't need any indicators. Disable all the indicators on your screen right now. Just keep it easy, keep it fresh, keep it clean. So boom, you could see price heading in an upwards direction year after year after year. And one thing too, you want to be looking at price on your higher time frames. Time frames you're going to be needing in order to find your setups a lot of the times. You're going to be needing your weekly time frame. You're going to be on that first. It's going to give you that full vision, so make sure you can see every piece of price action. You don't want to be trading stocks that aren't trendy, otherwise you're pretty much just going to be wasting your time. Then you're going to go ahead and scale down to your daily time frame afterwards too. Your daily time frame is going to give you a little closer view, and a lot of the times your daily is where you're going to find your take profit. Okay, and it's where you're going to determine whether or not price is ready for your entry. Okay, so your daily is going to be for your take profit identifications and your entries. Weekly is going to be for the full bird's eye view, making sure you're not trading anything that's horrible. Then after your daily, you're going to scale down to your 4 hour. Now there's a reason why you scale down to your extended trading hours real quick. Okay, this way you're going to be able to see every hour and ounce of price action, and you're not going to be able to see those little gaps. So after you're done with your weekly and your daily, make sure you scan your 4 hour time frame. From there, here's how I go ahead and find setups. I like to go ahead and scan my stock screener. I like to start on my weekly time frame, and I'm going to stay away from things that are near all-time highs. Okay, because I'm going to want price to be at a point where sellers have already sold and buyers are just now stepping in. I like to call it the V formation. So you're going to let sellers make the top left of the V. You're going to let early buyers make the bottom of the V. And then we're going to catch the rest of the V as confident, assured buyers. Okay, letting us know that the trend has swapped. We don't want to be buying falling knives, and we want to be buying when price is confirmed. In order to do that, make sure you're having at least 2-6 daily candles headed in an upwards direction, ideally that are going to be the same color, green, if you're using green and red candlesticks. Okay, whatever color you're using for buying, the more candlesticks you see going in upwards direction successively with the same color scheme, okay, is going to let you know the trend a lot of the times. And price moves in V formations. And what that means is, let's take this V formation here. Price decided to come up, make a sharp stop, and then price decided to fall downwards. So price made the top left of the V. That lets you know sellers stepped in here. This is going to be an area of resistance. After that, price fell down, made a bottom, made an area of support. That's going to let me know that buyers went ahead and stepped in. And price went ahead and filled in that whole area back to where sellers originally started selling, broke past it, and it's going to go ahead and try and make some new highs. Okay, fall down here, and then price will try and come back up, break that, and price will continue to zigzag, go up and down, and make staircase formations to new all-time highs over and over and over again. And that's how the trend works. Now, knowing when to get in, they're going to want to get on your weekly time frames and stay away from things that are, once again, at all-time highs. Price can pretty much only go down, find a low, and once it finds a good low, then you buy it and then take it back up. Okay, and ideally your take profit is always going to be where price originally fell down from. So even right here, let's say price decided to fall down from this area. Price trickled up, stopped right here, fell down, and made what's called a higher low. So this low right here is higher than this low down here. When you start seeing price making higher lows and what's called higher highs, which means that this high is higher than this high,
Okay, when you start seeing price make higher lows, which means this low is higher than this low, and this low is higher than this low. When you start seeing price trend in a staircase like that, that's how you know you're heading in an upwards direction. Okay, so to find a good setup, okay, here's another one that I went ahead and marked as well too. My daily, I could see that price decided to fall downward from this area here. Price decided to make a heavy area of support, made a higher low off of that. I identified that, and price decided to went ahead and smash, take profit within a couple of days. Okay. Within 6 days. So extremely simple when you're finding your setups. You want to buy when the buyers are buying. Okay, and if it took 6 days, try and buy these contracts. Ideally, if you're taking smaller take profit setups using your daily and your 4-hour, you can buy contracts as far as like 2 weeks out plus. At least try and be 2 weeks out, and then you can build your account from there. But having at least 2 weeks on your contracts gives time and price to fluctuate in case it does, or in case some news comes out or anything. But even an example here on Disney, could see price meeting up with this area of resistance. I marked this a couple of days ago, and you could see buyers fiending to have price trickle back up to this area. Even if you're a trend line type person, you could do that too. You could see a little retest off the trend line here, and price headed in an upwards direction as well too. Okay, and if you wanted to, you could play the remainder gap to the resistance if you wanted to. Okay, you could buy at least like 2 weeks out, could buy 17 days if you wanted to, and take it up here, catch a nice flip. November 12th. And then you could buy your contracts. You could buy like 2 weeks out, 15, 12, $3. So yeah, 188 to $3 there. And you'd be able to just flip your money consistently there, even if you went 10 days. You'd be able to catch your flip there as well too. So play market how you would like to be playing it. Even a scenario like here, I kind of like this maybe potentially. I like how price is making higher lows here. Confident in that. Looks like buying wants to step in here from this low to the new low. Go to my daily. We got multiple green daily candlesticks. So 4-hour, honestly, I might take this up to at least this resistance here. And then that might be a clean little trade as well too. Pep. To about like 2-3 weeks out. About 145 and take it up. Yep. So cool. That's how I make it simple. That's how you find options contracts. Just no fluff, no BS. Just straightforward price action, reading the candlestick chart, understanding buy zones and sell zones, and just really taking the trades that you need to be taking. And understanding when buyers are buying is really important. Say this, for example, I could tell buyers are buying here since I see higher lows are being made. And the more you live on TradingView all day, the better your eyeballs get, really. So chart time is really important. Okay, I could check here on the weekly, see prices that have to fall from here. Get on my 4-hour. Price falling down from this area of resistance. I see this area of resistance before it here that happened on the 2nd. I like that. I'll even hop on my 1-hour with it. I have this area of resistance too. Okay, so even if I wanted to close on this 4th area here, could definitely do that. Yeah, these contracts are a little far actually. So 120 minimum. So yeah, you'd have to play for like up here. So it'd be worth it to just buy some months out. I'm sure these are probably cheap, yeah. And you could catch this flip if you want to and hold these for a minute. So yeah, all types of scenarios, different ways to grow your account. It's just choosing the most effective ways and staying patient. Okay, play the stocks that you know you're good at. Pick stocks that have good volume, and really just take your time with your setups. And yeah, that's how you find options trades. Head over to Stackmode.net. I pray it helped. Peace. All right, guys, this is going to be the easiest way on how to read the crypto chart. So it's going to be really imperative to know how to read the chart. It's going to tell you when to exit a lot of times. So sometimes when you come into the cryptocurrency market, buying when there's a lot of hype could mean that you're buying relatively at a high price. Okay.
So when we show you guys when to buy at the dips, how to know when to trim some contracts off or trim a percentage of your tokens off, and how to know when it's a good time to buy in general. Okay. So one, let's talk about support and resistance in the first place. So understanding the logic, this is a left to right chart. So price started way over here. It was way over here today. Okay. So we can clearly see from a logical perspective, the goal of the chart is to go in an upwards direction. Okay. Price year after year, month after month, even with dips, incrementally decided to keep going within a higher direction. Okay. So we can already logically put into perspective that, all right, the ultimate goal of cryptocurrencies are to keep breaking new all-time highs. Okay. Because people want to invest their money and make their money by buying and holding it as something that has future value. Okay. And in order to do that, price has to keep breaking new all-time highs. So let's say current price right now, as of this video, Bitcoin, it's 122,000, right? All-time highs, which is going to be the highest area of resistance, and resistance is going to be an area where price decides to fall within a downwards direction. So your highest area of resistance needs to go ahead and be broken over and over and over and over and over and over again. And that's how price progresses. Yeah. So if I come over here, I can see at one point in time, the highest price for Bitcoin was 109,000. But then I can see over here to the right, price decided to get above the area of resistance here. And once again, resistance is going to be the area where price decides to fall in a downwards direction. So we can see price getting above the area of resistance here, tried to hold it, and then over here, it definitely held it. Okay, and what happened? Price decided to stop falling around this 109,000 area, and it progressed to a new area, to 122,000. And it's going to try and progress again to maybe 150,000, and so on. It's going to just keep going, maybe to 1 million. Okay, so that's how things work. So as far as the cryptocurrency market, understand that people are investing their money to make more money. So the goal of this is for it to go in an upwards direction. Okay, people are trying to get paid based off of just growth and capital gains. Okay, which means you're getting paid as something moves within a upwards direction. So resistance is going to be a really important thing to understand, especially when just coming onto the charts and just putting on certain trades, because it's going to tell you when to close too. So say you wanted to close a certain percentage of your position, then you'd be able to do that as well too at areas of resistance. Okay, so you know it's an upward chart. So you know areas of resistances are looking to be met with each other. Okay, so prices, as you can see, like this area right here, could mirror each other and do the same thing. So price came into this area once, twice, okay, and mirrored each other. Okay, once, twice. Price hit that blue line and decided to fall within a downwards direction. Okay, so that's why knowing when price is about to hit an area of resistance is going to be extremely imperative. Okay, because it's going to let you know when it's time to close, when it's time to trim some profits or anything like that. Okay, so resistance, that's going to be when market decides to make a top and fall in a downwards direction. And the opposite of resistance is going to be support. So the opposite of resistance is going to be support, and support is going to be when price makes a bottom and decides to bounce within an upwards direction. So after resistance gets made, and the whole logical reason resistance gets made in the first place is because price can't just keep going in an upwards direction. People are eventually going to want to take profit and take their money. Okay, so they're going to want to take their money off the table, and when that happens, resistance is going to get made. So that's why price goes in a downwards direction. Okay, because it's too much supply. It's more supply than demand. Okay, and then when price decides to go in an upwards direction, there's a lot of demand. Okay, there's more demand than supply. Okay, make it scarce, which is why people make money when stuff goes in an upwards direction. So that's a logical reason why support and resistance work with each other, why they correlate with each other. Okay, so support is going to be when price goes in an upwards direction. Resistance is when sellers come in after holding from a while, and then they want to go ahead and sell, take some profit, and then price is going to go in a downwards direction. Okay, so we know that one, Price is always trying to hunt areas of resistance. You can see on the Bitcoin chart here, we know that price is trying to hunt all-time highs here. Okay, even no matter if price makes the most vicious dump to zero, it's still one day, inshallah, gonna try and reach all-time highs. That's just how it works. That's just how it works. Okay, price is gonna try and break this 124,000 level here. Okay, it's gonna try and just continue to go up. Okay, and what can also happen here, so we see, okay, price is trying to meet up with the highest area of resistance to try to break it, or price might reverse here. Okay, it might reverse here, and even if it reverses all the way down there, okay, finds a low right here. Let's say support gets made right here. So even if support gets made down here, it's fine. Okay, because price is still gonna try and sweep back up. That's just a better point to buy. Okay, so you know that price is always gonna try and break areas of resistances. Now, due to that fact, you know that, okay, if price makes a good dip down, either if price mirrors an area of support and then bounces up, okay, I'm gonna know, okay, that's gonna be a good place for me to buy. Or if I see an area of resistance, right, get broken and turn into support, then I'm gonna also know it's a good area too to buy. Okay, check out this area right here. So I can see right here, this area of resistance got created. Price decided to fall in a downwards direction, okay? And you can go ahead and see to the right, price decided to break out of this areas of resistance right here, okay? And guess what? Price decided to break this area of resistance right here and turn it into support. So resistance got formed, broken, okay? And when an area of resistance or support gets broken, we know that's called a breakout, okay? And resistance, okay, an area where price fell down at, got broken through because price is trying to make some progress and keep making new highs so people keep making money, inshallah, okay? And support gets made right here. So support is going to be that area where price decided to bounce in the upwards direction. So support can be formed after an area of resistance gets broken sometimes. So sometimes resistance can be broken. That's a support. Okay, it's going to be my favorite model. Okay, and this model is going to be called break and retest. Okay, so whenever you see resistance get broken, turn into support, that's going to be called break and retest. Break and retest is going to be just one of the surefire ways in order to take safe trades, especially when you're taking dip downs. Okay, so if market makes a dip and you're like, okay, is it going to be a safe place? Then you can go ahead and look for break and retest to go ahead and define that. And another way, you're going to go ahead and decide to see if price is going to be a good place to buy at this area, is you can go ahead and look for what I like to call support mirror. Okay. So sometimes you're going to see an area make an area of support. Okay, and then no matter what happens, even if price goes below that area of support, one day it might come above it and then bounce at the same area of support again. Okay, so if you see the same area of support get reacted off of, okay, I like to call that support mirror. Okay, support mirror. So let me go ahead and show you an example of a support mirror. Okay, this is how you know that, okay, price wants to go ahead and do the same thing over and over again. Okay, because essentially that's what price is doing. Okay, it just does the same thing over and over again. So let's check it out. So I can see this area where support was created right here. Okay, again, area of support is going to be an area where price decides to bounce in the upwards direction. All right, so just keeping it simple, we know that. Okay, price bounces in an upwards direction once it hits support. Okay. So I can go ahead and see over here to the left, price decided to create some support right here. Okay, so right here, price decided to create some support. Okay, and then blast it up. Okay, price made this area of resistance, and we're trying to make another one right here and break through it. Okay, all of these up here where price is falling within a downwards direction are going to be classified as areas of resistance. Okay. Area of resistance, resistance, resistance. And we can go ahead and see down here, price is going in an upwards direction. Okay. Support. Okay. Down here, price going up. Right here, price going up. Okay. Support. Support. But we can see up here, price going down. Price going down. Resistance. Price going down. Okay. Resistance. Okay. So this is how support and resistance correlates with each other. And whenever you see support and resistance bouncing in between each other like this is what I like to call a range. Okay. So this area of support got created over here. The price did the same exact thing and created support over here again. That's how I would have known, okay, that would have been a simple or good place for me to go ahead and purchase some Bitcoin, for example. Okay. Okay. I saw support mirror, or if I ever see resistance get broken, okay, and turn into support, then I'm also going to know, okay, that was a really good area for me to go ahead and purchase too. Okay. So I'm also going to have this area here of resistance that got broken and turned into this area of support right here. Okay. Resistance, support, resistance broken, turned into support, or support bouncing at the same place. Okay, even if it's not immediately, even if price breaks the support, but if it comes back up, bounces again at the same place, that's going to be a support mirror. Okay, so let me go ahead and cover another example here. So when we're looking at support and resistance, it's understanding the range, putting everything in the big perspective. Okay, putting everything in a logical staircase mindset. Okay, so essentially that's what we're playing when we're looking at the charts. It's a staircase, and it's just about who can read the staircase ideally the best. Okay, so take this area right here. Okay. So I marked this out a couple of days ago, and we can see it's working out now. Okay, so I can see this area of support right here wasn't just created for no reason. Okay, so I personally like to look at everything on my higher time frames too. So we're always going to be making sure we're doing everything on the 4-hour time frame, and we're going to be doing things on the daily time frame. Okay, so what I'm going to go ahead and do, get the black line here. Let me just put it down. Okay, so I like to look at my daily first, zoom out. I know I'm playing a left to right chart. The goal of it's to go in the upwards direction. So I know that price is always trying to break resistances. Okay, so my take profit is going to be all-time highs. Okay, especially when I'm trading crypto. That's when I'm going to be wanting to take some profit off or close some of the position personally. It's all-time highs. Okay, so boom. Let me go ahead and go to my 4-hour here. And we can see price created this area of resistance all the way over here to the left. Okay. Price decided to break this area of resistance. Could see price went up, went up, went up. Made all-time highs right here. All-time highs is the highest point price has ever been. Okay, and price is going to be always trying to aim to break that. So always know that within a logical perspective. So all-time highs, ATH. Okay. So ATH stands for all-time highs. So price is always going to be trying to hunt this area, no matter what. No matter how much we dump down, it's always going to try and sweep back up. And ideally, we're going to be hunting this area. Okay? Because the point of these cryptocurrency tokens, the point of these investors and coders and people working so hard to get these laws passed is so it can go in an upwards direction. So not only people can make some more money by investing their money, they're going to be able to have the freedom to send money and transfer money however they would like via the blockchain system. Okay? So it has value. It's not just going up for no reason. This is something that's bringing value to the world. So understand that that's why it's trying to go up. It's not just trying to go up for no reason. Okay. Now, you can go ahead and see this area of resistance that I created right here. And we can see resistance got broken once again and turned into support. Okay. Resistance got broken, turned into support. And then price is heading into an upward direction, looking to break the all-time highs in order to try and break that. And it might even retest off of that. It might break the all-time highs. It's a common scenario. All-time highs gets broken and turns into support for a little bit. It might burst a little bit and then fall down. Maybe try the support again. Okay. And then it might won't even go lower. Okay. It might won't even fall down to an area of support like down here. Okay. So then I might try this area here. This is why it's amazing to have all your levels marked, because then you're going to see, okay, if price wants to go down to this support and then it holds it, okay, you start seeing multiple candles on the daily. You're like, okay, cool. And then you'll catch the whole sweep up. Okay, even right here, price created the resistance right here, decided to fall down, broke above it, okay, created all-time highs, and then price fell all the way down where the original resistance was, decided to turn into support, and it's heading up in a sweep, okay, looking to break the all-time highs. So let's go over another example here. So when we're putting in the repetition, we're putting in the hours, we're putting in the work, just staring at the charts, okay, marking out setup after setup after setup, and just having that repetition and understanding that reading dips is pretty much going to be just understanding the logic behind the market. Okay, you know why market is dipping. Okay, when market dips, it's just creating more ammo, collecting more money, just so stuff can go in a more upwards direction with more volume and volatility. Okay, because if it's a left to right chart, so if someone got on here and they sold up here, okay, they're not going to keep buying. Okay, they're not going to just keep buying over and over and over again. They're going to go spend their profits. They're going to go reinvest it into something else, and they're going to just take their money. Okay, so that's just how that works. So we have two examples here, right? Two very, very, very simple examples here. So support mirror, okay? So we have this triple area of, we'll say quadruple area of support right here being reacted off of, all right? So we got 1, 2, 3, 4. We got 4 areas of support here. Going within an upwards direction. Support. 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 Okay. Bounce at the same place 3 times. Okay. And we already know where it's trying to head to. We're trying to break through all-time highs. And we can even see all-time highs got tapped twice. Okay. Price came up here and made all-time highs. And guess what? Price created resistance at the same area twice. So we know that this area of resistance is definitely special. The more taps that you have of an area of resistance or support is going to be really solid. Okay. Once again, the more taps that we have of areas of supports or resistance is going to be really solid. So let's make sure we always have that in the perspective. Okay. Resistance, resistance. Then we have support, support, support. Okay. And we know price is trying to head in the upwards direction. Okay. Price wouldn't just be making support for no reason. It's trying to keep going higher. Okay. So just understanding market within a simple logical perspective can really help. Price is always trying to chase and break areas of resistances, okay, in order to make price go in a higher direction. The higher the direction goes, the more something's going to be worth. The more something's going to be worth, whoever the creators are and the large investors are going to get wealthier. So they want it to go in an upwards direction. Okay. And if you're a large investor, you want it to go in an upwards direction too. Okay. So people are going to buy the dips because everything is not always going to fall down to 0 every time. It's not how things work, and it's just not probable. Things build value, and things are not going to always fall to 0. Okay, that's just fear, and just having fear in the market is just not something that's going to be tolerable. Okay, this is why we only fear God. Okay, and we take all the risk that we need to. Okay, so boom. Catching this support mirror would have been quite simple. Okay, and let's say you missed the support mirror. Fine, all fine. This is just confirmation that price wants to go bullish down there. But even if you wanted to wait for a dip down, you can see right here, price created this area of resistance right here. Okay, price broke above it on the 4-hour time frame here and turned it into some support. Okay, so even right here is a dip down too. Okay, and then price looks like it wants to continue to go in an upwards direction still. Okay, so you can still see as you scale down to where it's going to be a solid place for you to go ahead and purchase your contracts. Okay, so buying the crypto lows, buying crypto dips and stuff like that is not going to be difficult. Okay, it's just about being patient. And even if sometimes you don't get the most perfect entry, okay, because only God is perfect. Okay, so we can't destroy our investment portfolio bringing about the best entries of all time too. You see the support here got tapped 1, 2, 3, 4 times. Okay, So price most likely will not come down here big time anytime soon again, I don't believe. Okay, if it just held this area for over 2 months, okay, bouncing in the same place, then I don't think it's going to go down and break it anytime soon. Okay, I would go ahead and just buy. Okay, you know price wants to go ahead and go in an upwards direction. It's holding stable support. And especially when you see tiny dips like this, okay, you're buying on red candles that made some retest. You could be like, oh yeah, and go ahead and take it up to the next leg. Okay, and just go ahead and buy and invest. Okay, you see all this space that's left. Okay, all-time highs. The goal of the market is to break all-time highs. You still have all of this space to go ahead and enter. Okay, there's still all this space left. So much space left, so much crypto to still purchase. Okay, and we're trying to catch the rest of this gap fill from where current price is at right now. Okay, catching the rest of this gap fill. And this gap is going to be bigger than the stop loss gap. And even it's like, you're not even playing with stop loss, but if you wanted to, you know, you could go ahead and play there. But I recommend just investing an amount that you are comfortable to lose with certain things. Okay. So if you're going to say you're going to invest in Bitcoin, then you should be comfortable with all the funds that you're going to lose. Okay. Because trying to micromanage your crypto trades can just make you lose money in the end, because don't forget, this is a left to right chart. So the goal of it is to go up, and one day it could just burst and sweep way back up. So this is why it's really going to be nice to buy at dips too, instead of buying at all-time highs. Because when you buy all-time highs, this can do nothing but go in a downward direction, and then you're going to be upset. And then you might close early, and then you might close for a loss just to buy the dip, and then, yeah, it's all over the place. So this is why we just buy the dip. We buy the gap fills. Okay, I can see all-time highs is up here. This area of support is holding down here, and I can see price wants to try and fill the rest of this gap right here. Okay, right here. Price is going to be trying to fill all the rest of this gap. Okay, so just focus on how market logically works, and it's going to be pretty easy to make some profitable trades. Real. And so let's check out Solana here. Okay, so let's say here, we can see up here, price decided to create this area of resistance all up here. Okay, resistance all the way up here. So we know price is trying to hunt that. Okay, we got this much left in the gap. Okay, and let's go and let's check out something here. So I'm gonna check out this area of support down here, right? We black line it. Boom. Okay, I'm gonna see if I see anything. Let me zoom in. Okay, I do. I see a heavy area of resistance right here on this line. Okay, so price created this area of resistance right here. This is why I like to just immediately look at the lows. Okay, I can see price create a resistance right there. Okay. Let me zoom it up here. So price did make resistance there. Let me see, where does price want to retest off of? Price also made resistance off of here. And let's see if we see any support mirrors or anything to the left here. Gotcha, strong areas of resistances here too. Kind of some resistance right here too. So let me go ahead and go to new time. Okay, so we can see why that support got created. There's some heavy areas of resistance that get created at that black line right here. Okay, so you see, okay, price wants to go ahead and still try and head up in the upwards direction. And then we can see here too, price decided to retest off of this area here. Okay, price created this area of resistance like right here. Okay, and then price turned into support right here. So if price were to come down and try this area of support again, okay, that'd be a good place to go ahead and buy. Okay, or even if price pulled back to like this area of support down here, okay, or resistance. So price is either going to try and come down to bounce at an area of resistance or a previous area of support. So it's going to try and turn previous areas of resistances that it already broke below it into support, or it's going to try and just mirror areas of support. And areas of support are most likely already in areas of break and retest that has happened to the left. A lot of the times that's going to be like what it is too. So let's go over another example here. So we always know that price is trying to hunt all-time highs. Price is always trying to hunt all-time highs when it comes to the cryptocurrency market. Check out Doge, for example. Up on my daily time frame here, I can zoom out. Okay. Oops, it looks like I marked this out here. So let's check it out. So we have this area of resistance that was created all the way up here. And then we have this area of support down here. Okay, and this support didn't come from no reason. It came from this area of resistance right here. Okay, support, and then price already had an area of support get created off the resistance too. Okay, boom, resistance, broken, turned into support the first time right here. Okay, you can see it on the first candle right here, and then price went upwards direction. So this is what I like to call the pro tap. When you see break and retest instantly happen, okay, that's what I like to call the pro tap, because you got to be watching the chart there, waiting for that resistance to be broken and turn into support, okay, to see if that's going to happen. But then when you say area of support from the original retest get mirrored again into an area of support again, you know price wants to go ahead and probably hold that area, especially if it doesn't break and you start seeing what's called closes. Okay, so if you start seeing price tap the blue line and give you a wick, okay, I never like to enter on the candles that are wicking off the blue line. I like to personally enter on the candles that are above the blue line, because once it's well above the blue line, I know, okay, price probably wants to go in upwards direction. I don't like to buy ultimate lows and ultimate highs. I like to sell at ultimate highs. I like to wait for ultimate lows to be created in order for me to catch it into ultimate highs. Okay, so I like to trade just safe. Okay, trading safe is going to be a lot better than trying to be overly precise with the best entry, the best this, the best. It's great to have it, but knowing where you need to close and knowing if it's a good dip area is going to be more than enough to make profit. Okay, take this example. You could see this area of resistance got formed right here. Okay, resistance turned into support. Resistance right here turned into support. Okay, so resistance gets broken and turned into support. Okay, resistance formed, price fell down, broke, retest, turned into support again, price going up, resistance here formed, resistance formed, and then turned into support. And then, you know, okay, I believe price is going to be a good place to go ahead and buy right here. Let me go ahead and take it here, and you set up, and you still have this whole gap to go ahead and catch. Okay, you still have all of this money to make. Okay, this whole giant gap. Okay. So once you see price confirming itself, making higher lows, okay, heading in upwards direction, here's the ultimate low. Okay, here's an even higher low. So this low right here is higher than this low, and this low right here is higher than this low. Okay, so when you see price making higher lows, heading in a staircase direction, you know, okay, price is most likely ready and chill out. Okay, so just play logically and just take your time. Take your time and play logically. Understand like how much progress price is trying to make. Okay, it's trying to sweep into all-time highs. No matter what cryptocurrency, no matter how devalued it is, the goal of it is to go up. Okay, it wants to go up. Even if it's not going up, it wants to go up. I'll take this coin for example. So we have this highs area up here, then we have super all-time highs up here. Okay, so I can see that here. So I can see here. Price decided to created a support mirror. Support area right here. Support area right here. Okay. So, and we can go ahead and see over here too. Support right here. Okay. And the area of support didn't just come from nowhere. Okay. So, resistance. So, area of resistance here, broken. Turn it into support. Okay. Price went in the upward direction. Create an area of resistance up here, also known as the high. Okay, so resistance is just going to be a high area that price is trying to get back to. Okay, so price created all-time highs up there. Okay, so it's not quite all-time highs, but this is just a good area of resistance. How price is trying to get up to. Okay, so you can see price created the area of support here, create a support area here. Okay, and then try to mirror again right here. And the price is trying to bounce it in the upwards direction. Okay, and you can clearly see here, especially once you start looking at your daily. When you start seeing multiple daily candles past where the blue line is supposed to wick from, then you know a lot of the times, okay, inshallah, price is just incrementally trying to make its progress up to the highs here. Okay, trying to fill the rest of this gap here so you can go ahead and make some money, inshallah. So sometimes it's just about the way you're looking at the market. Okay. And then if you want to go ahead and close it there, you can completely just close it there. Okay. Oh. Let's go ahead and check out something else here. So let's say AVAX, right? If I zoom out, yeah, you can see price is definitely trying to make some progress here. Okay, so before we even get to all-time highs, I can see for just one, we're trying to get up here. Okay, it's a major area right here. Gonna have some more major areas too. Major area right here. Major area right here. And we can see the area of resistance got created once. And it's tapping again, okay? So one, and guess what? Price created a low. So I would already know here, price is a good area for me to buy right here. I could see price created the area of resistance. Check all the way over here to the left. Broken, okay? And right here, okay? Resistance, exciting. One area right here, 1, 2, broken. Turn into support. It's gonna be a good area to go ahead and buy, okay? And then you can go ahead and try and catch the sweep all the way in the upwards direction. Okay. So once again, this is classified as resistance over here. Check out how price is falling in a downwards direction. Okay, resistance, price falling in a downwards direction here. Downwards direction. Price is always going to try and chase resistances. Okay, even though it mirrored right here. Okay, create a resistance again at the same line. Doesn't matter though. Got broken. Okay, no matter how many times things fall down, it's always going to break through. Okay, it broke through right here. Boom. Price made some progress. After that, price created resistance right here at this area right here. So this is why it's important to be closing at certain areas of resistance, because you can see price hit that area of resistance and decided to fall down again. Now price might try and break this area, but it depends. If you're just scalping or in a swing trade for a couple of weeks or days, it's not something you want to hold infinitely, then I advise you close at areas of resistance above current price. Okay, if you buy a dip, or you close at an area of support above current price. Okay, and this is because support above current price can turn into resistance, causing price to dip. Okay, so support can be broken sometimes and turn into resistance, just like resistance can be broken and turn into support. Okay, so check out. Once again, I'm gonna put down this area right here. Boom, check out this line. It's extremely simple. We got resistance right here. Some more resistance right here. Some more resistance right here. And price is going in a sweep upwards direction. Okay, so I can assume that price might want to try and break this height right here. Okay, but even for that, we got this resistance up here. Okay, we got this resistance up here. this one here, and this one here that it just mirrored at. Okay. So price is going to keep trying to get past these blue lines above, as these are all going to be areas of resistance. Area right here, area right here, right here, and right here. So it's exciting. Okay. Market starts becoming extremely fun when you start knowing how to read the flow. It's, you know, it works in clockwork. And you can see even down here, see price create this area of support right here once, twice, 3 times. Okay. And price is constantly making, so here's a low, okay, but this low is higher than this low. Okay. So when you see price making higher lows constantly, you know we're heading in an upwards direction, inshallah. Okay. So it's super duper fun and exciting when you see, okay, this is how everything works in correlation. It's like art. Okay, it's like a puzzle piece. That's how everything just it comes together and all clicks. Okay. So the resistance got created there. The support floor got created here. Resistance got broken, turned into support. And you start seeing the staircase in a whole perspective. Okay. It's very, very, very interesting once you start putting everything into logical reasoning. So you can see price is trying to break the resistance up here. Okay. It created it, but we know price is trying to hunt it, break it, so we can head up to this resistance up here. Okay, so AVAX, whoever the creator of it, can claim that they have the best coin. Okay, that's the whole point of people creating stuff, is so they can try and be the best or try and help people. Okay, so it's wanting to go up in an upwards direction. Okay, the developers of AVAX, whoever took time coding the token, thinking of the idea, I'm sure they want their idea to be worth some value. So that's why things go in an upwards direction. Okay, so we could see how much confirmation here that price is bullish. So much confirmation. We have a support floor. Strong floor. We have strong floor theory supporting that we want to go in the upwards direction, and we have break and retest, and we have resistance getting broken and turned into support. It's crazy. Okay, so we're good. We can go ahead and get into something like this if we wanted to, and close at any of these areas of resistances above current price, because we can see, just like these areas of resistances can mirror each other, just like supports can. But if we're buying at the bottom, we want to be closing before we get reversed on. Okay, this way we're going to be keeping all of our profit, or as much profit as we can, inshallah. Yeah. So just don't panic too. When you see your close, you know what a good setup looks like. You got to really trust God. You can't have any fear, and you're good. Once you get in your setup, you got to trust that. You got to be like, all right, I'm good. I'm good. I'm good. Don't think about drawdown. Don't think about losing. Okay, you got to be comfortable with whatever you put into. Okay? If you put in an amount of money into a trade, you got to be cool with it going to zero. I promise you, it's going to help your psychology a lot. Okay, be comfortable with just losing whatever you put in, and I promise you, your trades are going to work out a lot better. Okay, the goal of these are to go up, and the reason why a lot of people are unprofitable is because they self-sabotage. Okay, they jump in the middle of their trades and they cut it early. Instead of seeing the plan all the way through, you got to see the plan all the way through. Okay, we never know what God has planned. You got to see all the way through. If it's even in your heart to get it in the trade, you got to see all the way through. Okay, if it's working out, if you're up some profit, don't just close it and see it all the way through. You could see 10x for that profit. Okay, you got to see it all the way through. Don't self-sabotage your trade. Don't destroy anything just based off of thinking too much. Okay, that's something I've been having to check myself on with certain things. Okay, so if price creates this area of resistance right here, and then price comes all the way back down to it and turns into support, don't mentally self-sabotage. Get in that trade. Okay, and you can confidently take that to this area of resistance here. I'm going to bust out the ruler, and you can see how many units of price action are left. It's a whole gap, still around 5.4 thousand, right, areas of price to go ahead and make on this token here. Okay, so you can make a lot of profit here. Still a very, very, very large profit window. Even if you wanted your stop loss underneath this low, right, say you set alerts down here if you wanted to, okay, the risk to reward, it'd still be positive. Okay, even if you entered right here. So let me pull out the risk to reward tool, and the risk to reward tool is pretty much going to show you how much you're going to make versus how much your risk is. So say the risk is down here and the target's all the way up here. So your risk reward would be a 1 to 2. So no matter what, if you hit take profit, right, you would double your money. Okay, so you would double your money. So focus on certain things, okay? Put it into perspective, okay? Like, okay, is this the type of trade that I want to get into? Does it match up my parameters here? Okay, and even you could see the ultimate entry is all the way over there, right? Check it out. Here's another confirmation that price wants to go bullish, inshallah. Check it. Boom. Price created an area of support right here. And guess what? We have some more resistance right here. Break and retest. It's spamming it over and over and over again. It's actually almost impossible to not make money in the market. It's genuinely difficult. Okay, you could be the least technically gifted person of all time. You could be blind and you can make money. Okay. Like if someone told a blind person where all-time highs was and someone set alerts there, okay, and something called out when all-time highs was hit, they would be able to make money. Okay, if anything, that might be better, okay, because you wouldn't be staring at the charts. You wouldn't even know to self-sabotage your trade. You're just going to be in, just expecting take profit to get hit, and then when your alert goes off, you're going to be good. Because how many times have you been in a trade and then your alerts go off and take profit gets hit? A couple days or weeks later, you're like, dang, I wish I got on that. Okay, so in order to stop that, just don't look at it. Don't stare at the charts all day long. Okay, and don't self-sabotage. It's really easy to self-sabotage by overthinking. Okay, sometimes you gotta just leave it with God and just keep it trim. Keep it trim and just let it do its thing. Okay, let the trade work out. That's the reason why you got into it. You analyzed something. Okay, you saw something good in it, so just play it out. Play it out. So this would be a really good sweep to go ahead and catch too. And you're gonna notice too, all the crypto pairs that we just looked at, they have a very, very similar kind of price action formation. So they all had a very similar gap. Okay. And that's because a lot of the cryptocurrencies, some of them do move like relatively like the other ones, but sometimes like Bitcoin, for example, are just so powerful and just do their own thing. So yeah, depending on what you're looking at. Yeah, but say Hype, for example, Hype could have a very similar looking setup to Link, okay, with that large gap with the resistance way above. Okay, but then something like Bitcoin, okay, could literally be at all-time highs. Okay. So it just depends on what you're looking at, depending on how many people are investing into what you're playing to. It's going to depict on how quick it moves. So if you just see something else at all-time highs and one crypto just isn't, then one is going to tell you how valuable something is in the long run, honestly. And yeah, so you can see this came out in 2021 and price is trying to make some progress and sweep back up, but let's analyze this here. So let me go ahead and instantly put this area of resistance as my take profit up here. Okay. It's going to be the highest point I can currently see with my eyes that I know price wants to try and sweep. Okay, so even right here, price created this area of support. I can see why. Support got created because of this area of resistance up here to the left. Okay. So that's going to be one thing I like to do, is just put a line down at the lowest area of support and be like, why? Why is this support created? So breaking everything down logically is going to really help you. Okay. So check it out. Even ask yourself why right here. Okay. Why was this support created? You can see this area of support all the way over here to the left got created. Price went in the upwards direction, and price mirrored that over here to the right. Okay. And then went in the upwards direction. So that's going to be another confirmation that, okay, I think price wants to go in the upwards direction. Okay. And check this out. This is definitely going to be like, okay, let's see. Price created resistance right here. Resistance decided to get broken right here. And just like our bread and butter, we always talk about, turn this to support. Extremely, extremely simple. And we can see price wants to try and fill in this wedge to this resistance up here. Fill the resistance up here. Okay. And then fill the resistances up there. And we still have around this much area of price action left. Okay. Simple. It's simple. It's not hard. It's not difficult. And it's just taking our time. Really taking our time and knowing when we're investing, why we're investing, and what we're going to be getting invested to. Okay. And it's taking your time. Straight up just taking your time. Okay. When you're waiting for these trades to work out, when you're waiting for areas of take profits, you're like, okay, let me go ahead and take my profit, cycle it back into whatever I want to. and just keep going, keep going, keep going, keep going. Okay, take it trade by trade. And this is going to be a really, really surefire way to keep growing your account. Okay, just analyze each setup, and the patience factor is really what's going to determine how quickly you're going to grow your account. Okay, because if you run up a bag, you don't wait for a setup that you should be waiting for, and then you blow it. That's on you. Okay, we take that to the chest, we pray on it, we move on, we come back stronger. Okay, but when you're marking these setups out constantly, we just did like 10 setups in a row. You have everything hawk-eyed down. Just gonna be constantly raking in money, raking in money, raking in money, raking in money. Okay, so it's important to be humble and really disciplined and know what to do with the profits. Have a strategy, know what you're gonna do, whether investing into business outside of trading or just doing whatever. Okay, just know what you're gonna do with profits. Okay, because once you know how to read the market, it becomes it's really simple. Okay, it's very, very simple. You know the gap fills, you know how things work, and you can break it down within logical perspectives. Okay, you can say, okay, this works because of X, Y, and Z. This works because of ABC. Okay, and all of these things are going to be like, okay, well, we know why this is occurring, so let me go ahead and do this. Okay, and the logic behind everything really, really helps a lot. Okay, helps a lot. So let's go and let's do one more example here. And going through a bunch of different crypto coins and constantly marking out setups is going to be a really good way to get profitable too, because you're just going to be living on the charts, understanding how things work, and you're going to be like, yeah, this is definitely how market's supposed to be played. So check this out here. I can already see this area here. So I'm good on my daily. I can zoom out. Okay. So I have this area right here. Okay. So I got this area of support right here. So support got created based off of this area of resistance right here. Resistance right here got broken. Resistance got broken. Turned into support. Okay. So resistance got broken, turned into support, and I could see again within the distinction, I could see resistance right here got broken and turned into support. Okay, and then price decided to make a new high all the way up here. Okay, so I can see that price wants to try and at least tap this area of resistance right here. Okay, and if I wanted to, okay, would be able to go ahead and invest into this, catch the rest of this gap fill. Okay, close up this area of resistance here. Trim there, you can trim there. Okay, and trim there. Okay. You can see price is trying to make a sweep, and if I bust on my ruler here, I could see all the room that's left. Okay, all the room that's left to go ahead and attempt this to make some money here. Okay. So take your time. Take your time. Take your time. When just reading your setups, keep paying attention to resistance and to support. Resistance and support is going to be your best friends, okay, within the market, and just trust, okay? Trust, okay? You got to really believe in your setup, okay? Trust God. There's a reason why you're thinking about gaining these setups. You're good. Don't blow it. Don't blow it. And you can constantly keep getting in these setups, making your money, putting into other long-term positions that you just don't have to close, that you could have open forever if you wanted to. Okay, so it's going to be up to you how you want to play it and how you want to grow your account. All right. So head over to stackmode.net, tell them how to trade cryptocurrency. Say a prayer to God. Keep growing. Peace. All right, let's go and let's talk about how to catch big moves, right? This is going to work for crypto, stocks, forex, whatever. All right, it's how to catch big moves. So what is a big move? A big move is going to be pretty much a move that involves catching a lot of points and potentially can make you a lot of money. And the reason why we want to be focusing on big moves is because big moves help you turn a little amount of money, okay? So if you have a small account, for example, and the whole goal of trading is to turn a little bit of money into a lot of money, okay? We don't want to be trying to turn, risking a lot of money to make break even or the same thing, okay? Want to be using a little bit of money to try to make a lot of money, okay? And that's going to be scaling with the amount of figures that you have. So 5, 6, 7, 8 figures, etc. You're still going to have the same mental perspective, using a little bit of money to get a large return. Okay. So, and that's going to mean a little bit of your portfolio, once again, relative to your scaling. So if you have a $10,000 account, then ideally you want to be using max 10% of your account per trade. Okay, so max $1,000. That's what you want to be using. Okay. Don't want to go over that because then you could potentially just be out of your risk management parameters, throwing you off. Okay. So you want to be using, once again, 1 to 10% of your account per trade. So if you want to catch a big move, focus on the chart too. Okay. Forget about P&L. Forget about the dollar sign. Okay? We got to learn how to read the chart, learn what we're looking for if we want to catch a big move in the first place. Okay. So when catching big moves, once again, don't focus on the profit. We got to be focusing on the process. Okay. Let's go ahead and let's jump into it. How to catch big moves. So if you're on the crypto stock market, you're most likely trading an upwards trending market. Okay, so I can pull up most stocks and I could see that most stocks from left to right goes in an upward staircase direction. Okay, so that's going to be the same for stocks. And let me go and pull up Bitcoin here. Even if I zoom out on Bitcoin, I can see the same thing here. Price started below down here, and I can see price made its way all the way up here to this day. Yeah. So that's going to let me know that price makes upwards direction. Why is price making upwards direction? Okay. So price is making upwards direction movement due to the fact that, one, for stocks, these companies aren't just moving for no reason. Okay. These companies employ people. Okay. So these companies help the economy. Okay. The more people working, the more people paying taxes. Okay. The more people paying taxes, the better the economy can be because the less debt the United States will suffer. So these stocks aren't just stocks for no reason. Okay. They're not just going up in value as well for no reason. They're helping people. They employ people. They feed families. Okay. And as far as the cryptocurrency tokens, right? So the crypto tokens. A lot of crypto tokens are created by humanitarians. Okay, like Ethereum, for example, created to counter Bitcoin's power wattage mining system. Okay. So a lot of humanitarians create crypto. Okay, people who care. Okay, it's people coding these networks. Okay, coding the blockchain network, coding the hash, etc. Okay, lots of coding involved within the cryptocurrency network. So there's people behind these projects. Okay, they want to see these projects succeed. Okay, they want to see it go up in value. And not only that, a lot of these CEOs of these stocks and owners of the token currencies own shares or a percentage of the crypto token. Okay, so they also want to see it go in an upwards direction. So once again, why else do things go in an upwards direction? Let's talk about safety. Okay. When people feel safe to invest into something or keep their money into a certain place, everyone's going to do it. And the benefit of that on the stock market and the cryptocurrency market, etc., is that the more people are doing one thing within the trading world, so if a bunch of people are doing some buying, then inshallah, you can go and put into place and assume theoretically that price wants to go in an upwards direction. Okay. If you start seeing a bunch of buying on the order flow on your tape, you start seeing whales buy in, etc. Okay, you can assume that price wants to go in an upwards direction. Everyone's doing it. Everyone's putting big money at it, and everyone's betting on it going in an upwards direction. Okay. So keep that in mind. Things that are safe, people are going to feel comfortable investing in. Okay, that's why Bitcoin's been going up exponentially past couple of years, especially once the SEC, okay, government body, decided to gain regulation over the Bitcoin. Okay, and regulation then leads it to a whole new masses. okay, people who watch the news and stuff like that, etc., then they're going to feel safe to invest. Hence why Bitcoin rose to 112,000 as of right now. Okay. Fairly quickly as well, too. So let me know if you guys were an early investor as well. So that's going to be a reason why price goes in an upwards direction. Now, let's talk about them. Two things. We'll break down resistance and support. So the market can only move one or two ways, okay? One or two. It's simple. That's it. Okay? It can either move down or up. When market is moving in a downwards direction, right? All it is people selling. So I like to do everything on my higher time frames too. Personally, I like to use the daily and 4-hour time frames. And those are going to be the 2 time frames I scan everything with. So I'm going to start off with my daily here. And I could see, once again, this is a left to right chart, but I could see that even from all the way back here in 2017, why did price make this spike right here and then dip down? Why didn't it just go up to infinity? Okay, let me go ahead and answer this question for you guys. This is why stuff just doesn't go up in a straight line. And this is why you shouldn't panic when stuff dumps as well too, because anything that goes down will try to come up within the market. So check it out. Price created this area of resistance right here. Okay. And resistance is going to be an area where sellers are present. Resistance means people sold heavily on this or at this level. Okay. And it's going to be best to see resistance on things like the higher time frames. Okay. You want to see resistance on the weekly, on the daily, on the 4-hour. Okay. You want to see support on those time frames as well too. But resistance means that people sold heavily. So why would people sell? Okay, if they're already up so much profit, why would they not think that's going to go to 1 million? Okay, let's put in the logical perspective here. So this is why it's kind of difficult to trade at all-time highs. So people got in way over here to the left, okay, and then price just starts pumping in an upwards direction. Okay, they have no take profit above them. They don't know how high it wants to go up in this one cycle. Okay, so the market's going to start collectively selling, okay, creating a massive sell-off. Once again, anything in the cryptocurrency or market world, as long as it finds its value within the world, it will make its mark. And we can see here, once certain things started to change, when people started investing into it, you can see this area of resistance here, where price fell down heavily at, decided to be passed. Okay, when market decides to pass the heavy area of resistance or support, we know it's going to be called a breakout. So price broke out right there easily. Okay, and a breakout couldn't be a good move here because why? You don't know how high price wanted to run up to. Price ran up all the way to here. Okay, and there was no previous highs. So this is why when they're structured, it's a lot easier to trade. Okay, and there's going to be some things that you buy and hold and sit in a long-term position. But as far as catching the trend and catching a big move, you want to make sure you know where price wants to exit, where it started at. Okay, and what type of trade it is. Okay, is it a bullish trade or is it a bearish trade? So let's take this example here, right? I have Amazon here. So one thing I know about the market too, I know market's always trying to break all-time highs, okay? Because everything's trying to be the best, okay? Companies want the highest rated currency. Stocks want the highest rated value as far as numbers. Okay, tokens want to be the most popular and most used. Okay, so it's very, very competitive. So in order to compete, let's analyze. So you can see here, it's area of resistance up here, and this area of resistance up here. Okay, why is that important, Chris? So areas of resistance are going to be extremely important due to the fact that price is always going to hunt them. No matter if price is at $0, if all-time highs is at 200, it's going to try and break that one day and show up. Okay, if an investor gives them $2 billion to revive the company from the ground and people start buying into it,
it's aiming right for that previous all-time highs, looking to break it, okay, because it's looking to be the best, okay, it's looking to break its future records, break its future numbers, okay, and a company is trying to get better, okay, just like human beings, we're trying to get better every day. Companies are trying to be the biggest, okay, and be in new levels, have a new stock share value, so they can pay out their workers and shareholders more if they give dividends, okay. So Amazon, for example, so I could see this area of resistance is up here, and I have another area of resistance up here. Okay. Price pause. I just think of resistances as areas where price paused. Okay. Check out this area here. Price decided to create this V area here and bounce in an upwards direction. Okay. So the opposite of resistance, we're going to have support here. Support is going to be an area where price decides to bounce from a downwards demand area. Okay, so price is gonna come down, make a low, okay, and then bounce up from that low, okay, and that's gonna mean it's in demand at that place, okay. So demand is gonna mean support, and resistance is gonna mean supply, okay. So if you ever heard the two terms, that's how you break it down. So when market is shorting, okay, and shorting means selling off, okay, going in a downwards direction. Market is always trying to meet with a area of support below current price or an area of resistance below current price. Okay. So resistance can be broken and turn into support. And when price is going in a downwards direction, especially on the stock and crypto market, it's not crashing. What it's doing is looking for a new low. Okay, it's looking for an area where people demand it, and then they're going to go ahead and get it. Okay. So the area of resistance is always where we're going to know where we want to exit at. So if I have this strong area of resistance up here, I know I'm going to go ahead and close and take my profit up here. Okay. And this is how you can catch big moves, especially on things like options. Okay, it's just closing at the right time and one buying at the right time as well too. Okay, so if price starts showing me price action down here from this area of support, and then breaks all-time highs, etc., okay, then you can keep studying that congruency. Okay. So we got Google here. Okay. Create an area of resistance all the way up here at 257. Okay, we're dumping down to 237. Let me go to my 4-hour here and check it out. Okay. So price kind of met up with this area of support over here. Okay. And I don't like to just get in on the first week once again. I like to wait for that daily close. Okay. Once it's at the daily close, I'm gonna wait and then boom. So we'll jump into another example here, some Tesla. So I can see area of resistance above current price. Okay, price is falling in a downward direction. Okay. Once I start seeing price curve and give me some bullish momentum, I know price is going to try to reach this area of resistance. Okay, trying to beat its competitor. Okay, so take this example here. Okay, amazing example. So we have this area of resistance all the way up here, and you can see price decides to create its own area of support system here. Okay, and then looking to curl and fill in these areas of resistance. Okay, that's 50 points here of Oracle. And finding a trade just comes down to really just taking your time.
So Visa here. Price has this area of resistance up here. My daily, let me zoom all the way out. I can see we're making higher lows. Ultimate low, higher low, 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 and then higher low. Okay. So let's start seeing higher lows, price going in upwards direction. That's definitely gonna let me know we're trending hard. Yeah. So I'm gonna go ahead and mark out this other area of resistance over here. Got resistance right here too. Cool. Price falling down in the same exact area. Okay. So wait for price to curl, or wait for price to blast past this area, turn it into some support, and then take it up to the next area of resistance. Okay. And then a ruler. And you always know price is trying to hunt resistances. Okay? So don't think that these gaps won't try and fill itself, okay? Because inshallah, they really will. So boom, and that's about 20 points here, and it's definitely a neck out flipper. So I'm going to pull up some crypto examples here. Okay, same thing on the crypto market. Okay, we're not going to make it hard. Just keep it simple. So I'm going to pull up Ethereum here. Okay, market's making that big red dip on the daily. Okay, let me delete all the drawings here. All-time highs is going to be all the way up here. So price is looking to make a low. Okay, so we do have a strong area of resistance right here. Right here. Right here as well too. Okay, two very strong areas of resistance. And I believe way over here as well too. Okay. So then price came down, broke the area of resistance, and then turned it into support. Now price is heading within an upwards formation. Okay, and everything remaining till the area of resistance is going to be a move you can catch. You can just enter in the middle of it. Okay, don't stress over perfect entries. Our only God's perfect. Okay, we're going to slow down, see what the price action is talking about. If we can catch or take profits still, we're going to catch it. Okay, if price made a low, it made a low. You start seeing daily closes and curves, you know what time it is. Okay. It's about having the risk appetite too. So even right here, have this area of support right here. Area of support right here. And then area of support right here. Or resistance right here. So support got broken, turned into resistance. The resistance got broken, turned into support. And now price is trying to sweep with an upwards direction. Okay. So if this is successful, I see price wants to sweep here. And I'm going to go ahead and catch the whole rest of the move up to this level up here. And then you catch the rest of the upper up here. Okay. And then the whole remainder of the move is pretty much going to be in your pockets. Okay. So that's going to be 1, take profit, and then 2. So extremely simple. Yeah, it's just making it easy for ourselves. Knowing what we're investing into, knowing what we're buying, knowing what we're going to exit. It's really going to be imperative to just making good decisions, okay, and just making sure we're profitable at the end of the day, which is really, really, really what matters. So cool. So I'm gonna go and pull up another example here. Let's do some XRP. XRP just took a massive dip. Okay. The price might be trying to bounce here. We'll see. It bounced really quickly. There's also an area of resistance over here too. Yeah, we have this area of resistance here. Looks like price is reflecting off of that here, and may potentially be going to go in an upwards direction. Okay, so let's go and let's check out this area of resistance up here. Okay, you know we're trying to break all-time highs, so we can keep making new highs. Inshallah. Okay. So think of market logically like that. Solana, for example. Yeah, Solana is super duper useful. Can't trade Bitcoin without it. Can't trade not Bitcoin, like Pepe the Frog coin with etc. Can't trade without Solana. Okay, so meme coins. So even the same layout here, have support, turn into resistance, turn into support. Okay, so the same thing as Solana. Okay, so this is why it's important to have a just certain strong mindset too. Don't panic sell the same place everyone else is doing it. Okay, be calm. Okay, and you got it. Okay, really sit on your trade, let take profit get hit, and yeah, and doing that really can help your flow out. So let me pull up TRX here. So same thing. One thing you're gonna notice too about me pulling up all these crypto pairs, they're all very similar. Each and every single one of them are really similar. So they all do the dip. Okay. And price action was just a little different here. So it looks like we had a dip here. We had a heavy dip on September 6th too. And that's also another thing too when it comes to catching big moves. Be aware of like news too. Be aware of news, the most volatile times, etc. too. Okay. So cool. So yeah, that's gonna be how to catch the big move. So pray to God, keep grinding, and head over to Stackmode.net.
Welcome to the beginner-friendly guide to trading futures. I'm going to make it extremely simple for you guys. Futures might sound intimidating at first, but here's the truth. They're just contracts that let you trade the future price of things like oil, gold, and even like the S&P 500 or NASDAQ 100 without ever actually owning them physically. And the best part, you can start small, control big positions, and react fast to the market. And here's how it works. You pick an asset, whether an index, currency, or commodity, decide whether you think the price will rise or fall, and place your trade and let the market move. If you're right, you win, profit. And if you're wrong, then you lose, but only what you put at risk. And it's that simple. And when you understand the rules, it all comes together over time. But here's the real secret. New traders really fail because they treat futures like gambling. Successful traders treat it like a business and a skill. They use levels, trends, risk management, and most importantly, have a trading plan every single time. Because the thing about futures compared to any other asset, you know exactly how much you're going to make and exactly how much you're going to lose per trade. So in this video, I'm going to break down the basics in the clearest way possible, showing you exactly how futures work, how to manage your risk, and how to avoid the biggest beginner mistakes so you can trade confidently. Let's jump into it, inshallah. All right, let's talk about trading futures. I'm going to make this guide extremely simple, okay? I'm not going to make it difficult. I'm going to keep it simple. I'm going to keep it easy, okay? I don't want you guys to be struggling. I don't want you guys to be going through hardship, okay? Futures is a way different game, okay? The discipline required to trade futures is night and day compared to anything else, okay? Futures, you need that real hardcore discipline. High risk involved into it, but you get discipline. You learn how to control your flesh. There's a high reward involved into it, okay? And you can make money very, very quickly, okay? So let's go and let's jump into futures. So what is a futures contract in the first place? So let's talk about locking in the price. So a futures contract is simply an agreement to buy or sell something at a specific price on a specific date in the future. So let's say, for example, let's say a farmer grows corn, okay? And he's afraid that the price will drop before harvest. So he signs a contract today to sell his corn for $5 in December, okay? And no matter what happens, he gets $5, okay? He just traded a future, okay? Or a lot of people have been able to make money in instances like this. Say a price of something like eggs, okay, were to be increasing, okay? Some people were to buy futures and prepare for the increase and the cost of eggs, okay? So if you think the NASDAQ 100 is going to go up, the NQ, then you would go ahead and buy a long, okay? So a futures contract is being able to speculatively buy a directional bias and get paid based off of it. So you're buying whether or not if you want to buy a contract for buys, okay? Or you can buy if you think something's going to go down, okay? So it's going to be two ways you can be able to trade futures. You can buy contracts or you can sell contracts if you think things are going to go in a downwards direction, okay? So you can prepare for the future in whatever speculative direction. So what are we actually trading in the first place? So we're trading standardized contracts. So we rarely trade the actual physical corn or oil. We're trading the contracts, and it's standardized. So every contract is identical, okay? Has the same size, same expiration date. And that's what makes futures so linear. On futures too, you know exactly how much you're going to make and exactly how much you're going to lose due to the fact that the tick sizes, okay, which is how much money a futures contract moves, okay, it's going to stay the same. Okay, only thing that's going to ever increase is the amount of contracts that you're playing with. Okay, but as far as your tick size and as far as the amount of money per tick, that is always going to remain the same per whatever contract you're looking at. Let's talk about liquidity. So you can buy and sell these contracts in milliseconds. Now, futures gives you a lot of control in your hand in 1 second. Okay, you can instantly click buy, and once again, it gives you the ability to buy or sell and get some money based off a directional bias. Okay, so you have the ability to buy or sell and get some money based off a directional bias. Okay, so has a lot of self-discipline that comes into play when it comes to trading the futures asset. Okay, because you can instantly just get in and get out. Options, you got to go out, find the contract, etc. It's not that easy to just enter in a trade. Okay, but with futures, you can instantly just click buy or instantly click sell and be placed in a directional bias trade. Okay, so make sure that you know what you're trading, you understand margins. Okay, and what margins are is going to be the amount of money the futures contract is going to require. Okay, so say for instance you're trying to trade the S&P 500 futures contract, the ES. Okay, if you're trying to trade the ES, then you might need at least $500, okay, inside of your futures account in order to open the trade. Okay, so understand that all the tick amounts are going to be the same, and as well as the margin amounts. Please look at the margin amounts on your broker before you start trading futures. And traders usually close the contract before the date arrives, so they never have to store 1,000 barrels of oil in the first place. So a lot of the times you're going to see an expiration date on futures contracts. Okay, so let's say for example you're trading the ES. Okay, you might see something like ESQ. Okay, and when you see letters, each one of the letters are going to represent different expiration dates. Okay, so let's go and let's jump into the next slide. And the main reason why people like futures in the first place is going to be the leverage. Okay, it's an extremely powerful asset class to be trading. Okay, but you can't blow the bag. You can't blow the bag. Okay, so you're going to be able to control more with less. Okay, so this is why traders really love futures. With other things, you got to deposit and it has more upfront cost in order for you to see some profitability. But with futures, you could really just deposit one time. Okay, you only need one small deposit, okay, to cover the margin. So make sure you look at it. It's going to differentiate per broker, so I can't just give you guys a solid answer. Okay, on the NASDAQ 100, in order to trade the NQ futures contract, one broker might require $1,000 in order to trade it. One broker might require $5,000 in order to trade it. Okay, so whatever broker you're trading on, make sure you're looking at your margin, okay, requirements, so you know how much money you need in order to trade in the first place. Okay, so here's an example. Okay, So let's say your contract, once again, okay, is requiring a $1,000 margin. Okay. Let's say you're trying to trade gold. Okay. Let's say you're trying to trade the GC futures. You're trying to say trade some gold. Okay. And the margin for gold, okay, is going to be $1,000. That means you would need at least $1,000 in your account in order to trade this futures. If you have less than $1,000 in your account, then what's happened is your account has the chance to get what's called liquidated. Okay, so if you need $1,000 in order to trade the asset class, you cannot go underneath that. Otherwise, your account is what's going to be called liquidated. Yes, futures is a leveraged asset, but that comes at the cost. You have to have the bare minimum amount in order to trade with the leverage. Okay, that's the other reason why people trade things like prop firm and stuff like that, is because they don't have the capital for the margin up front right now. But be patient and stack up that capital, because trading on your own live account really does help, makes things a lot easier, and you have full control over your funds. So you could feed yourself and your family however you want. You don't have time to be playing on other people's rules. When you want to withdraw your money after you win a trade, you should be able to withdraw your money. So I really recommend live account. Okay. Get your life together, grind hard. Okay. Work on your business, work on your job, level up, get some money together, and boot up a live account. Okay. I don't recommend you guys try and rush and go the prop firm route just to go ahead and avoid the margin. Okay. Take your time, learn the skills. Okay. Pay for some mentorship first, or sign up with a free call at stackmode.net. And I'll teach you guys how we could trade futures before you just start trying to boot up a prop firm and trying to just take any type of ghetto weird trades. Okay. Because there's a lot of things that come into the futures market. Okay. Especially on a live account. Your margin is going to be the most important thing. If gold says that they need $1,000 in order to trade gold, okay, you need $1,000, okay, in margin, okay, which is the bare minimum requirement in order to trade the asset class. If you go under that, your account could be zeroed out. Okay, or your account could go into the negatives. Okay, if price action moves too fast and clips past your stop loss, if you have one. Okay, and if it moves too fast and clips into the negatives, then you would have to owe the broker money. Okay, and if you don't pay it back, then they could sue you, etc. Okay, so make sure that you're paying attention to the margin cost on whatever broker that you're trading on. Every broker is going to be different. Okay, gold might require $1,000 to trade on one broker, might require $5,000 to trade on one broker. Okay, check it out and make sure you're doing your research. Let's go to the next slide. So up or down. Okay, let's talk about long versus short. Okay, the difference between the two. So in stocks, shorting is when you're betting on the price direction to go down. Okay, shorting means down. Okay, and longing means you think price is going to go in an upwards direction. Okay, so if you're speculating that the NASDAQ 100, gold, or whatever asset class that you're looking to trade is going to go in an upwards direction, okay, then what you need to be looking at is looking to buy a long contract. Okay, so you're going to be buying, okay, and going long. Since you think price is going to go up, okay, then you need to be buying, and that's going to be the long direction. If you think price is going to go down, you'd be shorting, okay, and you'd have to go ahead and purchase a sell contract. Okay, so go long, you buy a contract, and you'd profit if price goes up. And going short means that you're selling a contract, okay, and you're profiting if price is going down. And that can be for anything. Okay, I don't care if you're trading egg futures. If you think the prices of eggs are going to go down and you buy a short contract in egg futures, then inshallah you would make some money. So that's just exactly how it works. So because it's just a contract, you can agree to sell at a high price today, even if you don't own the asset. Okay, so do your research, and when you guys start putting the economy and your technical analysis information together, okay, because your economy information is absolutely futile to be looking at. You have to be looking at it. It's essential. Okay, it's very important to be looking at your economy information, the CPI, PPI, inflation rates, etc. Okay, seeing what recent laws are getting passed. Okay, things like that have a big factor in where the market is and where it's going, most importantly. Okay, so put your economy factors and then get your technical side.
Be like, you know what, are we at all-time highs right now? Okay. Ask yourself some certain questions. Okay. Am I ready to buy on this pullback? Okay, I'm going to wait market to go down, and then I'm going to buy back up again. Okay. Take your time and strategically plot and plan your trade before you make any rash, wild decisions. Let's head over to the next slide, class. So the danger zone, margin. Okay, just like we talked about, margin can be dangerous. I don't want you guys getting sued. Okay, I don't want you guys getting served court papers or anything like that because you owe some money to the broker. Okay, and understand that sometimes your stop loss, okay, stop loss, that's what SL is, stop loss. Sometimes, okay, let's say you have your stop loss set at a certain price. Okay, if price decides to run past your stop loss too fast, you could end up losing more than you thought. Okay, so if you have your stop loss set for $300, okay, and price action moves fast way past your stop loss, okay, you could end up losing like 380. Okay, and if that goes underneath your margin requirement, also known as your maintenance margin, okay, which is the minimum amount required to even have the trade open. Okay, so since you're using leverage, you must maintain the minimum maintenance margin. Okay, so if you're trading the NASDAQ 100 on a broker and it says it needs $1,000 in order for you to have one contract open, okay, then you need to have $1,000. If you go under that, then you're going to face what's called liquidation, which is pretty much account death. And once again, if price action happens too fast, past your stop loss or whatever, you can end up losing more than you actually expected. Okay, and that could lead to, God forbid, a margin call. So if your trade goes against you and your account balance drops below the minimum, okay, the broker will automatically close your trades and take the rest of your money. Okay, so rule number one, never trade without a stop loss. Never trade without a stop loss. Okay, and it's very rare too that price decides to just clip way past it instantly and it fills you for a different number than what your stop loss was set for. But just know that it can happen. So it is good to have more money than your margin account. Okay, so if the margin or the maintenance margin requirements, so if the margin is asking for $1,000, okay, I would try and have like 2K. This way you guys can take some losses, etc., and you're not going to be panicking. So let's head over to the next slide. So the ticking clock. Okay, so unlike stocks, right, which you can hold forever, futures contracts actually expire. Okay, they have a time limit, and they're quarterly a lot of the times. So most of them expire in March, June, September, and then you got December. Okay, and then we have rollovers too. Let's talk about rollovers. You might have seen this on your broker asking you if it wants to roll over contracts, etc. So if you want to keep trading, you must close the old contract and open a new one before it expires. Okay, so don't forget too, if you hold oil futures to expiration, okay, you're legally asking for oil to be delivered to your house. Okay, and brokers a lot of the time usually prevent this. Okay, so if you're just trading for pure speculative reason, which means you're trading off pure technical analysis and the chart, okay, then make sure you guys are closing trades before expiration dates occur. Okay, close the charts before the expiration dates occur. Makes it things a lot easier, and you're not gonna have to stress out about anything. Okay, just keep your digital money and hop off, and then you could take that futures income and buy assets with it. Okay, take that futures income, buy real estate, buy real life stuff. Do what you want. Okay, and cycle your money like that. So what can we trade in the first place on futures? So we got the big three. All right, the big three. You got the ES. Okay, the ES is going to go ahead and represent the S&P 500. Okay, and then we got the NQ. NQ is going to go ahead and stand for the NASDAQ. Okay, that's going to be the NASDAQ 100. Okay, which is going to be the powerful batch of tech stocks. Okay, and then you're going to have the YM. Okay, and YM is going to be for Dow Jones, also known as US 30 for any forex traders out there coming to futures. Okay, so you got the ES, that's the S&P 500. NQ is the NASDAQ 100. And you got the YM, that is the Dow Jones. Okay, so the big three. Okay, those are really going to be the big three. And yeah, and then you're going to have things too, like crude oil. Okay, people trade oil as well too, and then you're gonna have things as well like gold, okay, which is a precious metal. So beginners often start with micro contracts too. Okay, so starting with micro contracts change the whole ball game. It makes things a lot easier when you can scale down, okay, and risk less. When you risk less, you have a lot less anxiety per trade, and you could catch way bigger trades as well too, due to the fact that you don't have that fear of, oh, I gotta hop off the trade, I have so much size in right now. No, you can let the trade ride out, do its thing, and play properly. Okay, you can let market do its thing. Okay, you can let market actually cultivate itself, and most importantly, you could risk a little and catch a big move. Okay, and continue to keep yourself profitable and stress free, just like that. Inshallah. Let's over to the next slide. Breaking futures down, okay, from top to bottom is going to be extremely easy. Okay, so we're trading the U.S. stock market. The U.S. stock market, it's made to go in an upwards direction. Okay, and all of these stocks are put into one index, creating the futures indexes. Okay, so breaking everything down logically, if I head over to the stock screener, okay, and I have my market set to United States, okay, I can see the companies that are United States companies. I'm going to have companies such as Microsoft, Nvidia, Apple, Google, okay. The whole world is using iPhones. The whole world uses Google to search, okay. The whole world owns Microsoft products. Okay, the whole world orders off Amazon. Okay, and we have to also understand that these companies employ hundreds of thousands, if not millions of people, okay, all across the world. And these people are paying taxes. And the more taxes getting paid, the more beneficial it is for the United States government. So, of course, the United States stock market would be made to go in an upwards direction. Okay, so forget getting lost deep in the technicals, okay? Because market is pretty easy to understand technically. It's just support and resistance and understanding where market wants to go. But understanding where market wants to go and why is going to be a big part. When you're trading the United States stock market, stocks are meant to go in an upwards direction year after year after year because that's the baseline of the company. America is built off of strong companies, okay? So take this area, for example. You're going to have areas where market decides to bounce from the bottom from. Okay. As you can see this area here, market decided to bounce twice from this area. Okay. And as we know, whenever we see market bouncing within an upwards direction, okay, that's going to indicate that, of course, buying is coming into place. Okay. And when buying steps into place, that's going to let us know that that's an area of support. Okay, and we want to be looking at everything on our higher time frames first. Okay, so doing top-down analysis and looking at your chart on your higher time frames is going to give you that real bigger picture for absolutely everything. Okay, so start on your weekly time frame and then head down to your daily, then your 4-hour, and then your 15-minute. Okay. Your weekly time frame is going to be your bird's eye view. Okay. We need to zoom all the way out to see the true trend of the market, where stuff is heading to, okay, and how market wants to react on the higher time frame basis. Okay. The higher time frame is going to show us the true price action. It's going to show us where price truly wants to go, what it truly wants to do, and where the orders are truly being placed and stopped at. Okay. Your daily time frame, okay, you're going to use just to see a little closer for take profits, okay, and then your 4-hour. We know the 4-hour is going to be really important because on the weekly and the daily, you can't see everything you need to see. So make sure that your electronic or extended trading hours is going to be enabled before you start trading futures, okay? So now let me go ahead and pull up the futures chart once again. So now we understand what's inside of futures, okay? We understand how it operates. Now let's talk about how to read the chart. Okay, so what I'm going to go ahead and do is start off on my highest time frame first. Okay, I'm on the weekly with it. Okay, so breaking down certain logical things. We know that market wants to go in an upwards direction due to the fact that it's the most beneficial for the United States economy. Okay, market wants to go in an upwards direction Okay, it's the most beneficial for the economy. Okay, and the United States dollar is one of the most powerful currencies in the entire world. Okay, so our stock market is really, really important. We have innovative minds that build world-changing companies here. Okay, so putting that into perspective, we know that whenever we're trading the stock market or futures, as we can see on the weekly time frame, price is meant to go up year after year after year after year after year. Okay, regardless of how many new lows are being made, okay, we could still see price heading in an upwards direction year after year after year after year. That's because that's what it's made to do. The United States' backbone is built off of companies and work. Okay, so this is pretty much going to be looking at real life in chart form. Okay, so as more companies get created, as technology starts expanding, okay, etc., you could start seeing more money being pumped in to the economy. Okay, thus leading the index to go in an upwards direction year after year after year after year. Okay, so trading futures, a lot of the times you're going to be looking to trade longs. Okay, so what a long is means that you're going to be trading in the upwards direction. Okay, so futures, you get paid based off speculation, which means you get paid based off your directional bias. Okay, so primarily, since logically on the higher time frames, we see market going up year after year after year after year after year. Okay, we're going to go ahead and focus on buying up. Okay, since the market is made to go up, let's focus on the direction where the market is made. Okay, the reason why people short is Forex traders came on and influenced US traders, and people who are in the US are now trying to short. Okay, so you can see this is going to be the United States index, the NASDAQ 100, goes up year after year after year after year after year, almost undoubtedly. Now let me go and pull up some Forex. So I got Forex here. Okay, I can go back all the way back here on Forex. We can see that all-time highs is way higher than it is today. It does not work the same. Okay, the United States stock market is meant to go in an upwards direction. Forex is going to be a lot more sideways. So don't let Forex traders influence you if you're a United States stock market trader. Meaning if you trade options, if you trade futures or shares, understand that these companies are meant to go in an upwards direction. It is not sideways like Forex is. It is two completely different instrument and asset classes and has to be treated as such. Okay, now let's continue. Okay, so we know price is going to go ahead and hunt this all-time highs up here. Okay, price is hunting all-time highs. And let's talk about the V formation. Okay, so market will continue to head up in an upwards direction year after year after year after year. Once again, for the greater good of the world. Now, it's about knowing when to buy. So you don't want to buy when market is at all-time highs. Okay, because remember, we make money whenever we buy longs, which means we want market to go in an upwards direction. So in order to buy when and be profitable whenever market's going in an upwards direction, we can't buy at the tippity top, because then we're just going to eat the whole drawdown. Okay, so you never want to buy at all-time highs. Okay, never buy at all-time highs. Okay, so all-time highs is going to be the highest point into the market. Okay, you never want to buy at all-time highs. Not worth it. Okay, because then you're just going to get pulled back on. But understand that market always wants to try to make new all-time highs. Okay, so in that logic, let's put something together. That means that market will always want to hunt an area of resistance above current price. Okay, to try to meet it again and try to break it, or sometimes it might meet it again. Okay, and then price might decide to reverse hard. Okay, so this is why we want to go ahead and close at the area of resistance, okay, where market decided to fall down from in the first place at all times. Okay, all of our trades are going to look the same from now until we fall off the earth. Okay, until it's time to die, all your trades are going to look the exact same. Okay, we're going to focus on letting market make the top left of the V. Okay, that's going to indicate the area of resistance. We want market to fall down first. After market falls down, you want it to also make the bottom of the V. Okay, so you want market to do two things for you. Okay, you want it to make the left side of the V and the bottom of the V. Okay, the left side of the V is going to indicate where it decided to start falling down from. Okay, so the left side of the V indicates where market decided to start falling down from. And the bottom of the V is going to go ahead and indicate whenever price wanted to stop falling and catch itself. Okay, and whenever market stops falling and catches itself, okay, that's going to indicate an area of support. So support equals buying. Okay, support equals buys. And the top left of the V is going to go ahead and equal resistance. Okay, resistance is going to go ahead and equal selling. Okay, sells. Hence why market's going in a downwards direction. And then once people start buying, longing, okay, buying and longing is the same thing, then market's going to start going in an upwards direction. And understand that logically, okay, because market wants to try and always make new all-time highs, we can put some logical perspectives together. Okay, we can understand that wherever market decided to fall down from, market will eventually try and reach that area again to smash past it, or reverse from the area to try to smash past it again. Okay, so understand that wherever market decided to fall down from originally, okay, wherever market fell down from, it will try and recover too. I don't care what it is. Okay, wherever market fell down from, I don't care if you're looking at futures, stocks, options, whatever. Okay, wherever market fell down from, if it's a half decent asset that people invest into, it will try and recover and break past where it fell down from every single time, because that's the greater good for the economy. Okay, the stock market isn't just going up to go up for no reason. Okay, so I don't want you guys to just be faked out, and I'm not going to be just showing little 15-minute breakdowns of structure and this and that. Understanding the true logistics between everything is going to give you a lot less anxiety when you're in your setups. You're going to have so much conviction, you're going to have so much understanding, and understanding that, you know what, price has to go up. It's logically meant to go up. Price already sold off, buying has stepped in, price is going to go ahead and meet up to the area where it sold off at to try and break into new all-time highs. And you continuously farm that logical structure. You continuously take the same setups. Okay, when you see the staircase stock chart emoji, okay, understand all you see is market going up, pulling back, going up, pulling back, going up, pulling back. Okay, and when you see market making these higher lows, okay, this low is higher than this low. Okay, this low is higher than this low. Okay, we got this low is higher than this low. Once you start seeing market making higher lows and breaking previous all-time highs, okay, you know you're trading a good asset class. Okay, that's going to be an asset class that you want to be focused on primarily, because all you have to do is wait for market to make these little pullbacks. Okay, please pay close attention to this drawing. Okay, that's exactly how market works. All market does is go up, come down, then go back up and break where it previously fell down at. Okay, and take advantage of that. Wherever market previously fell down at, it will almost always want to meet it, because it has to break it in order to make progress. So wherever market decides to fall down at is going to be your take profit. Okay, so your take profit, which is when you close and you get your money, that is going to be wherever market decided to fall downward at. Okay, wherever the left side of the V was created is when you're going to take your profit, because we don't know if market always wants to break into new all-time highs. Okay, market could easily come into the resistance again, okay, and fall down extremely hard, okay, and then break one day again. But still, you don't want to eat the whole fall down. Okay, just take advantage of the logic that's there. Understand that the right side of the V wants to be filled. Price wants to recover from where it fell down from. Okay, it may not want to break it immediately, but understand that a lot of the times it will want to at least recover from where it fell down from. And that window of price recovering to where it fell down from is our money window.
Okay, that's going to be our money window. So using all of our time frames and seeing everything and doing our top-down analysis is going to help us put it all together so that we can make the right profitable decisions. Okay, so let's go and let's keep going here. So take here. Okay, even if I'm on here, let's say I start on my weekly. Okay, I know price wants to come up to this all-time highs. Okay, we just went ahead and broke down all the reasons why. Okay, I can see we're not at all-time highs right now. If you're not at all-time highs, okay, there could be a chance to get a trade in. If you're not at all-time highs, there could be a chance to get a trade in. If you're at all-time highs, you do not trade. Do not trade at all-time highs. Okay, we need market to make the left side of the V, let market pull back, okay, make the bottom of the V, form support, and then we catch the right side of the V right back to where it fell down from. Keep it simple. Keep it simple. Some of you guys are making market way too difficult. No need for all this weird stuff on the 1 minute. No weird terms like the silver bullet. Just understand that wherever market fell down from, if it's a profitable asset class, okay, and the whole United States runs off of these futures, okay, if you turn on the news and you look at the bottom left, you're going to go ahead and see it tracking futures, okay? The whole United States runs off of the stock market, okay? So understand that. Once you understand that, you can easily just start using your higher time frames and making a lot better decisions, okay? So even here on futures, if I wanted to do something like this, okay, you could easily make your trades, okay? You could easily put down a trade, okay, and just catch it all the way to all-time highs, okay? And catch the whole thing. You know price wants to go ahead and fill all the way up here, okay? But even if you didn't do that, say you didn't have enough margin, right, to hold overnight, right? Here's what you would do, okay? What you can do is hop on your daily, okay? If you wanted, you could put your, depending on how big of it is, depending on how big of a stop it is, saying have your stop loss set, okay? Find a good stop loss that works for you and your account, okay? You can go to your 4-hour time frame after your daily, and you want to find yourself a support candle, okay? Find yourself a support candle if you can, okay? Whether it be this one, okay, this one, okay? Try and find yourself support candles, okay? Then from there, go ahead and just read the structure, okay? So we can see market is making higher lows. Why? Because I'm looking at the support candles, okay? So I'm seeing each of these support candle conjunction areas heading in an upwards direction, okay? Time after time after time again, okay? So it's letting me know that, okay, this asset class is definitely bullish, okay? This low up here is higher than this low, okay? This low up here is higher than this low. This low up here is higher than this low. This low up here is higher than this low, okay? And you keep taking your formations like that, okay? Now, I can go to my 15-minute time frame, okay? And I can see everything more logically for what it is, okay? So I can see here, actually I'll stay on my 4-hour for a second, okay? We could see price decided to come in contact with this area here of resistance, okay? We could see price wants to come up here first on the 4-hour, okay? So what I'm going to do is go to my 15-minute, okay? And I want price to show me bullish structure, okay? So this is exactly what I mean. So price decided to make the left side of the V here on the 15-minute, okay? And getting on the 15-minute is where it gets nitty-gritty, okay? It's really turning on your Sharingan, making sure you can see everything that you need to see. And putting that same higher time frame logic on the lower time frames is what's going to make the world of difference, okay? So go ahead and get on your lower time frames after you've done your highest time frame analysis, okay? I'm trying to make you guys the best traders in the entire world because it's not that difficult, okay? After I touch $1 billion from this, so many free guys that's going to be out for you guys, okay? Because it's not hard. It's just you have to get your psychology down packed, inshallah. So look, you could see market decided to make the left side of the V here on the 15-minute, okay? So on the higher time frame, this is the ultimate beginning of the V is up here on the 4-hour, okay? We can see market topped out right here before it decided to fall down, Okay, market decided to fall down all the way down here. Okay, found an area of support and then started to make some higher lows. Once I start seeing things like higher lows come into place, I'm like, oh yeah, we're trendy. Okay, because market doesn't want to go past these supports. Okay, look at this line right here. Okay, let me go ahead and change the color of this. So if you look at the yellow line, you can see market has these two wicks that did not want to go beneath. Okay, now we have this line up here, did not want to go beneath. Okay, and then we have the support accumulation zone up here. Okay, and price looks like it wants to hold this area right here. Okay, price looks like it wants to hold this area very, very confidently. Okay, price looks like it found another area of support right here. Okay, so I can start seeing here, I have my 4-hour wick and I have a 4-hour close above the zone. Okay, so I like that. Okay, I have a 4-hour candlestick above the zone and I have a 15-minute candlestick above the zone. Okay, so I can see that market is trending, okay, in an upwards direction. Market fell down and it looks like it's trying to make the V right here, so then it can go in an upwards direction from here. Okay, and at least hit this resistance. Okay, and this profit window is what we're going to use in order to make our trade. Okay, then from there you'd be able to pull out your risk to reward tool. Okay, this would be long position. Okay, you could put your stop loss below this area of support if you wanted, and then take profit would go ahead and be the area of resistance up here, and we play this for a 1 to 2 about. Okay, so you play this for about a 1 to 2, catch your trade and hop off. Okay, or even if you wanted to play the take profit up here, you could play this one too. Or if you had multiple contracts, you could do it like that. Okay, but if you just wanted to play the first 15-minute V structure after the higher lows were created, then you could go ahead and get in just like that. Okay, so it's doing that top-down analysis, seeing everything, okay, and then catching the V structure, even on the smaller time frames, breaking everything down and seeing it for exactly what it is really going to help you put things into logical perspective and help your trades over time. Okay, so we could see market decided to make the main V here. Okay, so starting off on the weekly, okay, we got all-time highs. Okay, I can see market decided to make some higher lows here, even on the weekly. Even on my daily here, I can see market made the top of this main V up here all-time highs. Market fell all the way down and made the bottom of the V on the daily. Now I'm going to go to my 4-hour time frame. Okay, and I can see market deciding to do its thing. Okay, market's deciding to trend in an upwards direction, and I can see all the higher lows on a smaller time frame for exactly what it is. Okay, I can see that market decided to make this area of resistance here, fell down, but it's still trying to trend up to fill in this V right here. Okay, and ideally it wants to fill in the whole V. Okay, so what we can do, I could get on my 15-minute time frame here. Okay, and I can open my trade. Okay, catch my 1 to 2 and catch it up here, or I can move my take profit to up here if I wanted to as well. Okay, and keep my stop loss as this support right here. Okay, and have the take profit as the final V all the way up there. Okay, so it's just about knowing when to enter. Okay, so on your 15-minute, you want to make sure that you're seeing that recent support structure. Okay, and you want to make sure that you're buying when everyone else is buying. Once again, let me repeat that one more time. You want to make sure that you're buying when everyone else is buying. Okay, so if market right here just made the left side of the V, okay, and then the bottom side of the V already got made, so market already dumped down and it already made a bottom. Okay, what direction is it most likely going to go into from here? Buys. Okay, because people already sold. Okay, and the low already got formed again. Okay, and understand that this asset class also has laws in place to make sure it doesn't flash crash to zero, the short sale restriction. Okay, so don't expect more markets going in a downtrend for it to last too long. Okay, because people are going to be fiending to find a new low to buy it again because they know it's going to go up year after year after year. Okay, so on futures, primarily try and focus on the pullback formations. I'm going to go ahead and pull up the S&P 500 futures, known as the ES. Okay, let's go and let's cover this and break it down. So what I'm going to go ahead and do, just like we talked about, is I'm going to start on my weekly time frame first. Okay, then I'm going to go to my daily, then to my 4-hour, and then to my 15-minute, okay? Then to your 15-minute, finally, okay? So what I like to go ahead and do is ask myself, are we at all-time highs? We cannot trade if we're at all-time highs, okay? We just can't. We want market to pull back first, and then we take it back up, okay? Don't trade at all-time highs. Don't do that. Don't do that. Don't short, don't long, don't do nothing. Wait for market to pull back and then take it back up. Okay, wait for market to form. If there's no resistance above current price, do not trade. Once again, if there is not resistance above current price, okay, if you can't get on your time frames in market area of resistance above current price, like right here, okay, then you shouldn't be trading. If market's way up here and there's no resistance above current price, you're gambling, okay? You're not playing logically, okay? Market works in structured formations, okay? You know market wants to come up and head to this area of resistance right here. As you can see, market decided to make this bottom right here. Price went all the way up from this bottom and stopped up here, okay? After it stopped up here, it decided to make it flash down all the way to this low. Okay, so this is a pretty strong area of resistance. If it can make it flash for about a month downwards, okay, that's a strong area of resistance. Market wants to dust off its knees, throw on its gloves, and get ready to fight again. Okay, it doesn't want to lose at this area. Okay, so after it lost the fight once and it fell down, it's ready. You know, it's ready to go back up and fight again. So always think of market as a fighter. Okay, after it got knocked out, punched in the teeth, all their teeth on the ground, okay, they come back, mouth guard in, gloves in, training sessions done, and it's ready to try and fight and break the new all-time highs again, okay? So it's real life too, okay? There's going to be seasons where you're dumb up, but when you fall down, are you going to panic, okay? And trading's the same way. If you panic sell while market's falling in a downwards direction, okay, instead of just waiting for market to bounce at a certain low and then buy then you're going to get your results. Okay, so when you're drowning, you're falling down, you can't panic. Okay, you got to wait, catch yourself, and then go right back up. Okay, so right here, even logically, I know price wants to reach this area of resistance. Okay, price is upset that it fell down from here. It almost can't believe it that it lost. Okay, it lost at this area right here, and sellers stepped all the way in, stopped buying from here. Okay, and market's like, hold on, you know what? Who said sellers could step in right there? Okay, it doesn't like that. It's going to try and break past that area and do it over and over and over again until we die. Okay, that's just how it's created. It's how it works. It's welfare sitting here for us. Sitting here. Okay, all you have to do is plant your seeds. So boom. So market is going to go ahead and chase this main V up here. Okay, and I can know that because one, market decided to bottom out after making that heavy fall down. Okay, and we're almost fully recovered here too. But I can also see market making on my 4-hour higher lows. Okay, so I can see that this low is higher than this low is higher than this low. Okay, and I can start seeing this low even here too. Okay, and then let me get on my 15-minute time frame. Let's check it out. Okay, so on my 15-minute time frame, let's see everything a little bit more logically. Okay, even right here, this is going to be an area of support here too. Okay, that's a very recent low. Okay, and we could see, okay, price decided to fall downwards recently. Okay, price recently fell down from this area of resistance here on the 15-minute. Okay, so what we need is to see market hold an area of support and see if it's really for true. Okay, so after market decided to fall down from this area right here, okay, it came down and it looks like it made this kind of candle right here of support. Okay, so after a heavy sell-off, you want to see, okay, did the market try and bounce from that at least? Okay, so we could see even right here for this top, okay, market decided to have a heavy sell-off, but it decided to find a low right here, correct? Okay, market decided to even come down and test it in the same area. Okay, so I want to see, okay, is this a higher low? Okay, this low right here. Okay, I want to see if this low is a higher low than this low for real. Okay, so what I want to be waiting for is I want more 15-minute candlesticks that are green filling in the right side. Okay, so I can see this low right here is real. Okay, you know this low is real because outside of the zone, okay, you start seeing green candlesticks heading up in an upwards direction, buying multiple green candlesticks in a row. Even down here with this low, okay, you know this low is real because you start seeing green candlesticks heading in an upwards direction, ready to fill in the resistance gap. Okay. But we could see here from this low, okay, it's just a wick. Okay, after this, it's red candlesticks, green, red, green, red, green, really choppy. Okay, really choppy. Hasn't started fully trending yet. Okay, has not started fully trending yet. Okay, after our market found this low, green candle, green candle, green candle, green candle, you start seeing them rapidly success in a V direction. As you can see, it decided to kind of make this wick, but then a red candle, and then a green, but then red dojis, and then not really consistent. So I don't even know if this low is real. Okay, so I'm not going to take the trade here yet. Okay, I'm going to wait for more 15-minute candlesticks to keep heading in an upwards direction. Okay, I want to see price fully give me that V curl. Okay, one thing too, especially when you first start off and it's helping you eyeball, you can draw trend lines too. Trend lines, like when you first start, could help you out too. Okay, it's really just knowing where the area of resistance is. Okay, so look at where price decided to start falling down in the first place. Okay, so price started falling down up there. Okay, in this area up here. Okay, from there, you could draw the trend line off of that. And a lot of the times, by the time the trend line gets broken, it'll let you know if the area of support is real for the most part. Okay, but that's why trend lines work, because price is confirmed. Okay, but you have to close at the area of resistance above current price. Otherwise, it's all going to be shambles. Okay, it's not going to work how you want it to. Okay, so even with here, honestly, it's been a couple minutes, honestly. That's why I like to wait for multiple 15-minute candlesticks. So you have this low, and then you have a bunch of candlesticks above the zone too that's closed. Okay, so you could either wait for the trend line to get broken and then enter, and then stop loss could be under the low and take it up to the high. Okay, and it's about knowing when to buy. You buy directionally. Okay, you want to buy after market sells. Okay, we just play logically. Buy after market sells. Okay, that's it. You buy after market sells, and that's literally how you trade. Okay, that's how you trade the United States stock market. Okay, is you buy after market sells off. Okay, after it sells off, then you buy. Okay, so even this here too, like, yeah, you could avoid a fake out if you wanted to just wait for the trend line, honestly. Or you could take your chance and see if this low is pretty real. We're starting to get some more 15-minute structure here that I like. Yeah, and I really, we could either do that, or I really like this too, though. We have a kind of higher low being formed here on the 15-minute. So a lot of the times too, you see how this area of support got tested like twice. So sometimes it'll do that. Take like a price like right here. We got two 15-minute candlesticks stopping in the same place. Okay, after I see something like that, that's going to let me know, okay, price doesn't want to break below the support. Okay, giving me way more conviction. Okay, price would have broke below the support if it wanted to, not bounce at the same place. Okay, once I start seeing stuff like that on my 15-minute, for sure, yep, I can go ahead and I can get in right here if I wanted to. Okay, stop loss underneath this low. Okay, and then take it all the way up here. Okay. Yeah, for it's a 15-minute time frame. So yeah, this could be like overnight. Could be a couple days. Yeah, for sure. A couple days at max if it's choppy. But a lot of times it'll be like a couple hours. So yeah, and then you just take that structure and you just keep taking your trades. Just keep taking your trades. Okay. And this is a very small stop loss here. It's 37. Let me go ahead and log into my. Paper trade here to break down the math. Okay. So boom, you'd be playing for about 108 ticks. Okay. So this is a really, really good trade. Okay. So you're only risking, okay, let's say you're on the micros. Okay, you'd be risking $45, right, to make 135. Okay. So that's over double your money. Okay, and this is a pretty small take profit. You could definitely take this take profit up here as well too, if you feel comfortable holding a little longer, for sure. Okay. So if you wanted to take the take profit up here, okay, that would be playable up here as well too. Okay, so you'd be risking $45 to make 180. Okay, and just wherever market decided to fall down from, it'll want to return to. It will want to return to almost every single time. As long as you're trading, whenever market is making higher lows, okay, understand that market is always going to want to fill in and return and try for vengeance again from where it fell down from. Okay, wherever market fell down from, it's going to try to recover. Okay, it's going to try to recover, and keeping that perspective is really going to help you. Okay, after market makes its low and falls down, okay, let market make its own area of support. Okay, and we can see on the 15-minute here too, once again, areas of higher lows being formed. Okay, I have this area right here. Okay, I like this candle a lot. After that, price went all the way up. Okay, fell all the way down and then made this low. Then price went up. Okay, came down and then made this low. We got two 15-minute candlesticks chilling in the same place here. Amazing, amazing area. Okay, so I wanted to stop loss underneath this area of support since we look like we're trending here. Okay, and then take it up to this area of resistance. Okay, for the whole formation fill. Okay, and it's about just waiting for pullbacks, taking the trade. Wait for a pullback and then take the trade. Okay, and being as patient as possible is really going to be the determining factor versus profitability and just unprofitability. Okay, and buying during trending times. Okay, because you can't just live on your 15-minute time frame and try and do things like that. Okay, it's still important to do the whole top-down analysis. Because we did the top-down analysis, I was able to understand the 15-minute time frame structure a lot different. Okay, because the 15-minute, if I just pull it up, it could be a whole different story. Okay, but when we're on our higher time frames, we can see everything for what it is. We can see that this is a bullish asset class year after year after year, and all we got to do is buy the dips and catch the sweeps back up. Okay, and that's it. So get ready to rumble, traders. Okay, if you guys want more help with futures trading, okay, whether it be education, technical analysis, or anything, head over to stackmode.net. You guys can book a free call with me. I got free courses, free ebooks for you guys, and there's just too much information out there, okay, that I really try and give you guys to help you get profitable, inshallah, if God wills. Okay, and let's break down these things. Okay, understand that leverage gives you a lot of power. Okay, but you gotta be in control of this. This could be a really good thing or a really bad thing if you don't have it down packed. So make sure you study yourself as a human. Make sure you're aware of your emotions and don't crash out and make irrational bad decisions. Okay, and liquidity gives you speed. Okay, when everyone is buying, okay, you're gonna start seeing price action flood in a upwards direction. When everyone's selling, you start seeing price action flood in a downwards direction. Okay, and risk management is the thing that's going to keep you alive. Okay, and your risk to reward. Okay, so if you're risking $50 a trade, you need to be at least trying to make 100 to 150. Okay, if you make 100, that would be a 1 to 2 risk to reward ratio. If you make 150, that would be a 1 to 3 risk to reward ratio. Okay, and focusing on your risk to reward ratios is how you're going to become profitable. It's all in the math. So if you're making more than you lose consistently, you will become profitable. Okay, and start with paper trading and start with mentorship first. Okay, so head over to stackmode.net. I love you guys so much. Keep grinding, stay prayed to God, and I'll catch you in the next one. Peace. So if you've ever seen your portfolio down and noticed gas, groceries, etc. getting more expensive, what's the cause of everything? It's going to be inflation. It's the silent thief. And most people think that inflation just means prices go up, but it really means that your money is worth less and it's going down. The 7% inflation each year turns $100 that you own into just $93 of real buying power, even if your account balance haven't moved an inch. And when inflation spikes, the market reacts like a toddler with no nap. Growth stocks drop, companies can't hike prices fast enough, and profit margins get squeezed. And suddenly those charts are nothing but red candles heading in a downwards direction. But here's the part that nobody talks about. Inflation doesn't destroy every portfolio equally. It's about what you're invested in. Some assets actually thrive in the chaos. Commodities, real estate, energy plays, and even those boring dividend giants that simply pass rising costs straight to consumers. I'm going to go ahead and break down exactly what inflation is, and let's understand it, class, inshallah. So, the term inflation, you guys might have heard of it in school, around, you might have heard your parents talking about it, seen it on the news, etc. We're going to want to break down exactly how it causes other prices to go up, whether it be it on goods, etc., and how it affects stocks and stuff like that as well, too, and how it can affect your portfolio. So, what is inflation in the first place? So, too much money and too few goods. So, in life, things work off of two things: supply versus demand. So, that's how things become valuable. So, if there's a lot more demand than supply, then that means that something is going to be valuable because people want whatever it is, which is why it's in demand, but there's not a lot of supply of it. Why? Because people are buying up all of it. Okay, so supply and demand are going to be the two factors that come into play when we're looking at inflation, or even just understanding how humans trade or economies work in general. So too much money, but too few goods. Okay, so inflation is the rate at which purchasing power drops. It means that your dollar, so your US dollar, buys less today than it did yesterday. Okay, so whatever your fiat currency is, whether you're using the euro, US dollar, etc., inflation is the rate at which the purchasing power drops, meaning that your $100 might not buy you the same amount of goods as it did 10 years ago. Okay, so the demand pool. So everyone has cash and wants to buy the same limited items. Okay, so that's why prices go in an upward direction. And cost pushes. So let's say materials, right, such as oil and wood, they get expensive. So companies raise prices in order to survive. And the result that comes out of play is that, let's say you'll need $1.05 today to buy what cost $1 last year. And then year after year after year, it keeps going up. So it might start off as $1.05 today, but then 5 years from now, that same item could be $2. Okay. So if you're buying an item for $2, what you did for $1 just a couple of years ago, okay, you're now paying double the price. Okay. So unless you doubled your income, then you have to be ready to, one, subside your income for certain scenarios too. So if goods are getting more expensive, but your income hasn't increased, you either got to A, increase your income, or learn how to rebudget your current income. Okay, that's just how inflation works. So for example, just to break it down, in 1950s, let's say a burger, right? Let's say it was 10 cents. Okay, and then today, 2025, 2024-ish, okay, let's say something's $8. That's happening because more dollars have been printed. The more dollars that get printed and created, the less valuable it becomes. Okay, the reason why diamonds, gold, or even take Bitcoin example, are going to be valuable resources is because they are limited. But take the dollar, all they have to do is go up to the printer and keep on clicking print, and dollars will continue to spawn. So yes, we need dollars in order for the economy to flourish and for us to barter at a successful rate. But if humans continue to lead by their flesh and think that printing more dollars will solve everything, then humans will continue to pay certain consequences, such as dealing with more mental stress for having higher real estate prices, higher grocery prices, higher gas prices, etc. So how do we measure inflation in the first place? We got to take a look at the economic news event results. So let's go and let's jump into it. So let's talk about CPI. CPI is going to stand for Consumer Price Index. So for example, let's take a hypothetical basket of goods: eggs, gas, rent, and clothes, right? The government is then going to check the price of the basket of assets that people need in order to see if it got heavier. Okay, so that's what the CPI report is going to measure. A lot of the times after the CPI report occurs, you'll see a substantial move within every single market, whether it be at the crypto markets or the stock market. Okay, and then we're going to have PPI. Okay, PPI is also going to be very important. PPI is going to stand for Producer Price Index, and it's inflation for factories. So for example, if it cost Apple more to make an iPhone, okay,
then that means the PPI would be up, okay? And they will eventually charge you more, okay? Which means that the CPI, Consumer Price Index, would be up, okay? So if it costs Apple more to make an iPhone, the producer price index would be up. Why? Because Apple is the producer. Now, if they're charging us, the consumers, more, then the consumer price index, the CPI, would go in an upwards direction. Okay. So core inflation at the baked center of everything. So CPI minus food and energy, right? Consumer price index. So why? Because food and gas prices swing wildly. Okay. And the Fed prefers core to see the real trend. Okay. So looking at the core inflation of everything is really going to be a much better statistic to look at when it comes to how the economy is actually doing within the full broad picture. But looking at every single news event, such as the rate changes, etc., are really going to help you give you a good measure of how the economy is standing up and a direction of which the market could potentially head to. All right, let's talk about the melting ice cube with everything. So cash is a liability. Okay, so cash is a liability. Okay, this is Stackmode Chris talking to you guys right now on some personal stuff. Okay, ignore the presentation for just a second. You guys should not be spending your cash. Okay, you need to be spending your cash to pay off credit. That way you're going to be able to get more credit and you're going to be able to spend that. Okay, you need to be investing all of your cash. Okay, you should not be spending your cash. Okay, you have to understand that it's a trap. Even when it comes to certain things like taxes, even if when you start touching M's, 6 figures, 5 figures, etc. Okay, if you just save your money and just sit on it and don't invest your money into something that's going to be bringing you into more income, okay, you're going to be getting destroyed on taxes. Why? Because you're just holding more still cash. You're not benefiting the economy and you'll get punished for that. Okay, so please, cash is a liability. The only reason you should use cash is to clear your credit and to build wealth. Don't hoard cash. Don't hoard cash in your walls. Don't hoard cash in your bank account. Okay, your checking account should be pretty much empty. Okay, because why aren't you invested in the assets? Okay, you should have your life together. You should have your credit card. Okay, you should be able to survive off of that. Okay, when it's time to pay off your credit card, take your assets. Okay, when you have your profit, take some off the top. Okay, and you're going to be able to pay off your credit card and keep that cycle and flow going, so your money is infinitely going to be flowing in a river. Okay, the moment you pause your money, okay, the moment struggle starts to seep in. So I'm telling you, keep your money flowing on a river at all times. So a lot of people think hoarding cash is the play. Okay, and I know I'm Stackmode Chris, but I'm telling you guys, if you're going to stack up into investments. Put your cash into investments. Don't just sit on your cash. Don't be having your money on just to put the money phone up to your ear and post on the gram. Oh, that's corny. Okay, put all your cash into straight assets. I don't care if you do real estate, Bitcoin, stocks, doesn't matter. Some of you dividend ETFs. Okay, so many different avenues, whatever you're comfortable with. But I'm telling you, if you want to help your family, even if you die right now, you still want to be making sure some money is being generated. But you can't do that if you just have 100,000 pause in your bank. Okay, but if you have 100,000 in an asset, your family could eat forever off of that. You have 100,000 parked in a dividend, your family could eat forever off that monthly income. But if you have 100,000 parked within a Chase account, Chase is just going to take that money and go trade with it themselves. Okay, so understand that cash is going to be a liability under every single scenario. Cash should be used to pay off credit and invest into assets. Don't get trapped. Okay, so let's say, for example, right, and this is why God says interest is haram in the first place. It's pretty much useless. Okay, so try to invest your money into things that are going to give you a positive equity for curve, because things like a 2% APY, APY stands for annual percentage yield. Okay, so trying to put your money into a account that gives you 2% per year, 3% per year, 4% per year, it's pretty much going to be all of the rest of your time. Especially when inflation comes into play, you have to learn how to increase your income. Especially if you're going to plant your income, at least plan it into something that's going to give you a much higher percentage yield at the end of the year. Okay, so any type of small percentage APY account, personally, I'm going to tell you, it's just not worth it, truthfully. Okay. So for example, let's say you had a saving account giving you 4% APY, right? And inflation is hitting at -6% each year. Okay, the real return is going to give you -2%. You're poor. Okay, you're poor in every scenario. So I'm telling you, keeping your cash
inside of your bank account is a trap. I'm telling you in every single scenario. If you don't believe me, you can go look at your own economic data. But the fact that things only get more expensive means that you need to up your income. Okay, you need to up your income, and in order to do that, your cash needs to always be moving in the river. If you want to have your cash inside of the desert field, that can be you. But if you want to have an easy time in life, I really recommend you guys put your cash inside the river. You must invest in assets that grow faster than inflation to break even and to even see any type of profit for yourself, your kids, or your family. So get in your bag and use your cash, throw it into assets, don't keep it still. So let's talk about the Fed's brake pedal. So fighting fire with ice. So when inflation gets hot, the Federal Reserve raises interest rates, right? Which means borrowing gets more expensive, mortgages go up, credit cards start going up, okay? And spending starts slowing down. People start buying fewer houses and cars, which means that demand drops, okay? Prices start cooling down. And in the long run, if people aren't buying products, then these products that are created by companies that are listed as IPOs on the stock market would not be benefited from that. Okay, the more products that are being bought for a company means that higher earnings reports are going to go ahead and be reported for those companies. Better earnings reports, a lot of the chances it is for that company to keep breaking into new all-time highs repeatedly, causing it to go in an upwards direction. But if people aren't buying any items from these companies and people aren't being consumers, then the stock market could head within a downturn due to the fact that the money is not flowing in the ecosystem as rapidly as it should be. Okay, so as soon as consumerism slows down, then the stock market within the short term becomes affected by that. So let's talk about impact on tech versus value, right? So growth stocks, let's talk about tech. So a bad effect, right? So these companies promise money 10 years from now. So when inflation is high, money in the future is considered kind of worthless almost compared to money now. Okay, so investors sell tech. Okay, but then you're gonna have like value stocks. Okay, companies that sell certain boring things make cash now, so they perform better when rates rise because they have pricing power. Okay, so it really depends too. When certain economic data reports come out, certain stocks are gonna get a lot more affected than others. Okay, take like a Build-A-Bear, for example. Okay, that's a very consistent stock that goes up year after year after year after year. Okay, and it's not really based off of the future value. Okay, it's just people going to the mall and building cute bears, couples, kids, etc. Okay, but tech stocks, they are focused and based off of intrinsic value due to the fact of what they do for the future and how they innovate the future. Okay, so not saying either one's going to be better than the other to invest in, but when it comes to certain periods of inflation, if no one has enough money to buy certain expensive pieces of technology, etc., then a lot of companies will suffer. But then companies who just sell certain things like food might progress during periods of inflation. So it really depends on what time period you're in, which is what's going to determine what batch of stocks are going to be performing the heaviest. So you might ask me, Chris, how do we avoid inflation? Okay, what do we do? So commodities, real estate, and things like Bitcoin are going to be a really, really good way in order to park your money due to the fact that these things are going to be worthwhile and useful a lot of the times. People are always going to need a house. Okay. The reason why people invest into Bitcoin is because it gives you borderless transactions. And especially now as times start progressing a lot more, especially US Americans are more open to traveling to other countries. So instead of having to take their US dollar and put it through transfers, just being able to spend that Bitcoin all around the world gives us a lot better suitability as humans. And then we're gonna have commodities. You know, you're gonna have energy, gold, silver, copper, etc. Physical things that people are gonna be able to buy. So let's break down what these all mean. So commodities, right? So commodities. So if the price of stuff is going up, then owning the companies that produce the stuff is gonna be a direct hedge. Okay. So any type of gold mining companies, etc., especially, okay, because gold is going to be a asset that especially goes up when economy is in inflation, okay, due to the fact that it's something that's going to always be useful and it's a limited resource. Okay, and let's talk about banks. So banks can charge higher interest rates on loans when the Fed raises rates, which potentially increases their profit margin. So be aware of that. Okay, and real estate. So rents tends to rise with inflation and fixed rate debt gets inflated away. So your mortgage payment stays the same, but your income usually rises. Okay. So keep all of that in mind too. So pricing power is going to be the secret weapon for everything, honestly. So can they raise prices? So the ultimate stock market defense is holding companies that can pass costs to customers. So people buy iPhones even if they cost $50 more, right? Due to the fact that it has a high pricing power. Okay, or take a commodity product. Okay, if brand A raises the price of white t-shirts, then you would buy brand B, okay, giving it no pricing power. Okay, but when you're investing into certain companies that have exclusivity, okay, certain companies that only do what they do and puts a smile on many humans' faces, then even if inflation were to occur, a lot of people would just see that as an opportunity to buy as the market going downwards. Okay, so especially certain tech stocks too that still have a lot of future value and have a lot of expectations to change a lot of things in a lot of ways. You know, if they're going in a downwards direction, people are going to look at that more of an opportunity rather than, oh, the stock market is failing, etc. So the bottom line for everything, just wake up, pray to God, be a disciplined person. I want you guys to look in the mirror, feel confident, feel proud of yourself for what you got put up. Okay, feel proud of yourself knowing that you can handle your responsibilities, knowing that you can help your family if things come into play. Okay, don't let your cash melt and don't let it freeze in your bank account either. Okay, own productive assets. I don't care if it's real estate, crypto, shares, dividends, whatever. Find your bread and butter. And if you're struggling to see what you want to invest in, head over to stackmode.net. Stay prayed up to God, keep grinding. I'll catch you guys in the next one. Peace. It's 2026. What's going on? We're back in the Stackmode community, and first week, I just wanted to go ahead and recap and let you guys know what the business is. So we're up about 6% so far in the first week of 2026. I'm going to start doing a recap kind of once a month, just updating you guys on my P&L. Sometimes twice a month, showing you guys like the first week what my plan is, and then showing you guys like the end of the month result and showing you guys progression on how to start an account from nothing and grow it into something. So here, focusing a lot on AI stocks, tech stocks, and stocks that really have stuff to do with the future is really what I'm going to be going forward with this year. So a lot of people like to invest in stocks that have been around for decades and years and stuff like that. Me personally, I like to invest aggressively. This year, I'm going to be really focused on shares as well too, pretty heavily compared to options and futures like I have in the past. I'm really going to be just trying to go hard on shares this year, scouting out good companies, finding good buys, purchasing them, and just holding and sitting on my trades. That's noticing it's been working out for me really well. Been able to grow my account at a relatively fast pace. Been really happy with the profit. And one thing I really like about swing trading shares compared to options trading or futures trading is whenever you're swing trading shares, you can just sit back and chill on your trades. You don't have to worry about time, no expirations, no getting margin called. You could just buy your shares, sit and hold, and that's it. That's all you absolutely have to do. And taking your time on shares, trades, and scouting out the companies that are going to be making the most ample progression within our societies, getting rewarded for that, getting rewarded for your research, for your knowledge, for knowing to not buy at all-time highs and to buy at certain low areas. The reward that you get from shares compiled with the risk factor that's pretty much taken off because say options, for example, I've changed my whole mental mindset. When it comes to options, people can pretty much sign a death contract. Your contract is pretty much locked in. It has to hit or it's going to miss. Okay, that's 100% just what it is with options. With shares, as soon as you buy, your money will fluctuate over time. But one thing about it is that you 100% do own. If your options is not going towards your directions, you're going to be losing. Okay, even with shares, if it's sideways or moving slowly towards your direction, you're still going to have all your capital. If you put down an options trade with not enough time and it's moving slowly towards your price direction, but it's still moving, okay, either A, your price is going to go negative on the contract due to theta and time decay, or your profit's going to be moving extremely slow and not how you want it. Also, another reason why I'm focusing on shares instead of options this year too, is that at a certain point when you get too rich, you can buy all the options contracts for most stocks that you're looking at. Okay, so that's why billionaires have to play shares. So I'm trying to get to the financial point to where I'm one of the best traders. Okay. So personally this year, I'm going to be focusing really, really heavily on shares. Got Bitcoin, of course. And in order to generate income, maybe later down the line towards this year, first couple months within the year, I look forward to playing some futures as well too. Okay. So I look forward to playing some futures within that. And I'm just going to be fully transparent with you guys at all times. I want to just show you guys stats, show you guys what I'm holding, and show you guys how I plan to continue to go forward. So let's go and let's jump into some performance, inshallah. So jumping into the stats here. So compiling an account, guys. Okay, I want to show you guys what it looks like starting an account from 0 to 4 to 5, 6, 7 figures. I want to just be fully transparent with you guys and show you guys how it's done. So starting here, you could see just have this account here, kind of restarted it in July 2025-ish. Okay, started growing it throughout this time, just reinvesting income from business, winning trades, adding over a single time. Okay, and as you can see, P&L is just heading in an upwards direction month after month after month after month. Okay, so your work income, your business income, or even your options and futures income should be funneled back into your account. Funnel it back into your account. Say your business, for example, if you're doing 5K a month in your business, okay, try and take 4K a month of that, okay, and invest it. Okay, you could put maybe 2K in the crypto, 2K in the stocks. Just try and break it down and invest what you're making. So your P&L is always going in an upwards curve. Okay, every time you guys get some money, try and invest. And then as you win trades, okay, there's going to be times where you may lose, okay, but then you're going to win more trades, get in different seasons, and continue to uptrend. Okay, if you feel like you have to invest every single time you get some money, then do that. Do that. Okay, I'm absolutely addicted to investing. I'm going to keep it 100%. Okay, shares is not something that I played past 2-3 years. Yeah, shares is not something that I've played or really looked at. It's really just been a lot of options in futures. I played options on Robinhood, TradeStation as well too. So I have some stats just spread across everywhere. But as far as Webull, I want to just use it for my shares portfolio. And I just want to be just fully transparent with my portfolio and how I plan to upscale it. Okay. So when you guys are growing your account, right, patience is going to be the number one thing. Okay. It's going to take time for you to know how to identify the setups you need to take. I recommend you guys go to Stackmode.net so you guys can get with my trading mentorship, so it doesn't have to take you a long time in order for you to understand what a decent setup looks like. But I went through a lot of unnecessary losses early on within my trading career due to the fact that I was just being uneducated and being impatient and being stubborn. Okay. So completely my fault while I was struggling in the beginning, but once I started getting my foot, I was able to go ahead and progressively increase my P&L year after year after year after year. Okay. So all your business income, all your work income, okay, after your bills are paid, of course, and make sure you guys are reinvesting the profits from the trades that you win. So your income vehicle generating skills are going to either be your options or your futures. Personally, I'm going to go with futures this year. I've played options for a few years and I like just the stability of futures and how you can just turn dirt into diamonds. Same thing on options too, but the time decay factor and stuff. But I don't know. I'll see even this year if I'll even touch futures or options at all, honestly. I might just stick 100% on shares, find little small caps, and just really try and turn up like that. And just continuously do my research on these stocks and these companies and try and catch some stuff at the lows. I'm really having fun doing that, finding the best companies and playing shares. Just really been having a blast. Options, it's really funky with options. Options has a lot of derivatives built into it. Price could be going in your direction and you could still be down due to multiple factors, due to like how much volume a contract has, etc. And all that stuff is just really ghetto, especially when I'm trying to protect and provide for my family. I don't really want little random factors determining whether or not I'm going to get paid. So I like shares a lot, even when if I
inshallah, if God wills, if I cross into like the 10 million plus range, 50 million plus range, I can comfortably trade shares even as a 100 millionaire into billions of dollars. Okay, due to the fact that shares are going to be pretty much always available for the most part. So shares are really just my favorite instrument. This year, I'm focusing completely on shares. 2023, I played a lot of futures. 2024 was a lot of options. Um, Same with 2025 was a lot of options as well too. 2026, let's swap up the game. Going to be focusing on shares. I've been finding some success recently in just investing in little tech stocks and stuff like that. And just I want to just break down and give you guys full guides on what I do to find the stock that I want to play, why I'm getting in said stock, and what I see in said stock within their future, right? So is this stock even going to be half decent in the first place? And as you guys can see, this is completely live. P&L, you can see it moving up here. Market is closed right now though. So yeah, that's going to go ahead and be that. So keep all of that in mind. And let me head over to the positions here. So this is what I'm currently holding. Okay. We got some Path right here. Path is a stock that is been in the works in the limelight recently. I bought some more at like 16, but I sold some a couple of days ago. So we got Path. That's one thing that I am holding. Once again, bought it at around 17.75. Let me get on my higher time frames here. So on my higher time frame, I could see we IPO'd all the way up here at around 90. So I liked that a lot. So I can see a lot of upside room, at least to this 30 area here. They've been getting a lot of funding. I see higher lows being put in. So Path, really, 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 really happy there. Excited to go ahead and take that up as well. Let me go ahead and open up NVTS. So we got NVTS here as well too. NVTS, this is one I'm really, really excited for. So we're currently at 10.31 right now. We got price trying to head up. I bought around 9.89 right here. Okay, and once again, we got price heading in upwards direction. We IPO'd. IPO stands for initial public offering, which is where the stock decided to open at. So we IPO'd at around 22.19, and it looks like price just made this high resistance at around 17.82. So yeah, we're gonna go ahead and wait here, and wait for price to go ahead and catch up, do its thing, and then we should be able to make some good profit on this as well too. So I like this a lot. Big fan of NVTS here. They collabed with NVIDIA, and that NVIDIA collaboration, of course, helped it a whole bunch. Whenever we're collabing with NVIDIA on certain things, of course, that's going to be, pretty successful for us to be looking forward for the most part. So NVIDIA is going to be one of the biggest stocks, and I personally sometimes like to look at stocks that NVIDIA is collaborating with, or say Apple or something like that. Any big world-leading stock, if they're making collaborations with other stocks, I like to look into those too, and then I like to see if profit can be made. So EOS as well too. This is an energy enterprise stock, about around 14.22. Price is trying to push up here. Let me get on my monthly time frame here. So I can see price decided to IPO at this 31 area up here, 0.95. And we just recently created this area of resistance here at this 19.91 area up there. Yeah. So just waiting for price to go ahead and go up. Feeling this area here. And I could see here, even on the weekly, I could see higher lows being put in constantly. Okay, constantly. We got constant higher lows being put in. Okay. And it's really just taking heed, noticing price how it goes up, goes down, goes up, goes down, and continues to just spam that. Goes up, goes down, comes up, comes down, and it'll just continue to spam that over and over and over again. Inshallah, especially since this seems like a half decent stock that people care about. And once again, this is an energy enterprise stock, so I like this one a lot too. Price looking to swoop up. Let me head over to IONQ. Big dog right here. So IONQ, one of the leading quantum stocks. We just had a burst to this area of resistance at this 84 here. So as soon as I saw this higher low get put in, I was like, oh yeah, let me go ahead and hop in those. So that higher low, I loved it a lot. Was a big fan that I put in right here at this area. So as soon as I saw that, I was like, okay, price is looking to progress. And even after that, it came up, made new resistance, came down, and then made some new support. So I like that a lot. Even if I head over to my 4-hour here, let me turn off the poo-poo time frames. Get on my 4-hour here. So even if I hop on the 4-hour here, boom, could see price decided to come all the way up here, fall all the way down here, bounce up, create a new resistance wall here. As you guys can see, we have one push down here, another push down here, and then we got price falling down, making a higher low here. So this low is higher than this low. I like that a lot. Super big fan. And then from there, we can go ahead and wait for price to come up, smash past this area of resistance, and then after that, inshallah, we should be able to go ahead and catch price upwards right after that. Okay. So it's really just about taking your time, being patient, and waiting for the setup. Okay. Remember, you want your gap to be filled to the right. You want market to make the left side of the V, let it fall down, let market make the bottom of the V, and then we catch the right side of the V. Okay. We catch the empty right side of the V. Okay. That's what I want you guys to be doing. Catching the empty right side of the V, okay, like this. Okay, this is what we're catching. All of this whole empty space between this resistance and this area of support, right? This whole area is nothing but profit, right? Nothing but profit, all up here, okay? So 40, plus 40 points left between this area of support and this area of resistance up here. So a very, 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 very long way to go. Intel, check this out, up crazy on this one here. All right, Intel, I got it at around this 35 area. I'm going to go ahead and hop up on my higher time frame here just to show you guys why I got in here on Intel. So Intel, I decided to get in this area. Kind of the same reason, even if I'm on a monthly here. I could still see price making upwards progression for the most part. Yes, we did fall down and make this low here. Although after this low, I put that into combination with some fundamentals. Since all the tariff stuff was going on, the United States needed their own AI chip making company to make AI chips for them, and Intel decided to partner up with other companies. I believe NVIDIA is included. And as you can see, we're starting to get a lot of bullish reaction looking to fill in this V. So we first had price falling down from this resistance here on the weekly. And then we could see price deciding to come up and fill in this gap area up here. Okay, so just go ahead and let price do its thing. Let it fill up. Okay, and just give it its space, give it its time. Okay, let market do its thing. So that's going to go ahead and be that as far as Intel. This trade was super duper simple here, and I bought after this little higher low area here too. After I analyzed this higher low area, I was like, okay, cool, yeah, super duper bullish after this. Check on the daily here too. Even after this resistance, we came down, made another higher low. After this higher low here, saw 1, 2, 3, 4 green candlesticks, bought in. So you can see you're getting a nice V fill here. And on my monthly time frame, we can go ahead and head up to this resistance up here and head up to this 40 area up here to all-time highs. I'm praying. Okay. So that's going to go ahead and be a flip from, let's see, I opened here. So it's about 28 points here. Very great flip. And then Weeble here. You know what I'm saying? Weeble, they're hating on Weeble. We're waiting on this. I'm not going to lie. Waiting on some Weeble here. I just keep adding into this. This is going to be a huge play. Weeble is my favorite broker. I'm using this right now. If you guys are wondering what I'm looking at to look at the charts and do all this at once and see the price right here, Weeble. Weeble is going to be my favorite thing to analyze my stocks on. Well, I use TradingView, but honestly, I might just use Weeble itself from now on because I think it's a cooler interface and you guys can actually see some specifics of everything too, which I really like. So yeah, that's going to go ahead and be that. I pray it helped. That's how I'm opening this year. All the stocks I'm watching, that's the profit I'm up. And yeah, I'm just going to be fully transparent going forward. Just want to show you guys absolutely everything. Not going to be one of these mentors being cringe, making things uncomfortable, and just not trying to be truthful. I always want to show you guys the truth. All right, love you guys so much. Stay prayed up to God. Keep grinding. Catch you in the next one. Peace.
Class, let's go and let's jump straight into it. Today we're going to be talking about mastering financial analysis, and this is going to be the beginner's guide. So what is a financial statement analysis? Financial statement analysis is going to be the process of reviewing and evaluating a company's past and present financial reports, the three statements, to make better economic decisions. And then it involves calculating key ratios and comparing data over time against competitors. So we want to be making sure we know how to read how much is a company making? Does it have a lot of debt? And are we going to be able to profit off the company due to the fact that A, they're putting a smile on people's faces and it's a profitable company, which is going to affect the future? And is it a company that's hiring people and nonstop making profit? Okay, because that's going to let us know that the share price has an incentive to increase. So it's going to be a comprehensive course on analyzing a company's financial health. Let's understand that the financial statements are going to be the bedrock of intelligent investing, effective management, and sound business decisions. Whether you're an aspiring investor, a business student, or a founder, these skills are going to be fundamental and imperative. So let's take a look at past performance. So you got to look at past performance to identify trends, growth rates, and recurring issues with the company. And comparative analysis, benchmarking the company against its closest competitors, peer group, or industry averages. Okay, see how it's faring up. If it's a tech company, see how it's faring up against other tech companies. If it's a healthcare company, see how it's doing against other healthcare companies. Okay, and do it like that. And forecasting, using historical data and current trends to project future financial performance. So it allows us to answer certain critical questions about a business. Once again, how much money are they making? And are they in debt? It's pretty much going to be the two main questions that's going to let us know if something's going to be a good investment or not. So the income statement, profit and loss, and measuring performance. So the income statement is also known as the profit and loss statement, and it measures a company's financial performance over a specific period of time, for example, quarter or a year, and it shows how revenue is transformed into net income. And the core structure, a journey to profit. The statement is constructed like a ladder, and subsequently deducting expenses from revenue to arrive at different levels of profitability. And the revenue sales. Revenue is going to be the total amount of money that's generated from the sale of goods or services. And this is going to be the starting point. And the first thing we want to look at is the company making money in the first place. Let's check the cost of goods, COGS. The direct cost attributable to the production of goods or services sold. And this includes raw materials and direct labor. And gross profit. Gross profit is the revenue minus the cost of goods sold. And this metric shows a company's ability to manage its production cost. And operating expense, OPEX, the costs not directly tied to the production and primarily selling, general, and administrative, SG&A, and research development. And operating income, this is earnings before interest and tax, and this represents the profit generated from the core business operations. And let's talk about net income. Net income is going to be the bottom line. And income is going to be the operating income minus interest expense and taxes. And this is the profit available to shareholders. So the key income statements, ratios. How to analyze the P&L effectively, you got to use margins to see what percentage of the revenue remains at certain profit levels. And gross profit margin is calculated by dividing the gross profit by revenue. And a higher gross profit margin indicates better efficiency in production, which means they can go ahead and scale the business up while still bringing in profit. Okay. So the balance sheet, the accounting equation. So the balance sheet provides a snapshot of a company's assets, liabilities, and the owner's equity at a specific point in time. And it's based on the fundamental accounting equation, which must always hold true. So the foundation assets, okay? Assets equals liabilities plus equity, okay? So this equation dictates that everything a company owns, its assets, must have been financed either by debt or by owner's contributions, which is going to be the equity. So assets, they're going to be whatever the company owns. Assets are anything of economic value that can be used to produce goods or services. And current assets, they're expected to be converted to cash within 1 year. For example, cash, accounts receivable, and inventory. And non-current assets, long-term items are not easily converted to cash. Okay? Property, plant, equipment, and intangible assets. And liabilities, they're going to be what the company owes. Liabilities represent the company's obligation to external parties. So current liabilities, obligations due within 1 year, for example, accounts payable and short-term debt. And non-current liabilities, obligations due beyond 1 year, for example, long-term bonds and deferred tax liabilities. And section 3, the shareholder's equity, okay, and that's the owner's claim. And equity is the residual claim on the assets after all liabilities have been paid off. And it includes common stock and retained earnings, which is cumulative net income minus the dividends paid. So that's how you get that equation too. And so let's talk about tracking real cash. The cash flow statement is often considered the most reliable statement because it bypasses non-cash entries like depreciation and crucials found in the P&L and balance sheet, and it shows the net change in a company's cash balance over a certain period of time. So the 3 core activities, OIF, the CFS is divided into 3 sections that explain where cash was generated or spent. So 1, the cash flow from operations, CFO. This section starts with net income from the P&L and adjusted for non-cash expenses and changes in working capital accounts. This tells you the actual cash generated by the company's normal business activities. So the key adjustment, adding back depreciation and amortization, which is pretty much going to break down expenses on the P&L, but do not involve an actual cash outflow. And working capital changes. Changes in accounts like inventory, accounts payable, and accounts receivable are adjusted here to reflect real cash movements. And cash flow from investing, CFI. This tracks cash used for investments in long-term assets or revenues from selling them. And the largest item here is usually capital expenditures, CapEx, which is the cash spent on maintaining or expanding PP&E. Okay, so interpreting CFI. So a negative CFI, right, which is going to be the cash outflow, is often a sign of a growing, healthy company that's investing heavily in its future by purchasing equipment or new facilities, looking to scale its business outcome and business income by putting all the profit back into the business pretty much. And a large positive CFI may indicate a company is selling off core assets, which can definitely be a red flag, okay? Which means they're going broke. So if a company's going broke, that's not a good sign. And it's a good sign that the stock might actually crash within a negative direction. So check a look for that. So turning data into insights. Ratios allow us to standardize financial data across companies of different sizes and asset-specific aspects of their health. Most notably liquidity, which is the short term, and solvency, which is the long term. And liquidity ratios, can we pay the bills? These ratios measure a company's ability to cover its short-term obligation using its short-term assets. Generally, a higher ratio is better, but industry context is crucial. So it's current ratio. The most common liquidity metric is it compares a company's total current assets, which is its cash, receivables, and inventory, against its current liabilities, which is its payables, short-term debt, etc. And the ratio below, let's say $1, is usually a 1 sign. And the current ratio is calculated by dividing current assets by current liabilities. So, quick ratio, the asset test ratio. A stricter test of liquidity, excluding inventory from current assets, as inventory can be slow to convert to cash. And this ratio focuses only on the most liquid assets. And the quick ratio is calculated by subtracting inventory from current assets, then dividing the result by current liabilities. So, solvency ratios, long-term survival. Solvency ratios gauge a company's ability to meet its long-term debt obligations, and whether it is financially sustainable. Excessive debt can cripple a business during economic downturns. So debt to equity ratios, DE. It compares the amount of debt financing to the amount of owner investing financing, and a high ratio indicates a company is highly leveraged. And the debt to equity ratio is going to be calculated by dividing total liabilities by the total shareholder equity. Let's talk about the interest cover ratio. It measures the company's ability to cover its interest payments using its operated earnings, the EBIT, and the interest coverage is calculated by dividing EBIT by interest expense. And a ratio of 1.5, for example, or higher is generally considered safe, but the higher is going to be better. So putting it all together, let's talk beyond the numbers. While the financial statements provide the objective data, a world-class analyst always incorporates qualitative analysis to provide context and foresight. And let's talk about the qualitative factors, the moat. These are non-numerical factors that determine the longevity and strength of a company's competitive advantage, its economic moat, and management quality. It assesses the track record and reputation of the executive team and asks, do they make rational capital allocation decisions? Are they investing their profit properly? Okay, and asking those questions is going to be a good thing to know before we just put money into an investment. And doing the industry analysis. Is the industry growing or is it shrinking? Okay, tech industry as of currently in the 20th century has just been booming, for example. And what are the key competitive dynamics? Okay, is there any threat of new entrants? And what's the pricing power of it? Okay, and competitive position. Does the company have a sustainable edge? Okay, patents, brand recognition, low cost reduction, and how many smiles does it put on people's faces? And the small summary of the three statements. Okay, the three financial statements. Okay, one, your income statements. That's going to be the performance over a period, and it focuses on the profitability. Okay, for example, margins, how much money a company's making. And the balance sheet, it's going to focus on its assets, liabilities, and equity at a point in time, and it focuses on resources. And then we have the cash flow statement. It tracks cash movements over a certain period, and it focuses on liquidity and funding activities. Okay, so look at all of them. Okay. So your goal is to cross-reference the three statements. For example, if the net income, okay, is high, but the cash flow from operations is low, it suggests that the company is booking sales, but not collecting cash. That's a critical finding, okay, meaning that it's sinking, okay? So figure out what you guys want to invest in, okay? Stay prayed to God, keep grinding, and head over to stackmode.net to learn how to trade and invest. Peace.
The strong reasons why market's going to be going in upwards directions is due to the fact that these stocks help the United States economy. That's going to be the strongest reasons, and there's a reason why the billionaires within the trading community are people who play United States stocks companies, whether owning shares and options, such as Warren Buffett, etc. Because it's going to be, honestly, the easiest market to play. Forex market is very sideways. Futures, you can't hold overnight unless you have a certain amount of margin. So the United States stock market and even cryptocurrency is going to be great realms to just buy and hold your money. Okay. So let's go ahead and continue the lesson here. So these stocks aren't just random stocks listed on TradingView or these brokers so people to just make invisible money. These stocks are real companies that people actually work at, okay, that we might have worked at in real life, okay, and they generate real income. So since they generate real income, they can also employ people. So they can employ people. And when they employ people, these people pay taxes to who? The government. Okay, so as long as these companies are making money, okay, and people are working at these companies, then the government will continue to make more money. So these companies being profitable, these companies doing well, these companies making money, they help out the government. And anything that helps out the United States government will be pushed. Okay, that's just what we know about trading and just fundamentals of things. Okay, if it helps the government, it's going to be pushed. Okay, there's a reason why cryptocurrency didn't get a big push until SEC laws and stuff like that were regulated. Okay, so until the government regulates it, and unless the government has something to do with it, it's not going to have too much value until then. But every single one of these stocks boost the economy since they put jobs out for people. Jobs include people who pay taxes. Taxes go to the government, making the United States more wealthy. Wealthier we are, more power we have over other countries. Okay, so it all starts from just simple things like wealth. So options and the fact that these shares and stocks go up in an upwards direction is really important. Okay, it's way more important than people even think. Okay, so market's not just oh, I'm going to come on here and just make some money. Okay. It's real life stuff happening on these charts, and really understanding everything is going to help us understand what we're going to be trading for. So, market's going in an upwards direction. So, this is why we're going to be focusing on call options. Okay. So, as we know, call options, they pay you whenever you think price is going to go in an upwards direction. Okay, if you speculate and you're buying a call option and you think price is going to go in an upwards direction and you're correct, then you get paid. Okay, so that's going to be a call option. And the reason why we're going to be focusing on call options is exactly what I just broke down. These stocks have incentives to go up. There's also going to be laws such as the short sale restriction that are going to be in place too, to make sure that these stocks don't just fall flat down to zero. Okay, there's a reason why decades of these stocks of going in an upwards direction has been a thing. Okay, so it's about letting go of all the fear, trusting God, not having any weird anxiety of, oh, what if it just falls down to zero and it's time to start just investing and being a boss. Okay, so we're going to be talking about the proper levels to play at. Okay, and we're going to keep talking about why we're playing at these levels and what we're buying. Okay, I always want you guys to understand why. I never want you to just be like, okay, just do X, Y, and Z and just do this. It's going to work. No, I want you to understand the deep reasoning why this works, why people are billionaires buying just shares and call options. Okay, so it's about finding things that are undervalued and catching the sweep up. Okay, every company wants its share price to go down. It doesn't make sense to really play puts due to the fact that market is not built to go down. Exactly. And even when market does go down, exactly. And even when market does go down, people are quick to buy the dip. People are quick to buy the dip, and market will recover right back to wherever it dipped from heavily. It'll fill it right back up. All it is just a discount. All it is just like clothes and cologne and whatever. It's just going on sale. That's all it is. Market just goes on sale whenever it falls down. So puts don't really make sense to purchase, especially when you get on your higher time frames, especially when you're playing companies that have good revenue and actually make money and the share price increases year after year. Playing puts, not only are you going to have significantly shorter trades, your take profits aren't going to be as easy to put down because one, you can't predict where the market's going to bounce at. Okay. So you can't predict where the market wants to stop at all the time. Now, shorting and stuff like that comes really from Forex traders and is something that's seeped over to the stock market. But the Forex chart and the stock market chart is completely two different worlds. Okay, stock market just goes up in an upwards direction. Okay, and that's just the truth of it. Okay, if I pull up the Forex chart here, Forex is extremely sideways. Okay, you have price action all the way up here. We got price action all the way from here from 1977. We got all types of stuff going on. Okay, but if I click on the fluffy stock market, it's literally going up in a straight line. Okay, it's almost impossible to not make money in the stock market. This is why I'm so passionate about teaching in these videos. I'm starting to realize that they've literally made it to where we can just get money for free. It's welfare. It's genuine welfare. Instead of making stupid decisions, trying to flex for people who don't care about us, trying to make decisions that are just way too fancy right now instead of staying down and investing. Okay, those are the things that keep people back from being financially free significantly early. The opportunity is here for us to just invest money and infinitely turn your money into more money. This just goes up in a straight line. It's impossible for anyone to not make money on the United States stock market. It's impossible. Okay, and it's about just making really good decisions. So price has an incentive to go up. So forget put options. We're focusing on calls. Okay, we don't want to be shorting the stock market. There's a reason why you can't even short the stock market on a lot of brokers too. You also have to think about that from a logical perspective. Most people on most brokers cannot short with shares. Okay, they can't short with shares. They can only purchase shares. So everyone's trying to just buy the stock. Also, CEOs are trying to be richer than the next CEO. So they want their company's share value to be going in an upward direction. They want to be classified as a billionaire. So also more incentivization to go in an upwards direction. And There's also something called dividends. Dividends are going to be what the stock pays out. So the more you invest into a stock, if a stock is making good income, it'll pay out what's called a dividend. And that's going to be money that it pays out back to the shareholders. Okay, so it's like, you know what? Thank you guys for investing in us. Here's some money back. Okay, here's your reward. And that's what it's going to go ahead and say. Okay. So if a company has enough money to do that, that means that it's profitable. If it's profitable, it's most likely going up on the stock market. Okay. So there's incentive for it. The more profitable something is, the more it's going up on the stock market. Hence why when a company makes a big deal, it just shoots up. Okay. Because it's now more valuable. Okay. The more money and the more valuable something is, the more of a high share price it'll have on the stock market. Okay. So cool. That's keeping those things in mind. So now let's talk about when a setup is going to be good to play and when not. Okay. So let's say, for instance, here, I have this area up here. Okay. One area that we're not going to play at is going to be called all-time highs. Okay. We're just not going to be playing at all-time highs because, one, we're trying to catch a sweep up. Okay. So all of your setups will look like a V. Every single setup will look like a V. Okay. And what your profit is going to consist of is the right side of the V. Okay. So the left side of the V is going to be the resistance. Okay. This is where price is falling in a downwards direction. So you can see here, you could see price creating resistance here. Okay. This is the left side of the V. Price is falling down. Okay. The left side of the V. What we're looking for is playing the right side of the V. Okay. We're playing the right side of the V. All of your trades are going to be the right side of the V. Okay. You're going to be buying call options, expecting price to sweep up. Okay. That's what you're going to be looking for. So how can you play the right side of the V if price is falling the left side at all-time highs? You can't. Okay. So let me show you a good example of an actual good setup. So this is how we find a setup. What I'm going to be looking for is a couple of things. One, I'm going to be looking for higher time frame areas. So I'm going to make sure that I'm on my higher time frames. I'm going to make sure I'm on my weekly time frame first. My weekly time frame is going to help me see everything. It's going to be my eyes. I'll go from my weekly time frame to my daily time frame to my 4-hour time frame. Okay, so you're going to start off on the weekly time frame first, due to the fact that the weekly time frame is going to help you, once again, see everything. It's going to be like an eagle eye, okay, because tunnel visionly when it comes to trading can be extremely bad. Okay, you want to be able to see the full picture and not just what you're seeing on a smaller time frame. You're then going to go to the daily just to see the picture painted a little bit in more detail. And then you're going to go to the 4-hour to see any hidden candles. So what we're going to make sure is that whenever you're on your 4-hour time frame, and this is why we can't just use the daily and the weekly, we have to make sure our extended trading hours is on. So as you can see, the daily and the weekly don't have that. That's due to the fact that they don't show pre-market hours because the weekly and the daily go off of 24-hour blocks. So that's why we still need our 4-hour time frame. And then we're going to be able to turn on extended trading hours to see all the true candlesticks that we're missing. Okay. So so yeah, extended trading hours always needs to be on. So we're going to go from the weekly to our daily to the 4-hour. So let's go ahead and let's mark out a setup, for example. Okay. I'm going to talk about what I'm going to be looking for, and then I'm going to jump onto the charts. So my setup is only going to consist of 2 things. I'm only going to play setup 1, which is going to be a support mirror. Okay. If you see price bouncing at an area of support, you're going to be good to go ahead and purchase there. Okay. If you see price bouncing at an area of support, reacting from another area of support, okay,
that's going to be a good area to purchase. Support is going to signify an area of demand where people want to buy the price. So it's going to indicate where buyers step in. Okay, so buyers step in an area of support. And we're buying call options, meaning we get paid when price goes in an upwards direction. Okay, so we want to be buying at areas of support. Okay, so if you see an area of support mirror itself one after another, that's going to be a good setup. Or it'll look like this. Sometimes you'll have an area of support. Price might run down through it. Okay, it might not bounce at the other area of support. It might break below it, but then it might come back up and bounce at the support again. Okay, even this would be considered a support mirror. Okay, so even if price runs down underneath the first area of support, if price decides to bounce at the area of support again, that's a clean support mirror, I like to call it. Okay, so you'll either see one area of support bounce right after another, or you'll see an area of support mirroring an area of support from the past that maybe didn't get reacted off of immediately. Okay, so your setup will either look like this, or it'll look like this for criteria number 1. And criteria number 2, very simple. It's when an area of resistance gets broken, and an area of resistance is going to indicate where sellers are. So resistance indicates where sellers are due to the fact that people have too much supply. So that's why resistance gets created in the first place. There's too much supply. When people have too much of something, when they've made too much money, they're like, all right, you know what? It's time to close. I'm out. Okay. And then they're going to go ahead and close their trade simultaneously. And a wave of enough people doing that is going to create what's called resistance. Okay. That's going to create resistance. So let's continue on here. So if an area of resistance decides to get broken past, okay, if an area of resistance or support gets broken past, we know that's called a breakout. So resistance getting broken past and turned into support is going to be called break and retest. Okay, break and retest. Okay, waiting for resistance to turn into support after it's been broken. So it's when you're waiting for the resistance to turn into support after it's been broken. Okay, if you see this, you can take the trade pretty much safely. Okay, we're going to talk about some certain criteria, how to read daily closes, etc., what a close is. But let's talk about some more fundamentals we are going to be looking at. It's important to have a logical mechanical process before we put down any type of size or money. Okay, did price do this? Did price do that? Having a large checklist is going to save us a lot of money when it comes to making any type of mistakes on the market. Okay, so one thing we're going to pay attention here too is the earnings. Okay, whatever broker you're on will most likely tell you, but before you put down a trade on whatever stock you're looking at, make sure that you look at the earnings. The earnings are going to go ahead and let you know when the report is going to come out, and the stock can significantly make upwards or downward sweep when these earnings reports come out. So we want to be making sure that earnings aren't anywhere near. Okay, if earnings are 7 days or less away, and you're trying to don't open a new trade. If you're already in something, it's fine. But if you're trying to open a trade and earnings are 7 days or less away, don't do it. Okay, because the price action is already going to be weird, and people are going to be wary of the same thing. They're going to wait for earnings to happen first and then make the trade. Okay, so if you see earnings a week away, 7 days or less, don't take the trade. Okay, just don't take it. Now, if earnings is far, you're fine. So those are going to be the criterias we're going to be taking. Let's talk about it on the chart. So once again, we're always going to start off on the weekly time frame, doing what's called top-down analysis, TDA. T stands for top, D stands for down. A stands for analysis. Okay, top-down analysis, TDP, TDA. Okay, so what we're gonna do is I like to always mark out, okay, where would I want to close this trade if I got in? Okay, I can see price made all-time highs up here. So let me just go ahead and draw a zone up here. Okay, and I like to just eyeball. Okay, we don't use any indicators. We're not going to need any indicators. What we're going to do is pay attention to straight candlestick price action. Just like I told you, price should be doing the right side of the V fill. Okay, so we can see price decided to fall in a downwards direction here. Okay, this is going to be the left side of the V. Okay, and what we're doing is catching the right side of the V. Okay, we're going to be catching the right side of the V. So let price form the left side of the V, and then we're going to get in and catch the right side of the V. Okay, so you can see price maybe potentially trying to make a low right here. Okay, potentially trying to make a low right here. Let me go to my daily. Okay, I can still see price making a low right here. Okay, I can see, okay, I'm on my daily time frame. So I'm gonna get on my weekly, put an area of resistance, put a zone around it, okay? Because I know, one, price has an invitation to go in an upwards direction, okay? It helps the government, helps the economy. It's trying to go and be the most profitable and helpful company, okay? It's a lot of recognition, and as human beings, we care about things like that, okay? So recognition will be coming with being the most profitable and best company. So in order for that to be credible, share price has to be decent. People have to be investing into it. So let's increase the share price. Okay, that's what people are hoping for. So let's drop better products so people buy from us. Okay, is what people are really hoping for who are behind these companies. So let's think like them. Okay, so you can see price deciding to make a bottom here. Okay, so then I'm going to start on my weekly. Okay, I can see just this large gap of space here between here and up here. So here I have the left side of the V. Okay, I have the left side of the V. Price already created it for me. And then price already drew out the bottom point. Okay, so now I'm gonna go to my daily here. I can see price drew out the bottom point for me here. Okay, now we can see price potentially wanting to fill up the V. Okay, so what we're going to be doing is catching the whole right side of the V. Okay, so we can see price made the left side of the V already for us. Okay, we can see it. It made it left side of the V. Now, price made a low already. I can see on my daily candlestick, and this is what I'm going to be looking for. Okay, no indicators, no nothing. If I'm on my daily and I see price bouncing from a low, okay, with a large gap of area from an area of resistance, and I see price making multiple daily candlesticks go up in a multiple color stick direction. So I can see here green candlestick, green candlestick, green candlestick. I see multiple green candlesticks in a row. Okay, multiple green candlesticks in a row, just like we have multiple red candlesticks in a row going down. If I have multiple green candlesticks in a row going in an upwards direction, and I see a large area looking to be filled in to fill in the right side of the V, okay? Even if price falls down at the resistance and goes down to all the way down there, we don't care, okay? Because we can clearly see that price wants to try this area of resistance again. It's like, hold on, how am I going to fall down right here? I'm not with that. Let me try it again, okay? And it's going to try it again. And when it goes to try it again, that's going to be our profit window. That's our opportunity. We're not here to get the best entries in the world. We're not here to predict the most high point of the market, the most bottom point of the market. We're here to react. We're here to come onto the market, scroll down, see, oh, market made a low right here, and it make it high. It looks like it wants to try this high again. Okay, it might want to break this area. And that's what you do is you react within the market. Okay, and this is going to be the trick on options. So option sellers, right? Before we jump into the trick and why we're going to do what we do, let's talk about it. So option sellers, what they're preying on is that people make some ridiculous gambling dice decision, okay? They want people to make some just fried, horrific decision.
So options aren't just spawning out of thin air. There's a reason why certain stocks don't have any options attached to them. Because one, nobody is selling the options in the first place. Okay. So options are not just spawning out of thin air. It's called trading for a reason. Once again, it's called trading for a reason. Okay. Contracts have to come from somewhere, and they come from people turning their 100 shares into a contract and then selling it. Okay. And what they're trying to make money from is that we don't win. Okay. They're trying to make money hoping that we're wrong. Okay. But we're trying to make money hoping that we're right as options buyers. Okay. So here is how, as an option buyer, how we can make some good profit, right? Let's talk about it. So as an options profit buyer, okay, of course we want to make some profit and some money by being in the right direction of the trade. Okay. So obviously we're buying calls, so we want market to go in a upwards direction. Okay. So in order to outplay the option sellers, we're just going to play not ridiculous bets. So you could see we just did all that criteria to determine if price was ready or not. We looked at another trade and saw it was at all-time highs. We would not buy because that's the left side of the V. We're looking to only purchase the right side of the V, which looks like it wants to be filled up here. Okay, let's catch the rest of the candlesticks and farm the rest. So what I'm going to do is come up here to the T. Okay, and I'm going to be able to see the options list. Okay, so the furthest to the left here would be the closest, and the more right I go will be the furthest. So what I'm going to be focusing on is called an options leap. The reason why people say options are so risky and etc. is because they're just not playing it right. Everything in the world is risky. Okay, you're driving on the road every day is risky. So we're not going to be scared. We're going to be smart. So options leaps. Okay, this is what we're going to be focusing on. Leaps is a contract that I say you hold between 3 months to 2 years. Okay. Any contract that you hold between 3 months to 2 years is a leap contract. Okay. So let's say this contract here, right? Let's say I bought this. Let's say I analyze this area of support, right? Let's say I'm like, yeah, price make the bottom of the V here. Okay. Just like a V, a V has a point. Okay. Let's say I like the bottom V here. Let's say I want to go ahead and catch the right side of the V, right? Let's say I believe in this. Okay, I'm like, you know what? I'm on my daily time frame here. I can clearly see market's been trending in an upwards direction for quite some time. Okay. You can clearly see we're just sweeping up year after year after year. You know what? This is a profitable stock. Oh, okay. Cool. We're beating earnings, beating earnings, beating earnings, beating earnings. I like that. We're paying out dividends to people. Okay. I like that. This is going to be a comfortable play. So I would go ahead and purchase a contract that makes sense. Okay, so this is going to be some sauce right here. So I'm going to buy at least a year out if I wanted to. Okay, so I would buy for a year out. Okay, or I could buy 2 years out to be even safer. Okay, so let's say I want to buy 2 years out. This is how you know what's going to be the best contract to buy. Okay, so what a lot of options people get destroyed on is the theta. Okay, and what theta is a Greek. Okay, so options has Greeks. We have delta, theta, and gamma. Okay, theta is going to be the Greek that equivalates to time. Okay, so whenever you think of time, think of theta. Okay, so once again, whenever you think of time, think of theta. So in order to outplay the theta, we need to make sure that we have plenty of time on our contract, so the theta and the Greeks don't destroy our mental patience, okay, and make us want to crash out. Okay, so instead of worrying about, oh man, I gotta close my trade in 2 seconds, like I gotta close my trade in a week. Nah, you have years on it to hold. Okay, and you can see price is already bouncing in an upwards direction. So what you're gonna do is whatever the current number is of your options contract, okay, whatever the current number is, and your options broker, wherever you're on, will always tell you. Okay, it'll always tell you, it'll be in the middle of whatever options chart that you're looking at. Okay, the best contract to purchase at all times, okay, is going to be the contract one number above, okay, we're going to purchase the contract one number above the current price. Okay, so if current price is at 26.20, right? What we're going to go ahead and do is purchase the 27 contract. Okay, that's all we're going to focus on since we're buying a call contract. Okay, because we only want to buy in an upwards direction. Okay, just like we broke down, there's reasons why stocks wants to go in an upwards direction and why they go up year after year after year. Okay, and why people get rich by just turning their money into more money by investing into companies that put the money in the government's pocket. So you can get rich by investing in companies by putting money in the government's pocket, inshallah, if God wills. So we're going to go ahead and focus on the call side, since that's the side that pays us whenever options are going in an upwards direction. Okay, so we're then going to focus on the current price. Okay, so let's say current price of this stock is 26.20. Okay, we just did all of our verification. Is price ready on the right side of the V? Okay, if price is ready on the right side of the V and already made a bottom point, we're ready to go ahead and purchase that. We're going to go to our options. We're going to make sure that we're buying at least 3 months to 2 years out, depending on how far your take profit is. Okay, my take profit here, let's say I did on the weekly, I think this gap is pretty big. So just to be safe though, don't be cheap. Okay, be safe. Okay, being safe is what's going to get you wealthy within trading. Okay, focus on the trades that aren't going to lose you money. Okay, people want to trade zero DTEs, trying to make some money feeding for bread, but they end up blowing up their account over and over and over again, not making anything or making some money and then losing it all. Okay, because it's not safe, it's not consistent. So play options in a safe way, buy 2 years out and buy the number one above current price when it's already trending in a positive direction. So this way, you're going to get your bonus points too. So this is why we use our higher time frames for options too, because we want to be catching the whole move. Okay, so we're buying years out and catching the whole move. So the higher time frames is going to show us the whole move here. So I can see I would personally close at the area of resistance. Okay, you always want to fill in the V structure. This is why the V structure is important. Okay, price will make the left side, you catch the right side. Okay, and you fill in the V structure. Wherever the V started at, slanting to the downside, is where you close at. Okay, so it's going to be where you close at. So price started resistance here, fell down, made a bottom point. I'm going to keep my profit window is going to be the remainder of the V. Okay, the remainder of the right side of the V. Even if price was up here, okay, I would still be able to catch the remainder of the V up here. Okay, the earlier entry that you see is just the more money you're going to get. But even if you enter later, that means that you have a higher probability of being right. Okay, and we're here to play safe. Okay, you want to focus on the trades where you're not going to lose. Okay, you don't know if price wants to bounce down here. But once price has showed you that it wanted to bounce down there, it's a lot easier to get in and make your decisions based off of that. Okay, so let the market react for you. You don't have to predict, just react to the market. Okay, react. Okay, market decided to make a heavy area of resistance here, close at the heavy area of resistance here so we don't get reversed on here again. Okay, we don't know if price wants to reverse right here. Okay, it might not or it might want to. All we know is that price wants to go and give it another whirl, it looks like. Okay, and we're just going to take advantage of that and be happy with that profit. Don't ever try and 50-50 the breakout. Okay, your take profit will always consist of an area of resistance above current price, or it'll be an area of support above current price sometimes. Okay, sometimes your setup's going to look like this. You're catching the right side of the V and you're closing at the area of support. And that's because, just like the opposite, resistance can be broken, turn into support. Support can be broken and potentially turn into resistance. Okay. So we want to keep that in mind and trade safely. Yeah, it's really just taking your time and just letting the market react and do its thing. Okay. So these are going to be the two things we're going to be looking at. Okay, close at areas of resistance above current price, which a lot of the time it'll be, or support above current price. since resistance can be formed there and you want to get in before market falls down. Since we're focusing on calls, we want to get paid whenever market goes in an upwards direction. Okay, so we don't want market to fall down. Okay, so keeping all this in mind, catching the right side of the V, we know what contract we want to purchase. Okay, I'm gonna go 2 years out. Okay, I'm gonna look at current price. And even though my take profit up here is 29, I'm still gonna look at current price and buy the contract one above. I'm still gonna buy the 27 calls contract. The reason I'm not gonna buy the 29 calls contract is because options, once again, you get paid based off of predictions. So even though our chart closing is gonna be at 29, we're gonna buy the 27 contract because all the profit we get is gonna be bonus points. Okay, 27 is the number before 29. So even if we bought 28, you would get bonus points too. So any number of a contract that you buy before your take profit will be bonus points. So it makes sense to buy the number one above. So even if take profit was 35, I would still buy 27 just because 27 is before 35. And I would get all the bonus points. I would get, and the more points that you go, so if I bought at 27 and I closed at 35, it would get bonus points per number. So it would be bonus points at 28, at 29, at 30, at 31, 32, 33, because I'm so right. Because I'm right way before. Right? So because I'm so right, it just pays you out stupid amounts. And that's how people just do nasty flips. And I've done some nasty flips on option myself. Okay. So let's talk about another setup here. Okay. So you're always going to want to be looking for price to be forming at a low. Okay. You want price to have made a low already. All right. And you want price to have made a high too. Okay. So in this instance here, market's still looking for its low. Okay. It hasn't quite made its low. It tried right here. And this is why I like to look at the daily here and wait for multiple candlesticks going in a green upwards direction. Okay. So you can see here, we wouldn't have gotten faked out by that. Okay. So this right here, say this low that people tried to buy, this is why we don't buy what's called falling knives. Okay. You don't know where market wants to bounce at. Okay. You can have a good idea of it, especially when it comes to the upside. Okay. And you don't know if market wants to break out. So if market creates resistance here, I'm going to close at this resistance. I'm not going to say, oh, market's not going to fall down there again. No, I'm just going to close at the resistance. Okay. It's a lot easier to play like this and play to the upside than it is to catch ultimate bottoms. Okay. Just wait for the bottom to form and then play to the upside that's already been formed. It's a lot easier. Okay. So instead of trying to catch every single bottom and then price keeps falling and then you're losing money catching a falling knife, wait for the bottom to form. Okay. Until I'm on the daily time frame and I start seeing green candlesticks going the upwards direction, I'm good. Okay. I want to see multiple green candlesticks in a row before I take any type of trade. Okay. So take some type of low like this, right? If I see price make a low and I see multiple green daily candlesticks in a row going up, I'm like, oh yeah, price wants to do that. But I can clearly see here, like an area like this, price just faked them out here, okay? Price tried to go up, but it's red, okay? Red candlesticks, and they're very sideways, and then market just dumped, okay? But then we have a low right here. Green heavy candlestick. I'm sure this candlestick was green too before the close. And then green candlestick, okay? Super heavy low right here. Green candlestick, green candlestick, green candlestick. Okay, even right here. Green candlestick, green candlestick, green candlestick. Right here. Okay, same thing. Green, 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 green. In a row. So if you're not seeing at least a couple of green candlesticks going in an upwards direction on the daily, then that low just isn't true. Okay, the low is just, it's pointless. Okay, it's what you want to be looking for. Look at this low here. Okay, this low worked out, it formed, and then we started seeing green daily candlestick. See, I would have answered on the second one. I never answer on the first one in the zone because I don't know if price really wants to bounce there. But if I see another green candlestick and then another green candlestick, I'm like, oh yeah, that's cool. But price, it was pretty much close to the area of resistance here, and then we'll see if price wants to continue from here. Okay. So price decided to fill in this area of resistance right here. Okay, we have this area of resistance right here, and then price falling down right here in this zone. Okay. And then one day price will try and break this area potentially, and then we'll try and go up to this area of resistance, I assume, up here. Okay. So could wait for price to find another V and then take the whole side upwards like that. Okay, but right now it's just not ready. Okay, market is dumping on this, and it gotcha. So here, gotcha. So if I bought right here, I will close my first contract here, just because price keeps spamming this resistance. Okay, I would close, close the first contract here, and then if I have more, then I'll go ahead and I'll close the next one up here. And this is why I buy years out though. But even if I, yeah.
If you guys are struggling to invest or save some money, this is going to be how you can get into stack mode. Get ready.
Class, what's going on? We're going to be talking about stacking up cryptocurrency, stacking up that Bitcoin, that Ethereum, XRP, etc. All right. We're going to talk about some things, how we invest, what DCAing is, and how we're just going to get into stack mode. Okay. Successful investing is not about timing the market, but it's about time in the market. An unwavering mental discipline. The discipline is going to be the foundation of stack mode. So have some strong commitment to your goals. If you're going to tell yourself, I'm going to put away X amount this month, do that. Stay down. I don't care if you don't got to go out with your friends. If you don't want to eat the food you don't want to eat, do what you need to do. All right. When you're in stack mode, you got to reject emotional trading, emotional decisions, and things that you don't want to do. Okay. You want to go cop that cake. Okay. It costs $5. That could be $5. That could be stacked into some cryptocurrency. You got to rewire your mindset completely. Okay. You got to be prepared to rewire your mindset completely. All right. So buy assets regardless of the market volatility. Okay. This mimics a consistent practice. Okay. I'm telling you guys. All right. Just invest. Okay. Sometimes people might be thinking like, oh, what if it's an all-time highs? What if it's this or that? Certain things you don't trade like other things. Okay. Now, if you're trading something like Forex, futures, or options, right, be extremely strategic with where you're buying. And when market makes a nice dump, okay, you start seeing some support getting formed, buy the dip. Okay, buy the dip. Okay, if everyone's thinking, oh, we're in the worst bear market of all time, if you just start seeing a nice curl on your higher time frame structure, take that. Go ahead and take that. Get in, start stacking up some cash, and watch your money grow. Watch it turn into more money over time. Okay, but it's not gonna happen if we don't start trying, if we don't put in things now. Some of you guys might have $20 chin in your checking account right now, right? Put $15 in there. Okay, keep $5 in there. Stay down. Do what you need to do. Okay, keep your checking account empty. Keep yourself broke. All your money should be planted in some type of investments. Keep yourself broke. I'm telling you, it's gonna change you guys' mindset entirely. Okay, and the biggest threat to a portfolio is really gonna be greed. Okay. So one thing that is going to be extremely important though is one, knowing when to close, knowing when the trade is just really finished, okay? Knowing when you just need to exit for some profit, take some money off the board, etc. Okay. And fear, okay? Fear can be absolutely destructive, okay? And we're not going to have that, okay? That can cause certain things like anxiety, okay? Which can mentally make you do horrific decisions, such as closing your trade early, okay, destroying your whole risk reward, destroying your whole goal of the trade in the first place. Okay, so we're not going to do things like that. Okay, we're going to change our mentality. We're going to come stronger. We're going to be better. Okay, we're going to ask God for strength, and we're going to go forward. Okay, even if you do make a mistake out of greed, even if you held the trade a little too long, and then you wake up the next day, your profit's a little lower because you got reversed on, it is what it is. Learn from that mistake, journal it, and don't let it happen again. Okay, you're good. And make sure you guys are trading things that are halal. Okay, you guys want to be trading good things, clean things. Okay, because when you start trading things that the worldly community just doesn't support of, you can start seeing a large decline in assets. You've seen it with certain stocks like Target, for example,
and things like that, where points has some dramatically dropped due to the fact that the world just didn't agree with certain decisions that were made. Okay, so be aware of that. And have some delayed gratification. Okay, make it fun. Stay down. Okay, stay down. Go on like a 6-month run. All right. The core principle of investing is buying assets instead of buying random items. Okay, that's what you're going to be doing. Make sure you guys are buying items and things that are going to be making you more money in the future instead of just buying random miscellaneous items. I'm telling you, your money's going to get spent either way. Okay, so don't just keep it stacked up inside of a bank account. Do something with it. Plan it in something to where it's difficult to pull out, to where you actually have to press buttons to withdraw. I'm telling you, if you have it sitting in your account, you might do something that's not going to make your money turn into more money. Okay, so every potential consumer purchase is viewed through the lens of opportunity cost. Be like, dang, that could have been some crypto. That could have been some Bitcoin. That could have been some Solana. Dang, that $20 on McDonald's again. Dang, that could have been some Bitcoin. Okay, you do that 3 times a week. You go out on the weekends. Okay, you go out. Okay, you get McDonald's Friday night. You do it again Saturday night. That's $40. Okay, 2 weeks, 3 weeks of that, it's $120. Okay, that you guys could have put away. That could then grow, turn into easily $200. Okay, within a couple of months. Okay, a couple of weeks even. Okay, and then that grows, and then you put in some other cryptocurrency, then that grows. Okay, just the fact that your money is making you more money instead of you going home buying one big batch of groceries for significantly less. Okay, because how do you think these food places are making money in the first place? All right, they're buying large bulks and selling it to us for an upsell. That's how just business works. So instead of getting flipped on, okay, because you're in stack mode, you're not getting robbed, you're not getting flipped on. Okay, inshallah, you're not getting finessed, you're not getting tricked out your spot. Yeah, you gotta have your head on, have it straight. Make sure you guys know exactly what you're investing into as well before you put $1 into it. Don't just hop into something because your boy or somebody said it was fire or somebody said it was a great investment. Yeah, hop into this. No, do your research, understand the fundamentals behind it. Fundamentals means the investment, okay? The true purpose of the future. Is it helping people, okay? Is it improving lives, okay? Think about what it's doing, okay? And if so, then you can go ahead and make your potential decisions based off of that. Then you want to go ahead and check the charts, etc. But make your decisions before you invest. Do your research. So a long-term portfolio, it must be resilient also. Okay. So a long-term portfolio must be resilient. And we allocate capital based on conviction, decentralization score, and time horizon. Okay. And this minimizes the impact of any single asset's failure. So the foundation, right? This is going to be the floor. Okay. So when you guys are investing, think of everything like a house. Okay. On the base of the house, you got your pillars. Okay. To make sure that the house doesn't blow away in case a big storm comes, tornadoes, etc. Okay. So think about that. You're going to have your foundation. Make sure you guys have your foundation in something that's not too volatile. Okay. The foundation of your portfolio shouldn't be fluctuating too much. And if it is fluctuating, it should be positive within a positive equity over the course after year after year after year after year. Okay. You don't want your money to be fluctuating extremely heavily into something where you have a large majority of your investments. Okay. Especially if you're using this investment as a savings. Say, for example, if you're using Bitcoin as savings, okay, something I personally do. Okay, if you're going to use Bitcoin as savings, you can see year after year after year, it's been something that's been stable. Okay, the U.S. government owns it, many other governments own it. Okay, and you can see other companies have been buying hundreds of millions of dollars worth of it as well too. Okay, showing us that it's very safe, and it seems that the world's organizations that control the economy seem to be investing into it. Okay, even that, things like the S&P 500, ETFs, which stands for exchange traded funds, those stuff like that can be invested into. Okay, so your foundation, large majority of your portfolio should be into something safe. Okay, then you're gonna have your infrastructure. Okay, your infrastructure is really gonna be 15 to 30% of your account. Okay, it's gonna be some key platforms in there. Okay, some other cryptos that you might believe in. Okay, key platforms, smart contract layers, and scaling solutions that are essential for the future. Okay, so the reason why, for example, you might want to use Bitcoin as your foundation, Bitcoin is a limited resource. Okay, so eventually it is going to go away. It's going to go ahead and go extinct. So you could go ahead and use it as the floor due to the fact that it's something that's almost guaranteed to go up, due to the fact that just off of humans' ideology alone, we want to have the most of something, especially if it's going to be rare. Okay, so that alone creates value, leading it to go in an upwards direction year after year after year. Thank God.
So, and they also allow us to trade currency from one person to another. So even if you wanted to send money to your family or do something like that, okay, if you have some family in Thailand, okay, and you're in America, instead of having to go through the tedious wire transfers, getting your payment declined, etc., PayPal, blocking or putting your money on hold, etc., what you could do is just send it easily through cryptocurrency. Everyone's going to be happy. Okay, so if you have family in a whole another country, you can easily send money to them using cryptocurrency. Okay, so it has value. Okay, it has value, and there's also going to be tons of things like Bitcoin ATMs as well too. Like for example, at my local gas station, there's Bitcoin ATM. Okay, you can go ahead, and I'm sure maybe near you as well too. Okay, if you guys check, see if there's a Bitcoin ATM near you. If you guys have some cash, okay, say if you guys get paid through tips or something like that, go take that to the Bitcoin ATM and go buy some crypto. Okay. I don't care if you guys have cash, you do whatever you need to do. Okay, take every dime, but you need to have that investment mindset. Okay, don't think about the amount, think about the action. Okay, I don't care if it's $5, go put it in the market. Okay, you need to have the mindset. Some of you guys are attached to the money, some of you guys want to see big figures, but your discipline is not in place. Okay, and this is something I personally talk to God on a lot. Praying for strength, okay? Because if you want to see these numbers, you have to be the person that's able to see these numbers, okay? If you want to make 7 figures a month, a year, etc., right? You have to be somebody who acts like it, somebody who moves like it. Are you waking up, okay? Do you pray every day? Do you pray for assistance, okay? To stay healthy so you can continue grinding, working, and innovating on your ideas that you've been blessed with in the first place, okay? Are you spreading love? Okay. Okay. Are you spreading good energy on the earth? Okay. There's going to be a lot of things that go into this. So you got to change your mindset on money too. Some of you guys are still disrespectful to money, and you might not even have any money. Okay. Some people think that $5 is not a lot of money. $5 can go a long way. $1 can go a long way. Okay. It's about your mindset. Okay. Stacking everything. Okay, make sure you guys are getting the cheapest things that you can. If it's not something that you could have to be overly excessive on. Okay, if it's something like food, okay, get yourself some high quality food. Okay, but if it's something like an expensive t-shirt versus the normal t-shirt, and you can't truly overly afford the expensive t-shirt right now, why are you trying to pop it? Relax, you're in stack mode. You got to be okay with that. Okay, God got you. Okay, if you got some family that loves you, you're blessed, you're good. Okay, stay down. Stay down. Don't worry about what people are thinking. You got to be in your own lane. Okay, if you're going to be in stack mode, you got to be tunnel vision. Y'all wake up, pray, and grind. You can't be thinking, oh, what's this person finna think? What's this person finna think? Oh, they see me in this fit 30 times. Like, man, you got to get all that stuff out your head. You got to run up your bag right now. Some of you guys are running your bag. You're too much in people's world. Okay, you're way too much in people's world. You're worried about, oh, who's in this relationship right now? Who's doing this? Who's doing that? Okay, we got to worry about us. We got to worry about us. There's plenty of times where I realized I had to take a step back and worry about Chris. Okay, and I had to get in stack mode. Okay, and it's important to do that. It's healthy to do that. Okay, focus on yourself. Even if you guys got to go ghost, do what you need to do. Okay, focus on God and just build yourself. Come stronger. Okay, change your whole mentality. You're not going to be able to invest the way that you want to if you're at the same mentality. You can't say you want to be a millionaire and you're not ready to sacrifice. When the sacrifice comes, you're like, man, I'm not doing this. I'm about to just get the fast food, whatever. You can't say, yeah, I'm about to get groceries. You know what? I'm swapping the groceries. And then you drive by the fast food place, you go cop some. Okay, spending way more money than you need to. Once again, keep yourself in the loop. So when you are ready to break out the hamster wheel, let yourself know, okay? Let yourself know, because God knows when you're ready to break yourself out the hamster wheel, okay? But you got to write your good story, okay? Don't wake up and don't be on nothing. Wake up and go be hungry for it, okay? After you wake up, you make your fajr, you pray, go get to it. Be hungry. Whatever you had in your head the next day or the previous day, get to it the next day. And then the next day, keep yourself hungry, keep it forward. Okay, you can't be doing all these researches. on these cryptocurrencies being like, oh, this is going to be the greatest investment of all time. And then you have no capital put in because you're not grinding. Okay. So a lot of the big portion of trading too is really having the capital outside of trading. Okay. What are you doing outside of these markets to even have money to make these cryptocurrencies turn into any sort of profit or help any sort of people within your family or anybody within the world? Okay. If you say you want to do X, Y, and Z, okay, it's time to make some sacrifices. Okay. And I really do believe in you guys, but if we want to make it happen, we got to sacrifice. I believe in you. If you have even the thought in your head, I believe in you, but you got to sacrifice. Okay. Once you show yourself that you're not ready for sacrifice, or you're going to fail yourself, and then you might start not believing in yourself. Okay. And that can really tear you down. Okay. Don't lose track. You guys are good. I'm telling you, you're good. Stay decent. When you're dead tired, when you think you can't do it anymore, keep going. Keep going forward. Do one more rep in the gym, one more phone call if you're a salesperson, one more video. Okay. You got to set yourself apart. Okay. That's pretty much all this is. If you guys are chasing wealth, you have to set yourself apart then. That's all it is. All money shows you is who's setting themselves apart, who's waking up every day, who's praying, who's grinding. That's all it shows. Okay, we got to understand that this is all numbers on the screen at the end of the day. Okay, all money is numbers on the screen. It's numbers on the screen and it's paper that can be ripped. But it's things that can keep roof over your head. You can help people and feed yourself and people around you. Okay, so it can do really important things. Okay, so I need you guys to understand, like, okay, cool. So this is why being close to God is really important. Because I'm telling you, if you guys just made $1,000, right? Pay your bills, okay? Get your groceries. Please don't eat out. Okay, don't eat out. Get your groceries. Okay, pay who you need to pay. Clear your debt. Credit cards. Make sure you guys clear that debt off the table. Okay, clear that debt off the table. There's a reason why God talks about debt as well too. Okay, clear that debt off the table. You guys don't want that haunting you. You don't want interest to be building up. Okay, interest could definitely come bite you like a shark. Okay, leading you to have less money to invest in the long run. Okay, so money that could have been invested, you would be paying to whatever debt that you'd be laid on. Okay, instead. So please, inshallah, work harder. Okay, I don't care if you guys are tired. That's beautiful. Beauty in the struggles. There's times in life where you're going to be significantly more tired than others. There's times in life where you're going to be working significantly harder than others. Okay, and then there's going to be times in life where you might be chilling, you might be taking a step back. Okay, and that's life. That's just what it is. Okay, whether you guys might get sick, event happens. Okay, you might just need to take some time to get your mental recourse and build yourself back stronger. Okay, it happens. We're all human beings. Okay, sometimes we go through phases, things like that. All right, but if you're gonna be in stack mode, you gotta understand the main goal of the mission. Even if you are going through said phases, you can't let your emotions dictate and control and over centralize your decisions. All right, if you're gonna tell yourself, all right, I'm putting away $30 this week, I'm not eating donuts, and I'm not gonna work out. Okay, if you say you're gonna do all those things, right, and then you get up, it's late alarm, you boot up 3 donuts, it's goofy. Okay, and every time I would fail myself in the morning, I would just have a strong, furious hatred for myself because I failed myself. The higher level of Chris, right, who expected more from me, okay, failed. So then I told myself, you know what? Every morning I get up, I'm going to strive as hard as I can to be disciplined. I don't care how badly I don't want to work out. I'm there. Okay, I'm going to have the weight of jump rope in my hand. Okay. And that's the type of mental infrastructure that I've built within myself because I was tired of being disappointed in myself. Okay, some of you guys are also chasing financial goals because you're tired of being disappointed in yourself. And I feel you. Sometimes we got to upgrade our life. Okay, we don't want to be living lower than we expect. Okay, and I understand that we're all here once on this earth. Let's live nice. Okay, let's live nice. But if we want to live nice, we got to understand the sacrifice and the other side of that. Okay. And I just want to be extremely real with you guys. So it's like people might come on here and show you guys the beautiful side, especially of trading and investing, etc. Might come on here, show you cars and things. You know, there's a couple times I come on, I'll show you guys some things, right? Might show you some cars, I might show you on vacation or something, right? But
I do want to just keep it extremely real with you, okay? There's times where it's 18-hour days. I'm extremely just frustrated, okay? Just tired, okay? Appointment after appointment after appointment, call after call after call, okay? Once again, keeping yourself broke, okay? Being like, oh man, you know how many times I've wanted to pull money out of my investment account to go buy something, but no, you don't do it. You stay down. You got to have your future goals set, especially if you guys have families. It's time to take things extremely serious, okay? That's a blessing you guys have been blessed with, okay? If you guys have been blessed with a family, people who love you, it's time to go hard for them, okay? Show them a new side of life. Show them something turn, okay? But in order to show them something turn, you got to turn up, okay? So stay down. Stay down with it. I don't care whatever you're doing. I don't care if you're making pots and pans. Stay down with it. Keep making pots and pans. Make the best pots and pans in the world. Stay down with it. But some of y'all give up, okay? You're never going to get to any type of bands if you give up, okay? This is why praying to God every day is a good way to build discipline, okay? Start your structure. Wake up. Pray every single day, okay? Be grateful. And also being in a gratitude mindset, it's going to be hard to be mad. Okay, when you wake up, you're grateful for your life. You're grateful for what you're going through, whether it's good or bad, struggle. Okay, whether you're chilling on a beach house and you made it, okay, or you're living in the trap. Okay, either way, be grateful for what you're going through. You're alive. You can innovate your ideas, and you can come different. You can pop out. Okay, you can show yourself that, you know what, I'm better than whatever version I thought I was. Okay, I'm better than whatever mental level I'm at right now. I can be way stronger right now. I can be way more disciplined. I can be way hungrier for it, like a lion. Okay, so go hunt. Okay, go hunt. Whatever you guys want to do, that business you say you want to start, go hunt. Okay, we're in way different times now. Okay, back in the day, we're really meant to wake up and go hunt lions and go hunt animals and stuff like that, and defend and take care of our land and things like that. That's really what we're meant to do as human beings. So to be as passive as to not want to start your business or not go for your goals, it's really crazy. Okay, it's crazy. You gotta have way more testosterone than that. I don't care if you're a woman or a man, you gotta just have way more thumos than that. God did not make us here to be sitting around wasting our lives. Don't do that. Okay, if you play video games, hop off of that. Why are you building your character there instead of your real life? Okay, if you play video games, don't book a call. Don't book a call. I don't talk to nobody who plays video games. Okay, don't do that. Okay, you're wasting your time. You're already showing me and yourself that you're not serious. I don't want your money. Okay, if you play video games, if you're undisciplined and you're not serious about getting disciplined, don't book a call and don't send me a single dollar on Stripe. I don't need it. I'm perfectly fine. Okay. But if you're serious about improving your life, okay, going in a further direction, okay, working on getting closer to God and really cleaning up your mistakes, okay, I understand. I'm willing to work with you. Okay, but I'm telling you, if you guys are just trying to trade just to make some money, you're not really trying to improve as a person, I'm telling you, you're going to lead to a downward spiral. Even if you run up some decent money, have a good luck like keeping it. It's not going to be fun when you have no discipline, no structure, and no base level morality built for your money. Okay, you're going to be treating it like it's nothing. Okay, you might make some over leveraged trades, and you might have some expectations that might over exceed reality. Okay, and that could definitely lead you to despair within trading. Okay, so take your time, work on your decision making before you put a dollar into the market. I'm telling you, before you start investing, you have to change your entire mindset. I was extremely humbled when I started investing. I realized my ego problems. I realized how impatient I was, okay? To the point here, I'm gonna show you guys, I even have patience tattooed on me here, okay? I realized how impatient I was. There was times on futures where I just couldn't wait for setups, okay? Couldn't wait for setups. As soon as I would blow the prop firm account, I would immediately go take some money and go buy another one. Go buy another one, go buy another one, go buy another one. Spend like $3,000 in prop firm accounts just being a failure, okay? And I don't want you guys to go through hard times like that. That time was very depressing for me. Okay, made me feel like a failure, made me feel like trading wasn't for me, okay, until I caught my edge. And then from there, started teaching my friends, and then friends told me to teach you guys, okay, and thank God everything worked out systematically, ended up becoming profitable, okay, understanding the market on the long-term side and the day trading side. And through all that failure, I started to understand the market on a global perspective. whether it be it futures, options, Forex, cryptocurrency, or stocks and shares. Okay. So failure, understand that if you see your portfolio in the red, failure is really going to build you. Okay. You got to fail. The fact that you're hunting, you're not going to catch everything. Okay. Lions don't catch everything. There's plenty of times where the animals start realizing, like, especially when they're in packs, they can fight back. Okay. Even if you're a mighty lion, you're not going to catch everything. You're not going to catch every zebra, and that's all right. Okay. What's life if you're winning everything? That's not, come on. That's not realistic. And let's have some grit. Okay. Let's put some grind in it. Let's hustle. So understand that, okay, if your portfolio's in the red, you can't panic. Okay. Have a mindset of, okay, not everything in life is going to be a win. Sometimes it'll be a loss, but that information will turn into a win later, inshallah. Okay. So just keep praying on it. Pray for strength. Okay. Don't have anxiety. Don't be shaking in your boots when you see your portfolio on the red. Okay. Keep investing. Keep stacking cash into it. Okay. Keep stacking cash. Okay. I'm telling you guys, it'll play out in the end. Give it a couple of weeks, a couple of months, a couple of years. Sit on your investment. Okay. Some of you guys are expecting that profit the next day so fast. Okay. Stop scrolling on shorts and doing things like that. Go post some shorts. Go get some money. Okay. Post some shorts. But you yourself, okay, if you want to be a strong individual, I really recommend you guys stop doing fast things. Okay. The more you do fast things, the more you do instantaneous things, you'll be an instantaneous person. Okay. And that's literally going to lead you to despair. You're going to make the worst decisions of all time. Okay. And then you're going to be like, dang, why am I broke? Why am I in this situation? And it's because you didn't realize that you just set yourself in despair. Okay. So I realized after a multitude of doing the worst decisions of all time, okay, I was like, okay, I need to think on my decisions. And since then, things have been a lot smoother. Okay, you're going to start realizing, okay, I really sat on this trade. I did thorough research on this investment, on this crypto token, for example. Okay, and I made sure that, one, it wasn't a rug pull. Okay, what a rug pull is pretty much just people who pay advertisers or hack influencers to just gain a large audience to influence people to buy a crypto token that they have a large percentage of, so you can buy, invest into it, and they make money and you don't. Okay, that's what a rug pull is. Okay, and then it doesn't have any value, so it's going to go down to the floor and no one's going to keep buying it because there's no demand for it. Okay, versus something that actually has some strong value. Soon as price makes a dip, creates a floor, people are fiending to buy every single dip of something that's actually profitable. Okay, so focus on trading things that are going to have some value within the world. Okay, if it has value within the world, take a shot at it. Okay, stack some cash into it. Stop being scary. Some of y'all are being way too scary. Like, once again, we come from sleeping outside. We come from hunting lions, defending ourselves from bears, etc. And y'all are scared to throw some bread in an investment. You got to relax. Okay, relax. All right. It's time to be reckless, especially if you're young. Okay, throw all your bread into your investment. Okay, throw all your money into your investments. Really believe if God puts in your heart, all right, this is what you should be doing. You should be stacking cash into XYZ. Do that. Okay, do that. Don't go making other decisions, being influenced by other people. Okay, if you feel like, you know what, I should heavily invest into this, do it. Okay, do it. Do it. Do it. Okay. Some of those chains in your mind, you got to break free from that. You got to break free from that. Some of you guys are scared to invest, but then you have no problem shopping at a store. And it's like, you didn't think the store didn't invest to attract you to go shop. So it's like, change your mindset. Okay. How are you scared to invest, but you can go shop at the store that invests to attract customers like you? Okay. Don't be scared. Okay, God got you. You're good. And once again, keep yourself broke. Okay, once you guys keep yourself broke, after you, once again, pay your bills though. Pay your bills. Make sure you have some food in your crib. Okay, so that way you're good. Once you come back, put some gas in your car if you work outside. Okay. And if you work outside, bring food from home. Stop worrying about what people think. Stop kicking it at work. Some of y'all are kicking it at work. Stop getting food with the homies. Stop. Okay, at work, do something. Upload. Hop on the charts.
Do something while you're on break, okay? But some of y'all are wasting time, okay? The more time that you waste, the more you'll be in the infinite loop, okay? So the more that you wake up the next day, you're like, oh, I really don't want to do this. It's okay. Did you wake up? Did you continue to grind when you were frustrated? Okay? Did you continue to grind when things weren't working out? Okay, and really ask yourself, what type of position do you want to be in? All right? All right, let's talk about some technology and decentralization, all right? All right, ask yourself, what are you investing into? Okay, before committing any type of capital, any type of money, a Stackmode investor performs deep ethical due diligence to ensure that the investment aligns with righteous principles and sound technology. Okay, is it helping the earth? Okay, or is it destroying God's beautiful earth? Really ask yourself these questions. Okay, because stuff like that might steer people away from investing into it, or certain ethical laws coming into place destroying it. Okay, keep that in mind. So technology and decentralization. So is the code open source? And who controls the protocol updates? And high decentralization and clear governance reduce single points of failure and central authority risk, aligning with self-sufficiency. So the team and the community, right? Ask yourself, does the team has a track record of integrity? Okay, this is what I mean by keeping it halal. Okay, does the crypto token you're investing into, do they have a history of scamming? Okay, do they have a history of activity that's just not normal like other tokens? Okay, is it heavily advertised? Heavily advertised tokens, right, being pushed by hashtags, tweets, things like that. You gotta watch. Okay, you gotta watch. Okay, make sure you guys do your extreme due diligence, and especially new tokens. Watch the way new tokens move. Okay, if a token just comes out and it's advertising that it's going to be the best and strongest and most lucrative token of all time, you got to watch that. Okay, watch that. Do your research. There's also things you can look at on the order flow. You can see a percentage actually of who owns the token. Okay, so if you start seeing lucrative advertising about it, crazy talk, okay, talking about it's the new Bitcoin and things like that, okay, do your research on the order flow. Okay, see who has a percentage of it. Okay, and if you see like over 60% of the coin is owned by one person, most likely it's a rug pull. Okay, so be careful. All right, there's gonna be a lot of deceptive people and things out there. Okay, I don't want you guys investing in your money into things and then getting finessed and robbed for absolutely no reason because someone wants to be lazy. Okay, so be safe. Okay, be safe, and ask yourself, is that okay? Is it inflationary or deflationary? That's gonna help too. Okay, so if the world is going to shambles, are people going to be looking to invest into it? Okay, that's why people invest in things like Bitcoin, since it's a limited resource. That's why things like gold go up in value when the world goes in inflation mode. Okay, since the dollar becomes useless, something has to be of value. So let's run to the limited resource that God put on this earth. Okay, so then we're going to have power as well too. Okay, which is also created by God's resources. Okay. But we're either going to have oil, okay, or we're going to have solar, which is used to once again create things like Bitcoin, okay? And ask yourself, okay, what would I get out of this token if I were to be the only one to have it, okay? Would anyone care? Okay, if you had keyboard coin, would anyone care if you had keyboard coin? But if a really popular coin went away right now and people couldn't buy it, would people be upset? Okay, how would you be treated? Okay, what type of benefits would you gain? We don't know what type of world we're going to go into. So especially limited coins, I really advise taking a look into that and seeing if it'd be a decision that you'd want to check out. Okay, like Bitcoin, for example. So position sizing, okay? Don't trade with what you can't afford to lose. Okay, please pay your bills first. Please. Let me tell you guys another crazy story. All right, so there's one time I put my whole work check into the account. I lost my whole work check in like 5 minutes. Let me tell you this story. All right, so I got the work check, and what I did was I put it into the account. Okay, this was a few years ago. So I put it into the account, and it was some futures. Okay, and at the time, I think it was a J Powell news day. Okay, so market was just landsliding. So what I was doing, right, like a genius, right, guys? So I was trying to long the market. Okay, so while the market was falling, just in an extreme knife, okay, I'm there trying to long the market. And I just lost all my money in like 5 minutes. Okay, playing with too much size, literally crashed it out. Just pretty much crashed out the whole check. And I remember withdrawing maybe like $200 left. Okay, and I was like, okay, what did I do? Okay, really reflecting on the decision that I just made, and that like destroyed me. Okay, so don't trade with money that you cannot afford to lose. Please, for the love of God, pay your bills first. Pay your debt first. Get some food first. Okay, you do not want to put your money into all your investments and then you can't survive. You don't want to be in that position. That's backwards. Okay, I will always keep pushing this. Okay, make sure you guys please pay your bills and get some groceries first. When your bills are paid, you got groceries in the fridge, you're good. Okay, then you can live broke. Then you're good. Okay, then live broke. Until then, please take care of your stuff. For the love of God, I'm begging you, take care of your stuff. Please. I don't want you guys to go. It's very stressful if you go through certain things. Okay, if you have too much debt, you got to file bankruptcy. No one is giving you a crib. Life gets extremely more stressful if you go broke. Okay, God forbid, when certain things happen, life just becomes extremely like difficult. Okay, the world treats you a lot different. Okay, if you file for bankruptcy, they're gonna judge you whenever you go try to get a house. Okay, you could be in a completely different financial position. Okay, but even if you try to rent, they're still gonna see that on your record. Okay, so take heed of these things. Okay, so really take care of yourself, take care of your debt. Okay, and just clear that for yourself or your future family. Okay, you don't want that debt to be falling on them too, because they'll really come and try stuff like that as well. Okay, so bringing me into that, please don't leverage trade. Don't leverage trade and just avoid crypto futures. Okay, I don't care if you guys think you're the best trader in the entire world. Please don't trade crypto futures. Okay, just don't do it. Don't do it. Okay, we don't want to be trading with leverage. We want to be trading spot. SPOT. Trade spot, keep stacking your cash, take your time, let your money stack and build over the course of months and years. Okay, why are you trying to rush? Okay, because I'm telling you, once you guys hop on that crypto futures, okay, especially when you don't have any type of discipline or rootedness built up, it can be scary. Okay, you can realize your true self, you can realize how undisciplined you truly are, and it can make you crash out. Okay, once again, making you destroy all of your money extremely quickly, or even worse, owing the broker money. Okay, when you're trading with things like leverage, you're borrowing funds from the broker in order to play a higher position size. Instead of playing a position size that would be normally relative to your account, you're then borrowing it for an X amount multiple. So if you lose, okay, you're going to be responsible for that type of loss. Okay, so always keep things like that in mind. Even if you have a stop loss placed down, if price action is too quick, price can easily run through your stop loss and it might not fill exactly where you might think. Okay, market is not perfect, only God's perfect. Okay, so even the market has some issues. Okay, you could have a smackdown stop loss place and market could run straight through it, making you to lose making you to lose more money than you think, or just liquidate your account. Okay, so yeah, the same thing, but if you liquidate your account, that means your funds are going to go down to zero and you're going to be sick. Okay, and then you're going to owe the broker money. Okay, once again, all things that I'm telling you guys from experience. Okay, and then the broker is going to send you that email quickly. They're going to be right there. They're going to need that. Okay, you got to go ahead and wire transfer that money. Boom, because if you don't do that, they're sending those court papers. Once again, stress that you don't want to be going through. Okay, you want to be living life on chill mode. You don't want to be dealing with court. You don't want to be dealing with bankruptcy when you're trying to get a crib and they're judging you. You don't want to be dealing with things like that. It just makes life extremely difficult and hard for no reasons. Take care of yourself. All right, pray for strength, keep hustling, and putting that money away. Stay in stack mode. Your future self is going to thank you. So, primary goal, right? Convert these digital gains into stable, physical, or income producing assets. All right. Once again, having no debt, clear all that debt out. Okay. Wipe it all out. You guys don't want any payments haunting you as soon as you wake up, like, oh, the bills are due and stuff like that. You don't want that. You don't want to be living like that. Okay. All right. The bills are going to kind of always be due, but you don't want it to be stressing you out. Okay, you want it to be like, you know what, bills hit, and be happy. Be like, it's something to grind for, something to hustle for. Be grateful to God that you can even be in a position to take care of yourself and pay what you need to pay. But if you're waking up and stressing like, oh, the bills are here, and saying it's a different position. Okay, you don't want to be like that. Life hit different when it's that. Okay, I don't want you guys to be feeling like that. Okay, let's live, let's have fun, let's take care of ourselves, and let's be happy. And targeted partial sales. Okay, so try to sell in predetermined small increments. Okay, so instead of just selling all 100% of your asset, unless you have a predetermined target and take profit where you want to close a position, that's a different story. But if you're investing something, say you like, I want to hold this until I die, or I want to hold this asset, etc., or you leave the crypto password for your kids or whatever, anything like that. If you just want to have it as a infinite family account or whatever you want to do, right? Try and sell in partials. That way is because you never know what's going to happen. You never know what type of multiples or how high a price jump is going to happen. Okay, so just keep some increments in there, and maybe that small increment will, even if you sell like 80%, maybe that 20% might turn back into 100% over the course of some years, and keep letting it stack and show up. Okay, so the most powerful investment principle is consistency. Okay, wake up, pray every single day. Okay, try and work out at least like 3 to 5 times a week. Go hard. Okay, and stack away that money. Please take care of your bills first. Get something to eat, some groceries, and then you're good. Stay broke. Okay, put some gas in your car, get a full tank if you go to work, and that's it. Okay, get yourself some Tupperware, bring your lunch to work if that's what you do. Okay, or if you work from home, you don't need to be ordering no type of DoorDash things right now. We're staying out. Okay, until you have at least 6 figures. And I'm realizing as I stay in stack mode, I'm like, yeah, it's really just about consistency. Okay, so running up things like 6 figures, right? It can be possible, especially within like a year and a couple of months if you're going hard, putting away the cash that you need to, and investing in the right things. Okay, so stay hard, guys. All right, stay right up to God, keep grinding. I'm gonna catch you in the next one. Head over to Stackmode.net for all trading education.
Discipline, discipline, discipline. I know you guys have heard of it, and it's time to stop struggling with it. Let's improve our discipline. Okay, let's stay humble. That's going to be the #1 rule in order to stay disciplined. Stay humble. Even when you achieve your goals, when you start making the amount of money that you want, when you get the house that you want, when you get the car that you want, okay, when you start doing what you want to do, you still stay humble. Okay, you still wake up every day, you pray to God, you work out, you stick to your trading plan, you stick to your budget, you keep putting money in the stash, and you stay in stack mode. Don't lose yourself. And discipline in trading just refers to the ability to follow your predefined set of rules. If you're a break and retest trader, then you're going to be waiting for an area of resistance to be broken and turn into resistance, or an area of resistance to be broken and turn into support. Okay, or if you're a short trader, you're going to wait for an area of support to be broken and turn into resistance. And if you don't see what you want, then you don't take your trade. Discipline ensures that traders stick to their plans, avoid impulsive decisions that lead to losses. So losses can come from a quick emotional stint within you. Okay, you might see a candle stoop up really fast, especially if you're on your 1 minute or smaller time frames. That can make you extremely emotional. I highly recommend you guys get off of your smaller time frames, such as the 1 minute and stuff like that, as far as planning out your whole trades. Make sure you guys are doing your higher time frame research first, okay, such as your daily 4-hour. Plot out your trades there first. Then if you're going to enter in after seeing your levels and seeing where the market wants to go on a higher time frame scale, then feel free to go down to your 1 minute time frame. Okay, because 1 minute candlesticks can be extremely fast, spiking up and down, might making you do emotional things that's not even the trend whole time. So check your higher time frames first to avoid making emotional decisions. So discipline also involves psychological control, risk management. Okay, psychological control just ensures that you're not crashing out. Okay, even if you take a loss, you know to hop off the trades. Okay, you're gonna hop off the charts. You're not gonna destroy your P&L that you've been grinding hard for. Okay, and you're gonna come back stronger. Okay, you're gonna be like, okay, what could I have done to make sure that loss into a win? Was that setup clean? Was that entry clean? Talk to yourself, journal. Profitable traders treat trading like a business. When you sign up to trade, you are a business. You are no longer an individual. Okay, you're a business. And a business is trying to use money to make more money. Okay, that's pretty much what a business is doing. Okay, and providing value to people. Okay, So you're going to be trading. So when you're making money, somebody's losing. When you're losing, somebody's winning. Okay. It's a very strategical system. Okay. It's not gambling. Okay. And you can definitely make some money if you stick to your rules. Stick to things like your stop loss, where your trade is going to automatically close, and continuously learn. Okay. Always learn, see how you can get better, see what you can change. Okay. And if you're on a hot streak, if you notice you're profitable, stick to it. Okay. The only thing that should change is your contract size. Okay. Stick to your setup. Don't lose your discipline. Okay. And just don't trade for PNL. Trade from areas of take profits from your entries, and set your stop losses if you are trading like Forex futures, for examples. Keep it simple. And we'll explore why discipline is crucial, common pitfalls, and how to build it step by step. Step number one is going to be just waking up, praying to God every single day, being grateful. Okay, gratitude is going to help you be disciplined. Okay, it's going to help you stay focused. You're not going to lose yourself. You're not going to get emotional, whether you're winning or losing. Okay, you're going to be fine. And consider a day trader who sets a daily loss limit. Discipline means stopping when that limit is hit, no exceptions. Okay. And why discipline matters. Studies show that over 90% of retail traders lose money in the long run. Okay, so say someone puts in 5 bands, even if they make 2K their next trade, if you check in at the end of the year, they might be down like 8K. Okay. And that's because primarily their lack of discipline comes in. So even if you start making money within the market, you have to know how to control it. Okay, withdraw. Especially if I'm on my day trade account and I win a day trade, let's say I make $500. I'm going to keep 50% in my account. I'm going to go ahead and put 50% back in my bank account. Okay. So if I make 500, for example, I'm going to keep 250 in the trading account. This way my account's going to keep growing. My contract sizes can increase. Okay. And I'm going to go ahead and give myself 250. That 250, what I'm going to go ahead and do is take 30% of that off, put that away for taxes. That's going to go ahead and give me the ample opportunity in order to keep stacking up, keep growing my portfolio over time. And discipline turns your real life from a game to really just a skill-based profession. And you're going to be able to stack up, take yourself serious, make certain power plays, and start building some long-term investments for your family. Okay, leaving some growth, leaving some wealth, and leaving some assets that are going to be important for people to potentially turn money into more money. Okay, so it's living an easier time. The more disciplined you are, the more of an easier time you'll have for yourself and loved ones around you. So it's worth it, trust me. And according to a report by the Financial Conduit Authority, disciplined traders have a 40 to 50% higher success rate. So trust me, wake up, pray to God, work out, okay, create your routine, hop on the charts before market opens, okay, or even plot your trades on a higher time frames before they come. Utilize things like alerts so you're not sitting there staring at the charts all day, and keep grinding more income. Grind your business, do whatever you need to do, get more income, set your alerts by the time your trade's ready. You're gonna have bread ready, put it back into the market and come dominate. Inshallah. So long-term profitability is gonna require patience too. Don't expect things to happen overnight. Sometimes you gotta hold trades for a long time, especially if it's shares or crypto. Okay, don't expect to see profit instantly. It's gonna take time. Keep your portfolio separate. Try not to touch it, and try not to overtrade as well too. Overtrading is going to be when you're taking multiple trades over and over and over and over and over again, not learning your lesson. Okay, if you want to stop that, okay, one, think about your future. Okay, is your family going to eat like this? Are you going to eat like this? Are you about to pay rent if you keep losing money because you want to be emotional? Okay, you can't afford to lose money like that. Okay, take it serious. Okay, so you can go ahead and use discipline within your real life, and how you do one thing is how you do all. When you wake up, you work out Monday through Friday. Okay, your brain muscles are going to get trained over time, and you're going to realize, okay, I can do this, I can stay consistent. And your brain's going to pretty much be disgusted if you're not being disciplined. Okay, and once your brain makes that switch, it's going to be a lot easier to go ahead and just dominate. You're going to know what your setup criteria is, and you're going to refuse to take anything else that's not it. Okay, if it's not your setup criteria, you just don't take it. Okay, and that happens by being disciplined. So I promise you guys, be as disciplined as possible for 90 days, okay? And watch how all of these things turn into habits. Okay, it might be hard at first, okay, waking up, okay, pray to God every day, have a gratitude mindset, okay, work out every day, even when your muscles are sore, when you feel like you can't do it, okay, Monday through Friday. Okay, or at least just 5 days a week. Choose a schedule that works for you. Okay, and flow with the market, preferably Monday through Friday, because that's when the stock market's open. Okay, do your research. Make sure you guys have some hours in order to study the market. Okay, have some study chart time. You got to be checking the chart every single day. It's about discipline. You guys have to understand the type of individuals that you're playing against. If you want to call yourself a trader, you got to change it all. I've had to really look at myself internally and change everything. I had to improve in every single way possible. I realized where my faults were. I realized I need to be more patient. I realized I need to have more of a long-term mindset. Okay, and this is helping me improve, becoming a better trader, have more of a positive portfolio, lose less money, and increase my portfolio over time. Okay. So some common pitfalls from lack of discipline. Without discipline, traders and human beings just fall into traps that erode your capital, your soul. And let's dive deep into these issues. So overtrading, okay, this is going to come from greed. Okay, God talks about this. Don't be greedy. Okay, this is something I used to be. I used to be extremely greedy when it came to my trading. I would make some good money, especially when it came to prop firms, for example. Okay, let's say I made $1,000 on my prop firm 50K account. Okay, I would try and go ahead and trade again. Okay, try to make like 1.5, then I would go down to 600, right? Trying to make it back up, and then, I might end up break even. Okay, destroying everything. Because why? Because I wanted some more profit. Okay, once you take your trade, you be grateful. Okay, you be grateful. Okay, have a gratitude mindset. Okay, be grateful for every loss or W that you take on the charts. It just is what it is. You're making bread on the screen. Okay, and I'm disgusted at myself for even not taking advantage of that, but it's okay. I learned, and this is why I come on the charts and come on here to tell you guys not to make the same mistakes I did, because it hurt emotionally. Okay, times where I was like, oh man, I could have used those bands. I could have used that money to do X, Y, and Z. I could have just reinvested that profit to make some more profit. Okay, but it didn't happen at the time. Okay, so don't overtrade, especially if you're a futures or forex trader and you can just spam buy and sell. Be careful with that. Okay, options, you got to be a little bit more strategic. You got to know what contract you want. You got to know what strike you want. Okay, it's a little bit different when it comes to options. It's harder to overtrade. But when it comes to futures and forex traders, make sure you guys are just, please humble yourself. Okay, humble yourself. Don't let that buy and sell button, don't let that instantaneous impulsiveness destroy your whole portfolio. Take logical trades. Okay, take your time too. Market's not going anywhere. Take your time. And trading too frequently can lead to high commissions and emotional burnout. You might feel like trading is not for you. Okay, take your time. You got to keep going. You got to keep grinding. Okay. For example, let's say a novice trader buys and sells 20 times a day. You'll be losing money on fees alone, depending on the certain brokers. Okay, the more trades that you take in a day, you're going to be subject to fees, bro. And that fees is going to be hitting at your P&L. So you're not even going to be making as much money as you think you are, even if you are hitting some profitable trades. Okay, so try and do 1 to 2 trades a day, max. No more than 1 to 2 trades a day. Okay, I like to trade a couple times a month, a couple times a week. Okay, personally. Revenge trading, don't do this, man. This is going to be one of the worst things you can do. When you take your L, you got to be grateful. You got to be grateful. Because if not, you're going to get mad. And you're going to think that you're right. You're going to think that the charts are doing something wrong. And it's absolutely not true. If the trade's not happening, it's just not happening. You can't chase losses with bigger bets. You can't take an L, put on double your size, and be like, you know what, I'm going to make up that loss, and I'm going to go ahead and make some money. Putting on double size, next thing you know, you lose again. Next thing you know, you're super down, and then you're emotional. You're upset at yourself. You're angry. Okay, you're like, trading, you know what, I don't know if this is for me, all because you got emotional. Blame yourself, don't blame the markets. You got to wait for the cleanest setup that you can possible. Okay, and if it doesn't work out, it's fine. This is why you manage your risk. You shouldn't even be tripping if you lose. If you're tripping when you lose, you're oversized. You're not trading within good risk parameters. You're way oversized if you're tripping if you lose. So chasing loss over bigger bets is not going to be the play. And this stems from ego. Okay, whenever your ego gets hit, you got to understand, okay, you know what, I'm not going to win everything. It is what it is. I took a loss today. Don't double down and try and get back at the market. That's just going to lead to wipeouts, destroying your account, destroying your P&L. There's been times on prop firms I've been day 4 out of 5. Okay, about to get a withdrawal. and I blew day 4 out of 5. I blew it. Okay. Up like 3 bands on a 50K account. Boom. Destroyed it all in pretty much a day or two. Okay. Hit the daily drawdown, and then day afterward, boom, destroyed it again. Okay. Okay. All because of ego. All because I was trading for P&L. Not trading at a discipline, not trading at a consistency. Okay. Ignoring my stop loss, thinking I was more right than the market because I just had a little hot streak. Okay. I had to humble myself. I had to realize, you know what, I can't keep taking losses like this. I want to get better. I want to improve. I don't want to keep being the same type of person that I've been. I'm not going to keep holding positions and hoping for a turnaround. I'm going to play logically according to my plan. This violates your risk rules. This violates your soul rules. Whatever you're trying to do for yourself and your family, you can't do it when you're losing more money than you're expected. You got to stay down. Stay in stack mode. If you took a loss, come back stronger. Try again. But don't destroy it all in one setup. Take your time. Plan an even cleaner setup and win that one. Start over again. Get in stack mode. Restart. Okay, you're good. God got you. Even if it's your last dollars, God got you. You're trim. Okay. Restart. Run it back up again. Try again. Plenty of times I've had to do that. Okay. FOMO. Don't let FOMO get to you too. If you just see candlesticks bursting, you just took a win, for example, don't be like, oh, it's a good opportunity to make some more bread. Relax. That's not the mentality. That's very greedy, extremely greedy, very ungrateful. And take your time. Discipline counters this with rules-based trading. And relying on rumors instead of analysis, okay, can be bad. Don't be social media trading. Do your research. Check out the TA, the technical analysis, and make sure everything just lines up together. Okay, don't be going off of what he and she says. Do your research. Put it all together. Make sure it makes sense with your trading plan. Your trading plan is not going to be the next person's trading plan. Okay, figure out what works for you, and then you go ahead and you dominate with your plan. Okay, figure out what works for you and dominate with your plan. That's all you can do. Figure out what works for you and dominate with your plan. Okay, that's gonna be the best advice I can give you. Okay, and just don't give up. Okay, stay prayerful to God. Keep grinding, even when you think it's hard, even when you think it's not for you. I promise you, just keep going. Keep going. If you feel like that loss is frustrating you, keep going. Keep going. You have to. You want to call yourself a boss, you have to be ready to take every single loss in the chest. Take it as a lesson. Let it power you up. Mark an even cleaner setup the next time. You got it. So discipline, it starts in your brain. Okay. So in your brain is where it's going to start first. Okay. Not in your body. You can pretty much almost ignore your body. Okay. But your brain is going to be the thing that controls your body in the first place. So treat trading, everything that you do is a marathon. Even working out. Okay. You can't get a six-pack. Okay. And then be like, all right, I'm done working out. Like, no, you can't do that, man. You got to keep working out. You got to keep grinding, keep eating clean, keep eating healthy. Okay. Keep taking your herbs and doing what you need to do. Keep praying, keep getting your sun. Okay. You can't just get your six-pack and then start eating junk food again every single day, not working out, not being disciplined. You'll lose it. Okay. And just like that bag too, when you touch that big bag, okay, if you're not putting it away, if you're not in stack mode, if you're not being disciplined, if you're not reinvesting smartly, okay, if you're not taking your time, you'll blow it. Okay, just like the six-pack, you'll lose if you're not keeping it up, being healthy, continuously working out, you'll lose it. Okay, anything that you don't consistently keep up, you'll lose. Okay, God puts it in front of us every single day, even in plants, for example. Okay, plants, they need constant sun, constant water. Okay, rain and sun constantly. Okay, decent soil. Okay, and that constant rain and sun has to constantly hit the plant in order for it to grow. Okay, it could grow into a giant bush, giant tree, okay, whatever it is. Okay, and that's how your account and your body works too. You need constant work. Okay, constant protein, constant water, constant cardio, constant weight training. Okay, that's how you get a six-pack. Okay, when I was getting my six-pack, I was grinding. Still do, Monday through Friday, not giving up. Okay, pushing myself harder every workout, being consistent, watching my carb intake. Okay, certain things like that. It's really gonna help you. You can head over to Stackmode.net. Okay, I do have my free trading education ebook too. Okay, there's a couple other ones you can check out, but you guys can check out Stackmode.net. Key Steps to Profitability ebook. Take accountability too. Okay, trade with some buddies if they're solid. Okay, trade with your wife or your partner if you guys are investment partners. Okay, have someone to keep you accountable. Okay, you can't be doing anything on the block and hiding it. Okay, post your trades even. Okay, journal your trades. Do what you need to do, and balance life. You can avoid burnout by scheduling breaks. Okay, if you're about to get angry on the charts and crash out, get off, go pray, be grateful. Okay, work out before the charts. This way, you're gonna be too tired to even be angry. You're gonna come on the charts with a logical mind. Okay, think of this from a survival perspective. We're supposed to wake up, hunt for the food, hunt for the berries, and then we eat food. Okay, not wake up and then just eat food. Okay, your body's supposed to be tired before we sit down. Okay, so before we sit down, we got to be tired. So wake up and work out. It's really gonna help you guys calm your nerves. Okay, and really just put you in a clear headspace whenever you come onto the markets. Inshallah. So the core of discipline. Risk management is discipline in action. Protecting capital is priority number one. Never risk more than 1 to 2% per trade if you're a new trader. My more extensive traders, you guys can do 1 to 10%. Position sizing is extremely important. You can calculate it based on your account size and your stop loss distance. Okay. So for example, 100K account, okay, your risk is gonna be 1%, that'd be 1K. Okay. Stop loss 5% away, position size would be 20K. Okay. Stop losses and take profits. Stop losses when your trade's going to close by itself, and you can set your take profit too to make it close by itself. And always set them. Deep explanation. Stop losses are limit losses, and it pretty much closes your trade if it goes down or up to a certain point. So then you don't lose more than you want. And take profit's going to close at an area and exit you, so you give your money. And diversification. Okay, be careful putting all your eggs in one basket. Okay, try and be invested in like 1 to 3 things. Okay, depending on what you play, because that way you're not going to be panicking, just hoping and praying that one thing goes up the whole time. Diversify. Okay, play geology and spread out your growth. And you could simulate certain scenarios too using paper trading and see how your strategies work out. Follow your trading plan too. Okay, put your Discord together. Put your Notion together, your journal together. Write what you're going to do. Write when you're going to get in. Write when you're going to get out. Figure out what session you want to trade. If you're a Forex trader, options trader, okay, figure out when you want to trade. Your performance, track it. Figure out how much you're winning, how much you're losing, how much money you're making, okay? What's your year and returns, okay? Are you profitable? Okay. That's really going to be the main thing. Are you profitable at the end of the year? Okay. Are you making money at the end of the year? Okay. Forget the money you're making right now. Are you profitable year after year? That's really what's going to determine who's profitable and who's not for the most part. And avoid deviations. Okay. Don't destroy your account being tempted to do anything that's fried or just not logical. Okay. If you see if it's a super bullish candle coming in and you're in a short, cut your trade. Don't hold past your stop loss with ego. Cut your trade. Okay. Follow your plans. Whatever plan it is, you can write it wherever you need to, your phone, wherever. Just follow it. Stick to it. Day after day, year after year, and watch where you'll be. So, emotions, they can be the enemy, but you can transmute that into discipline. Okay. Discipline is going to tame them. You can use some certain key strategies in order to improve your emotional control. Okay, if you're feeling angry, okay, once again, have a gratitude mindset. Okay, wake up, pray to God, just be thankful that you have the opportunity to come onto the market. Okay, be mindful of how much bread that you're playing with and what you're about to do to your account. Especially if you start making more money, you gotta have your emotional control intact. Okay, because it's gonna hurt you. It'd be a lot more traumatic to lose 7 figures than it is to lose a band. Okay, so keep yourself grounded, keep yourself humble, keep yourself hungry. Step away after losses too. Okay, go outside, go ground, go give someone a hug. Okay, don't go mute, don't go shutting everybody out or being drawn. Okay, just because you're angry that you lost some money on the market. Okay, you're good. Okay, relax. Don't let it destroy your entire life or your whole day. Okay, that used to be me. You can't do that. Okay, be grateful. Okay, be grateful for the people around you. Okay, don't start treating anyone bad. And don't be frustrated all day just because you lost some money. Okay, come back onto the markets again, plan a better trade, plan a cleaner trade, and you'll be good. So disciplined traders use stops to exit early and then re-enter on certain signals. Okay. Undisciplined traders like to panic sell at bottoms. Okay. So have your stop loss set. You can't just sell when you see market just start dumping exponentially. Okay. Have a plan. Be like, okay, if market ever crosses under here, I'm going to sell my position. Okay. Have a plan. You're a business person. Okay. Be structured. Don't chase hype without plans. No meme coins, no meme stocks. Do your research. Do your fundamental research. Do your TA. And make sure it all makes sense. And play with the trend too. Playing with the trend is going to be a really good way, inshallah, in order to make some money. Okay, trading against the trend or trying to catch reversals, especially to the downtrend and like stocks or crypto, might not always work out. Okay, trying to predict perfect tops and bottoms, it's going to be a lot harder than just trading with the trend in general. Okay, so you can either wait for resistance to be broken and turn into support, or support be broken and turn into resistance if you're in downtrend. Okay, either one. So, what challenges do you face with discipline? You can go ahead and comment below. Head over to Stackmode.net. You guys can get my free trading education, free ebook, free course, book a free call. I'll catch you in the next one. So I pray to God. Keep grinding. Peace. Class, let's go and let's talk about fundamental analysis, what it is, and how you guys can use your outside of chart skills to make profitable trades. So you can see, is the company going to be futurely effective? Is it something that's going to advance society, put some smile on people's faces? And these are all going to be questions that we're going to need to ask before we even look at the chart as well too. Okay, so let's jump into it. Let's see if the company makes some money. Let's determine the fundamentals before we put down some size. Let's go. So what is fundamental analysis? FA, the core definition and the goal. Fundamental analysis is a methodology used to evaluate a security's intrinsic value by examining related economic, industry, and financial factors. And the core idea is to determine if a company's stock is truly worth its current price, whether we're looking at the real business behind the ticker symbol. And the goal is simple. Find stocks that are trading for less than the calculated intrinsic value. And this is the margin of safety. So we assess everything that could affect the company's value, from the strength of its balance sheet to the quality of its management team. Everything that's going to be extremely important to take a look at, okay? Because this is all going to be affecting future growth, okay? You want to be investing in a stock that's going to be making money, okay? Because if it's making money and it's profitable, then inshallah it's going to be in a much better position to go in an upwards direction than a company that's not making money, okay? Because then they're going to take their shareholder profit, put it back into the company, and they're going to be paying out higher dividends, which are going to be payments that stocks give if they're making good money to their shareholders. Okay, so if the dividends are increasing, not getting cut, then that means that the company's also going to be making money. So a lot of good things we can look at too to see if a company's profitable or not. Now let's talk about fundamental analysis versus technical analysis. So the difference in focus between the two. Technical analysis focuses on price and volume movements on the candlestick chart, still extremely important to know. And it studies charts and patterns to predict future price direction, and it assumes all fundamentals are already priced into the stock. In fundamental analysis, it focuses on value, and it studies the financial health and futures earning power of the business. It assumes the market can be wrong in the short term, creating opportunities. Let's talk about the two main pillars. So 1, quantitative factors. The numbers, revenue, profit, assets, debt, and key financial ratios derived from financial statements can all be used to see if a company's making some money or not. And this is going to be the bedrock of our analysis. And some qualitative factors, the intangibles, management competence, industry standing, brand loyalty, patents, and competitive advantages, right? The economic moat are all going to be things we can take a look at as well too to determine if a company is going to be worth investing into or not. So the top-down approach, right? Let's talk about the EIC analysis. So before we're diving into a single company, let's understand the environment that it's operating in the first place. Let's take a look at the economy, then the industry, then finally the company EIC. So let's talk about the E, economic analysis, right? The macro. So understanding the national and global economic landscape is going to be crucial as it dictates the environment for all businesses. And a rising tide lifts all boats, but a recession sinks many. Now let's talk about GDP. GDP stands for gross domestic product. And it measures the total output of goods and services. And a high GDP growth generally suggests strong corporate earnings, okay? which means that it's exporting and putting out a large amount of goods, which means people are buying. Okay. So interest rates, they're set by central bank, and their higher rates set could increase the cost of borrowing for companies, affecting debt costs, and consumers, affecting the spending power of the company. Okay. So if the interest rates are higher for borrowers, that means that more of the company's money has to go into paying off debt versus growing the company, okay, which could lead to slower stock progression. Keep that in mind. Inflation. Inflation is the rate at which prices rise. High inflation can squeeze profit margins if a company cannot pass on increased costs to its customers. And the unemployment rate, a key indicator of consumer health. Low unemployment usually means that companies are hiring more and more and more and more, and they have enough money to even hire new people. Let's talk about some industry analysis, right? MISO. Some industries offer better long-term prospects than others. You want to invest in companies that are favorable, growing, or defensible sectors. And you want to look at the industry life cycle. Is the industry in the growth stage? Does it have high potential? Okay. Or is it in the mature stage? Is it already super duper stable and a competitive competitor? And adjust your expectations accordingly. Take a look at its competitive structure. How intense is the rivalry? Does it have low competition? Because low competition allows for higher profit margins. And high competition, like airlines, for example, often means thinner margins because there's so many companies that do the same exact thing. And bargaining power. Do suppliers or customers have high bargaining power? High customer power, for example, a few big retailers can force prices down, harming the company. So for example, the tech industry is currently in a growth phase, okay, while the tobacco industry is in a decline. Thank God. Okay, people are starting to get healthy, change their ways, and the crypto industry, for example, is also on an uprise as of when I'm dropping this video. So depending on the time era, invest based on that. That's also going to be taking a look at your fundamental analysis, looking at what time period you're in and making your decisions based off of that. So the company analysis. This is going to be the final deep dive stage where we look directly at the individual's business health, operations, and future prospects. This is going to lead us directly to the financial statements. And let's talk about the competitive moat. What makes this company hard to replicate? Is it a powerful brand, network effects, or patents? And this creates pricing power. And let's take a look at the financial health. And we must verify their ability to generate profit and cash, manage debt, and efficiently use shareholding capital. This is the heart of quantitative analysis. And operational efficiency. Are they managing their inventory and accounts receivable effectively? High efficiency often translates to higher profitability. So the three pillars. Let's decode financial statements. So these three documents, released quarterly and annually, are going to be the company's report card. Okay, remember back in school when you guys were scared of showing your mom your report card, for example. Okay, companies can sometimes be nervous to show earnings, especially if they're not putting out good profit. So that's why you might see a company put out bad earnings, but it might follow up with a video or display of what the company holds for the future to save the shareholders and to make the current people holding the stock, even if it dumps down, invested so they can trust the future. So let's talk about the income statement, right? So what does it show? It shows profitability over a period of time. For example, 1 quarter or 1 year. And it details revenue, cost, and ultimately the net income, okay, which is going to be the profit. And the revenue, right? The total sales from goods or services. And the growth here is going to be critical, okay? You want your companies that you're investing into to be making money. So the gross profit, the revenue minus cost of goods and sold. And this shows how profitable the core product is. And operating income. It's profit after deducting operating expenses like salaries, rent, R&D, and this indicates core business performance. And the net income, right? The bottom line. What's left for shareholders after all expenses, interest, and taxes? And the balance sheet. So what does it show? A snapshot of a company's assets, liabilities, and shareholder equity at a single point in time, and it must always balance. All right, let's talk about the accounting equation, right? So assets equal liabilities plus equity. So assets, it's what the company owns. It's its cash, inventory, property, plant, and equipment. And liabilities, right? It's what the company owes. It's accounts payable, short and long-term debt, and watch for companies with high debt. And equity, this residual claim shareholders have on assets after liabilities are paid. And the cash flow statement, CFS. So what does it show in the first place? The true movements of cash. tracking how much cash the company generated and where it was spent in the first place, separating into three main activities. Okay, so we're gonna have the OCF, and the OCF stands for the operating cash flow. And this is cash generated from normal business activities. Okay, this is the most important business section. Then we're gonna have the ICF. The ICF is cash used to buy or sell long-term assets, like equipment or real estate. Then we're gonna have the SCF. Okay, this is financing cash flow. Cash from issuing debt, paying dividends, or buying back stock. And the key takeaway, a company can show a profit income statement, but have a negative cash flow if customers haven't paid yet. So understand that cash flow is gonna be king in this scenario. So the power of ratios, quantitative deep dive, right? I'm gonna give you guys a deep dive here of the power of ratios. So ratios normalize the data, allowing you to compare companies of different sizes or evaluate a company's performance over time. They distill the financial statements into actionable insights. And the profitability and efficiency. These ratios measure how effectively a company is converting sales into profit and managing its resources. And the net profit margin, NPM. It tells you what percentage of every dollar of revenue ends up as net income. And high and stable NPM suggests strong cost control and pricing power in general. And the ROE, the return on equity, ROE. It shows how much profit a company generates for every dollar of shareholder equity. And the higher ROE, which is typically above 15%, suggests management is using shareholder money very, very effectively. Let's talk about the ROE. Return on assets. It measures how effectively a company uses its assets to generate a profit. And it's crucial for asset-heavy industries like manufacturing. All right. And liquidity and solvency, right? The risk. So these ratios assess the company's financial health, specifically its ability to meet short-term and long-term debt obligations. And the current ratio. It measures a company's ability to cover short-term liabilities, which is due within 1 year, with the short-term assets like cash and receivables. And a ratio above 1 is generally preferred, indicating ample liquidity. Let's talk about the debt to equity ratio. It compares a company's total liabilities to its shareholder equity. And a high ratio indicates that the company relies more on debt financing than shareholder funding, leading to higher financial risk. And the interest coverage ratio. It determines how easily a company can pay interest expenses on its outstanding debt. And the high number suggests minimal risk of default on interest payments. All right, the context checked. So remember that a good ratio is highly dependent on the industry. And a utility company, for instance, can safely carry a higher debt to equity ratio than a high growth technology startup. Because one, the cash flows are more predictable. And always compare ratios with the same sector. So valuation metrics, finding the intrinsic value. Valuation is going to be final, and it's a crucial step in determining what the company is actually worth to you. If the market price is below this value, then that means it's a potential buy. And the price to earning ratio, PE. So this is arguably the most common valuation metric, and it tells you how much investors are willing to pay for $1 of a company's current or expected earnings. And the high PE, a high price to earnings ratio often suggests investors expect high future earnings growth. All right, so that means it's a growth stock. And think of tech companies, for example. And a low price to earnings ratio can suggest the stock is undervalued, or that investors expect slow or negative growth. All right, and it's a value stock. And the caveat, comparing to price to earnings across industries is meaningless. Compare it to the historical price to earnings for the same company and to its direct competitors. Let's jump to the DCF, right? Let's talk about discounted cash flow. And this is considerably the gold standard of evaluation. And conceptually, it attempts to estimate the value of a business today based on cash flow, okay? And it's expected to generate the future. And it focuses on its future cash. The model requires forecasting the company's free cash flow for many years into the future. So the discount. Future money is worth less than money today. And the model uses the discount rate, which reflects the risk and cost of the capital, to bring those future cash flows back to a present day value. And inherent subjectivity. The final value is highly sensitive to the inputs, like future growth rate and the discount rate, making it more of an art than a science. And the margin of safety. A key concept popularized by value investors like Benjamin Graham and Warren Buffett, it's the difference between the intrinsic value and the market price. And protection from error. When we buy when the market price is significantly lower than our calculated intrinsic value. And this margin protects us if our valuation assumptions were slightly too optimistic. And an undervalued asset. If we value a company at $100 per share and it's trading at $60 per share, the $40 different is the margin of our safety and the remainder of our profit. And the concept encourages a disciplined, conservative approach to investing, avoiding speculative purchases of overvalued assets. So the intangibles, right? Qualitative analysis and synthesis. So numbers don't tell the entire story. The best fundamental analysis blends hard numbers with an assessment of the company's non-financial and leadership. And management and leadership. Okay, the people running the show are crucial. Even a great business can be ruined by poor management. And the integrity and vision of the business is extremely important to take a look at. Does the management team communicate honesty with its consumers? And do they have a clear, credible long-term strategy for their business in general? And as far as capital allocation, how have they used the company's cash? Are they wasting it on poor acquisitions, or are they intelligently investing in R&D, buying back stock when cheap, or paying dividends? And its track record, look at its past performance. Have they met guidance? Have they successfully navigated previous economic downturns? Okay, and have they survived? All factors we have to keep it in mind whenever we're going to be investing. So the competitive moat. So this term is often used by Warren Buffett, for example, and it refers to what a company uses to protect them from being eroded by competitors. So one, their strength. Are they iconic? Okay, certain irreversible brands are here to stay. So for example, a certain beverage company, certain tech companies allow for premium pricing and customer loyalty. And network effects. As more people use the product becomes exponentially more valuable to existing users. For example, social media platforms. And switching costs. How difficult is it for a customer to switch to a competitor? And high switching costs, for example, business software systems lock in revenue. Okay. So, synthesis, forming the investment thesis. Fundamental analysis isn't about finding the best ratio. It's about building a compelling investment thesis. And this thesis is the unified argument that's based on your EIC review, the quantitative data, and the qualitative assessment. The company is undervalued and the market will eventually recognize its intrinsic worth are all going to be things you can put into play before making in your trade. And check some things out on the chart too, just to make sure it all lines up. Okay. Always look beyond the price of the intrinsic value of the business. Focus on free cash flow. Okay. It's the honest measure of a company's health, and invest with a margin of safety. Okay. Don't pay $100 for something that you value at $80. Okay. And if you value something at $300 and it's at $80, then inshallah you can make your decision. And management and the competitive moat are just as important as the numbers. Okay. Does the brand have its own stable concept? Okay. Is it super competitive in the industry that it's in? Is it a leader? Okay. Is it an innovator? All questions you got to ask before you put money into something. Okay. I love you guys so much. Stay prayed to God. Keep grinding. And if you want to learn how to invest, head over to Stackmode.net. Catch you in the next one. Peace.
The real danger in the options trading space isn't the market, it's the people jumping into it with zero understanding. And options can either be one of the smartest tools in your trading toolkit or one of the fastest ways to blow up an account. And the difference comes down to one thing: knowing what game you're actually playing. Most people think that options are some get rich quick button. They might see a clip on TikTok, hear someone brag about a 300% gain, or see something on Twitter, and suddenly they're buying weekly calls or puts like it's a lottery ticket. And that's exactly why they lose. Options aren't risky by nature, but they're risky when you don't respect how they work. Let's go and let's talk about and see if options are too risky. And let's talk about the difference between a gambler and a proper trader. Inshallah. All right, let's go and let's talk about the truth. So is options trading truly too risky? This is the prevailing myth in finance, is that options is just strictly gambling. So with options, it's a little bit different. So let's go and let's break it down. So on options, you make money based off of time. So there's going to be two directions you can either buy based off of. You're either going to buy calls, which is when you're waiting for price to go in an upwards direction, or you can go ahead and purchase some puts, which is when you're going to be waiting for price to go in a downwards direction. Okay. Now on options, you get paid based off of predictions. So let's say for current example, a share price is at $50, right? So let's say you opened a stock and it's at $50 right now. If you think it's going to go up to, let's say, $55, okay, then you would go ahead and purchase a calls contract since you think price is going to go in an upwards direction. Let's say the share price is $50 and you think price is going to go down to $40. In that instance, you would go ahead and play a puts contract since you think price is going to be going in a downwards direction. Okay, so speculation is what they're mainly going to be used for, and speculation means that you're getting paid based off of directional bias. Okay, also hedging too. So since options contracts aren't pure ownership, you're getting paid based off time, and if your time prediction is right within a certain time period, then you'll get paid depending based off of that. So on options, you want to a lot of the times too have some time on your contracts. Once again, that's going to be one of the most important things that separates it from gambling versus actual trading. Okay, so your time matters a lot. There's going to be things called Greeks. You're going to have your delta, gamma, theta, and those determine how your profit moves. Okay, the more time that you have on your options contract, the more it's going to kind of pseudo play as a actual real investment. Okay, but if you have your options contract expiring tomorrow, the chances of a certain number hitting could be very, very skeptical. But if you have your options contract expiring in a couple of years, the chances of it hitting could be very, very likely. So it can be gambling if you make it, but it can also be a really, really good way to keep your money, let your money flow within the market, and dominate the instrument by just taking advantage of the time on your contracts. So let's talk about if there are insurance policies on your portfolio, and let's go ahead and explore the mechanics of risk versus reward on options. Also, one thing on options too, options you can make infinite profit. Okay, so your profit that you can make is infinite, but your risk is going to be set. So if you pay $200 for an options contract, the max you could lose is going to be $200. Okay, but the max you could win is going to be infinite. Okay, so that's the big advantage of options too. So let's go. So just like we talked about in the last slide, what is an option in the first place? An option is a contract, not an asset itself. It derives its value from an underlying asset, stock, ETF, or index. So a call option, right? It gives you the right, but not the obligation, to buy shares at a specific price by a specific date. Okay, so if you think price is going to go in an upwards direction, then you're going to go ahead and purchase a call options contract. Okay, calls, think of picking up the phone. What do you do when you pick up the phone? Okay, you call. Okay, and then we're going to have the puts to the right. Think of putting the phone down. Okay, so call, pick the phone up, puts, put the phone down. Okay, so puts give you the right, but not the obligation, to sell shares at a specific price by a specific date. So calls is if you're betting on the price going in an upwards direction, and puts is going to be if you think price is going to go within a downwards direction. Okay, the United States stock market though is made to go up year after year after year after year. There's also laws in place such as the short sale restriction law, which kind of prevents and helps things from crashing down to zero very, very quickly. So a lot of the times on options, you might be better off playing calls, since it's going to go ahead and be on the actual investor side as well too. And the double-edged sword, let's go and talk about leverage. So options provide leverage, and one standard contract controls 100 shares of stock. And this is where the risk and reward are amplified. So scenario, right? Let's say stock XYZ is at $100. So the stock investor, let's say they buy 100 shares, right? So if the stock price is at $100, in order to buy 100 shares, that would cost $10,000. Okay. And an options trader, let's say they buy one call contract, okay, with the $5 premium. So let's talk about the decimal numbers on options too. So if you ever see an options contract, let's say 2.50, you always want to multiply every options contract by 100 to get the real dollar value. Okay, so 2.50 times 100 is going to go ahead and be 250. If an options contract is 14.20, okay, we're going to multiply that by 100. That's going to equal 1420. Okay, just make it super easy. Okay, whatever you guys see, you multiply that by 100. So let's say the stock price is, or let's say the options contract is 5.70. Okay, then multiply that by 100. It's going to go ahead and be 570. And that's how you're going to go ahead and get the share price for that. Okay, so if the stock goes to $110 and you have a calls contract, then that would be a 200% return. Okay, but if you have it on shares, then that would be a 10% return. Okay, let's just say that for example. So if the stock stays at $100, the stock investor loses nothing, and the options trader would lose 100% of their $500 because the contract expires worthless. Okay, so if your contract doesn't move the amount of ticks that you think it's going to move within that time period, then the options contract could very, very easily expire worthless, and you would see it at a negative 100%. But when you're buying things like shares, you're actually having the actual investment and you have the ownership power. within your account forever until you decide to close. And why is it risky in the first place? So options aren't inherently risky. So gambling behavior is risky, and most retail traders fail due to two specific factors, right? Let's talk about time decay, data. So options have an expiration date. Every day that passes, the contract loses value if the stock doesn't move, and stock owners can wait forever. Option owners are also fighting the clock. So a good way to counter this, though, if you do want to play some options or you see some good plays, try and play what's called leaps if possible. Okay, leaps are going to be contracts that you're holding for like 1 to 2 years out. Okay, try to stay away from like 0 DTEs and things like that, and use your options as a seed to plant for the future. Okay, if you're buying contracts like 1 to 2 years out, and let's say the share price is at $50, right? Once again, so if share price is at $50 and your take profit, you think it's going to go up to $60. Okay, the best contract to buy would be a $51 call. Okay, and you might ask me, Chris, why would we not buy the $60 call if that's our take profit? Because on options, once again, you get paid based off of prediction, and there's going to be bonus points on option. So if the share price is at 50 and you buy a $51 call, but your take profit's at 60, that's going to be a lot of bonus points versus just buying the take profit 60 contract, because then your contract wouldn't really start juicing and making good money until it gets hit. So if you buy a number before your take profit, you're going to get a bunch of extra bonus points, and it's going to hit really, really hard. Now let's talk about buying out the money, right? Try not to do that. Try not to buy cheap contracts. Also, don't forget that it's called trading. When you're winning, somebody else is losing. When you're losing, somebody else is winning. So beginners buy cheap, unrealistic contracts hoping for a lottery win, and these have a low probability of profit. And consistent losses of small amounts add up to account blowups for sure. So don't just buy any random contract thinking it's going to hit. Try and buy 1 to 2 years out, and whatever the current price is, try and buy one above if you're going to purchase a call. Okay, so if the share price is at $50, try and buy a $51 call contract. Okay, if the share price is at $50, you think price is going to go down, try and buy a $49 put contract. Okay, play it like that, buy 1 to 2 years out. The chances of you losing is going to be really, really low. And using options for safety. So professional traders use options to reduce risk, not just to speculate. So the cover call income. So let's say you own 100 shares, right? You sell a call option against them, and you collect the cash premium instantly. This lowers your break-even price on the stock, and this is safer than just owning the stock. Okay, so whenever you have enough shares of a certain stock, you're going to be able to actually sell the options contracts. Okay, and then you're going to have protective puts as insurance. Let's say you own 100 shares and you're worried about a crash, then you would buy a put option. If the stock crashes to 0, which most of the time, if it's a half decent investment, it won't, then you have the right to sell it at the strike price, and you've capped your maximum loss, protecting you on really both sides and just giving you a lot more leverage on your account to manage and maneuver your money exactly how you just want. So covered calls and selling options is something you can also look into. Going to be dropping a video on that very, very soon as well, inshallah. But before that, let's talk about it. So let's talk about selling versus buying the premium. So the house usually wins in options, and the house is going to be the options contract seller. So the options contract seller is pretty much wanting you to do some insane decision. Okay, they want you to make the most dumb decision of all time, and then they're going to get paid off of it. So that's not what you want. You don't want to get taken advantage of, so you need to outplay them. Okay, so the statistical edge. So approximately 70 to 80% of options expire worthless. Therefore, buyers have unlimited profit potential, but a low probability of success. But if you want to see a lot more successful wins within your options trading portfolio, I recommend you guys focus on contracts 1 to 2 years out. And once again, wherever the current strike price is, buy one above or below that number in order to have that consistent value. Okay, that way you're pretty much gonna trick it into almost a shares type of play. Okay, but you're getting the options profit. Okay, focus on time and stay near the current price. And sellers have capped profit potential, but have a high probability of success. Okay, due to the fact that they know people are going to make some uneducated, silly decisions and destroy their account. So don't let it happen to you, inshallah. So conclusion. So risky trading usually involves buying short-term options, right? Like 0 DTEs, weeklies, etc. And conservative trading involves selling options or using spreads or buying contracts within 1 to 2 years out to define your risk in every single scenario. Really just protect your money, okay? You're not on this earth working hard for no reason. Don't go burn your money down to the ground making dumb decisions, okay? You got it. So if you're not focused on your take profit, options can definitely be a problem. If you get reversed on certain areas, the Greeks are going to really hit you extremely hard. And it's things that's happened to me. There's been times where I've been up at almost $1,000 in a day, come back later on due to the fact that I was playing zero DTEs, come back to negatives. Okay, so it's not things like that I want you guys to go through. It's extremely toll taxing on your mental when you guys are trading, and it can bring a lot of anxiety on your next trade, and I don't want you guys to go through that. So understand that they're going to be too risky if they're going to be treated like lottery tickets. So if you're buying weekly out the money calls, zero DTE without risk management, expect those results. But they're not too risky if they're used for hedging, income generation, or if you're buying leaps, which are going to be contracts that are 1 to 2 years out. Okay, so the danger really lies in the trader, not the trade. Okay, so control your flesh, be disciplined, don't make dumb decisions, stay prayed up to God, keep grinding, protect and provide for your family. We'll catch y'all on the next one. Yo guys, it's Stackmode Chris here. Today we're going to be talking about what calls and what puts are in the options trading space. Let's jump straight into it. Options 101, the core concept of a contract. So the definition of right, not obligation. So what is an options contract in the first place? So an options contract gives the holder the right, but not the obligation to buy or sell an underlying asset, like 100 shares of a stock at a specified price, before a specified date. This separation of right and obligation is the fundamental difference between buying a stock directly and buying an option. So let's talk about the contract size. Standard contracts in the US represent 100 shares of the underlying security. So whatever option you purchase, you're technically purchasing 100 shares in a leveraged time asset manner. So when you buy one contract, you now control 100 shares worth and the premium. This is the non-refundable price you pay to the seller for the right granted by the contract, and it's the maximum amount an option buyer can lose. Let's talk about time constraint. So unlike stocks, options have a fixed expiration date. And if the option isn't profitable by that date, it typically expires worthless. So calls. You're going to play calls if you think price is going to go in an upwards direction. It's the bullish tool. A call option grants the buyer the right to buy the underlying asset at the predetermined price when buyers expect the price to rise in an upwards direction. Okay. And let's talk about puts. Okay. There's hedge tool. A put option. Okay. So once again, a put option grants the holder the right to sell the underlying asset at a predetermined price. So put option is going to be bought if you think price is going to go in a downwards direction. Okay, if you think price is going to fall in a downwards direction, then you're going to go ahead and buy a put option. Okay, and it's important to understand the concept of leverage as well too. Options allow you to control a large block of shares. Okay, so it's 100 shares per contract. Okay, so it's a lot of leverage. Okay, it's a lot of power you're going to have to control. Okay, when you start trading options, you're going to realize that it's a lot different than Forex, futures, anything else. Okay, that's a couple of factors that come into its profitability. It's not just you get paid based off of directional buys. There's going to be time that comes into place, strike price that comes into place, etc. Stuff we're going to talk about and get into. So you pretty much purchase 100 shares for a relatively small upfront cost, which is at the premium. And this magnifies both potential gains and losses. Okay, so if you're a good trader, you can really take advantage of this leverage. But if you're someone who's not consistent, you could get punished. So let's talk about the call option. Profiting from the upside. So once again, if you think price is going to go in the upwards direction, then you would go ahead and purchase a call option. If you think price is going to go in a downwards direction, you purchase a put option. An analogy I always tell my students is call. What do you do to call? You pick up the phone. And what do you do once you're done with the phone? You put down the phone. Okay, so think of put down the phone and call, pick up the phone. So profiting from the upside. When you buy a call, you're predicting that the stock's price will move significantly above your strike price before the expiration date. So buying a call, all right, let's talk about a long call. So you pay the premium and your maximum loss is limited to that amount. And your profit potential is essentially unlimited if the stock soars. So the purpose of it, right, is speculation on a stock price increase or buying the stock cheaply if exercised.
and your max loss is the contract cost. So if a stock option contract costs you $500, the max loss you could lose is $500. You can't lose any more than that. Okay, it's not leverage in that sense with margin. Whatever the contract costs is the max you can lose. It's pretty amazing, but the profit you can make is going to be unlimited. It's crazy. So the max profit is unlimited theoretically, as the stock can rise indefinitely. So there's been times where people have turned 5K to $300,000 on certain pumps and stuff like that. Options is amazing. Okay, thank God for options. So let's talk about selling a call, right? A short call. So it's when you receive the premium up front and you're betting the stock price will stay below the current strike price. So the strike price is going to be the current price. So if you ever hear the strike price, it's the current price. So you're betting that the stock price will stay below the strike price. Okay. So the strike price is going to be the price that you think the options contract is going to be going to. Okay. Typically the price that, you just want your options contract to go to. And the purpose of it is to generate income. Okay. To where you can bet against significant upward movement. And as far as the max loss, right, it can be unlimited, as the stock price can rise infinitely, forcing you to buy high. And the max profit, right, it's going to be the premium received. So for example, $200. So here's a call option example. So let's say stock A is trading at $50 and you buy a $55 call. The reason why you buy a $55 call is because you think it'd go up to $55. Even though it's trading at $50, if you think it's going to go up to $55, then that's going to be a contract you're going to go ahead and purchase. Okay. And so going back here, so the strike price is going to be the number that you want to buy, okay, non-current price. So if stock A closes at $60, right, and you bought a $55 call contract, you'd make a lot of money. You're getting paid based off predictions. So if you think price is going to go to 70 and it's at 60, if you buy a 62 calls contract, that's in between 60 and 70. So any strike price contract in between 60 and 70, you're going to be able to purchase successfully. Okay. So stock A closes at $54, right? And you thought it was going to go down to $50 and you bought a put option, okay? Then you'd be in the negatives, okay? If you bought a 50 puts and price at 54, okay, and price hasn't hit that, you'd probably be in the red, okay? Say price at 60, you bought it at, say you bought it at, let's say you bought it somewhere near 60, right? And then you think price is going to go down to 40, okay? If price A goes up to 70, that's further away from 40. Okay, so your put contract would then be in the negative. Okay, so the further away of the opposite side would make your money go to the downside. Okay, so if you think it's going to go up and the price starts going down, you'd be losing. If you think the price is going to go down and the price starts going up, you'd be losing. So the put option, protecting against the downside. So buying a put is like buying insurance, and it gives you the right to sell your asset at a fixed price, limiting your losses or allowing you to profit from a price drop. So buying a put, right? Let's talk about long puts. So it's when you pay the premium for the right to sell. And this is the primary tool for betting on a drop in the underlying stock price. So you can speculate, which pretty much means you place a bet on directional bias, okay? Or you can hedge, which means you buy puts and calls whenever something's going to happen to protect a long stock position. And your max loss is going to be whatever you paid for the contract. So if you pay $300 for a puts contract, your max loss would be $300. And your max profit, okay, would be limited for a put contract, as the stock can only drop to it can only drop to 0. And there's only a few instances of that happening. But if something's profitable and really helps the economy, there's short sale restriction laws to really prevent things from tanking down to 0 like that. So keep that in mind. So selling a put, so especially when you're trading the crypto and stock market too, keep that in mind. Okay, when you're trading against a market where people are trying to buy and hold their money, expecting it to go up. So your downside trade is going to be pretty limited. So keep that in mind. So let's talk about selling a put, right? Short put. So it's when you receive the premium and you're betting that the stock price will stay above the struck price. And then your risk is substantial if the stock crashes. So the purpose of this is for income generation. Okay. Or you could put on an aggressive bet on upwards or sideways movement. And your max loss can be substantial. Okay. And the max profit is going to be the premium received. And a put option example. Okay. Let's say current price is at 70. Okay. Let's say you think price is going to go down to 60. Okay. You could buy any contract in between 69 and 60 in order to try to make some profit. Okay. Now, if price goes up to 75, you'd then be in the negative profit. Okay. But if price goes down, any number between 69 and 60, you'd be in the positive profit. So decoding the details, right? The essential terminology. So let's understand 4 terms that they're vital to really interpret any option chain. So the strike price is the agreement price. This is the fixed price at which the option buyer has the right to buy, call, or sell put at the underlying stock. And this price is set when the contract is created. And the expiration date, it's a deadline. So every contract has an expiration date. The further you buy out, the better. We're going to talk about leaps here soon. So what a leap contract here is. So a leap contract is pretty much just a really, really, really long contract. Okay, so it's whether a couple of months or you have some years on the options contract. Typically, you want to make sure you have your options contract for at least months or years. Okay, this way you guys aren't going to be getting destroyed by what's called the Greeks. Okay, some crazy things that could destroy your profit if you don't position or do your research. So the premium, right? Let's talk about that as first. So the premium is the market price of the option contract itself. So you're going to see options contracts in decimals. So you're going to see an option contract be like 1.70 or something like that. Okay, or you'll see like 2.10. And what you're going to do, any decimal that you see on the options contract, you're going to have to multiply it by 100. Okay, so that would equal $210. So 1.70 times 100 would equal $170. Okay, 0.75 times 100 would equal $75. Okay, so keep that in mind whenever you guys are trading options and you just see a bunch of numbers with decimals and stuff like that going on. Okay, that's what's happening. Keep that in mind. So moneyness, right? The profit status. So this refers to the immediate profitability of the option if exercised right now. And let's talk about in the money. It means the option has intrinsic value and immediate value if exercised. So for a call, stock price, or strike price. And for a put, you're going to be doing strike price over stock price. Okay. So at the money, it's when the strike price is equal or very close to the current stock price and contains only time value. And let's talk about the term out the money. It means that the option has 0 intrinsic value. And for a call, right, the stock price must be less than strike price. For a put, stock price would be greater than the strike price. And these only consist of time value. And rule of thumb, out the money options are cheaper, but they have a lower probability of becoming profitable. And the money options are more expensive, but they carry less risk. Okay. So that's the reason why in the money options focuses on the stock price. Okay, especially for certain things like a call, for example. Okay. In the money option, you want to try and play or buy a strike price contract that's going to be as closest to the current price as possible. Okay, so focus more on the stock price more than you're focusing on the strike price level at the times. So let's talk about Greeks. Okay, these Greeks can be absolutely crazy. Okay, these are going to be things that could destroy your profit if you don't understand them. Okay, it can really destroy your whole portfolio, destroy a lot of things you're working hard for. So let's understand them. So the Greeks are measures of the sensitivity of an option price, right? The premium, to changes in key factors like time, price, and volatility. And they're crucial for serious risk management. So let's talk about the delta, right? So the delta tells you how much the options price to change for every $1 change in the underlying stock price. It also represents the probability that the option will expire in the money. And the theta. The theta measures the decrease in the option's value, right? It's the premium for every passing day. And as an options buyer, theta is your enemy. So once again, as an options buyer, theta is your enemy. As an option seller, theta is your friend as you profit from the time decay. Okay, but theta is typically a negative value. So gamma. So buying options and selling options are going to be two different things. I'm going to make a completely separate video on that. Buying options, you're wanting the direction to happen. Selling options, you're selling options to people. You're pretty much selling dreams to people. That's pretty much what selling options is, selling dreams. So gamma. Gamma tells you how much the delta value changes for every dollar change and the underlying stock price. And that doesn't mean a good selling dreams too. They're pretty much betting on you to lose. Okay. And it's gamma is going to be the rate of acceleration of your options profitability, and it's the highest for at the money options. Okay, and it's always going to be positive for option buyers. So the Vega, right? Let's talk about volatility. So Vega measures the change in the options price change for a 1% change in the expected volatility of the underlying stock. And high Vega means that the option is sensitive to market sentiment and expected price swings. So the investor's perspective, if you're buying an option, you want high positive delta, high positive Vega, and low negative theta. And if you're selling an option, right, selling dreams to people, betting on their optimistic goals, okay, or optimistic views, betting on them to lose. And if you're selling an option, you want the opposite. You're looking at profit from the time decay, okay, the theta, and you want a stable stock price for the most part. Okay, that's just what you're going to be looking for as a seller. It's going to be two different games between buying options and selling them. Okay, two different games. So some basic strategies, right? Long versus short option. All basic option trading can be broken down into two core activities: buying contracts, okay, that's for going long, or selling contracts, okay, going short. So let's talk about buying options, okay, long calls and long puts. So this is generally the starting point for beginners because the risk is defined and limited, and you pay the premium upfront. So it has defined risk. If you think price is going to go to a certain place, you buy the contract for it in the direction that you want. Calls if you think it's going to go up, puts if you think it's going to go down. So you have a defined risk when you buy options, and your maximum loss is the premium paid. You can't lose more than the cost of the contract. But due to time decay, and this is why you would pay a leap contract. So leap contract is going to be a contract over like 3 months to a couple of years long. So any contract with months on it, years on it, that's a leap. So you won't have a high probability of loss. Okay. So in order to counter high probability of loss, make sure you guys buy time. Okay. Buy leaps. Please don't try to trade 0 DTEs and weeklies and you don't know what you're doing. So due to time decay, theta, most options expire worthless. So this is why it's important to buy certain contracts close to current stock price. Okay, focus on the stock price. And you need a fast, large move in your favor to overcome the premium cost sometimes. Okay, but if you play options like shares, where you're buying options contracts years out or months out, expecting to hold for a long time, you can outplay the system. Yes, they cost more money, but trading is not just about making money. Okay, don't just focus on the trades that are going to make you money. Focus on the trades that are going to lose you money. Focus on the trades that are going to preserve your money. Focus on the trades that are going to keep you safe. And options has leverage returns. If the stock moves favorably, the percentage return on your initial cash outlay, right, the premium, can be really huge. So let's talk about selling options, right? Short calls and short puts. It's when you collect the premium up front. And this requires a much higher level of caution and often higher margin requirements. So there's going to be unlimited risk involved in between selling options. Okay. So for short calls, selling uncovered calls has theoretically unlimited risk, making extremely dangerous for beginners and a high probability of gain, right? Since most options expire worthless, depending on which ones you do, let's say price is at 60. If you sell an option that's at 75 and somebody's optimistic and they buy that, okay, then you would make money, okay, because they didn't win. So it's trading. When you make money, somebody is losing. And when you're losing, somebody is making money. Okay, that's just how trading works. So since most options expire worthless, the seller has a statistical edge and profits if the options expire out the money. Now, if you're really good at the market though and eyeballing certain things, you could definitely slam buying options for sure. But the defined reward. Your maximum profit is strictly limited to the premium collected when you open the position. And a critical risk note, right? Never start by selling naked uncovered call options. This means selling a call without owning the underlying stock. If the stock unexpectedly surges, your losses can really wipe out your account really, really fast. Okay? And stick to just buying options until you have the advanced experience with risk management and margin to sell options if you wanted to. So, options give you the right, but not the obligation to buy speculative direction. Calls give you the right to buy, and puts give you the right to sell. So remember, calls are what you purchase if you think price is going to go in an upwards direction. And you're going to buy puts if you think price is going to go in a downwards direction. And risk is defined when buying options. Okay, your max loss is going to be what you pay for. If you pay $400 for a contract, you're going to lose $400 max. But guess what? The profit you can make is infinite. Okay? The God is great. So theta is going to be the time decay. In order to counter that, make sure you guys are buying months out. Okay, buy months out, years out, and give yourself time. And shorter term options are riskier due to high theta. So even though they might be cheaper and look more intriguing, stack up, get in a stack and buy the contract that's going to really get you to where you need to be. And practice first. Make sure you guys are paper trading. Try it out. Make sure it's what you guys like before you put in any type of real capital. All right. I want you guys to stay creative to good. Keep grinding. I'm going to catch you guys next one. I love you. Peace. What's going on, class? Today we're going to be talking about the number one investing mistake that all beginners make. Let's jump into it. It's not about what you buy. It's about when you sell. And stop thinking that everything is quick and instantaneous. You're not going to get rich overnight. You're going to have to hold these positions for a long time in order to actually build your portfolio. So be ready to be in the game for decades and years. And if you think that market's a casino or you think you're about to come in, get rich quick and get out, you're not going to make it. I'm just going to keep it simple like that. But if you're someone who's ready to wake up, pray, be disciplined, be consistent, and ready to get to the next level and improve each and every single day, then the sky's going to be for you. Let's go. So 1, the emotional market timing. The belief that you can consistently buy at the lowest point and sell at the highest point. Not true. Okay. Sometimes you're not always going to catch the lowest of the lows. You're not going to always be able to sell at the all-time highs. People obsessed with catching the ultimate tops and bottoms normally don't typically make money. Okay. They'll go through a panic cycle. So buying high, for example, investing after a big market run up, say Bitcoin, for example, people like to consistently buy all-time highs. Once they start seeing Bitcoin being posted all over the internet and stuff like that, it's at all-time highs, then people want to go ahead and invest in. And then they're going to go ahead and get pulled back on due to the fact that instead of investing at a certain low and catching the sweep up, they just decided to buy all-time highs due to hype. So FOMO. FOMO is going to be the biggest mistake that certain people make when it comes to investing. Okay, being emotional and FOMO. FOMO stands for fear of missing out. Okay, so thinking that, oh, I'm not going to get money in this trade if I don't hop in right now. Like, relax. Most things go down just to come back up. Okay, understand that when market decides to go down, all it is people selling. People have gotten in from way from the beginning of the stocks opening or tokens opening. So people, of course, are going to take profit eventually as it goes up. Okay, and don't sell though. Okay, out of fear. Selling everything during a market crash or just a dip because the news tells you the sky is falling. Okay, you should have your stop losses in place, which is going to be an automatic order that's going to close your trade at specific areas in case your trade goes to an area you don't want it to. But otherwise, you can't just sell based off of just certain dips and stuff like that. Have a long-term vision, have a long-term plan. And a lot of you end up negative in P&L too, profit and loss at the end of the year due to the fact that you guys close your trades too early. If you don't give your trade room to breathe and really do its thing, you're going to consistently just keep selling for a loss over and over again, causing you to be unprofitable. And if you guys have noticed that, oh man, after market dipped down, a couple of days or weeks later, you'll notice that prices even past where it dipped from where it was high at before. Okay, so you have to realize that just by holding a little bit longer and being emotionally resilient through drawdowns, you could actually make a lot of money. And lock-in losses and missing inevitable recovery. Okay, so you're locking in losses every time you just decide to sell early. Every time you sell early outside of your plan or sell early thinking, oh man, I don't want to lose money, or you just see a little bit of drawdown, you sell early, you're locking in losses. You're not locking in gains at all. You're locking in losses. And that's not what we want to be doing. Okay. And make sure we're not chasing the hype. Okay. So when it comes to stock picking or crypto token picking, believe it, you can find the next Amazon or crypto based on a tip from a friend or social media may not be the most ideal answer. make sure you guys are doing deep financial fundamental analysis. Make sure whatever you're investing in is profitable. Okay, this way other people are going to go ahead and invest into it as well too. Make sure it's having a future, and make sure it's really making a way for people to have an easier time within life. Okay, because a lot of the times those companies and those tokens, what they're going to do is go ahead and put money in people's pockets since they're advancing the future. And putting 90% of your money into one risky asset can be really, really bad too. Make sure you guys diversify a little bit. I recommend you guys do between like 1 to 3 long-term plays. Okay, so even if you're a day trader, I recommend you guys still trade between 1 to 3 long-term trades. And the reality of it all, active traders consistently underperform the broad market index over the long term. So the devastating costs, missing the best days. So when market returns from 1980 to the 2020s, for example, the average return of the S&P 500, which is just the index of the top 500 United States companies, okay, just put into one big conglomerate called the S&P 500. You can decide to invest in that. And the average annual return of the S&P 500 is 10.7%. Okay, let's say investor A, for example, they didn't close, they held due drawdowns, they knew that market was going to fluctuate up and down, but eventually they know that the whole goal of the market, cryptocurrency or stock market, is for the price to go in an upwards direction. Because why? For the stock market, when people release an IPO, you have to understand that people are releasing the stock market in order for them to gain more funding for their company. Okay, so that's why we're buying shares to be participants of that. So they want their stock to go in an upwards direction. Same thing with crypto tokens. There's people putting in tons of work behind these projects, and they want their crypto token to go up because I'm sure they have large reserve as well too. So investor B, let's say investor B missed the best 10 days, okay, and their annual return plummets to 4.9%. And investor C missed the best 30 days, and their annual return drops to 1.5%. The best days usually follow the worst days. And if you're out the market, you miss the recovery. Okay, so the best days usually follow the worst days. So what that usually means is after market dips, okay, you want to go ahead and try and catch the sweep at the low and catch the sweep back up. Okay, even if you don't catch the most bottom entry, if you start seeing market make a nice sweep upwards, especially towards an area of resistance, say all-time highs, because market's goal is always going to be trying to break all-time highs. Whether it be stocks or crypto, market is always going to be trying to break all-time highs. So always know that. Put that into your logic. So the fact that you know it's always going to try to break all-time highs, any low, okay, that happens, especially after that, and market starts going in an upwards direction, that'll be a great time to buy. And that's the best days. Okay, when you catch the best days and you're able to catch nice sweeps consistently, you're going to be able to make a large percentage gain back. Okay, and taxes as well too can come into play. Frequent selling means you're paying short-term capital gains tax, which is taxed at your higher ordinary income rate. Okay, so that's also why there's going to be something called long-term tax gains. So I recommend you guys have 2 portfolios. I recommend you guys have one account for day trading. Okay, and make sure you guys are doing your short-term capital gains tax calculations on there. And then I recommend you guys have one long-term portfolio. Okay, and then your long-term portfolio can go ahead and be used for holding your shares, okay, your ETF plays, exchange traded funds, or even your crypto plays, etc., for just some years. Okay. And trading fees. While many brokers are commission free, hidden fees like fund expense ratios and bid-ask spread friction still erode small, frequent trades. So the cure: embrace automated indexing. So 1, dollar cost averaging is really going to help you out. Do your calculations, pay your rent, okay, get some groceries, pay your extra bills. After that, see what you have left over. Okay, what do you have left over? After that, I want you guys to take that dollar amount, right, and divide that by like 50%. Okay, whatever you have left over after rent, groceries, and bills, take that 50%, because the other 50% stuff might come up. You might need gas for your car, emergencies, I don't know, Uber, something like that. So you don't want to just invest everything. So take 50% of whatever you have left over, okay, or 60%, however much percent you guys are comfortable with, maybe 70, okay, and take over that percent of leftover, and then you can go ahead and invest that into the market. This way you guys take care of all your priorities. You're not going to be trading out of desperation. Okay, you have some money left over in case you want to get some food, you need an Uber, you need a bus ticket, you need some gas for your car, something happens. Okay, you guys have some money left over, and then the remainder of that you can go ahead and safely invest. So you can go ahead and buy the market as well too. You can use your funds to buy low cost stocks, or you can buy index ETFs, exchange traded funds that track broad market indexes like the S&P 500 or the total market, VTI. And diversification, it can remove single stock risk if you're wrong, especially when you're a new trader. ETFs can be a really good way, but single stocks are also going to be a fantastic way to make some profit too, to do your research and make sure you guys know what you're investing in. So patience, the compounding engine. Your primary job is to give your money time to work without interruption. So during year 1 to 10, your growth is going to be pretty slow. Okay, this is going to be when you're running up your money. Okay, you're taking it from like $100 to your first million. Okay, I say within the first 1 to 10 years, then 10 to 20 years, should be able to take it from $1 million to 10 million, and then 20 years plus 10 million plus. Okay, but you guys can also shatter these time frame way quicker than what I'm saying here. But your growth might be slow at first. Your returns are mostly going to be from the money you personally contributed, and the discipline is going to be just compounding over time. Once year to 10 to 20 hits, okay, or even year 5, even year 3, growth is going to accelerate and returns start being driven by money and making more money, compounding. And this is when your long-term plays are really just going to be paying you guys. Even just 50K invested into certain ETFs will go ahead and pay you guys back. And years 20, it's your exponential phase. The interest earned vastly outweighs your new contributions. And time is going to be your largest contributor when it comes to investing in the market over the time like this. And the goal is not maximum return, but the maximum time in the market. Keep your account alive. The more you guys keep your account alive, and the more you guys focus on the trades that are key to keep your account alive, instead of focusing on the trades that are just going to make you profit all the time, the better you guys will be at keeping your account. And the better that you are at keeping your account, the more consistently you can make some profits, inshallah. Because as long as your account's alive, you can make some profits. So the winning mindset. Boring trading is beautiful trading. There's no such thing as boring trading, in my opinion. Did you stick to your logistical plan? Okay, I know when I stick to my break and retest strategy, I'm happy. Okay, I'm love withdrawing. Okay, I'm excited. I'm ready to come into the next trade, and I'm really just coming into the mindset of, okay, I'm ready to dominate. And automate everything. Set up automatic deposits if you can too, so you guys don't even have to think, or put yourself on an automatic schedule. Be like, you know what, every 2 weeks I'm gonna invest this. Every week I'm gonna invest this. Every percentage of my income I'm gonna invest this. And set up automatic deposits in investments and make saving the path of the least resistance. Okay. And diversify. Buy the market using low cost index funds. You can go ahead and own stocks as well too, and just do what you would like to do to go ahead and invest. Okay, just make sure you guys are doing your research though, and think decades into the market. Even my day traders, think about reinvesting that profit into long-term plays. This way your money's going to always be making you guys money, because there's going to be a time where our brains aren't going to work the way we need them to all the time. Our bodies aren't going to work the way we need them to all the time. So let's grind now. Let's stay down now. Let's invest into the markets, and our money will be making us money for the rest of our life, inshallah. And you can ignore daily market movements. Your money is planted for the long term, and don't dig up the seeds. And the best investment strategy is the one you can stick to. All right, stay prayed to God. Keep grinding. I love you guys so much. You can head over to stackmode.net for all trading education. Catch you guys in the next one. Peace. Hey class, today we're going to be talking about exactly what a hard fork is within the decentralized finance space. Let's go and let's jump into it. So, code, consensus, and chains. And at its simplest, a fork in the blockchain technology refers to a change in the network protocol. This change usually involves updating the software used by nodes to validate transactions and blocks. A key distinction must be made between a simple software fork, and that's copying open source code, and a protocol fork, which changes the consensus rules. So, a software fork, code-based copy. So the definition of a software fork is it copies an open source code base, for example, Bitcoin Core, to start a new, often compatible project. And the impact of it. It does not affect the original blockchain's history or consensus rules. It creates a new independent project. And for an example, Litecoin. It was originally a fork of the Bitcoin code base, but now it operates on its own chain. Let's talk about a protocol fork. Consensus change. And the definitions of a protocol fork is it modifies the rules that govern which blocks and transactions are considered valid on a single blockchain. And the impact of it. They directly affect the chain's integrity, leading to a split in the network's block history. And the outcome of it is it requires all participating nodes to update their software to maintain network harmony. And the core difference lies in the shared history. A protocol fork shares the entire history up to the point of divergence. So, the critical distinction. Let's talk about soft forks versus hard forks. So understanding the difference in compatibility is paramount to grasping blockchain evolution. And this dictates whether the upgrade creates one chain or two chains. So a hard fork, non-backward compatible. So as far as a rule change, it introduces new rules that are incompatible with the old software. And the mandate of it, all nodes must upgrade and old nodes will reject blocks created by new nodes. Okay, so all nodes must upgrade. The old nodes will reject blocks created by any new nodes. And the outcome, if the community is divided, which is gonna be caused by lack of 100% adoption, the chain will then split permanently into two separate blockchain, A and B, each with its own currency. And as far as the hard fork, the non-backward compatible system, both chains share this same history up until the block of the fork. And let's talk about soft fork. Soft forks are gonna be backwards compatible. And the rule change implemented into it is that it tightens existing rules, making a previously valid block invalid under the new rules. And mandate, only a majority of nodes need to upgrade, and old nodes will still accept blocks from new nodes because the new blocks satisfy the old and stricter new rules. And the outcome of it, the network effectively remains one chain, and the old chain slowly dies out as the new blocks are not recognized by the majority, forcing compliance into it. For an example, Bitcoin's SegWit, and SegWit stands for Segregated Witness, and that was a classic soft fork implementation. So a lot of these things that we do know were actually fork implementations that just stuck around. So let's talk about this case study here. Bitcoin Cash, for example. Bitcoin Cash, also known as BCH, okay, the scaling schism. So the split that created Bitcoin Cash, BCH, on August 1st, 2017, it's the most famous example of a contentious hard fork rooted entirely in a debate over scalability. And the problem is Bitcoin block size. The original Bitcoin protocol restricted the block size to 1 megabyte, limiting transaction throughput to about 7 transactions per second. Okay, transaction per second can also be abbreviated as TPS, which leaded to high fees, also known as gas. So the term gas equals fees, leading to high fees and slow confirmation times. So that was way too slow. Okay, wasn't quick enough, and it had to get quicker. So the division, the two scaling facilities, so core devs at Bitcoin, preferred off-chain solutions like SegWit, also known as the soft fork system, and Lightning Network. Okay, BCH proponents preferred on-chain scaling via an immediate increase in the block size limit. And the outcome, a permanent split occurred. Since changing the 1 megabyte limit was non-backwards compatible, the minority group implemented a hard fork to increase the limit to 8 megabytes, later to 32 megabytes. Okay, so as technology increases and technology gets more powerful, the whole decentralized space changes. And it results in two chains, Bitcoin, also known as BTC, and Bitcoin Cash, which is going to stand for BCH, and the technical impact between the two. The hard fork ensured that any node running old Bitcoin software would consider BCH blocks, which were greater than 1 megabyte and invalid, physically separating the two chains and their stories post-fork. So let's talk about case study number 2, the Ethereum classic, the ETC, the ethical split. So the Ethereum fork that created Ethereum Classic, ETC, on July 20th, that occurred in 2016, it was not about scaling, but about philosophy and dealing with an economic exploit. So let's talk about the DAO incident here. So the DAO incident, which occurred in June 2016, and a decentralized autonomous organization, also known as a DAO, is built on Ethereum, and it suffered a hack/exploit. So people got into it, breached the database, and it drained roughly $50 million worth of Ethereum at the time, okay, worth of Ether, due to a vulnerability in its smart contract code. So the smart contracts are going to be the autonomous system that controls the whole decentralized system. So in a centralized system, banks control everything. They can confirm whether or not transactions go through or not, and they control the reserves. Within the whole smart contract decentralized blockchain system, everything is done autonomously on a smart contract system, kind of like a vending machine. So, but hackers were able to get into that due to the fact that the security system was a lot weaker about 10 years ago from these videos dropping, and it's only increasing as developers, AI, and coders notice more exploits and prevent them. Alhamdulillah. God is good. So, proposed solutions. The Ethereum community largely voted to implement a hard fork to roll back the chain history and return the stolen funds to their original owners. Okay, so they were able to roll back the history and roll back people's funds back to them. So, extremely nice. God is good. So, the principle of it, code is law. A minority group of community members rejected the fork on the basis of immutability and the code is law principle, arguing that interfering with the chain, even due to undo a theft, set a dangerous precedent. And we'll talk about the split. The majority moved to the chain, called Ethereum, ETH, and the minority remained on the original unforked chain, which was renamed Ethereum Classic, also known as ETC, preserving the hack history. So, this case illustrates that hard forks are not just technical. They often involve deep ethical and philosophical debates about decentralized governance and immutability. And once again, the decentralized space is going to involve no superpowers. Everything's going to be done by pretty much AI, computers, and smart contracts. So why hard fork? Let's talk about the rationale and objectives of it. So while often continuous, hard forks are sometimes necessary for the survival or significant evolution of a decentralized protocol. They're generally triggered by three main factors. Let's talk about the first one. So they introduce new incompatible features, okay? And when major changes are needed that fundamentally alter the way transactions or blocks are structured, for example, changing the hashing algorithm, introducing a new scripting language, or integrating privacy features, the old software simply cannot interpret the new data structure. So number two, fixing critical security bugs, extremely important to keep our money safe, okay? Inshallah. So if a critical vulnerability is found that could compromise the entire network, causing a catastrophic bug, a scheduled hard fork might be the fastest way to implement a necessary fix that prevents further exploitation, often involving a protocol reset so people can get their money back if anything was lost in the first place. And they reverse malicious transactions. Controversial, okay, but could be necessary in certain cases where, once again, people are trying to take people's money unfairly. And as seen with the Ethereum ETC, Ethereum Classic, a fork can be used to bail out a network after a significant loss of funds, effectively rewriting the history of the chain to reverse the malicious transfer. And this always raises governance questions because, you know, people can just reset and roll back transactions. But if it's used in a responsible way, I can see how it could be safe. But then again, would this be centralized? Let me know in the comments below. So hard forks that are planned and implemented with full community backing, yeah, like Monaro's regular updates, are often called non-contentious hard forks. So implications for users, exchanges, and developers. A contentious hard fork like Bitcoin or Bitcoin Cash, it has massive downstream effects on the ecosystem, requiring coordination across various entities. And the user impact of it, free coins and confusion. So coin duplication. Holders of the original coin automatically receive an equal amount of the new coin on the new chain. So for example, Bitcoin holders got BCH. And wallet management. Users must ensure their wallets support coin splitting and replay protection to safely access the new coins without losing the old ones. And market volatility can also be a factor. The value of both coins often experiences extreme volatility immediately post-fork as markets decide which chain to support. And the impact of the ecosystem, let's talk about the exchanges and developers. So exchange listing. Exchanges, which is pretty much places where crypto tokens and stocks can be listed, exchanges must decide whether to list a new coin, requiring significant technical work to ensure stability and implement deposit, also known as withdrawal infrastructure, okay? And replay protection. Developers must implement measures to prevent a transaction valid on one chain from being replayed and validated on the other, and that's crucial for security purposes. And development resources. The talent pool is going to be split, potentially weakening the development resources and future progress of the original chain in the first place. So, hard forks, while disruptive, they represent the ultimate form of decentralized governance, and they're the mechanism by which communities can execute fundamental disagreement, allowing different ideological and technical visions to coexist. So, some key takeaways. A hard fork is a non-backwards compatible protocol that change based on the results, and it results in a permanent chain split unless 100% of the community upgrades. And they're often driven by three factors. One, feature upgrades. Two, security fixes. And philosophical disagreements. Okay, for example, scaling or immutability. And some key examples of a hard fork are Bitcoin Cash, okay, over scalability, and Ethereum Classic over immutability, following the decentralized autonomous organizational hack. And they forced the entire ecosystem, users, developers, miners, exchanges, to make a binary choice and adapt to a new reality and choose what's best for them. Stay prayed to God, keep grinding, head over to stackmode.net for all trading education. I'll teach you how to trade cryptocurrency. Peace.
Most beginners lose money trading futures, not because the market is hard, but because they start wrong. Today, I'm going to show you the right way and the simple steps to your first profitable futures trade. By the end of the video, you'll know exactly how to pick the right contract and how to avoid the traps that wipe out new traders, and the exact setup professionals use to stack consistent wins. No fluff, no complicated math, just a clean, actionable beginner framework that actually works in live markets, prop firms, and even if you've never traded futures in your life, inshallah, if God wills, you'll know how to trade it by the end of this course. Let's jump into it. Okay, so this is going to be how to trade futures and catch dips and certain lows. Okay, so we're just going to go ahead and jump straight into it. So what you want to do is start off doing top-down analysis. Okay, top-down analysis is when you're going to be starting from your highest time frame and scaling down to your smaller time frames. So what we're going to go ahead and start off with is our weekly time frame. Okay, our weekly time frame are going to be our eyes. Okay, you're going to be able to see absolutely everything you need to see on the screen. You got to start on a higher time frame, especially on futures. You cannot sit there in tunnel vision on things like the 5-minute and the 1-minute and not understand the true directional bias. Okay, we're also going to talk about some logical things and some logistics of why it's better to play certain directions within the US market. Okay, and futures is going to be a US market. Okay, we're going to talk into everything, and this is going to be the full futures guide. Okay, so we're going to go ahead and have the weekly here, right? Weekly time frame is going to be our eyeballs. Okay, we're going to be able to see everything we need to see on the higher time frame basis. That's going to be pretty relevant. Then from there, you want to go ahead and head down to your daily time frame. Okay, you're going to go down to your daily time frame. It's going to show you a little bit more candles than you would see from your weekly. Okay, and each one of the candlesticks that you're going to see is going to determine the amount of price action that's happening within a certain time frame. So if you're on the weekly time frame, each one of the candlesticks that you see will represent 1 week. If you're on the daily, each one of the candlesticks will represent 1 daily. Okay, so that's how things fluctuate and change. Okay, so it's just about knowing when to use certain time frames and how to use the flow. Okay, and once again, the flow is going to be going from your highest time frame to your lowest time frame. Okay, highest time frame to your lowest time frame. So we're going to go from the weekly to the daily to the 4-hour time frame. Okay, the 4-hour time frame is going to be extremely important, and we're going to talk about why. So if I get on the 4-hour time frame, we're going to see here in the bottom right of trading view, okay, you're going to see the words ETH. Okay, so look in the bottom right here, you'll see the words ETH. ETH is going to stand for extended trading hours. Okay, it's going to stand for extended trading hours. And what that is going to show you more candles that would be hidden than if you didn't see. So market is open normally from 9:30 a.m. Eastern time, okay, to around 4 p.m. okay, Eastern time. Okay, that's going to be like the basic stock market time. But with extended trading hours and with futures, market is also open on Sunday. It opens at Sunday at 6 p.m. and is open until, I believe, Friday at around 6 p.m. as well too, Eastern time. Okay, so extended trading hour is going to show you the Sunday hours, which you need to see. Okay, if I turn off extended trading hours, okay, the chart is going to look a little different, and you're going to see little areas like this
Okay, we're going to see gaps in between certain spaces. But if I turn on electronic trading hours and I go back to the same place, I'm going to see price have a filled in area there. Okay, so that's why extending trading hours is extremely useful to use, and why you can't just live completely on your higher time frames. Okay, all your time frames are going to be useful. Okay, you got to use all your time frames. Got to. Okay, all your time frames are going to be important to use. They're all going to help you out, and it's about knowing when to use what, once again. Okay, so that's going to go ahead and be that. So you're going to go from your weekly to your daily to your 4 hour to your 15-minute. Okay, weekly, daily, 4 hour, 15-minute. Okay, that's how your futures flow needs to go. Do not just tunnel vision on the smaller time frames. Yes, the futures income is nice. Yes, you can scalp and make some money, but it's not just about that. It's going to be about the discipline. It's going to be about catching your nice big trades. Okay, you don't want to be just trading for pennies. Okay, especially on futures. This is why on futures, I recommend be on the live account. Okay, because when you're on the live account on futures, things are a lot different. Okay, you can hold your trades overnight. Okay, when you're on prop firm, you cannot hold your trades overnight, which hurts your profit significantly. Okay, the extended trading hours time is going to be when a lot of price action decides to occur. So when you get a good entry and you see which way price is flowing in, you can make some nice money and turn a small account to a lot. Okay, fairly fast with futures. Now it's going to be a lot of power in your hand. Okay, when it talks about futures, it pretty much just means make or break. Okay, you can make or break all your profit. Okay, so let's talk about some certain things when it comes to futures before we get into the chart. Let's talk about margin. So margin is going to be an important thing when it comes to the futures market. Margin is going to be the amount of money required in order to open a contract. So in order to outplay this, right, thank God we have the new micro futures accounts. So micro's futures accounts cost less than normal's futures contracts. So let's say you're trading the NASDAQ 100, also known as the NQ, okay, which mirrors the QQQ, okay, stock or ETF. So index. So NQ, right? Let's say it costs $1,000 to open up one contract of NQ. Okay. On most brokers, it'll cost you like at least $1,000 to open one contract of NQ. Thank God, though, we have something called the micros, which helps us trade more efficiently, and this way we can trim and get more value for what our account size is. So now we have micros. So now you could play something called MNQ. Okay. And instead of spending $1,000 on a contract, you can then spend $100 on a contract. Okay. And you could flip that fairly simply. Okay. Let's say you're on YM. Okay. Which mirrors the US 30. Okay. It might cost you $500 to open one contract. Okay. And if you're trading MYM, for example, it will go ahead and cost you just $50 to open one contract. Okay. And you could still make some great money. And instead of buying one contract of YM, you could buy multiple contracts of MYM and be in a much better position. Okay. So you can think about that. So the micro contracts are going to be new contracts. I believe they came out like 2021, something like that. Fairly new. Thank God. And now we have the ability to trade with less money. So even if you do have a big account, you could trade a bunch of micros and trim and trade how you want and hold your trade as long as you want. And as well, when you trade the micros, they're going to have lower overnight margin. Okay, so OVM, overnight margin. Okay, so it might cost $50 to open a micro contract during the day, but if you want to hold it past 5 p.m. Eastern time, then the margin might go up to like $400 a contract. Okay, so you got to make sure you're having the overnight margin and the day margin if you want to hold overnight. Okay, so pay attention to that, and every broker is going to have its own different amounts. Okay, it's a lot of important things to know before we just jump into trading futures, because you can get what's called margin called, where if your account goes underneath the amount that required, let's say MYM, Okay. Let's say it requires at least $50 in your account. If your account goes underneath $50, let's say it goes to $48, it'll go ahead and just wipe all of that and put it straight at zero. Okay. And if your price action goes against you too fast, you might even owe the broker money sometimes. Okay. So you want to make sure that your dollar amount is a pretty good amount over the amount of margin. So if it requires $400 to hold overnight, then try and have at least like $800, $700 or something like that. Okay. This way you're going to have some wiggle room and things like that. So the things outside of futures are going to be really important too. And how long you hold the trade is also going to go ahead and be limited. So how long you hold the trade is going to be based on the certain month too. Okay, you can't sit there and hold futures forever because they do expire and have certain expiration months, which the broker will tell you a lot of the times. So now let's go ahead, and which is why you'll see on your broker sometimes it might ask you to roll over your contract. Okay, so once again, starting on our higher time frames is going to be our bread and butter. Okay, it's where we're going to succeed at. We want to see the higher time frame trend. Okay, let's talk about some logical things too as well before we jump into the chart fully. Okay, I want you guys to pay attention to this. This is going to be MYM, right? Look at how this chart trends. Okay, year after year, even with certain dips, we're trending in an upwards positive direction. Okay, we're trending once again in an upwards positive direction year after year after year after year after year after year. So personally, I don't think it's smart to trade futures to the downtrend. Okay, the Forex community has spread over to US traders, and now US traders think that they should be shorting a market that goes up year after year after year after year. There's also certain laws in place called the short sale restriction, okay, SSR. And the short sale restriction prevents stocks from just flash crashing to 0%. Because if they stock, because don't forget, definitely remember this, but don't forget, futures are just indexes. They're just a bunch of stocks put into one big giant conglomerate, and then you can trade it like that. Okay, that's all it is. So if stocks crash, futures will crash. Okay, that's just how it is. So you want the stocks to be up and afloat. And same thing for the US government. It's beneficial for the world, okay, the global economy, okay? The more money the US has, the more we can look better and help other countries out, etc. Okay? So, if the stock market goes within a positive upwards direction, right? If futures goes in an upwards direction, okay, that's going to incline more companies to be able to hire more employees, okay? And the more employees that are hired, the more taxes that are going to be paid. The more taxes that are being paid is going to equal a richer White House. A richer White House is going to give the country more credibility, recognition, and ability to do more things. Okay? So, there's logical reasons why we want the stock market to go in an upwards direction. Okay, logical reasons why you don't want the market to crash down. So don't fear crashes whenever you're trading. But in futures, I recommend to buy lows. Okay, there's going to be two things we're going to be looking for in futures. We want price to already, and let's talk about support or resistance. So support is going to be an area where price is bouncing in an upwards direction. Okay, so if you're on your higher time frame and you see price made a certain low going in an upwards direction, okay, that's going to indicate an area of support. Okay, it's going to indicate an area of support. Then the opposite of that is whenever you see price falling in a downwards direction. Okay, whenever you see price falling in a downwards direction, then that's going to be called an area of resistance, indicating that sellers are coming into place. So resistance is going to be when price is falling in a downwards direction. And then we're going to have support when price is bouncing in an upwards direction. Okay. And that's just going to go ahead and be the difference between the two. So putting this into perspective, we have to go ahead and realize, like, okay, support and resistance correlate with each other. Market can only go in two directions. Okay. But I can see on my weekly time frame, year after year after year after year after year, market's going in an upwards direction. Okay, so my US futures traders, please do not have that Forex mindset. Okay, I want you guys to look at the Forex chart real quick. A lot more sideways. This is why Forex traders short. Okay, there's a reason why they short. Okay, because you can get off with things like this. A lot easier, a lot cleaner, and a lot better. Okay, this market is not meant to go in an uptrend. Okay, as we can see, futures goes in a consistent uptrend. Okay, due to the fact that it's going to help the US in a lot more cases. Okay, so we have to keep that in mind. That's why price is going in upwards direction. So let's talk about once again how we can go ahead and trade. We want to be buying two things. Okay, you want to be buying when price makes an area of support. Okay, because all your setups are going to look the same. Your setup should always look like a V. Okay, so market will always make the left side of the V, and we'll talk about this in a second. And then you're going to catch the remainder of the right side of the V, because price always wants to try and break all-time highs. So as we can see on the futures market here, we're always constantly making new all-time highs pretty much. Okay, and that's due to the fact that once again, it's most beneficial for the world, the economy, and the global infrastructure of everything. Okay, so price is always going to be hunting towards all-time highs, which means price is always going to be hunting to go in an upwards direction. So even if price is in a downtrend, I personally don't like to short. I like to just wait for price to make a low, and then I'll go ahead and I'll take my trade. Okay, so let's talk about how you know when price is ready to make a sweep up. Okay, there's going to be two things we're going to be looking for. So you want price to be, once again, just bouncing at an area of resistance going in an upwards direction. Okay, and then you want to close at an area of resistance or support above current price. That's because price has an ability to reject at an area of resistance multiple times. Okay, and one day it might break, but you don't want to eat the reversal. Okay, you want to catch your formation and structure completion. Think of trading as a puzzle piece. Everything should click and form together. So resistance areas can short within a downwards direction twice. Okay, and then we're also going to go ahead and have an area here where resistance gets broken, turns into support, and then price goes in an upwards direction. Resistance here getting broken, turn into support. Okay, this is going to be another example of the V formation too. Okay, and in this instance here, you would have bought at this area of support here. Okay, and catch it up, because you know price wants to mirror or at least reach the area of resistance. You don't know if it wants to break out immediately. Okay, but price at least wants to go ahead and reach it, and that's what matters. Okay, catching your resistance gap fills. So let's go and let's keep talking about it here. So I like to go ahead and start on my weekly here, because it lets me know, like, okay, am I at all-time highs or not? Okay, because if I'm at all-time highs, then I know I'm going to be needing price to dip down, make a certain low, and then I'll be able to go ahead and catch my sweep in an upwards direction. Okay, so let's go and let's go to daily here. Okay, and I'd like to go ahead and wait for certain formations. Okay, so take an area like this on the daily. Okay, I see price made an area of support down here twice. Okay, and even if I wanted to go ahead and just take it up to like this area of resistance, you know, that would have been solid. And as you can see, just based off this tiny support here, went ahead and caught the whole gap fill, and this would have been around 669 points within a couple of days. And on futures, that's disgusting money. Okay, that money is nasty. So what I'm looking for, especially on my, so I like to see my weekly here, make sure I'm not at super all-time highs, because I'm looking to long the market. Okay, and I'm waiting for price to make a little base on the daily. Okay, so I need price to make a little base. So right now I can see price making the left side of the V. Right now we're heading straight down. Okay, we're heading straight down, and then I need price to form a low, and then I'll be able to catch the right side of the V and catch it back up. Okay, so that's what we're going to be looking for. But in order to do this, we got to be patient. So right now I wouldn't short, okay, because people are going to be fiending to buy any low opportunity. So I'm going to wait for price to go ahead and create its low. Okay, I'm going to show you a good example of what that looks like. I'm going to go to my 4-hour again. Okay. When you start seeing price make that nice curl, especially with 4-hour closes, then that's when you know you're going to go ahead and catch your nice trade. Okay, take this little sweep curl up right here, right? Even if I decided to close the trade at this area of resistance up here, that's still a really, 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 really nasty futures trade. Okay, this is 862 points. Okay, just catching the V. Okay, catching it to this area of resistance up here. Okay, and as you can see, price decided to go ahead and fill the V. Okay, and you're just going to go ahead and be able to farm money on the micros, farm money on whatever. Okay, let me go ahead and just log into the paper tray here and just show you how much this would have made, for example. Okay. Go ahead and close that. So boom, even right here, right? So let's say you opened a trade right here. Okay. And I like to play with like 100 tick stop loss. Let's say I'm trading YM. Okay. 100 tick stop loss, right? I'm risking $50. And my take profit would be this resistance all the way up here. Okay, 473 ticks. So I'm risking $50 to make 236. And as you can see, price decided to continue forward. So as soon as price starts to make that nice V, so I'm looking for multiple 4-hour candles, and then I'm waiting for price to sweep in a upwards direction. Okay, I'm waiting for price to sweep in an upwards direction. So I can see price making an upwards V, even if I entered right here on this candle, okay? Because I want price to go ahead and make the formation of the bottom for me. Okay, I don't know where price is going to bounce at. Okay, it's too many people try to predict the ultimate bottoms. Okay, but you know that price at least wants to try and mirror areas of resistance. Okay, before it gets broken. So take advantage of the V. So even if you entered right here, right, you'd be able to enter right here. Okay, 100 tick stop loss. As you can see, stop loss just didn't get hit. And then we decided to go ahead and take profit all the way up here at this resistance of here, 484. Okay, and then you can go ahead and catch nasty trades over and over and over again, waiting for your V formation. Okay, so what I'm going to be waiting for is for price to make a certain low. I'm waiting for price to nosedive down. After price makes a low, okay, let's say maybe about this much on like the 4-hour at least, okay, then I'll be able to catch the remainder up until the previous resistance or support that is stopped at. Okay, and then I'm going to go ahead and close there. I'm not going to play for the breakout. Okay, I'm just going to go ahead and catch the V fill. All your trades should look like a V for the most part. Okay, so right here, I'm waiting for price to go in a downwards direction. Okay, I'm waiting for multiple 4-hour candles. I don't like to just go off of one 4-hour candle. I can't just see price make this one wick area here near this area of support and be like, oh yeah, this is going to be the best trade ever. Nah, I want to actually wait. This is where the 15 minutes is going to come in too. So I can see on this area here, I have a previous area of support over here, and then I have an area of support over here too. Okay, price going in an upwards direction, starting to curl. Okay, but I'm going to wait for more 4-hour candles. Okay, maybe even some more daily candles to form too. Okay, and then I'm going to go my 4-hour here or 15-minute. Let me find myself a good take profit. Okay, so take profit here, even if I want to close at like this resistance area up here. Okay, so let's say I get like one more 4-hour candle or something like that. Okay, I might be able to go ahead and take this V formation up until at least this area up here. Okay, and then I'm going to go ahead and put a 100 tick stop loss. Okay, and then I can see if this area actually wants to go ahead and fill and catch it up to this area of resistance either here, or I could try and catch it up to the, yeah, I mean, honestly, I wouldn't be greedy. Try not to be greedy when it comes to futures. Just take your nice trades and just wait for redips and just do it again. Okay, because the greediness can really, really get you nipped in the butt. So I would really just take like your 15-minute take profits like this, catch your nice sweep, catch your nice V, close at this area of resistance up here. Boom, close out the area of resistance right there. Get on my 5-minute here, you're going to see the resistance here. You know, price might want to mirror that. And then you can go ahead and close your trade up there. Okay, very, very, very simple. Very easy. And just go ahead and take your money. Okay, so even if price is in a downtrend, okay, price still has to go up to come down. And price has a better chance of going in an upwards direction than it is just falling in a straight downward direction. Okay, especially when it comes to futures. Okay, use your higher time frame, look at your bias, and put everything into perspective.
Does it make sense to short something that continuously goes up in an upward direction year after year after year after year, regardless of inflation or anything? And the answer logically would just go ahead and be no in every single scenario. Okay. So when you're reading your futures chart, it's really just about taking your time, getting in your bag, and really just making sure you understand and can read what you're looking at. Okay. It's about taking your time. And when you take your trades, you got to take your profit. Okay. You got to be closing at these areas of resistance or support above current price. You got to. Okay. I wouldn't hold past up here. Okay. We also have this take profit up here too as well. Okay. If you wanted to take something like to up here. Okay. And this would be for like a 1-to-1, and then price decides to continue to go up in an upwards direction over and over. This area of support could be a take profit as well too. Okay. And then that's the cool thing about futures. As each take profit gets hit, you can go ahead and keep dragging your stop loss if you want, or you can go ahead and set your final take profit at a certain area, have your stop loss, and just buy at certain logical areas and just pray that you win. Okay. Because price most likely wants to reach these areas of resistance again. Okay. Even if price wants to fall straight down from these, that's fine. At least it went ahead and touched it. That's okay. Okay. It's not just going up for no reason. It might want to go ahead and touch this. Okay. And that whole window of it going up is just money sitting there waiting to be farmed. So collect your income. Okay. Whole sit there. Whole bit of money just sitting there waiting to be collected. Okay, so sit there and collect your money. Okay, even at this area of support right here, because as we know, just like resistance can be broken, turn into support, support can be broken, turn into resistance. Okay, so that's why a take profit right here will be reasonable as well too. So if price goes up, okay, let's say it does this, breaks this, okay, price might want to fall down here. Okay, or price might want to fall here. Okay, so that's why these are all going to be different take profits due to the fact that these are areas of resistances and supports above current price. And I can see price is trying to recover here. Okay, so you can see it on your smaller time frame. Price really trying to recover certain areas. And it's about making sure you know when to close. Knowing when to close is going to be the most imperative and important thing. The trend already started. Okay, the chances of the trend just reversing here super duper hard, it could be pretty low. Okay, so it at least go ahead and touch this resistance. If it breaks this, then try the support. If it breaks this, then try the resistance. And it'll keep trying each leg until it finds a place it might want to reverse at, find a super low, then break that previous high and do it over and over and over and over and over again every single year. Okay, so it's about playing logically. So if you're a futures trader, if you're going to trade some futures and you want to make some quick income, okay, because futures, you only got to deposit one time. Okay, it's about waiting for the right setups too. But after you deposit that one time, you can go ahead and you can get in your bag. Okay, you can run up your bag super duper duper hard. Okay, and it really just depends. Okay, so do some practice. Stackmode.net for all trading mentorship. If you guys have any questions, stay prayed to God and keep grinding. That's how you guys are going to be able to trade futures.
Hey class, we're going to go ahead and jump into it. Here's how to start investing with only $100. Okay, so instead of buying McDonald's, instead of buying liabilities, which are going to be items that we just don't need to be buying right away, let's get in stack mode. Let's invest. Let's put some money into stocks, some dividends, and I'm going to go ahead and show you guys how we can invest with just $100. Let's jump into it. So the power is starting small, and the biggest obstacle isn't the amount of money, it's the delay. So start today. Okay, start today. I don't care if you guys have $50 even. Okay, just start today. Okay, start today. Start doing multiple things to increase your income so then you guys can go ahead and invest more over time. Okay, but instead of just having your money being lended out by the banks, and while the banks invest with your money that's sitting in the bank account, you should be investing yourself. Okay, so you can invest in things like stocks. It's going to be things like ETFs and certain things that pay dividends, which is going to be quarterly money that you get just by investing. Okay, so find certain plays, do your research on certain stocks that you like, do your research on certain ETFs that pay out certain dividends and that move in a positive direction. Okay, and understand that the biggest obstacle isn't the money. Okay, the real reason people don't make money within the market, even if you have $1 million in your account, Some people, it's still not and they are profitable. That's because they struggle with discipline. They don't know how to find the right plays. So make sure you guys do your research first, and then you're going to be able to understand that, okay, the amount of money I have isn't really that subjective. It's really about the trades that I'm making. Am I making confident trades? Am I making informed trades? Am I making sure that my take profit is relative to wherever my entry is? Okay, do I know where I'm going to exit? Do I know where my stop loss is? Okay, once you start understanding all those things, you'll understand that discipline within the market actually equals the profits. Okay, so even though you're talking about $100 or starting small, forget about the money. Okay, I'm gonna go ahead and just give you guys the full truth. The real reason people don't succeed in trading is because they're trying to get rich too quickly. Okay, it's about discipline, grinding day after day, and growing and compounding your account by being disciplined. Okay, waking up, praying to God. Okay, studying each setup and taking it trade by trade. Don't try to rush anything, and stop thinking or stop trying to get rich overnight. Okay, it's gonna take building, grinding, and you should be able to fall in love with the process. That's how you'll really get to where you want to achieve, inshallah. So the time matters, not the amount. The most powerful variable in compounding is time. Starting with $100 now beats starting with $1,000 next year. Do the magic of interest compounding on itself. Okay, so just start with your $100 now. So instead of being like, oh, you know, I'm gonna go ahead and wait for it with you, just start now. Okay, go ahead and drop that money in your account and don't wait. Okay, time is not guaranteed either. You don't know when you're gonna pass, and just start going hard. We don't have time to think about anything else. Just start going hard and build the habit. Investing $100 consistently every month builds the discipline needed for long-term success, and it trains you to save and automate before the amounts get larger. And overcome fear. Starting small limits your downside risk while providing valuable real-world experience, and you learn how the market works without the fear of major losses. Okay, so study the market, paper trade, know how the market works before you start throwing even more money into it. Okay, so I'm just gonna keep it 100% honest with you guys the whole video. The market is gonna make you guys humble. Okay, you have to self-reflect. Don't think you're gonna come into the market with ego. Okay, don't just try to throw all your $100 into a 0 DTE play. Okay, take your time. Okay, throw it into a long-term play, really get the grasp of the market, generate some more income, and then keep funneling your profits. Even if you do win a day trade, all right, funnel that into long-term trades. Okay, whether ETF, stocks, whatever. Okay, this way your money's gonna always be making you money. Understand that money's a tool, not just a tool to go buy nonsense. Okay, money's a tool that feeds us. Okay, we use it to pay our rent so we can have a roof over our head, or pay a mortgage, or buy the house. Okay, and it's also used as a tool. Use it for your business, use it for your account to make more money, and real estate as well too. Okay, so even though it's a small amount of money right now, cultivate your mindset into thinking, okay, I need to start understanding how I want to distribute my money. Even after you make some profit, make sure you always withdraw at least 30% of whatever money you make, whether it be at stocks, your ETFs, your business, whatever. At least put 30% away for taxes. Okay, I personally try to put 50% away of all my profits away. This way, after I pay taxes, I have overhead. Okay, but you guys can go ahead and manage it how you would like. So step 1 and 2, the right broker and account. So step 1, pick a commission-free broker. So a broker is going to be a place where you're going to be able to buy certain stocks. You're going to be able to buy ETFs, okay, which are exchange traded funds, which are normally like a collection of stocks and stuff like that. And you guys are going to be able to invest. And you need a modern brokerage that allows you to buy stocks and funds for free. You guys can go to my free course at stackmode.net. And I have many guides on how you guys can go ahead and set up your broker account. So a lot of brokers have small commission too, which means that when you put down a trade, you're not going to get destroyed by fees. This is also why it's important to be putting down trades within a logistical basis. So you shouldn't be spamming a million trades a day, because fees can also eat up your profits. And fractional shares. Okay, fractional shares are also going to be something where you can invest with not the full required amount. So say a stock, say Stackmode stock costs $500 a share. Okay, a Stackmode stock costs $500 a share. Even with $100, you'd be able to buy a fractional share of that. Okay, so you could just be able to buy a fractional share and you'd be able to own it. So instead of owning a full share, you'd own like a 20th of the share. Okay, for example, something like that. Okay, and you can use Fidelity, Charles Schwab, and Vanguard. So and open a taxable brokerage account. First tax account is a simple individual taxable brokerage account, and it's the easiest to set up and fund. Okay, so go ahead and set up a just simple individual account if you're not trading with the LLC, which I think you need at least $100,000 in certain trading profits to show in order to trade with an LLC first. Okay, so make sure you guys can withdraw your money too within a pretty quick and simple way, like instant debit card, in case you ever need to get your funds out, and have certain goals too. Okay, so what to buy? So you guys can buy low cost index funds like ETFs. So for new investors, diversification is going to be protection. Okay, so it says don't buy single stocks here, but I'm gonna go ahead and just block this part out here. It's not true. Okay, you can buy single stocks. Single stocks are gonna go ahead and be something that's gonna go ahead and be worthwhile. But reason I do say that is because you guys need to know how to read the chart, and this is what we're gonna go over here in just a second. Okay, reading the chart is gonna be imperative. Do not buy single stocks if you do not know how to read the chart. Okay, so the goal of ETFs, they let you own a small piece of the entire US stock market. And for recommendations, they let you choose ETFs, also known as exchange traded funds. And some popular choices are like the VOO, VOO, and that tracks the S&P 500, and that's the 500 largest US companies. The NASDAQ 100 is going to be the largest 100 tech companies, and Dow Jones 30, also known as US 30, and also known as YM, is going to be tracking 30 companies. And VTI as well, it tracks the entire US stock market with over 3,000 companies. And the magic of fractional shares as well too. So in case you don't have enough money to buy the full ETF or stock, okay, and you can go ahead and either buy $100 in shares, or you can buy fractional shares. Okay, so you could buy a small cap stock. When a VOO costs $400 per share, then you wouldn't be able to buy a whole share because you only have $100. So fractional shares let you buy $100 worth of VOO, giving you 0.25 shares. And $100 divided by $400 equals 0.25. Okay. And all growth and dividends apply to that fraction, immediately diversifying your first investment. Now, I need you guys to just make sure that you're knowing how to read the chart before you invest into those normal stocks, because what you might do is just buy all-time highs and then get pulled back on, or you might not see profit for a long time. Okay, so in just a moment, once again, we're going to go over how to just read the chart quickly. So your simple investment action plan. So 1, fund consistently. So commit to transferring money automatically. If $100 is too much, do $50. And consistency is more important than the initial amount. Consistently put money in your account, consistently stay down, live way below your means, and just keep investing, letting your money make more money. Ignore what everyone else says. Don't listen to what certain people say. Okay, it doesn't even matter. Okay, just live your life. You know what you're doing. You know what you have in the stash, and you're in stack mode right now. You can't let anyone tell you anything. Okay, only God can judge you. You're good. Okay, and automate the buy. Use your broker's auto invest feature to buy your chosen ETF. Okay, also for like VTI, for example, immediately after your deposit hits, and this is called dollar cost averaging. So you can go ahead and do auto investing if you want to. You could do that with certain things too, like Bitcoin, certain cryptocurrencies. You're also going to be able to invest into, as well as dollar cost averaging. So just when you are investing, make sure that it's a consistent thing. Okay, you can't just put $100 in something and expect to get rich immediately. Okay, and you can't really expect to get rich immediately at all. So you need to be understanding that you have to be constantly funneling money into this. So that's going to be your start, and start building your pool. Turn that $50 into $5,000. And don't forget that a lot of this is going to be saved too, because especially when you invest in something that goes up within a positive direction, okay, a lot of the times your money's just going to be growing positive equity. And ignore the noise. Okay, have a 20-year view on the market. Check your portfolio quarterly, not daily. Your time horizon is in decades. As short-term market drops are buying opportunities, not reasons to sell. Okay, so buy the dips, and just in a second, I'm going to show you guys how to identify the dips. Okay, so you need to be being patient when it comes to waiting for your trades. Okay, so when you're waiting for your trades, you need to understand 2 things. Okay, 1, okay, have a goal behind your trade. Okay, so I'm going to go ahead and just show you the types of setups that I like to take. Okay, so 1, we're going to go ahead and talk about how If market, especially if I'm investing in something I'm expecting to go in an upwards direction, and that's the whole goal of investing. You're trying to make money by buying and holding, okay? Getting percentage equity curves and positive gains on your original dollar, okay? So there's going to be two things that you need to know whenever investing. One, okay, when it comes to the stock market, cryptocurrency market, ETFs, whatever, understand that the goal of them is to go within an upwards direction. There's people behind these stocks, people behind these cryptocurrency tokens, coding, putting in tons of effort, investing into it behind the scenes, putting in a lot of grind and effort in order to grow the company or cryptocurrency token. Okay, so they're definitely trying to get their piece of the pie and have their token go up or have their stock go up. So know that an area of resistance is always trying to be chased and broken. Why? Because price cannot go up until price breaks an area of resistance. And what areas of resistances are going to be areas above current price. And you can download things like TradingView to read the charts. And you can see areas above current price where you see price decided to make a dramatic downfall. So we're going to have an area of resistance here and an area of resistance here. Once price decides to pass these areas, price wants to try and progress to the next area. Now, understand that price can also reverse areas of resistances, and also know that price can break past areas of resistances and turn it into support. That's going to be one of the safest things you guys can look for when it comes to buying at the right time. So if you ask me, so Chris, how do we know when it's going to be a good time to buy? So check this out. One, you're going to be needing to use your higher time frames. I like to personally use my daily and 4-hour time frames for almost everything. Okay, then from there, I'm going to go ahead and analyze my trade. I like to go ahead and look above current price. Okay, make sure something has a good resistance above current price, because I know at least price has something to chase. If price is at all-time highs and there's no area of resistance above it, okay, there's not really much it can do. There's not really much progression it can make. Okay, so price has to have an area of resistance above it in order for it to chase something. Price can keep going at all-time highs, but you're not going to be able to play structurally. So check this out here. So just like we talked about resistance, and that involves an area where people want to go ahead and sell whatever they're invested in. Okay, and we have to remember that this is a left to right chart. So people got in from way over here, for example. So eventually, of course, they're going to go ahead and sell in areas like up here, an area of resistance like right here. Yeah, an area of resistance here, area of resistance here. Okay, and an area of resistance up here. Okay, and opposite of resistance, there's going to be something called support. Okay, so you're going to see this area here where price decided to tap at this blue line and then go within a upwards direction. Okay, so this is going to give us an area of support. And up here is resistance. So whenever you see price making a top and then falling in a downwards direction, that's resistance. Whenever you see price making a bottom and bouncing in an upwards direction, that's support. And remember what I just told you, resistance can sometimes be broken and turn into support, even if it takes a long time to come back to the area of where the resistance was. So check it. So price can come over here, okay? And we could see price create an area of support over here, okay? So once again, this is support because price went in a upwards direction. And then we can see up here, price decided to create a heavy area of resistance. And we're using our higher time frames because it gives us an ability to see absolutely everything. Resistance. Okay. So that's going to go and be that. So we can go ahead and see over here or something. Okay. Check this out. So we can see that this area of resistance created over here. Okay. We can see resistance got created. A price fell in a downwards direction and then bounced up. Okay. As we can see, price decided to also create retest here. So price broke the resistance, turn it into support. I like to call the first tap of what I call break and retest. Okay, where price breaks resistance, turns it into support, or price breaks support and turns it into resistance. That's the recommended model I recommend you guys play at any times. Okay, so when this happens, then you can go ahead and wait for resistance that was broken to be pulled back to. And if support gets held, then I recommend you guys go ahead and invest. Okay, you guys can go ahead and invest and try and take the sweep all the way back up to the upside. Okay, and catch your sweep like that. So investing is really going to take patience. If you are struggling to learn how to read the chart, I give you guys a free mentorship call at stackmode.net as well. So start now. Now that you know how to read the chart, no excuses. Go ahead and jump in, and make sure that you guys have a broker installed. You can use Webull, Robinhood, any broker that just works for you. Okay. And you could buy ETFs, you could buy stocks, okay? You could buy penny stocks, okay? Just buy something that you've done intense research with, and you can go out and get investing like that, okay? Step right up to God, keep grinding. And once again, if you guys need investing help, head over to stackmode.net. Catch you in the next one. Peace.
So let's go and let's talk about central bank digital currencies, also known as CBDCs. Now, don't confuse this with cryptocurrency, because cryptocurrency is decentralized and doesn't have a ruler, and CBDCs are money ruled by the government. And think of this as a digital version of cash in your wallet, but with one massive difference: it's programmable. So that means that in theory, the issuer could track every single transaction you make, limit how much that you could save, or even decide what you're allowed to buy. And supporters claim that it is the upgrade our financial system needs to be faster and safer, but critics are calling it the end of the financial privacy embedded in us as humans forever. So we're looking at the future of convenience, or are we looking at the ultimate tool for our total control? Let's jump into it, inshallah. So what is a CBDC in the first place? CBDC stands for Central Bank Digital Currency. So imagine if the cash in your pocket turned into a computer code, but it was still worth exactly the same amount. That is the basic idea of a CBDC. And it's digital money issued directly by the country's central bank. Okay, it's not physical paper, and it doesn't come in coins. It exists only on computers or digital wallets. And unlike some cryptocurrencies that change value wildly, a CBDC is meant to be as safe as a dollar bill. Okay, so think of it like virtual cryptocurrency just created and ran by the government instead of it being on the peer-to-peer decentralized network. Okay, so the government's pretty much creating a currency in order to combat cryptocurrency coming out and its whole decentralized features. Okay, so we'll talk about the benefits. Let's jump into what it is and let's continue. Physical cash versus the CBDC. So we already use credit cards and apps like Cash App, PayPal, Venmo. So how is this going to be any different than things like that? So the commercial bank money that works today. So when you swipe a card, your bank promises to pay the store, okay? And it's an IOU between the banks, okay? And the CBDC, it's a direct liability of the central bank, and it's like handing someone digital cash directly without a middleman bank needing to promise the payment, okay? And as far as the speed, so regular bank transfers can take days, especially on the weekends. And also, when it comes to wire transfers, things like direct deposit when you're getting paid, things like that work on a time-based schedule, whether it be your direct deposit hit at 6 a.m. Some people have direct deposits hit at 6 p.m. Okay. Some people don't have direct deposits that hit on weekends and have to wait for the following business day, such as a Monday or a Friday, etc. Okay. But with CBDCs, payments and bank transfers are going to be instant. Okay, so they're creating a base and a way for people to instantly send money without having to use outside apps. Okay, so sending money today is like sending an email that goes through 3 different servers before actually arriving. And it has to all get approved too. Okay, if you decide to send money via wire transfer, it could definitely bounce. Okay, and sending a CBDC is like handing whoever you need to instant money, okay, or instant $20 bill, but doing it over the internet instantly, instead of sending the $20 bill via the mail, waiting for the bank to sign off on it, and then sending the $20 bill to the person you want it to go to. That's how traditional banks work. So CBDCs really save a lot of time, make things a lot quicker, okay, and hopefully, inshallah, that'll bring a lot more control back into people's hands versus how we want to spend our money and when we need our money. So if CBDCs are out, what's the point of crypto, Chris? So if they're the same thing, and when they're not, and they both use digital technology, the real difference that comes in between them, okay? One is decentralized and one is not, okay? So they both use digital technology, okay? Sometimes the blockchain, but they're both different in the point of who controls it, okay? So cryptocurrency, Bitcoin, Solana, your XRPs, Ethereum, all decentralized. And the term decentralized means that it's not controlled by a centralized network. Okay, when you decide to send Bitcoin to somebody, okay,
it directly gets sent to their Bitcoin wallet. Okay. No if, ands, or buts. Okay. Peer-to-peer transaction system, also known as the decentralized system. Okay. Then you're going to have the CBDC side. Okay. Which is going to be controlled, just like traditional banks, by that centralized bank fiat currency system. Okay. But the price will be stable. Okay. So $1 will equals $1. It's not going to be fluctuating as much. And as far as privacy concerns between the two, crypto is often anonymous. Okay. You have to go into the blockchain in order to check certain transactions out, etc. But CBDCs allow the government to see the transactions in order to stop crime, any type of money laundering, or any type of fraudulent activities happening. Okay, so think of Bitcoin kind of like a digital gold that you own yourself. And CBDCs are going to be like digital dollars managed by the Federal Reserve. So one is for freedom and investment and speculative purposes, and the other is going to be for stability and spending. Okay, so one's purpose, okay, it's going to be for speculative, freedom, and investment reasons. And the other purpose is going to be for stability, spending, and sending your money how you want within your centralized bank, okay, when you want, without having to use any type of external apps that you may potentially have to get approved for, especially when you already have your bank. Let's head over to the next slide. So let's talk about the two types of CBDCs. Not all CBDCs are for regular people. Okay, there's going to be two main types. One, you're going to have the retail CBDC. Okay, so this is going to be just for the day-to-day person. It's used for buying coffee, clothes, paying bills, and it really just acts like cash in an app. Okay, and then you're going to have number two. Other side of it, you're going to have your wholesale CBDC. Okay, this is going to be for banks, and it helps huge banks send millions of dollars to each other instantly and safely, replacing the old slow systems. Okay, so retail is like the debit card in your wallet, and wholesale is like the armored truck that moves money between bank vaults. Okay, so really understanding the two different types of services and reasons why is going to help you make some future investment properties, especially when we start seeing banks implement CBDCs more and more, due to the fact that they're trying to create some type of competitive edge against the whole cryptocurrency decentralized space. Okay, so why create a CBDC? Okay, governments aren't just building these for fun. Okay, one, it's for competition, to create a space for them to still be profitable in the financial world, especially as cryptocurrency grows year after year after year after year, and people are starting to wake up to what's actually happening and how the currency works. Okay, and the efficiency of everything. So payments become instant and cheaper. So no more 3% credit card fees for shop owners, etc. And financial inclusion is going to come into play. So people who don't have bank accounts can still have a digital wallet on their phone to receive money safely. So that means you can still be able to do jobs and get paid exactly how you want. And in case you get declined by any app such as Cash App, Zelle, or anything like that, you're still going to be able to survive and pay your bills how you need to. And programmable money is what it is. So the government could send stimulus checks that expire if not spent, or can only be spent on food using CBDCs. Instead of having to get checks or use certain cards to spend money, CBDCs could be used to fund government programs to help out citizens. Okay, so during an emergency, the government could pretty much airdrop money directly to everyone's phone without having to mail paper checks, and give everyone an essentially virtual card by using CBDCs. Okay, so we can start seeing things transfer away from traditional bank financial fiat currency system that we've been seeing for the past couple of decades into a whole new blockchain involved world. Okay, let's head over to the next slide. So let's talk about the risk and the concerns. So why are some people worried in the first place? So with great power comes great responsibility. Okay, so giving the government total control over digital money has risk, and it's going to be a privacy loss factor that comes into play. So cash is going to be private. Okay, if you buy a candy bar with a $5 bill, nobody knows where it came from even. With a CBDC, the issuer can technically trace every penny that you spend, which takes away people's privacy, which adds control back into people's lives. So if money is programmable, they could stop you from buying things. Okay, so that means that they could deny transactions, freeze certain things, just as a normal bank account can. But banks and credit unions have a little bit more separate control from just the straight up government centralized system directly. Okay,
So cybersecurity reasons as well too. If the central system is hacked, the whole money system could freeze, or even if it goes down. So let's say a CBDC risk system is running on like a system like AWS. Okay, if AWS were to go ahead and shut down, that means people weren't going to be able to access their funds. Okay, so do you want convenience or privacy? Okay, both things are going to go ahead and have concerns, and a lot of factors are going to come into play. So deciding what you're using your money for and how you want to invest is going to change year after year after year. So make sure you guys are staying on top of things. And as far as compliance for even your own stores, even if you want to take CBDC currency, and we'll see how the things change over the next couple of years. So are CBDCs real yet? Answer is going to be yes. Okay, it's not just a theory. Many countries are already using and testing them. Okay, for the Bahamas example, using the sand dollar. So the Bahamas is the first country to launch a full CBDC. So people use it to pay across different islands using mobile phones. And then we got China. Okay, China using the digital yuan. And millions of people in China are already testing the ECNY. Okay, electronic CNY. Okay, it's just digital fiat currency for China to buy subway tickets, groceries, etc. And then we got US. We got the Project Hamilton. Okay, the Federal Reserve and MIT are researching how our digital dollar would work, but haven't launched one just yet. But the United States is working on things. Okay, so over 100 countries representing 95% of the world's GDP are currently exploring a CBDC. Okay, and this is going to be research done as of 2023, and we can start seeing a lot of things change, especially when it comes to government-funded projects, such as like food stamps, unemployment, or anything like that. Instead of people getting the money placed on certain cards or traditional bank account systems, a CBDC wallet could be used in order to have people spend money on that throughout the entire network. So monies came a long way. It came from seashells to gold coins, seasoning, to paper bills, and now we got plastic cards, and now we can just send money digitally with numbers on the screen with our phone. And CBDCs seem to be the next logical step in a digital world realistically. So as you grow up, you got to understand how money works. You got to be able to adapt, and you got to be ready to change how your asset classes are being moved and how your money is growing, especially as things get more expensive over time. Your money has to be working for you. Okay. Keep that logical perspective. If the world is going to get more expensive over time, that means that your money can never stop working, especially when we have to do things like use the bathroom, sleep, etc. You have to be getting money while you're doing that stuff. Okay, if you want to be competitive in this world, you got to be getting money at all times. In your sleep, while you're awake, while you're getting money, you should be getting money, and it should be that serious, inshallah. Okay, so CBDCs offer speed and safety, but we must come to terms with the fact that you're going to be losing respect of privacy, but you are going to be getting a lot of convenience as well too. Okay, no more long paperwork, waiting for cards and stuff like that. And a lot of that stuff can be frustrating. Okay, just instant funds that come on a wallet, and we'll really see how it plays out for the future. So stay prayed up to God, keep grinding, and head over to Stackmode.net for all trading education. Catch you guys in the next one. Peace.
Hey, welcome to Stackmode.net. Two things I want to do. I want to put a smile on your face, and I want to help you make some money by trading. Okay, so here's an example of a trade that I gave in my Discord here. So all we're going to do is understand some logical processes here. I teach stocks, Forex, crypto, options, as well as futures. Okay, and trading each of them is going to be fairly similar, but different for each sector. So whatever you specialize in, I can help you. Let's say we're trading the stock market, for example. I know that stocks have an incentive to go in an upwards direction due to the fact that these companies employ people. Okay, these people then pay taxes to the government. Okay, so as long as these companies go upwards in an upwards direction, the richer they're going to get, which means they're going to expand further, which will lead to further opportunities to employ people. So let's say, for instance, I'm trading the stock market. I personally wouldn't short the stock market. I'm looking to play call options or buy shares, catching my V directional fill. So as you can see here, I have an area of resistance above current price here. And as you can see, I have just some empty space here, and price decided to blast straight through it and fill in this area. Let's talk about how I caught this setup here. So here I can identify two things. We're going to have areas of resistance. Areas of resistance are going to be areas where price decides to fall in a downwards direction. Okay, and then we're going to have areas of support. Support are going to be areas where price decides to bounce in a upwards direction. Okay, using support and resistance together can lead to some very, very nice setups. So as you can see, market can only go in two directions, either up, okay, and once again, if market's going to go from a upwards bounce direction, that's going to be called support. And if market's going to go in a downwards bounce direction, that's going to be called resistance. Okay, so let's understand some things. So resistance can be broken and turn into support. So here I have this area of resistance being created. As I can see, market's falling downward here. And once the area of resistance decided to get broken, it decided to turn into some support. And then price went in the upwards direction. Okay, and I know that price in the stock market at least wants to go to all-time highs. Okay, same thing for cryptocurrency. There's tons of coders behind these tokens, tons of people putting in a lot of effort, wanting to see the token or the stock succeed. So of course the share price or token price wants to go in an upwards direction. So I play until areas of resistances for my take profit. So as you can see, resistance got broken here, turned into support. And then price would have met with the area of resistance and decided to do it again. Resistance got broken, turned into support, and then looks like price wants to keep going in an upwards direction. I try and make trading as easy and simple as possible for you guys. You guys see all the reviews from my students. I try and make it simple for you, and I adapt to your life. Okay, here's how the class system works. So one, I offer 10 classes. Okay, these 10 classes can be stretchable however long that you want. Okay, it could be between 10 weeks, we could do 10 days, or a class every 2 weeks. Whatever your schedule is, we're gonna be flexible, and I'm gonna maintain a optimal workflow for whatever you trade, your schedule, and what type of person you are. Okay, so I'm gonna catch you guys in the free call. Go ahead and book the calendar. Stay prayed up to God. Keep grinding. I'm gonna catch you guys in the next one. Peace. Let's go and let's jump straight into the lesson. This is going to be the differences between stocks, shares, and options. Let's go. And at their core, stocks and shares refer to the same thing, a unit of ownership in a corporation or a company. And the terms are often used interchangeably, and though shares typically refers to the number of individual units held by an investor, and while stock is more of a general term used for the entire collection of shares. Okay, so for example, I own 10 shares. 10 shares is going to be the amount, the percentage of the company that you want to be a hold of. Okay, the amount of shares equals the amount of percentage ownership that you have in the company. Okay, so if you want to own 10 shares of Apple stock, okay, and Apple is going to be the primary stock. Okay, shares is the percentage amount that you own, and the stock is going to be the name. And here's what they represent. Owning a share means that you're a partial owner of a company, and as an owner, you have to represent. Okay, and you also have a claim on a portion of the company's assets and earnings. And this ownership gives you a right to the company's profits. And it's distributed as what's called dividends. Okay, and dividends, especially if you have enough shares invested into, then dividends will go ahead and be paid out to you. And this way you can be able to make money just by being an investor. And in saying the corporate matters though, it's also going to give you some voting rights depending on the amount of share that you have. And for every share that you own, you typically get one vote. Okay, so the more shares that you have, the more votes that you're going to have. Okay, so you're going to have one vote per share, for example. Okay, and that allows you to influence key decisions like electing the board of directors and who's going to be controlling the future of the company's growth. And why do companies issue them in the first place? Companies sell shares to the public to raise capital, and this money can be used for expansion. So whenever you guys see millionaires, billionaires, stuff like that, and their company owners, a lot of the time it's not in raw dollar currency, okay, sitting in a bank account. A lot of the time they're rich through the company they own, and a lot of times it's on the stock market, okay? And then that company generates money. And since they're associated with it, or the leader, they get the money associated with the tag, so then they get to be a billionaire. For example, any creator of like, say, company.com, okay, say they have $500 a share worth, okay? The owner of it, let's say the company does $10 million a year, okay? The owner of it would be classified as a billionaire because he's the owner of it. So that's normally how that works. So they sell shares to the public to raise capital and raise money. And this money can be used for future building expansion on the company, research, paying off your debt, and other business goals. And this process is known as an initial public offering, also known as an IPO. IPO. And this transforms a private company into a public one. And this is when shareholders, okay, can invest like me and you if we wanted to. And for a company like Google, for example, a public offering allows them to raise billions of dollars to fund new ventures. And when you buy shares directly from a company during an IPO, you're participating in a primary market. And after the IPO, shares are bought and sold among investors on exchanges like the New York Stock Exchange or NASDAQ, then that's going to be the secondary market. Okay. So when you're buying shares directly from the company during from IPO, okay, that's a primary market. And after the IPO shares are bought and sold among the investors, okay, on exchanges like your New York Stock Exchange, that is the secondary market. So let's talk about equities. The broader view is ownership. So the term equities is a broader financial concept, and it encompasses all ownership interests in a business, which includes common stock, preferred stock, and retained earnings. And it represents the value that would be returned to a company's shareholders if all assets were liquidated and all debts were paid off. And on a company's balance sheet, it's often referred to as shareholders' equity or owner's equity. Let's talk about shareholders' equity. This is a fundamental metric used by analysts to assess a company's financial health. Okay. So, and it calculates it by calculating the assets minus the liabilities. Okay. So what assets are things that a company needs. Let's say like the light bill. Okay. A company might need a light bill in order to run a factory, for example. That's assets, something that's needed. And a liability is something that's not needed. Okay. Any business expenses that's just going to be extra. Okay. Like giving all your employees a vacation or something like that, for example. Okay. And then that's going to equal shareholders' equity. Okay. So common versus preferred stock. Common stock. This is what most people mean by stock, and it comes with voting rights in corporate matters, but it's secondary to preferred stock in claims on a company's assets during liquidation. When you're a true owner, sharing in both the upsides and the risk. And let's talk about preferred stock. These shares typically do not come with voting rights, but have a higher claim on a company's assets and earnings than a common stock. And holders of preferred stock receive dividends before common shareholders. And this makes them a hybrid security. And it's often seen as less risky than common stock, but without the same growth potential. Okay. So, stock options, my favorite. Okay. One of my favorite things I like to trade, and it's pretty much when you get paid based off of the direction of a stock. Okay. If you think the stock is going to go up, then ideally you would purchase what's called a call contract, which we'll talk about here. Okay. And if you think the stock is going to go in a downwards direction, okay, then you would buy a puts contract. You can also have expiration dates on your contracts too, to choose how long you want to hold the trade for. And when the contract expires, it's going to automatically close on its own. So you either sell the contract before it expires, or it'll go ahead and just close on its own. Okay. So stock option is a contract that gives the holders the right, but not the obligation to buy or sell an underlying stock at a predetermined price. Okay. And that's also going to be known as the strike price. So let's say a stock is at $32 a share currently. Okay. Let's say a stock is at $32 a share. You think it's going to go to $34 a share. Okay. Then you could buy a strike price contract of $34. Okay. Or even $33, since that's above $32. Okay. So you could buy any number above your prediction, but below your take profit. Okay. And that's going to be a good strike price in order to purchase in Shalom. Okay. So when you do that, you're going to go ahead and get paid based off of your prediction. Okay. Say for a put example, let's say share price is going to be at 20, for example, right? And you think price is going to go down to 15. Okay. So if price goes down to 15, you could buy a 19, 18, 16, or $15 strike price contract. Okay. Because you're going to get paid based off of your prediction. So just focus on what you're doing. All right. Just focus on what you're doing. You're going to get paid based off your prediction. Okay. And it's also going to be within a specified time frame that you purchase. Okay. And the higher the expiration date that you go, the more expensive that it's going to be. And it's a derivative instrument, meaning that its value is derived from the performance of the underlying asset. And they're a popular form of compensation for employees and a powerful tool for investors to leverage their positions. So a call option. It's the right to buy stock at the strike price okay, which is going to be the pretty much price that you're wanting price to go to. And an investor would buy a call option if they believe the stock price is going to rise above the strike price and you're betting on the stock's upward movement. Let's talk about a put option. And it's the right to sell a stock at the strike price. And an investor would buy a put option if they believe the stock's price will fall below the strike price. And this is betting on the stock's downward movement, often used for hedging. Yeah. And also sometimes companies often grant stock options to employees as a form of non-cash compensation. Okay. So it simplifies them to work towards the company's increasing value, because as the company keeps innovating, putting smiles on people's faces, okay, creating more product, generating more revenue, then inshallah the share price is going to increase, making their options worth more. And most of the time, inshallah, they're going to be getting paid in like some long-term cost contracts, I assume. So risk, reward, or purpose. So while all these terms are related to company ownership, they serve different purposes. Okay, so stocks. Okay, stocks are going to be the name. Okay, stocks are going to equal the name. Okay, stocks are the name. So let's say I open Stackmode. Okay, let's say I open Stackmode on the market. Okay, if I put Stackmode Network on the market, okay, inshallah will happen one day. If I put Stackmode Network on the stock market, that's going to be the name. So if you just hear the term stocks, that's going to be talking about the name. Shares. The term shares is going to be talking about the percentage ownership that you're trying to purchase within the company. So you can own 1 share, okay, or you can own 50 shares. And the share price is going to be determined on the current price. So if the current price of a stock, okay, remember the stock is the name. So if the current price of Stackmode is $32 a share, for example, okay, and I think it's going to go to $600 a share, okay, or $700 a share, okay, then whatever the current price is going to determine what the share cost is. So if price is at $32 a share, 1 share will cost $32. If price is at $700 a share, 1 share will cost $700. Okay. So inshallah, try your best to get in at a dip or a low and then catch the sweep up. And that's how money is made. Okay. That's how growth equity is created, by trading shares. Okay. And stocks and equities. Okay. The primary goal of these are going to be long investment. Okay. There's going to be also a lot of tax benefits when you hold your trades for over a year. And the primary goal is going to be long-term investments when it comes to shares and equities as well too. And the reward comes from dividends as well too, which is going to be quarterly money that's going to be spread out to everyone who has a decent amount of shares. Okay. So you'll get paid by dividends and capital appreciation. And the risk is that the company's value could decline, leading to a loss of your initial investment. But no risk, no reward. We're only here one life. Okay, just trust God, take a risk, keep going. Let's talk about some options. The primary purpose is speculation or compensation, and the reward can be much higher due to the leverage they provide. And it makes you control a large number of shares for a small upfront cost. And this risk is that if the stock price does not move in your direction that you purchase, then the stock price could tank on the contract. Okay, but it's going to be fine. If it expires worthless, you just try again. Don't lose hope. Trust God. Keep going. Okay. And you can potentially lose your entire investment, but you could also play into that. Okay. Whatever your stock option cost is, you could use that as your stop loss. So if it costs you $70 to open a contract, that could be your stop loss. Okay. Instead of buying a $500 contract, trying to play with the $70 stop loss, that might not always work in stock options as cleanly as you might want. Let's explain leverage. And with the call option, you might only pay a few dollars for the right to control 100 shares with leverage and the time expiration. And if the stock price goes up by just $1, you've made a significant percentage gain on your small initial investment, far greater than you would have buying the shares outright. Okay. But it also has time expirations on it. Okay. So this is why the longer the time you're going to buy on a certain play, it's going to be the better. Okay. Give your trade time to work out. Okay. But the longer that you go trying to buy out, the more expensive that the contract is going to be. Okay. So for practicality, for example, if an investor wants to build a retirement portfolio, okay, you could buy stocks. Okay. So you'd be buying shares of those stocks for long-term growth, for long-term tax benefits, and just holding trades year after year, keeping money in the stash, keeping stack mode, okay, implemented into your portfolio. Staying down, not touching the bread, okay, staying down. And if a trader is looking to profit from a short-term market movement, then stock options would be able to amplify your return. So you can use the stock options profit to buy some more shares, but stock options in general is just going to be better to go ahead and generate some more income. Okay, so it's going to be time to just start going harder, get more education, and really understand what we're doing before we put money into the market. All right. Market capitalization, valuation, how a company is priced in general. So understanding that a company's market cap, okay, also known as the market capitalization, is pretty much how much a company is worth. And the valuation is crucial for making informed investment decisions. Now, market cap's not going to be everything. You could do your research and catch a good trade at the low, and then the market cap turns huge later. Okay, but market cap is just going to be a good decision to see if something's going to be a strong value play. And market cap is going to be the total value of all the company's shares, and it's a key metric used to determine a company's size. So here's the market cap formula. The calculation is pretty simple, but does a lot. It's quite advanced. So market cap, okay, the calculation concurs of it's the current stock price. Okay, so Stackmode is worth $700 a share. Okay, then it's worth $700 a share. Okay, so you take the current stock price, $700 a share, times the number of total outstanding shares, so whatever that would be, and that's going to give you the market capitalization. Okay, so this tells you what the market currently values the entire company, and it changes every minute as the stock price fluctuates. People are always going to be putting in orders, selling and buying, and especially something that has a high market cap is always going to be more orders flowing in due to the fact that it's popular. So there's some different market cap categories. Companies are often categorized by the market cap, which influences their risk growth and their potential. Once again, it's not going to be everything, but something to look for. So a mega cap, it's going to be something worth over 200 billion in market cap. So for example, big giants at the time, like Apple, Microsoft, for example, they're generally seen as stable, mature companies. And let's talk about large caps. It's going to be 10 billion to 200 billion. Okay. And they're established leaders in their industries. You got mid caps, 2 billion to 10 billion. That's companies with solid growth prospects. And small caps, 300 million to 200 billion market cap. They could be a bit higher risk if they don't decide to grow and have some future innovation, but with the potential, they have a bunch of high expectations, certain companies, and they could explode super duper hard. Okay, like for example, Palantir and microcap and nano cap, and below $300 million. And they're the riskiest category once again, because it's fresh, new startups, new ventures. Sometimes it could be people with a bunch of money investing into it, and then it doesn't go anywhere. So make sure it has some future value. So let's talk about valuation versus price. So it's important to distinguish between a company's price and its market cap and its intrinsic valuation. Valuation is a more complex process that attempts to determine a company's true worth based on its assets, earnings, future cash flows, and growth prospects. And a savvy investor is going to be looking for stocks where the price is lower than the company's estimated intrinsic value in the first place. So we'll talk about valuation methods. There are many methods for valuation, including the discounted cash flow, the DCF model, and a company's price to earnings ratio. Comparing that to its others ratios of other companies is going to be a good way to determine if what company is making more money than others. Okay. And these are essential tools for a fundamental analyst if you want to be an investor. So let's say, for example, let's say company A has 10 million shares outstanding. Okay. Let's say Stackmode has 10 million shares outstanding. Okay. And its stock is trading at $50 a share. Okay. And its market cap is going to be $50, okay, because that would be the current price. Okay, you're going to be multiplying the current price times the number of outstanding shares. So let's say Stackmode has 10 million outstanding shares. You're going to multiply that by the amount of outstanding shares. So 10 million. So $50, the current share price, times the number of outstanding shares, 10 million. And that's going to equal 500 million. Okay, and that's how the math is done. That's how you find out market cap. Let's say company B, for example, let's say it has 5 million shares outstanding and its stock is trading at $150 a share and its market cap is 750 million. And even though company B's stock price is higher, company A might have a higher intrinsic valuation based on future growth projections and its expectations. So the differences at a glance. So to summarize, it's essential to recognize the distinct roles of each of them. So shares and stocks. Stocks represent actual ownership in a company, and they're tangible assets that can be fractional and traded on exchanges. Okay, any stock exchange is going to be a broker where you can put in your bank account, your card, and buy some stock for yourself. Okay, that's what an exchange is, also known as a broker. So let's talk about equities. Equities are a broad term for the total ownership of a value of a company. It's an accounting term that includes all forms of ownership interest, and equities is the larger category, which includes stocks and stock options. There are contracts and a right to buy and sell shares, not the shares themselves. Okay, and you get paid based off of the direction that you think price is going to go into. And they're a tool for speculation or compensation and are not an ownership stake until they are exercised, until someone's to fill in the contract. So think of the company as a pie, okay, also known as the stock. A fraction of the pie, okay, is going to be known as a share. And let's say you're about to deliver pie. Let's say you project to sell 4 slices of pie. If you think that, you could buy an option based off of that, okay? So put all of that into retrospective and understand, okay? So if you think you're about to sell 4 slices of pie, then you buy in options, okay? But the pie in and itself is going to be the shares, okay? And the store name, let's say it's Stackmode Pies, is the stock, okay? So that's how it all works. So by understanding these core concepts, you're just not a spectator anymore. You're getting informed, understanding the market, not a gambler, and you're becoming an active participant with the knowledge to navigate the complex world of finance. Alhamdulillah. So while the terms may seem confusing initially, their distinct definitions and functions are critical to building a robust financial vocabulary. And remember, stocks and shares equal ownership, okay? They equal ownership. You can hold them for however long that you want. So use that money. Don't go buy clothes, stay down. Don't go buy drip. Don't go buy the best whip right now of paying that high monthly payments. Stay down, invest, and go ball out later. Let your money make infinite money and then go buy what you want. And equities are going to be a broad ownership value. And stock options are going to be the directional bias that you can get paid based off of. You can use all of these to create future value, provide for your family, and provide for yourself. Stay prayed to God. Head over to stackmode.net for all trading education and business education. Love you so much. I'll catch you in the next one.
You might think that inflation is a normal part of life, but the reality is that your purchasing power is silently being stolen from you every single day by the very institutions claiming to protect it. Central banks have the power to print infinite amounts of currency at the push of a button, which dilutes your savings and forces you to work harder just to stay in the same place. They control the supply, so they control the value, and Bitcoin completely flips this power dynamic on its head. It's the only asset in human history with strictly finite supply that cannot be altered by any government or chairman. There is no backdoor and there is no print button because the code is absolute. And while fiat currency relies on trust in politicians, Bitcoin relies on mathematical verification, and it's created by actual power and resources. This is not just about digital currency or making a quick trade. This is about the separation of money and state and ownership. In this video, I'm going to show you exactly how Bitcoin renders the central banking model obsolete and why it's the ultimate hedge against the system designed to devalue your life's work. Let's dive into it. Let's go and let's jump into how central banks hold a monopoly on the money supply. So as you know, things have to be systematically processed when it comes to central banks' systematic formations, such as wire transfers or direct deposit, for instance. Certain things have to hit on certain days and certain time frames due to the fact that approvals have to be made by the centralized banks. Now, when we're trading cryptocurrency, you're working in the decentralized world. Everything is way different. Okay, everything is based off the peer-to-peer transaction system. Everything works off of smart, autonomous contracts. So whenever transactions are sent over, pretty much computers do all the processing. When you send a wire transfer over to somebody or even to yourself to another bank, the bank has the ability to approve or decline that. Cryptocurrency puts the freedom back in the people's hands. And let's go and let's jump into how all this works and why central banks really don't like this. So let's talk about the loss of monopoly. So central banks manage the economy by printing money, which is quantitative easing or pretty much restricting it. And Bitcoin's supply is fixed at 21 million. So it having that fixed statistic baked into it, one, not only makes it more scarce, but it's going to have a more baseline stability cooked into it, and inflation is going to be a lot more manageable. When it comes to fiat currency, you can pretty much print infinite dollars nonstop. That's you might see things from 10 years ago might cost completely differently from today, since more money has been printed over the years have gone over. Okay, and the competitor. So for the first time, citizens now have a viable opt-out option. So if a central bank debases its currency due to inflation, people can flee to things like Bitcoin, and this forces central banks to be more disciplined, limiting their power. So you might have seen things recently, as of 2025, when this video is coming out,
banks are now starting to incorporate certain things like Ethereum, XRP, and Bitcoin systems within their system, since they know that people are now looking towards cryptocurrency to manage their money or even hold their savings. So instead of getting 2% or 3% APY stands for annual percentage yield, people rather go put their money into a cryptocurrency and let their money grow faster at a rapid rate. And not only that, it's going to be a lot more manageable too. If you go to the bank, if you have 10 bands, you go pull up on the bank, a lot of the times you're not going to be able to pull that out right away. You might have to come back tomorrow, the next day, because the bank has your money pretty much invested. Okay, so if our money's parked in the bank, it's going to be their money too. It's being used. That's why certain things like Zelle have withdrawn deposit amounts, because they don't want people just pretty much managing their currency how they want. Cryptocurrency takes that all away. If you want to send $1 million today and tomorrow, you can do that. With the normal traditional central bank based off of fiat currency, they're not going to let you do that, since that puts too much freedom in people's hands, and a lot of business moves can be made a lot quicker. So instead of the banks having the power, now people have the ability to build certain things like banks, their own hedge fund systems, and their own funds, etc. So now people have the ability to have some more individualization for their family even as well too, versus having to run to the banks every single time. So back in the day, people would have to keep all their cash in the banks for the most part. Okay, things aren't like that today. Now you have the ability to even keep your cryptocurrency on something small like a USB drive. Okay, so keeping it extremely decentralized, and the IRS can't get to your USB drive unless they raid your house and find it or things like that. Okay, so no more having random money put out of your account, or even if you get sued, for example, they can go into your bank accounts and clear you out. If you have your money parked in cryptocurrency, that's money that they can't touch, and it's pretty much digital cash that nobody really knows it exists. So let's talk about the threat of censorship resistance. The modern banking system is used as a tool for geopolitical control and surveillance. Big on surveillance. They want to see every dollar that's coming in and out. A lot of things have been changing recently too, since 2020 plus. As far as cash, for example, you can't really use cash to get certain things. Like a lot of realtors and realtor companies won't accept cash for certain down payments, since you can't really prove that you're a real legitimate person and where that money's actually coming from. Okay, so central banks want to make sure everything is controlled, and pretty much don't want you to have freedom for certain ways that benefit them every single time. Certain ways it does protect society, but for the most part, things aren't always fair and realistic, because it is the world. So if somebody's working hard at their lawn mowing business and they've been stacking up cash, okay, their money shouldn't be obsolete. So now you have things like cryptocurrency where you're going to be able to send that over to your bank account, and then you could file your taxes and do things a little bit more legitimately there, versus just having random cash come out of thin air and then you deposit it and they're like, well, where's this coming from? Okay, so your cryptocurrency can be baked in and a little more hidden, and it'll help you out in a lot of ways too. And Bitcoin is really a neutral, permissionless network, and it helps you bypass sanctions. Systems like SWIFT allow the US to cut off nations or individuals from global finance. And Bitcoin operates on the peer-to-peer network, just like we talked about in the previous slide. Meaning if you want to send $1,000 to somebody in Africa, you can instantly do that within the next couple of minutes if you wanted to. Okay, if you want to do that via PayPal or the traditional bank system, it's going to be a lot more difficult. They're going to put some type of hold on it, have to verify your transaction, and it's going to be just a lot more difficult overall, making financial blockages significantly harder to enforce. And financial privacy is going to be a big factor as well too. So Bitcoin is going to be pseudo-anonymous. Central banks and governments prefer total visibility due to the fact that KYC laws are in place, know your customer, and AML, to track taxation for the most part. So pretty much just the government wants their piece of the pie when it comes to any type of currency. So a decentralized ledger obscures the identity layer that they rely on. So certain things like the SEC, we're fighting with Bitcoin legislators, etc., and that led to certain dips. But now the US government and other governments have started holding the currency themselves, and certain laws have been getting passed. So central banks are trying to gain control, but for the most part, Bitcoin at the core forefront of it is still peer-to-peer and a currency based off of freedom. So we'll jump into the neutralization of interest rates. Interest rates are going to be the steering wheel of the economy, and Bitcoin creates a parallel system that doesn't respond to that steering wheel. And the liquidity trap. When the Fed lowers the rates to stimulate the economy, they want people to spend pretty much.
So if people instead borrow cheap fiat to buy Bitcoin, which is a store of value, since especially it has a limited cap, giving it scarcity, which is immediately going to give it value, the stimulus leaks out of the real economy and into crypto assets because people are starting to wake up as well. And broken transition mechanisms are going to come into place. If a significant portion of the economy uses Bitcoin for settlement, central bank decisions, which involves raising or lowering rates, affect fewer people, rendering the central bank increasingly irrelevant. So it's like trying to slow down a car by pressing the brakes, but the car has decoupled from the wheels. Okay. So Bitcoin's coming in to solve a lot of problems, especially now since people are starting to be more open to international travel too, and living in certain other countries, especially US citizens. And you're gonna, instead of have to go through certain transfers for your US currency, you can easily just keep everything in cryptocurrency and spend that all over the world simply, instead of having to go through that headache of a transfer system. And let's talk about CBDCs, the counter move, and what are they doing about it? So they're copying tech, but keeping the control, and enter the central bank digital currencies, and it's programmable money. So unlike Bitcoin, CBDCs are centralized, and governments could theoretically program money to expire, which forces spending, and restrict what you can buy with carbon limits or freeze accounts instantly. And definitely total surveillance is going to come into place too. So a CBDC ledger would give the state a real-time view of every single transaction in the economy, eliminating the concept of cash-like privacy entirely. And they market CBDCs as safe, convenient Bitcoin, but the reality is that it's the exact opposite of Bitcoin ethos of decentralization. So keeping the freedom in the people's hands is really the main point of crypto. Yes, there's money involved, but honestly, you can make way better profit doing other things, such as like trading futures, for example. Even if you trade crypto futures, that's gonna be way more profitable than holding and keeping spot. But as far as you holding your Bitcoin, your cryptocurrency, you're really doing it for your ownership and your assets. Okay, having ownership, especially in something that helps the future, is what's going to help you prepare your forward and keep your money in that constant cycle. So instead of you being on the hamster wheel, put your money on the hamster wheel. Have everything flow. Okay, so after you get that big bag from futures, let's say for example, you know to go ahead and throw it into Bitcoin, which consistently makes profit year after year after year after year. So instead of you having to hustle and bustle forever, you could maybe sit down and chill because you have enough money from hustling, bustling, stacked in your investments, and then your wheel will be spinning forever. Okay, so if you decide to use your fiat currency and throw it into something that's gonna help your money flow into the hamster wheel, inshallah, you'll have a lot easier time. So they try and stop everything, just like they try and stop certain herbs as well too. They can't stop the Bitcoin network itself since it's distributed globally, and they target the entry and exit points and targeting on ramps. So regulators pressure banks to not do business with crypto exchanges, even though they're starting to do it anyways, because they know people have to sign up for their banks, otherwise they're going to crumble. So if you can't transfer fiat to an exchange, it becomes very difficult to buy Bitcoin. And let's talk about some regulation by enforcement. So instead of creating clear laws, agencies like the SEC sue crypto projects to drain their resources and create uncertainty, driving innovation offshore. But thank God, it's been a lot of righteousness going on. Certain people have been getting freed from jail, such as like the Binance creator and Bybit and stuff like that has been starting to get back on the United States soil. So a couple of years ago, around 2022, 2021, they started locking people up for enforcing certain cryptos or creating certain crypto brokers such as Binance and stuff like that. Thank God certain people have been freed, and just really things have been changing, and the crypto future is starting to look bright, especially since the US government now owns hundreds of millions of dollars worth it. That's really a solid and good factor, letting us know that, okay, the US doesn't want to fall behind since other countries also own hundreds of millions of dollars worth it too. Okay, so instead of being stubborn, the US is now actually turning on their brain, and that's leading crypto to future all-time highs, since the US dollar is the global currency of the world. But we never know, within a couple of decades, could be Bitcoin. So a lot of things are changing, exciting time in the world, and central banks are pretty much earning a game theory by they can't end Bitcoin. The network is way too resilient and distributed, so they're pretty much trying to conform because they know people are starting to wake up. The righteousness is starting to oversee the darkness in the world for sure. People are starting to care about their health, want freedom for their money, and people might have family in other countries too. You can easily help out your family in other countries with cryptocurrency. Once again, not as easy to do that if you're sending straight fiat in any country you're in. And they can't ignore it. Okay, it's sucking liquidity out of the fiat system. People are no longer keeping their money stacked inside of savings accounts, getting that 2%, 3% APY that most banks take advantage of in order to make profit. People are now just taking that money and putting it right into cryptocurrency. Even the same thing with credit too. A lot of people are starting to wake up when it comes to credit. Instead of balling out, just buying things, people are now taking that, either investing in all of it into some kind of business and buying cryptocurrency, buying any type of shares that they can too with the cash that you can extract from the credit card if you can't extract the whole thing. So the likely outcome of everything, integration, and that's been slowly happening. A lot of banks are starting to finally realize, and as we start seeing more younger people get into CEO level positions, I can see things change as well too, inshallah, especially as Trump come into office. The crypto support has definitely been in significant rise. So banks will eventually have to custody Bitcoin and treat it as a reserve asset, just like gold, because they know people aren't going to be going for anything else. Okay, people are now more open to leaving the US more than ever. So now the US is very desperate to make the right decisions to keep people here and keep America going forward. So this fundamentally changes how the global monetary system operates in the long run. And a really small percentage of the world only owns Bitcoin. So don't think that you're too late. You're really, really early. And there's a limited amount. Okay. You don't want Bitcoin to be mined up and be like, oh man, I wish I bought Bitcoin in 2025. You don't want to be doing that. Okay. I don't care if you got $5 in your account right now. You don't need to be buying nothing. Go buy some Bitcoin. Okay. Live off the credit card, spend all your cash on assets, and watch how your life change. Wake up, pray to God, take care of your family, stay down, and get in stack mode. Let me catch you on the next one. All right, class, we've all heard about passive investing, how we can live off our money, just making this money infinitely and forever. Let's talk about one of the most popular ways of how to invest and how to live off passive income through what's called dividend investing. Let's jump into it. So let's understand what the core is and what are dividends in the first place. So let's break down the definition and the mechanics of a dividend. So a dividend represents a distribution of a portion of a company's earnings decided upon by the board of directors to its shareholders. And it's essentially a reward for owning a piece of the business. So shareholders pretty much get rewarded for investing into whatever ETF they invested to, whether it be SCHD, BTIC, QQQI, any dividend that you invest to, which is going to be a bundle of stocks essentially. And instead of just investing into one stock individually, you could buy a ETF, which pays out dividends, and certain stocks pay out dividends as well too. And they pretty much give you your money back for investing it. They say, hey, thank you so much for investing into us. Here's some money back. Okay, so you can use that into an infinite loop and invest into that and live off the passive income. Okay, so it's essentially a reward for owning a piece of the business and the investment. So it's a source of income. So unlike capital gains, which is required when you're selling a stock or when you sell at the highs, dividends are going to be more of a direct cash flow, and they're often paid quarterly. And this creates an immediate tangible return on your investment. And they're on a fixed payment schedule. There's some dividends that pay annually, once a year, quarterly payments, which are going to be between January, April, July, and October. Okay. Some companies and ETFs pay monthly, and some pay semi-annually or annually. And the key is going to be consistency, depending on the type of income that you're looking for. Do your research before you invest in any type of dividend ETF or stock to see what type of cash flow you're going to be getting. Okay, you don't want to be investing in something and see one ETF or dividend pays out every month, and then you invest into something that pays out once a year, and you're not getting the cash flow you expected. All right, don't just ride somebody else's wave. Make sure you guys are doing your educated research. There's so much free information out there. Head over to Stackmode.net if you need some more investment education. So let's talk about some tax implications, right? So even though dividends can be reinvested, right? So let's say you are getting $5,000 a month from a dividend, right? That dividend money is still taxed. So even if you reinvest all $5,000 of it back into whatever stock or ETF you invested into to get the money in the first place, it's still going to be taxable. Okay, so keep that in mind. Break down your income. Make sure you guys are putting a percentage away of your dividend income away so you don't get taxed on Uncle Sam. You pay your taxes by the year. So let's talk about some declaring dividend dates, right? So the crucial dates include: one, the declaration date. The declaration date is going to be when the board announces it, and the ex-dividend date. Okay, the cutoff to buy and receive the dividend. That's what that date is. And the record date.
That's the shareholder list check. And then we're going to have the payment date, which we're all looking for. Okay, the payment date is going to be when the funds hit your account. And you can go pay your bills, pay your debt, or go ball out, take your family on the trip, do what you need to do. Okay. And you must own the stock or dividend ETF before the ex-dividend date to qualify for the payment in the first place. So, the power of compounding, right? Your wealth engine. All right, so look, if you're in your bag for, say, a couple of years, you're grinding hard, okay? You're waking up, you're praying, you're working out, you're grinding your business. Say you run up a couple of M's within, I'll say 5 years, 1 to 5 years, you run up around 1 to 5 M's. You could put 2 of those M's into an ETF, stock, etc., and potentially live off of that passive income forever. You'll be getting around $5,000 to $10,000 a month. There's no reason to ball out, start spending $100K a month. There's no reason to live that, that crazy. Stay down, you can still take your nice trips, and you could pay all your bills and live in a pretty nice house for $10,000 a month. And that's just that income alone. Okay, so you can leave your business income alone, leave it for your kids, leave it for your family, your husband, wife, family, grandma, whatever. Okay, and then stay down, pay your bills, make sure you put money away for taxes though. Pay your bills, do what you need to do, pay your mortgage, rent, whatever, with that dividend income, okay? Because we're only getting older day by day. Tomorrow's not always promised, God forbid, there's gonna be things like sometimes people go disabled, So we wanna be making sure we can still feed our family if any situation occurs. So what we're gonna do is plant these seeds now, today, okay? So even if you go disabled, even if you die, your family can still be eating, because of the fact that you planted your seeds. Okay, so stay down, you don't gotta pop it. Save, save a little bit. Sometimes it's not time to pop it. It's not time to be outside. Okay, if you work outside, eat at your job. Okay, if you can, any type of food court, try not to spend any type of external money. Okay, try and get what you can, any type of discounts, go back in the house. Okay, if you work in the house, no DoorDash, no Instacart, no none of that right now. Okay, let's try and stay down. And if you are gonna DoorDash, don't DoorDash individual meals. It's something my wife really helped me out with, okay? I was realizing how much money I was spending on individual meals, wasting my time, wasting my money, when that could have been going into some Bitcoin, going into some dividends, etc. Okay, making that income grow. Okay, get some groceries, buy 1 bundle of groceries, okay, a couple times a month, and your income's gonna be spread out a lot more strategically, I promise you. All right, so think about it. Reinvest your dividends as well too. Okay, so once you start stacking up some cash flow, don't get fancy in life right away. Okay, that's something that could really hold you back. Okay, once you start getting financially free, once you clear that debt that's been haunting you down, as you guys been waking up praying to God to just go away so you can increase your income. All right, once you pay off that car, okay, once you get the debt off your back, please don't immediately go get fancy with your life and put yourself right back in the hole. Okay, use the dividend income and stack up. Okay, stack up, get some reserve for yourself. Okay, and take that dividend income and replace the bills, even if that's the case. Okay, even if you guys are getting $400, $300 a month from dividend income, that's your car note now taken off. Now you have $400 extra to either A, put it into some business. Okay, you can go donate, do what you need to do, take care of your mom, take care of your family. That's some more grocery money, or put it into some Bitcoin, options, futures, Forex, whatever you want to do. Okay, just the fact that you have that money stacked away though into something paying you out a consistent dividend, you're not going to get bills chopped off. The more bills you have chopped off, the more free cash you're going to have to play with. Okay, the more you can help your family out, do what you need to do, and just stand on business. Okay, if you want to go put some money into your business, do that. Okay, get some more income flowing, then take that income, increase your dividend income, and that way you guys can pretty much live off of doing nothing. Okay, if you have a month where you know what, say be like, I've been hustling hard, I just want to focus on myself, I just want to get closer to God, I want to work out, okay, I want to start just working on myself, okay, you guys can do that. Okay, you could take 3 months off because you're going to be good. You planted your seeds in the dividend income. Okay, you're getting that money every single month. Okay, you could take time, get closer with your family if any situation happened. Okay, you guys are feeling like you're not as close as you need to be. You could take a break. Okay, you could pause, and rent's still going to be paid, mortgage is still going to be paid, and you're still going to be putting money in the stash because of the fact that you had that money planted in the dividends. All right, so make your decisions. Okay, you guys want to go ball at the mall, okay, or put that money into some dividends. Okay, I'm telling you, if the more you invest today, the more you stay down today, your future self is going to thank you. Okay, because sometimes life's. Okay, God definitely throws some curveballs. Okay, there's going to be times where, God forbid, people lose jobs. Okay, things like that, stuff happens. Okay, sometimes businesses crash, websites shut down, etc. Okay, certain TikTok bans, certain creators couldn't post then, and that was a big major source of income. So what we want to do is prepare for any type of situation so our family and ourselves are not in jeopardy if things hit the fan. Okay, so saving money and investing, it's not just trying to make money, it's survival. Okay, it's survival. Because not everyone has family they can depend on. Not everyone has people they can depend on to go to their house if something hits the fan, or if they happen to not have a place to stay. Okay, so what we want to do is always protect ourselves. All right, so money is going to be survival. Okay, don't just think of it as luxury and leisure items. Okay, protect yourself and protect your family. You don't want to have them starving or have them getting fed by somebody else's accord because you're not hustling, because you're not staying down. So be the one who stands on business. So dividends are also going to be extremely effective during flat or declining markets. And dividends provide a consistent positive return, and they help mitigate overall portfolio losses. And they offer psychological and financial cushion to keep you invested. So you guys can honestly just stay down, invest in the dividends, stack up your cash flow. Okay, if you feel like market's at all-time highs, you can buy some dividends. Okay, you can buy some dividends, and you're still going to be stacking some type of cash flow, essentially. Okay, and with the power of compounding, guys, I'm telling you, okay, the power of compounding is going to be extremely, extremely essential. Do something every single day. Stack up those wins. Okay, and we're going to talk about drips. Right, drips are going to be extremely important, and that's pretty much just taking the dividends and reinvesting it back into the dividends. And they just automate the process of buying low, fostering consistent investments, and taking those dividends and reinvesting it back into those stocks, ETFs, whatever you bought. Okay. And the inflation hedge, right? So investing in companies that constantly raise their dividends, which means they're getting paid. Okay, if a company's raising their dividends, that means one, they're putting smiles on people's faces because one, people are using their products. So the more people that companies using their products, one, the more taxes that go to the government, the more the United States government benefits, the better. Okay, so everyone wins when these stocks go up in an upwards direction. Okay, don't just think, oh, stocks are just going up to go up. No. Okay, a lot of these companies, Amazon, for etc., okay, that you can go trade right now, employ hundreds of thousands of people, Microsoft, Google, etc. Okay, so these are really, really important companies that put food inside of people's stomachs. Okay, these companies pay people salaries, help them live. So think about that. Okay, that's also why we don't really want to ideally short the stock market in a lot of times. A lot of ETFs you'll see will be very, very consistent, especially if they pay out consistent dividends. Okay, they're going to consistently go up in an uptrend due to the fact that the economy is just a lot more beneficial as long as stocks are going in an upwards direction. That means more jobs for people, less homelessness, less government downfalls due to the fact that we don't have enough money to pay certain funding, things that need to be paid, such as government branches like the CDC, etc. Okay, which would mean less jobs. Okay, so the more money the government has, the better. Okay, because the less scientists we have, the worse for the world in general. Okay, we got to figure out what's going on. So understand that stocks, the higher they go up, the more it literally affects how the world functions. Okay, so thinking of things logically and extremely literally is really going to change your perspective. So evaluating your stocks, right? The essential dividend metrics. So how to determine health and sustainability beyond the yield. So before investing, you got to assess a company's ability and commitment to pay and grow its dividends. And these metrics are fundamental screening tools to avoid yield traps. All right. So dividend yield percentages, annual dividend per share / the current share price. So while it's tempting, never let your yield be your only factor. Don't just be only looking at it. Okay. You got to focus on, is it consistent? Okay. You can't just focus on how much it's paying out because it could pay you out a lot in a 3-month span, and the next thing you know, it's gone. Okay. And then your reliable source of income is not dependable anymore. Okay, so high yields are often a warning sign. So careful. Focus on the payout ratio. That's going to be a big safety check. So automating growth, right? Dividend reinvestment plans. Let's talk about drips again. So leveraging the power of zero cost reinvestment. A drip is a service offered by companies or brokerages that allow you to automatically reinvest your cash dividends back into the same stock. So you don't got to worry about nothing. Okay, money's going to go right back into the dividends, making your cash flow infinite. and it's often commission free, including fractional shares. And let's talk about fractional shares, right? Maximize. So DRIPs ensure that every penny of your dividend is put to work immediately, maximizing compounding efficiency by buying tiny portions of shares you normally couldn't afford. And automated dollar cost averaging, right? DCA, dollar cost averaging, is really going to be just a good way to stack cash, guys. Okay, put a good amount away that you have after your bills, groceries, etc. Okay, just keep stacking cash, keep dollar cost averaging, keep stacking up, get into stack mode. So since shares are bought at regular intervals, right? That's the payment date. Regardless of the price, DRIPs are automatically implemented into the dollar cost average. Okay, reducing the emotional risk of time in the market. So you know how much you're going to invest. Okay, just put yourself on a consistent plan, because I promise you a lot of the times within like a 5-year span, okay, you'll see positive returns. Okay, now buying at all-time highs though can be a little bit different, but if your goal is just dividend incomes, then just keep reinvesting. So exponential share growth. The number of shares that you own grow exponentially over time, which in turn accelerate the growth of your dividend income stream. And you literally get paid to increase your ownership stake. Okay, so think about that. So most brokerages allow DRIP commissions fee. Go into the settings. They can be a little hidden sometimes, but you can find it, I believe me. And they make it a highly cost-effective way to build with over time compared to manual purchases. Okay, so instead of going back, depositing over and over and over, it'll just automatically put everything on cycle. So imagine you receive $50 in dividends. Instead of taking the cash, right, instead of having to have it settle, okay, or if it goes automatically to a bank account and then deposit back into the broker, okay, either way, the DRIP is just going to go ahead and buy some more shares. And next quarter, you're going to earn dividends on your original shares plus the new 0.5 shares, making your next payout slightly larger. And so the cycle repeats, and investing and increasing your base constantly. But please make sure you guys are looking out for your taxes. Okay, take care of that. Put some money away. Don't spend everything. So mitigate the risk, right? The downsides of dividend investing. Okay, so there can be dividend cuts sometimes. Okay, no investments can be without risk. And high dividend yields can be trapped sometimes. And tax implications must be understood to maximize the after-tax returns. We must be cautious investors, right? So the dividend cut is the ultimate risk. A dividend cut signals financial distress or a major strategy shift, often leading to a sharp decline in share price. Okay, this is why checking the payout ratio against the free cash flow is going to be essential, making sure it's profitable. And the yield, right? A very high yield, which is often above 8 to 10%. It's a pretty good range to check out. And it's frequently a sign that the stock price has collapsed and that the market expects a dividend cut. And when you buy the stock, the dividend is cut and you lose money on the stock price and the income stream, okay? And that could really hurt. Okay, so keep that in mind. So opportunity costs. By focusing on only mature dividend payers, you might miss out on certain high growth companies, like many in tech, that reinvest all their earnings back into the business, leading to higher capital appreciation and cat of income. Okay, so they're focused on like the super end game plan, okay, which is ultimately the smarter plan. And there's going to be sometimes some new ETFs that are dividends that you can invest to, instead of just focusing on the super old ones. So do your research. Okay, depending on any time period that you're watching this, okay, some things are going to be more popular than others during certain time periods, and focus on whatever sector that's pushing the future forward is my best recommendation. So taxation, all right, understand the difference between the qualified low tax rate and the non-qualified ordinary income tax rate dividends. So use tax advantage accounts if you want to, like an IRA or 401k. Downsides of those though, they're capped out. So I believe 401k only holds around like $23,000 a year, and you could put way more money than that away, okay, in the stash, especially if you're in stack mode. And a Roth IRA, if I'm not mistaken, I believe it's $7,000, and then when you're 50, it goes up to $8,000. So that's not nearly enough money. You could put that money away in a single month. Okay, it's people who spend $50,000 a day on ads. Okay, so it really just depends. That's not enough money. Those can be traps, so don't really focus on those. Get in your bag and believe yourself. You can run up M's, I promise you, inshallah. So geographic risk. So international dividends often carry foreign withholding taxes, which can be partially or fully recovered, but add complexity and potential cost to tax filing. And they always investigate the specific tax treaties for international holdings, making sure that everything is proper before you just buy into something, okay? And you can construct your income portfolio, okay? So successful dividend portfolio is not just a collection of high yield stocks, but a balanced machine designed for stability and growth across various sectors and time horizons. So sector diversification, okay? Get some different sectors in there. If it's tech, maybe power, maybe it's healthcare, okay? Whatever is important within the time period you're watching this video, do your research first, okay? And go ahead and invest. Take your time. So spread your investments across stable sectors like utilities, consumer staples, healthcare, crypto, etc. Okay, there's gonna be a lot of different sectors you could check out. Okay, and strong industrial companies, etc. And this ensures that if one sector struggles, another could be doing extremely well. Okay, or if the U.S. does a deal restructuring the power grids or something, then maybe power sectors might be doing well. Okay, things like that are going to be put into play depending on what's happening in the economy today. So apply what's happening in your current society and just go to the stock market and make the right decisions. And inshallah, you'll make some good money. So look for companies with high cash flow, low debt, consistent earnings growth, and a history of raising the dividend, not just paying it. And consistent growth is going to be your key to beating inflation. So the ETF, right, and mutual fund usage. So use dividend-focused exchange-traded funds like those tracking the dividend aristocrats. For example, noble or high-yield funds. For example, VYM, to gain immediate diversification with minimal effort. And this can form the stable, low maintenance core of your portfolio and your income calendar strategy. Okay. Strategically select companies with different payment months. Some pay in March, June, September, December, others in January, April, July, October. And this can smooth out your monthly income stream, giving you a more consistent passive income flow in general. So do your research. Invest in the sector that's going to pay you out consistently and make you some good income. Okay. And cultivate passive wealth. So key takeaways. So dividend investment, it's not about getting rich overnight. It's about building, once again, passive income. But what people don't know about what's called passive income is you got to hustle for the income in the first place. Okay. So you got to be hustling for as much active income as possible. Then once you invest, then you earn passive income. Okay. Everything in life has to be earned. Okay. You have to understand that. There's no such thing as just chilling. No, you got to earn it and then you could chill. All right, so go hustle, go get some money on, then invest and you could chill, live off your passive income. Okay, but right now, if you're in stack mode, you're staying down, you're grinding, get to it. So focus on safety and growth. So prioritize dividend growth and safety. Okay, so look for a low payout ratio and low debt. Okay, especially after you just got in the stack mode for years, however long you just took grinding your company, okay, scaling up your job, doing whatever, okay, putting money away. You don't want to invest into a dividend that you expect to pay you out stably to just crash. Okay, so do your research, make sure they don't have a lot of debt. Okay, even God talks about debt for a reason. Okay, debt can really be a sinkhole. Okay, if you get into debt, it's like your money pretty much gets negated for no reason. You make money, but then it has to go to debt. So it's like you get nothing in your pockets. You can't put it into investments and you're just in debt. Okay, so debt is extremely trash and it pretty much cancels out your money. Okay, so focus and see. Okay, did the company pay it off yet? Okay, is the company drowning? Is it a fresh new company that just took a big loan from someone? Okay, and if they fail, then they're going to be drowning. Okay, that might not want to be something where you want to invest your hard-earned active income into. Okay, so take your time, do your research, and then hop into something. Okay, avoid Euro traps. Don't just focus on that. Okay, sometimes there's things way bigger than the direct active income. Focus on the stability. And you can use drips and monthly contributions to take advantage of compounding and dollar cost averaging automatically. Okay, pay your rent, groceries, do what you need to do, give your money to whoever you need to give. Okay, and then put some money away into your dividend investments. Okay, keep stacking cash and watch it grow quickly. And utilize tax advantage accounts if you want. If you have a job, then do a 401k. I don't recommend a Roth IRA, just do a normal tax account. Okay, once again, believe in yourself. You can do way more than $8,000 a year. Okay, putting away that money is something that everyone could do. Okay, and $8,000 a year, you can definitely put way more than that a year away. So do a normal account, individual, taxable, and just take care of your taxes. It's not that bad. Okay? And your growth isn't going to be stopped. But if you have a job though, and they pay out 401ks, I would take advantage of that. just put a piece of your check away, and then if you want, as soon as you're older, you have that money there, and then you can pull it out tax free if you even want it. So you can maintain diversification like this too. Okay, you can invest into certain ETFs that have a bundle of stocks, so you don't have to just rely on single stocks. Okay, and you could use, once again, different ETFs to build a robust, diversified foundation. Okay, so that's how passive income is going to be formed. Stay prayed for God, keep running. Head over to Stackmode.net for all trading education. Mentorship slots, they're getting filled up. Class has been getting booked up. So yeah, if you want to book the next call, go ahead and book before all the slots are filled up. Peace. Okay, so let's talk about how to research stocks. The best stocks to go ahead and invest in are going to be the ones that have some future value. So anything where people are going to be helped within the future, and anything that's going to put a smile on people's face, ideally, is going to be a good stock. Okay, so anything that's helping the most people, it's going to be something that's going to be the most valuable. So this is going to be a step-by-step guide to analyzing certain stocks that are going to be profitable. Let's go and let's jump into it. So why does research matter in the first place? Okay, so this goes further than speculation. So researching a stock is the cornerstone of successful investing in the first place. It allows you to move beyond speculation and base your decisions on a company's real value, rather than on market hype, such as like Instagram hype, Twitter hype, or anything like that, or a rumor. Okay, and a disciplined research process helps you understand what you own, okay, and how you're going to manage your risk. So managing your risk is pretty much going to mean how much money you're going to be saving, okay, how you're distributing your money, okay, and how much money you're going to be risking per trade. Okay, so that's what managing your risk is going to mean. And it's going to identify true long-term opportunities by, once again, making sure we're investing in companies that have future value invested into it. So anything that's putting a smile on people's faces, anything that's helping people, inshallah, year after year, should go ahead and be beating earnings, okay, because it's going to be making money. Okay, anything that's putting a smile on people's faces, for the most part, is going to be making money. Okay, and then when companies are making money, stock value decides to go up. And since as shareholders, we're pretty much going to be company holders, at the bottom value here, we're going to be in. Let's say we get in right here, and then we can go ahead and exit at the top, right? Because we went ahead and got in before price decided to pump up super duper hard, because we did our research before, for example. So informed decisions are going to help us out. Research gives you the data needed to assess a company's health and future potential, reducing reliance on guesswork. And without research, you're simply gambling. So risk management. By understanding a company's fundamentals, you can identify potential red flags and avoid overvalue or unstable investments. It helps you quantify your risk exposure. And proper analysis helps you find stocks that are undervalued by the market, providing the opportunity for long-term growth and capital appreciation. So depending on whatever time period you're in, okay, let's say as of 2025, AI is super duper popular. Okay, so a lot of companies dealing with AI when it comes to chips, like NVIDIA, for example, are going to go ahead and be extremely popular. Okay, so whatever time you're watching this in, okay, relate it to the current sector. Okay, whatever is popular within your current sector, see what companies are advancing the future forward, and go ahead and invest into that. Make sure you're doing your TA, your technical analysis, and read the charts. Okay, try and buy certain areas that are going to involve dips, and make sure there's some resistance above current price, so you know price is something to hunt for. And keep your risk management in place. By understanding a company's fundamentals in the first place, you can identify potential red flags and avoid overvalued or unstable investments. Even if a chart is looking pretty good, if a company's fundamentals aren't good, then the company just won't work out, or a lot of the times the trades won't work out how you want them to. And it's going to help you quantify your risk exposure. So, identifying the value. Proper analysis is going to help you find stocks that are undervalued. Once again, okay, so finding undervalued stocks is going to mean that, okay, I'm going to be able to catch this low, and I'm going to be able to catch the whole sweep up into the highs before it starts getting popular, okay? But be careful when you're doing this. Don't invest into things that don't have any value, okay? And don't invest in any meme coins or any meme stocks. Okay, a lot of the times things like that are not undervalued, they're valued low for a reason, and they only burst a couple times a season due to just certain events that most likely won't happen again. So a guiding compass. So in volatile market conditions, your research is going to serve as a compass, and it allows you to stay the course and avoid making emotional, fear-driven decisions within the market that could plummet your account entirely. Okay, so make sure you do your research and understand why you're getting into the trade. Make sure the technicals and the fundamentals behind the trade make sense. So, fundamental analysis. Let's talk about core financials. So, fundamental analysis is the process of measuring a company's intrinsic value by examining its financials. Okay, so you're going to see if the company is making money or if it's losing money. Okay, and you can also determine if it's profitable regarding its economic factors. So if a company is like, you know what, we're banned in all countries besides this country, that's an economic factor that could potentially drive the price in a downwards direction due to the fact that that's less sales being available, since that's less volume available to clients, since countries are being banned. Okay. And it's going to help you determine if a stock is a good long-term investment by looking at a company's financial health and not just its current price. And key financial metrics. So let's take a look at the PE ratio, a common valuation metric that compares a company's share price to its earnings per share. A high PE, and that means price to earnings. Okay, price to earnings, PE, price to earnings ratio can indicate a stock whether or not it's overvalued or has a high growth expectation, while the low price to earnings value may suggest that it's undervalued. Okay. And EPS. EPS stands for earnings per share, and it's a company's profit allocated to each outstanding share. And rising EPS is a sign of profitable and a growing business. And it's a key indicator of a company's profitability. And revenue growth. It measures how quickly a company's sales are affecting the company's revenue, okay, in an increasing manner. And consistent revenue growth is a sign of a healthy and expanding business, indicating strong demand for its product or services. And ROE stands for return on equity, also known as ROE. And it's a measure of financial performance calculated by dividing net income by shareholders' equity. Okay. So ROE reveals how much of a profit a company generates with the money shareholders have invested. And a high ROE generally indicates efficient management. And this ratio indicates how much debt a company is using to finance its assets relative to the value of shareholders. Okay, and that's going to be called the debt to equity ratio. Okay, so the debt to equity ratio is going to indicate how much of a debt a company is using to finance its assets relative to the value of shareholders' equity. Okay. And a high D ratio can indicate high financial risk. So charting the course, technical analysis, also known as TA, it's reading the charts. Okay, study the charts, understand the charts before you even put a dollar into the market. Okay, understand support. Support is going to be a low area where buyers are going to step in, price is going to potentially push in upwards direction from there, and resistance is going to be an area where sellers step in and price should head in a downwards direction from there. And technical analysis is the study of past market data. This is a left to right chart we're going to be reading, so anything that happened to the left is going to be relevant to the right. So it's the study of past market data, primarily price and volume, to forecast the future price movements. It's based on the idea that market prices reflect all relative information and that trends and patterns tend to repeat, which is extremely true. And while it's not a standalone solution, it can help you with the timing with your entry and exit points. Okay, so once again, understand how to read areas of support and resistance, and head over to Stackmode.net if you don't understand yet. So as far as reading the price chart, you can use the candlestick charts on like TradingView, your broker or whatever, to visualize certain stock prices movements. Okay, see where the current price is and make sure that you're either buying at a price below current price, catching a sweep up, or if you buy, let's say for instance, you buy at a resistance breakout area, okay, either wait for a 4-hour close or wait for that resistance to be broken and turn it to support. Okay, have a strict criteria that you play, and if you figure out certain things that help you out, like moving averages, RSI, MACD and certain things like that that can help you read the trend if it helps you personally. So qualitative analysis, the intelligible factors, okay, intangible. Qualitative analysis involves evaluating a company's intangible factors that are not found on a financial statement. This is more often subjective, but it's just as critical to understanding a company's long-term potential. And this is where you assess the business as a living entity, not just as a set of numbers. So check out its management teams, okay, and see if there's any. I'm going to go ahead and add this too, okay, investors slash collaborators. Okay, so check out the management team, assess the leadership experience, okay, see the vision of the company, and check out the company's track record. Sometimes a company could just be gifted a lot of money, but then not be putting in enough work, and then over time, the company starts to go down and plummet. So make sure it has a strong ethical management team with a proven history of execution that can navigate a company through difficult times, and look for past successes and how have they handled previous challenges. So competitive advantage, also known as moat. And it's what makes the company difficult to compete with, okay? What gives this company the competitive advantage over other companies? Say brokers, for example, okay, Robinhood, okay, Hood versus like Charles Schwab, okay? So Robinhood, they have like a card, for example, okay, Robinhood has a card. They also have instant transfer, so you can connect your debit card to instant transfer instead of waiting for a couple of days. It's easy to operate, has a cool UI, okay, a lot of advantages over Schwab, and that's why Robinhood is just starting to blow up. Okay, so for example, like that, how is the stock beating the other stocks? What's the point of this company? And how is it helping people better than other companies? So this moat could be a powerful brand like Apple, for example, okay, a unique patent, and economies of scale like Walmart, or network effects like Facebook. And the wider the moat, the more durable the business, okay? So Apple, they have Face ID, they have unique phones. Walmart's an extremely big retail store. They sell absolutely everything, okay? Compared to like Kroger, you know, sells more stuff than that. And they also have like car repair and stuff like that too, and oil changes, etc. And Facebook is also connected with Instagram. So it's trying to just be, you know, more than a certain social media. So industry trends in market position. And is the company in a growing industry? That's going to be a big thing, okay? Is the company growing? Okay, if the company isn't growing or it's not in a growing industry, kind of just forget about it, okay? Is it a leader or is it a follower? And is the company in a declining industry that may struggle no matter how well that is managed, while a leader in a growing market has a tailwind at its back? So Robinhood, you know, trading is becoming exceedingly popular, okay? Crypto laws are getting passed, so broker cryptos or brokers that host cryptocurrency are starting to go up on the stock market as of like 2025, for example, due to the fact that it's in a growing industry. Okay, same thing with AI stocks, for example, past couple of years as of 2025. Okay, so whatever time frame or year that you're in, play and do your analysis based off of that. So reading financial statements, we'll restart. So financial statements here. So they're the ultimate source of truth about a company's performance. And you must know how to read and interpret the three main statements to truly understand a business's health. So income statement. So the income statement, it shows a company's revenues, expenses, and net profit over a period. Okay. So it's going to show you pretty much the time over a quarter or year. And the balance sheet, it provides a snapshot of a company's financial position at a single point in time. And it lists its assets, liabilities, and shareholder equity. And it tells you what the company owns and owes. And a healthy balance sheet shows more assets than liabilities. And cash flow statements. It details how a company generates and uses cash. And it's often considered the most important statement, as cash is the lifeblood of a business, and it can reveal if a company's profiles or profits are real, or just accounting entries. And pay attention to cash from operations, which should ideally be positive and growing over time. So, valuation methods and what's it worth in the first place? So once you've done your research, you've got to determine if the stock's current price is fair, undervalued, or overvalued. And this is where you use valuation methods to track everything. So check out the price to earnings ratio, and as discussed, it's a simple comparison tool to value a company against its peers or its own historical average. Okay, so you can normally check at the bottom of your broker, trading view, and stuff like that. You can go ahead and see the company's earnings, and you can see whether or not the earnings are going to be positive and they're being beat, companies making money, okay, or if the earnings aren't being met to their expectations, okay, and the company is not making money consistently, okay. So that's going to go ahead and determine a lot of the future growth. And earnings rates can change. The company could drop a really good product and then the earnings just start being positive and the company could take a huge turnaround. Okay, so it really just depends. So let's talk about some red flags. So your research isn't complete until you look for potential problems in a trade. Okay, see what can go wrong. Okay, see what any type of weak points the stock has. And a single red flag can negate all other positive indicators. And check out if there's any insider selling. So while it's not always a negative, a significant amount of insider selling, okay, and that means executives are selling off their stock, that can be a signal that the company's leadership lacks confidence in its future. So if you start seeing that shareholders, okay, people who own the company, okay, and stuff like that start selling their shares within large flows, okay, which means like all together and stuff like that, that could indicate that they might mean that the future, or at least briefly, the future may not be too strong, okay, but not every time. They could also be taking profits, okay, and high debt. So a company with high debt load and low cash flow may be at risk during an economic downturn, causing it to crash significantly harder than certain other things. And other stocks too, like let's say Apple, for example. Apple goes through a lot of stuff with their iPhones, okay, causing their stock to crash and go down sometimes, okay, and that's because of legal and regulatory issues. Same thing with like Tesla, for example, okay, sometimes Tesla's going through legal stuff and regulatory issues, and that can make price decide to go down. So check for any ongoing or past lawsuits. A lot of times TradingView will update you with the current news, see if there's any fines going on, okay, because if the company's owed a large amount of money, that could mean that they have to pay a larger back, which means their investment time could be a bad time to invest, okay? Or regulatory actions that could impact the company's reputation or profitability. And the frequent share dilution. If a company is frequently issuing new shares, it can dilute the value of your existing shares. So putting it all together. So a truly comprehensive stock analysis combines all of these approaches into a single cohesive view. Fundamental analysis tells you the what, okay, see what sector you're getting invested in, okay, see how it's going to affect the future, and see how it helps people, okay. The company can help people, okay, it's in a good sector, it has a place in the future, then the stock can go ahead and be decent, okay. So Robinhood is giving people easy access in order to trade cryptocurrencies, okay. That's definitely putting a smile on people's faces, okay. It's also providing things like credit cards, okay, so it's providing funding, okay. That's also something else that's putting a smile on people's faces, okay. So that's what Robinhood as of recently has just been blasting. Okay, certain stocks like Palantir are trying to innovate technology using AI, for example. Okay, so AI is trying to advance the future forward by having things being done autonomously. So AI stocks as of 2025 have been a popular option as well. So investing in the future, getting ahead of the curve is going to be a good way to make some money. So qualitative analysis, it explains the why and the competitive advantages and management that will drive the future of the company and drive the future performance. A technical analysis tells you the when and the best time to enter or exit a trade based on market momentum. And by using this holistic approach, you can make confident, data-driven decisions that will serve you well over the long term. And remember, the goal is to not predict the future, but to understand the present and make informed decisions based on facts, not on speculation. Okay, so do some strong research, make sure you're buying at clean, crispy levels, and then go ahead and take your trade based off of certain things that you believe in. Okay, so that's going to go ahead and be that. Class, we're going to be talking about value investing versus growth investing. We're investing for a reason. It's time to stop being broke. Being broke isn't cool. Late bills isn't cool. Debt isn't cool. And suffering isn't cool. If you want to start being broke, all right, start being lazy. Start not believing in your view. Start closing your trades early. Okay, start doing things like that if you want to stay broke. So let's talk about value investing versus growth investing and how we can actually have our money make some money. Let's jump into it. So an investment philosophy is a consistent overarching set of principles and beliefs that guide an investor's decision-making process, and it dictates what to buy, and when to sell. Without a coherent philosophy, decisions become emotional and reactive, and the core tension in equity investing lies between intrinsic value, which is what a company is worth today, and future potential, which is what a company could be worth tomorrow. And by the end of this module, you guys are going to be able to understand how to articulate the foundational theories of value and growth investing, how to identify key financial metrics using each philosophy, and assess which approach aligns best with your personal financial goals and risk tolerance. And value investing is rooted in the principles laid out by Benjamin Graham. And it's often called just someone who's pretty good at investing. Okay, and it's popularized by one of his most famous students, Warren Buffett. And the core of the idea is simple, and it's buying a dollar for 50 cents. So intrinsic value, right, IV. This is the estimated actual worth of a company, and it's calculated through fundamental analysis, which is analyzing assets, earnings, and cash flow. And value investors believe that the market price often deviates from this implied volatility and intrinsic value due to irrational investor behavior. Let's talk about margin of safety, MOS. The most critical concept. This is the difference between the stock's current market price and its estimated intrinsic value. And a high MOS provides a cushion against calculation errors, business downturns, and market volatility. And the business owner mentality. Value investors think of themselves as buying a part of a business, not just trading a stock ticket. And this leads to a long-term patient holding period. So, Graham introduced the concept of Mr. Market, and it's a manic depressive business parser who shows up every day offering to buy or sell his shares at a wildly different price. A smart investor does not let Mr. Market's daily mood swings dictate their decisions. Don't let them come up to you and be like, you know what, I want to go ahead and just get into this because X, Y, and Z decisions. Make sure it's logical, okay? Don't just hop into it because of a FOMO candle, because of emotions. And remember, the compounding effect is what's going to get you guys to the profit that you want to be getting into. You got to stack up the cash, stack up the wins, keep investing in certain shares. Okay, so a smart investor, once again, does not let Mr. Market's daily mood swings dictate their decisions. They trade based off of logical and fundamental parameters, and instead use rationality to their advantage. And when buying, they're pessimistic. So buying when prices are low and selling when euphoria is in and the supply is super duper low. Okay. And that's gonna mean the demand is in, which is gonna make the prices high. So buy low, sell high. And the value of a buy. If a company has an intrinsic value estimated at $100 per share, a value investor will only consider buying if the market price is $60 or less, creating a margin of safety of over 40%. And the investor must be confident in the IV calculation in general. So formula, market price divided by the earnings per share, EPS. So the PE shows how much an investor is willing to pay for every dollar of a company's earnings. And value investors generally see stocks with a low PE ratio compared to historical averages, and industry peers or the S&P 500. And a low PE suggests that the stock is currently cheap relative to its profitability. So for example, a PE of 8 means that it's going to take 8 years for the company to earn back your initial investment, assuming constant earnings, meaning that it's constantly making profit. So the price to book ratio, the PB, and the formula is going to be the market price per share divided by the book value per share. And the book value, which represents the shareholder equity, it represents the theoretical value left over if the company sold all its assets and paid all its liabilities. And the PB ratio is less than 1.0, and it indicates that the stock is selling for less than the liquidation value of its net assets. which is considered a classic deep value signal. While less common today, it's essential for financial and industrial sectors. And D, debt to equity, measures a company's leverage, and value investors prefer a low DE ratio, as high debt is going to be a major source of risk and can erode the margin of safety. So free cash flow, right? FCF. Free cash flow is the cash that a company generates after accounting for cash outflows to support operations and maintain its capital assets. Strong, consistent, and FCF is vital as it fuels dividends, stock buybacks, debt repayment, and the things that ultimately justify intrinsic value and the things that are going to cause a stock to go in an upwards direction. So pay attention to all these things, okay? Look at the ratios, see what's going to be worth investing into, and scan each of the fundamentals and know each of them things mean before you invest, okay? You can see quality companies that are temporarily mispriced and not companies that are structurally flawed, okay? Because over time, that'll lead into a downward decline of money for the most part, okay? They're not helping anybody. They're not putting any value to society. They're not making people smile. So it's not going to be a worthwhile company. It's not going to be something that is going to put some future value, okay? So there's no point in investing to things like that. We're here to make some cash. We're here to stack some cash. We got people to take care of, houses to buy, land to get, okay? We got to be stacking this cash and getting to it, inshallah. So there's some pros. There's the lower downside risk. The margin of safety acts as a buffer. And by buying below the intrinsic value, the potential for further significant losses is theoretically reduced. And psychological calm. Value investing encourages patience and detachment from daily market noise, reducing emotional trading errors. So, in dividend income, value stocks are often mature, and profitable companies return capital to shareholders via constant dividend payment. Why? Because the company's making so much money. They're going to be like, you know what? You guys can go ahead and have some money back. Here you go. And that's what a dividend is. And patience is going to be required, all right? It can take years for the market to realize the stock's true value. And that's okay, okay? Be patient. Keep stacking cash. Keep grinding hard. Keep waking up, praying to God, and putting your full force into whatever, your business, your work. Keep stacking cash, okay? Keep going hard, trying to protect and provide for yourself and your family, okay? Keep stacking cash. Stay down. Get into stack mode. Don't buy that whip just yet. Don't buy those clothes just yet, okay? You don't got to fill up the cologne cabinet full of X, Y, and Z right now. Stay down, okay? Take your time. Build real wealth, okay? So you can take care of your family whenever it's time, okay? You're going to be the one who can handle the hard times, okay? Why? Because you were in stack mode. You didn't give up, and you were staying down. And the value trap. This is the greatest risk. And a stock looks cheap, right? Low P and low PB, but it's cheap for a valid reason, such as a fatally flawed business model, disruptive technology, or poor management, and the value never materializes. And missing out on innovation. By focusing on established, mature businesses, value investors often overlook high-growth companies that are changing the world. And the ideal value investor is patient, contrarian, analytical, and possesses strong emotional discipline. They thrive deep on research and are comfortable standing alone against popular market sentiments. So, foundation principles. Growth investing focuses on companies that exhibit above average rates of expansion and revenue and earnings, often driven by new technology, market expansion, or innovative business models. And the philosophy was philosophized by investors like T. Rowe Price and Philip Fisher. It has a focus on momentum. Growth investors prioritize future earnings and potential over current valuation metrics. They're willing to pay a high price today for the promise of massive earnings tomorrow. And disruptive innovation. Some key characteristics include a high rate of sales growth, a strong competitive advantage, a moat, and a rapidly expanding industry, and a focus on reinvesting all profits back into the business for continued scaling. Okay, and ignore current profitability. It's common for high growth companies to report low or negative earnings, okay, just because they're getting their feet off the ground. Okay, they're letting the sales come in, letting the customers come in. Doesn't mean that the company is not worth nothing. And thus a high PE ratio is going to be involved into that as they invest heavily into R&D, marketing, infrastructure, and trying to make the company bigger. So then their profit margin is going to be a lot bigger. Okay. So then while a value investor seeks a stock trading at $60, that should be $100. A growth investor seeks a stock trading at $100 that they believe will be worth $500 in 5 years. Okay. They're concerned with the trajectory of the business, not its current snapshot. Is it going to be putting smile on people's faces? Okay. That's going to be the number one Telltale sign to know if a business is going to be successful or not. How much is it affecting people's lives? Okay. And a growth buy, let's talk about it. So let's say a software company is losing money today, has a negative EPS, but its recurring revenue is growing by 50% annually. A growth investor buys based on the expectation that once the company achieves critical mass and stops aggressively spending, the profits will be enormous and the stock price will multiply several times over. So focus. Investors primarily look at year-over-year revenue, growth, and earnings per share, the EPS growth. And consistent growth above 15 to 20% is often the benchmark for a true growth stock. And quarterly acceleration in these metrics is a major bullish signal. So let's talk about the law of large numbers. Growth investors must always assess how long a company can sustain high growth rates, as it becomes exponential harder as the company scales. And that's the law of large numbers. And we'll talk about the PE ratio, okay, divided by the annual EPS growth rate. That's a percentage. The PEG ratio attempts to harmonize PE and growth rate. And the PEG ratio of 1.0 or less is often considered a fair value for a growth stock. And it suggests that the price being paid is reasonable and relative to the expected growth. And if a stock has a PE of 30 and is growing earnings at 30%, then it has a PEG of 1.0. So high growth, recurring revenue. High growth software and subscription companies are highly valued for their predictable recurring revenue streams. Okay, for example, software as service or SaaS. And TAM. TAM is going to be the total potential size of the market and that the company is targeting. The bigger the TAM, the longer the company can maintain hyper growth, and investors seek companies with small current market penetration but colossal TAM. Okay, and TAM stands for total addressable market. It's a principle. Growth investors are fundamental, betting on future performance and disruptive power in an expanding market, looking to make money constantly. So, advantages: potential for explosive returns. The possibility of 5 or 10x returns in a shorter time frame is the primary draw, and compound growth is exponential. And exposure to innovation. Investors gain exposure to the companies driving technological change and societal evolution. And the simplicity of thesis. The core thesis is often easier to articulate, and this company is winning in a massive growing market. Okay. And the cons: extreme volatility. High expectations lead to steep sell-offs, and if the company misses even minor earnings targets, these stocks are vulnerable to economic downturns and interest rate hikes. And valuation risk. Paying a premium for growth means the investor must be right about both the growth rate and the sustainability. If growth slows, the stock can fall dramatically. And the lack of dividends. Growth companies typically reinvest all the cash flow, meaning that the investor receives no current income at all.